And we're back. It's July 23rd. Paul Capetta's here. Paul, how you doing?
I'm doing great, man. It's gonna be hot today.
It's gonna be a hot one. They're turning it up. Had a really nice few days here in the Midwest, but now back to a stretch of 90 plus, humidity, everything that makes you feel. I mean, it wouldn't be summertime Chicago without it. But Paul, what have you been up to, man? What's going on?
Not a whole lot, man. Just enjoying the summer.
What does that mean? I asked Twitter what like good weather or sunshine means for him, and he said, what did he say? He went bowling with his sister and mom. I don't know.
Not a big fan of bowling.
Didn't make sense to me. But what's summer activities?
Usually golf.
Okay.
Kind of in the lull part of the summer, you're just kind of enjoying it. But it's also been raining a lot here. Like it's kind of like every couple of days we get like hammered with thunderstorms, which is normal. Mm-hmm. But I guess there's this thing called corn sweat going on, which I just learned was a thing.
That's the Superman. Corn sweat?
It's apparently causes humidity, and this afternoon it's going to feel like 105.
Corn sweat. Okay, hold on.
I'm glad we're doing this because I didn't do this before.
Corn sweat. Agricultural impact of heat dome. Holy smokes. So wait, what is this stuff? What does this do?
So it basically adds to the humidity in the air because the corn is essentially sweating, which I think is the non-chemistry term for this.
So the corn gets hot.
And
we live near the corn. The corn gets hot. Mm-hmm. It gives off even more humidity.
Yes, exactly.
Holy smokes. I was thinking, who's the guy that played Superman actor? Oh, I don't care about Christopher. I mean, I do, but, you know, in a respectful way. 2025. David Corn Sweat. That's the guy. I thought you were talking about that guy.
That's an interesting conundrum there.
Interesting time for that sound here in American culture.
Yeah.
Probably the most popular it's ever been. I've never heard of corn sweat before as a phenomenon.
Yeah.
And I've never heard of David Corn Sweat. But he is the most recent Superman. You seen it?
No.
Don't care?
Don't care.
Don't care about Marvel?
Not a big fan. I like the Dark Knight trilogy, but I don't like Marvel.
That is a classic. I don't mean this in a rude way, but that is like a very classic dude take, yeah. I feel like, which is like, don't care about this supernatural stuff, like Thor hanging out with Iron Man doesn't matter to me, but like the Dark Knight was pretty sick.
Yeah. Yeah. Exactly.
All right, I'll take it. I kind of want to see this. I don't really care about any of this stuff. It's just like when it's entertaining. I watched that Thunderbolts movie.
Yeah. All right.
Fine. Not that entertaining. I don't know. I feel like a lot of those movies are like people go nuts because they're like, oh, like so-and-so just showed up with so-and-so. And it's like I don't have any background for it. And so it's completely lost on me. But if it's entertaining, it's entertaining. But all right, that's enough. No Superman talk. No more corn sweat. Let's get in the market. It's Wednesday. Got some action going. You probably know this better than me. There was an announcement either last night or this morning that we have struck a deal with Japan.
Yeah.
Is that true?
We did strike a deal with Japan.
Okay.
Lower than the initial tariffs. I think they're 15%. Some initial positive news out of the auto industry out of Japan. So that's obviously a big deal for things like Honda and Toyota. But if you get into dollar yen here, this thing was all over the place last night. And we did actually have some other news out of Japan. So the initial reaction was some yen buying, so dollar yen sold off a bit on the initial trade news. And then there was news that the Prime Minister of Japan is actually resigning in August.
Okay.
So that kind of caused yen to depreciate against the dollar. You saw the bounce back in dollar yen. And then this morning, we're right back to where we kind of closed today. So it's been all over the place. Lots of news coming out of Japan. Kind of at the swing lows here, too. which is really interesting to see where we're going to go from here.
Yeah, talked to Twitter about this yesterday, and we were, I think, in this little pocket right in here, where it's like, okay, we're dancing around 147 to 147 half, and my point was just like, okay, I mean, every time we've moved on to a new, if I widen out here, every time we've moved on to a new high in this pair here in July, we've taken a little bit of a breather, 100-point breather or so, and then continued higher. And so my point, when we're in this junk, Monday into Tuesday morning here, I'm like, okay, if we have a bounce back here on Tuesday afternoon or Wednesday or Thursday, is 150, the 150 level that, has been so important the last couple of years, and has, not been relevant for decades prior to the last couple of years. Is that back in play? And it seems like, what we've seen throughout the rest of yesterday was some further dollar selling. And then last night, to your point, here's probably all of that mixed of news of, maybe this is the tariff announcement or the deal announcement in here where you start to see some yen buying, and then here you have some yen selling, and these are, this is almost 100-point range in 2 or 3 hours. So pretty good back and forth for Asia just waking up, and obviously the U.S. and Europe not being no overlap with that Asian session here last night at 8 o'clock, 9 o'clock, 10 o'clock Eastern. But it's interesting, Paul. We're seeing the same thing that we saw here on Sunday night as they started to digest this Japanese election news, which I tried to cover as best as I can. From what I can glean, there are some conservative upstarts in Japan that have taken a number of what I guess would be the equivalent of their congressional seats or whatever. And there was some pressure, it seems, on the prime minister. I forget his name now. Whatever, doesn't matter. I mean, he's great, I'm sure, but doesn't really matter for what we're talking about. And so you're saying that last night, further a little bit of this, not instability, but potential change in Japanese politics, met with some yen selling. But again, as they digest it, it seems like this potential sea change in Japanese politics is being translated as hawkish or bullish for the yen.
Yeah. And I just Googled this now because I was interested to see what his name was, and he actually is denying that he's going to resign. So
wow.
It's a little,
this is the U.S. playbook.
Yeah. Yeah. I know we were talking yesterday. There was a fake letter going around on Twitter about Jerome Powell quitting, so that was funny.
I remarked that that's the most 2025 story I've ever heard, where it's like, probably someone using AI created a fake Jerome Powell resignation letter, and it's circulating on all the social medias. Yeah. And it's like, what a time to be alive.
Yeah. Yeah. But overall dollar selling yesterday,
it was a rough one, for sure. And I want to talk Aussie in just a second, but we might as well talk about the big one here. This euro really stretched its legs out yesterday afternoon, getting back well above 117. It's almost like they tried 117 on Monday, Paul. Unable, obviously not a huge reversal here, but then tried 117 again here on Tuesday morning and then just ripped through it. U.S. dollar being sold. I mean, there's a number of things obviously going on between the Trump-Powell battle, as well as Lagarde talked yesterday. There's an ECB meeting tomorrow morning, and then there's a Fed meeting a week from today. What do you think is the biggest catalyst for this dollar price action, either right now or in the next handful of days? Is it the unknown of what Trump or Powell or tariffs, what's going to come out of that stuff, or is it what is the ECB saying, what is the Fed saying as it relates to European economy, U.S. economy, and I think we have a Bank of Japan meeting on Thursday night or something. It's either tomorrow or earlier next week. I saw that on the calendar, and I can find it. But what do you think is the biggest catalyst for people the rest of this weekend next? Because there's a lot of central bankers, but there's a lot of Trump news ongoing.
Yeah, there's a lot of uncertainty. We had Goldman come out yesterday with that there could be more rate cuts in the future than they think right now, or at least the market's pricing in. So there's that. You obviously have the ECB rate decision. You have a European trade deal that is really up in the air. I believe we have the August 1st kind of deadline with that.
Okay.
Which obviously can still be extended, and that's happened a number of times now. So you have a lot of things kind of unknown. If you're purely looking at it from a price action standpoint, we had euro kind of knocking out the door on 117, which we'll talk about whole levels. They don't always mean the world, but sometimes when you see it break that kind of round number of 117 and it breaks through it pretty significantly, then it keeps going. It has pulled back a little bit this morning, so it's interesting to kind of see where this one's going to head, but you're going to have to be really paying attention to the news because this thing's going to be swinging all over the place if we get something interesting coming out.
Yeah, I was trying to find this. I guess it's not until next week. That stinks. So it's just ECB this week, Bank of Japan. It looks like it's on the night of the Fed. So we have Fed Wednesday, Bank of Japan Wednesday night, and then a whole slew of just data all throughout next week. I believe we also have a non-farm, one of the weird first day of the month non-farms. So we'll get the July non-farm numbers on August 1st, next Friday. So, yeah, a whole bunch of stuff. And you bring up the fact that we're also being kind of held hostage by the August 1st due date, so to speak, for some of these trade deals coming in. But, yeah, we'll continue to monitor this one for sure, as well as that yen. Nice to see that this euro dollar has come off about 30 points from its highs. If we get a reversal back through 117, I mean, I do just want to call out that taking out the last few sessions, the last really what is this, Wednesday, really Thursday to now, this has been a pretty bullish dollar month of July. I just want to reiterate that, where we've gone from 118 down to 116, which was a nice little move. And now, unfortunately, dollar is giving some ground. Well, I mean, if you've been short dollar, then not unfortunate for you. Same with this dollar yen in here. This is still a month where we've gone from 143 up to 149 and now trading 146. So still a bullish month for dollar. It'll be really interesting because the last really 5 or 6 trading days of July here are just super action-packed with data and just there's got to be talk from Trump and some of these other countries around these trade deals because of the impending deadlines that are coming up, as well as, what the heck is going to happen with the Fed. I think it's worth taking a look just really quick so that we can maybe compare it next week to see where the heck we are with the Fed Watch tool. I'm still, looking at just a 5% chance of a cut next week, but a almost 60% chance of some kind of cut by the September meeting. And so we're in that weird phase. We've been here many, many times, and every time this year in 2025, this 2 meetings out or 3 meetings out has ended up becoming no cut, even though it's been overwhelmingly in that cut. I'm sure if you looked back at the July odds 5-6 months ago, this would have been overwhelmingly, it's going to be lower than the current range. And they just haven't gotten those cuts in yet because that data has not pointed in that direction. Last piece before we get to a study that I want to get your eyes on. I want to get your eyes on this. Holy smokes, this is a face-ripping rally in Aussie. Have you had a chance to see what the heck's going on here?
Not a ton. It's kind of going along the dollar selling story. But given the kind of optimism of the Japan trade deal, that's going to
Bang.
be exactly what's kind of one of the things kind of catalyzing this market. And because Aussie is such a exporting country, they're very reliant on trade deal economic or global economic trade to be kind of working as freely as possible.
Gotcha.
So that's where you get this. This is an aggressive rally. I mean, we were near 65 yesterday in this thing, or 65 last week, earlier this week, and this thing's been on a tear, and just hasn't really given up really any ground yet.
Oh, we were looking at 65, yeah. Just yesterday morning, and this has been a sad Aussie market. That frankly, you might say, oh well, Frank, you just told me that like, oh, the U.S. dollar has had such a good month, and so I would expect the Aussie to be down on the month when it's actually sideways. It's actually up here now in July. Whereas those other currencies that we're looking at, those other major currencies are down against the dollar in July. This Aussie, in my mind, if the U.S. dollar is taking off, Aussie should probably also be performing well against a number of pairs, just because the U.S. dollar has kind of been bucketed in that like more risk-on currency bucket for the last several weeks. And so it's just like, it's one of those things that like when dollar is getting hit and euro's rallying 100 points and yen's rallying 100 points and everything else, Aussie's like, we're up 20. And then when the U.S. dollar is fighting back a little bit, it's like, oh, we're going back to the lows for Aussie. And so it's been a rough one. We'll see how this continues. I probably would agree with you that this has got to be trade war talk. Anything that alleviates potential economic strife in Australia, China, Japan, that those dynamics, that's going to probably be positive for this Australian dollar. Would probably monitor when we get back to our screens, probably take a look at Chinese equities and a couple other pieces to see how this is all being digested. But so far you can see a little bit more dollar selling on the yen front, some Aussie buying, and then this euro reversing a little bit. So a number of stories, and then finally, hopefully, this dollar able to make back some ground against the Swiss franc. But Paul, let's get into this study because it's an interesting one. I took a look, and I wanted to get your eyes on this. It's mean reversion profitability in non-dollar pairs. I love this stuff, man. We're getting as deep as you can possibly get into the world of Forex research. Looking at different time frames, looking at should you be historically speaking, should you have been following this trend? Should you have been going against the trend, contrarians versus trend followers? And now we're breaking into a little bit of a different zone. What about when we take the U.S. dollar out of these pairs and pit them against each other? Is there greater potential for mean reversion, or is there greater potential for them moving in a trend following exacerbated nature when we see a big move? That's been kind of the filter for a lot of this stuff, is when we see a big move in a given market, what's the chances of it reverting or continuing? Right off the bat, before we look at the research, what do you think would be the results of looking at some of this stuff where you take the U.S. dollar out? Do you think there's more of a tendency for extreme moves or more of a tendency for mean reversion?
I think it's going to depend, and it could matter by the pair. There's a lot of dynamics that go on in the cross markets. When I say cross, it means a non-dollar cross, so it's like something like an Aussie versus the yen. I could see it being very dependent on the time frame, depending on what's going on. There's a lot of other factors that play into these cross markets that you have to be aware of. But it'll be interesting to see. I'm not actually really sure. These markets kind of have their own game they play as opposed to the dollar.
It's funny, we follow those dollar pairs against the other major currencies so closely that a lot of these non-dollar crosses, yeah, can feel. I feel like I probably got a good grasp of Aussie Canada and Euro Sterling, but like Aussie versus the yen, don't really follow it very regularly, even though it's a pretty liquid pair, and we actually do see a lot of people trading it.
Yeah.
Same with that euro yen and pound yen. See a lot of people trading those pairs, and again, they're decently liquid non-dollar pairs in there. So I agree with you. I have already seen it, so I kind of remember the results, but I would imagine that Aussie Canada and that Euro Sterling they're just so not so they're highly correlated to each other. And so when you look at this right off the bat, before we even look at the results, and the fact that realized vol in a handful of these is probably less than what it is against the US dollar for these individual currencies, tells you right away that, like, oh man, this actually might be more mean reverting than seeing extremes. Now, what I would call out that I didn't really notice yesterday is that Aussie yen and that pound yen have actually been decently volatile. The fact that Aussie yen, Paul, is showing a 6.7% vol right now, and that's only the 10th percentile of volatility for the last year, tells you that vol has been super juiced at certain points throughout the year. So that's been a volatile trade. It's not high vol right now, but one that I'll probably go back and take a look at the charts and look for opportunities. Here's the study. We looked at the non-dollar crosses that we just showed you, measured realized vol, split the data into low vol and high vol subsets, and that's going to be marked at the 30th percentile. Anything below that's low vol, high vol above it. Simulated trade performance using contrarian trade entry. So we're just looking at contrarian trade entry, but again, since these results are essentially long or short the pair, depending on whether it was breaking below or above the Bollinger Band, obviously the flip side of these, one minus these numbers, is the trend following success rates. Looked at 2 standard deviation Bollinger Bands. So when the market broke below the Bollinger Band, got long. When it got above the Bollinger Band, got short. 2 standard deviations, that's 95% of the data. So pretty rare occurrence. Probably only happens once a month. So not a ton of data points, but Glenn did go back 5 years, so we got plenty of data points. Calculated the win rate and looked at 1 to 10 day time frames, Paul, compared the volatility environments. Right off the bat, low vol versus high vol. Here are the win rates, again, of contrarian trade entry when these markets hit that Bollinger Band, getting long to the downside and getting short on the upside. And yeah, I kind of knew this was coming, but man, the Aussie Canada and Euro Sterling results, especially in low vol, but even in high vol, I mean, those are some high win rates for a binary outcome.
Yeah, especially if you're managing your risks kind of appropriately. Those win rates would be doing pretty well for you. When I talk about kind of managing your risk, that's kind of your how much you win on your winners and how much you lose as a ratio. That is very important with this. It's interesting to see in some of these markets, definitely they kind of ping pong back between two levels a lot of the time. So it's not totally surprising, but it's interesting that it's Aussie Canada and Euro Yen as kind of one of those higher ones.
Yeah, Euro Yen too. Yeah,
you would think Aussie Yen would move around a little bit more, but it's actually kind of pretty flat on the.
I'm not super surprised to see that, given how high the volatility was in there. The highest volatility right now that we showed at the start, and the fact that it's only 10 percentile, which means like that thing's probably going to whip around a lot. And so that makes sense to me that you see plenty of moves where like Aussie Yen like skyrockets and then it keeps going, or is getting hammered and then it keeps going. But yeah, the Euro Yen throwing in there as well, especially in low vol environments, seeing high win rates. Super interesting, and great point on management, because if you have Aussie CAD and Euro Sterling, which we saw at the start, relatively low volatility, they're highly correlated to each other when you're measuring them against US dollar. you're probably not going to get a lot of, it just broke the 2 standard deviation Bollinger Band on the daily, or especially if you're day trading and you're looking at like an hourly chart or something like that, and it just broke the Bollinger Band, and now I'm going to look for like a 200-point winner. You might have in some of these 200-point range for a couple of months. And so when you see that big move outside of the range, you might be looking for a 20-point winner and loser, or a 30-point winner and loser. And obviously, yeah, you want them to be symmetrical so that you're not winning, 55, 60, 70% of the time, but your wins are a third the size of your losses, not engineered for success. The last thing really quick here, Paul, is just the time held. And it's interesting to me in the low vol environment that these success rate curves do kind of increase a little bit, not for that Kiwi CAD or for that pound yen or for that Aussie yen, but for that Aussie CAD, Euro yen, and Euro sterling. You do see the success rates kind of move higher over a couple of days, but then after like 4, 5, 6 days, they flatten out or move slightly lower. So in low vol environments, you can wait a couple of days, it seems, whereas in high vol environments, this to me looks so much more downward sloping to flat, telling me that I wouldn't want to necessarily hold these trades for very many days. If I get the move that I want intraday or in 1 or 2 days, I would probably be out in a high vol environment.
Mm-hmm. Yeah, I mean, it always depends on your strategy too. Like how long you personally want to hold trades. You want to take the overnight risk. I mean, you held yen overnight last night. You'd need to been watching your screen until you went to bed.
You'd be in a different place today. And hopefully it's in your direction. But yeah, if you weren't expecting it, then probably not good to just hope it's in your direction.
Yeah, exactly. Yeah. So it's one of those things when you're holding positions overnight, you have some different risk on, and you have to either be willing to stomach that or set your stops and limits to kind of take care of that automatically.
100%. And with the takeaways here, non-dollar pairs are generally more mean reverting in low volatility environments. Yeah, saw plenty of 60%, 70%. Of course, these are historical rates. They don't necessarily indicate what's going to happen in the future. Aussie Canada exhibits the most success for mean reversion, regardless of vol environment. Crazy rates in there historically the last 5 years. Reversion trade success when vol is low peaks around 6 days, kind of confirm that. And then, yeah, timing is less important in high vol, but waiting more than a day technically, historically, can improve those win rates. I'm not a huge fan of that, and I don't think I saw that overwhelmingly in the data. But that'll do it, Paul. Yeah. Thanks so much for jumping on for today's study. And thanks so much for watching. Tom, Tony, and Vanetta coming up next.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. tastytrade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Just unmedicated boomers.
I'm going to be a little cranky today because this is day 2 in a row of lukewarm room
Just
temperature.
always about you. You were such a diva.
I bought another one. It's supposed to come prime. Thank you very much. Next day, bull. But it didn't come. It'll probably be here tonight. So
Prime's only for people that live in the shitty. So if you live in the burbs, it takes 5 days.
A little longer. Yeah. Traffic in the shitty. That's right.
All right.
That's right. A lukewarm coffee for me. So if I feel like I'm a little unmedicated, that's the reason why.
Dude, you guys are both just unmedicated boomers.
This is day 2 of 4 together for Saz and I. It's going to be a long week for Tom. By the time we get on stage in Denver, I'll have him wrapped around my finger.
Did you guys coordinate your outfits? You guys know what you're going to wear? Because Liz and Ginny, when they are on the road, they coordinate their outfits.
Tom wants us to wear skirts. I don't think I'm not going to.
I'm wearing Crocs.
I'm wearing Crocs.
You're going to wear your Crocs? You can wear your Crocs.
You can do what you want.
That's right.
I mean, they're good for traveling because your feet swell when you're on the plane, so.
Oh, and after a little carne asada, I think it's going to swell even more.
Pre-ordered my burrito.
I'm sorry. I just hallucinated for a second. You what?
No, I'm just kidding.
Casa Bonita.
Oh, you're going to get the burrito? I figured you for like the enchiladas.
Mexican food. I mean, it's the same 5 ingredients a different way. I mean, taco.
Says the Italian.
Which is literally the same 5 ingredients. Just a different way.
Like, come on now. Be for real.
Whatever.
Be for real.
I mean,
what it is.
Literally, it's the same thing.
Literally.
Yeah. Anyway.
Literally.
Did you have to go out to dinner again last night, or?
Oh, I did go out to dinner last night.
Oh, you did, girl? Okay, where'd you go?
have?
Oh, last night was the fancy dinner.
Oh, the steakhouse with the pre-ordered
the
duck.
Pre-ordered duck.
Pre-ordered duck.
Pressed duck.
Pressed duck. How was it? Okay, that's perfect. I'm done with you. Go ahead. How was it?
Besides being overpriced, it was okay. It was good.
Did you find? How did you pay?
How do they prepare do they like grill? Is it broil? Like, I don't understand.
Very interesting way they prepare it.
Like a spatchcocked
I had to
it?
sous vide it first because that's
No, they bring out the duck.
They bring out the duck. Is it still quacking?
It's not quacking, but it's pretty raw. They bring out like a raw duck, and I know it sounds weird.
Like raw duck.
And they slice off in front of you. They slice off the breasts.
Okay.
And then they give it back to the chef or whatever. And they go back
to my vegan friends watching.
And they cook it. You know, they like cook the skin or whatever.
How do they cook it though?
I don't know.
Okay.
And then
they run it over with a truck. They press it.
They make the leg and thigh into duck confit. You know, because they had already done that for like 12 hours.
That's your.
And then they take the carcass.
Duck with feet, yeah.
And they take the carcass and then they put it in a press and they press it and they squeeze all the juices out of the carcass and they mix it in with the with like some wine and some other stuff. They make a sauce right in front of you.
And how much is this going to set me back?
I think it was like 200.
I was gonna say $120. I was gonna say $1.
I think it was
Are
more.
you serious?
I was gonna say $120.
200?
Yeah.
I don't spend.
You pig.
I don't spend that much.
You ate it all. Nobody shared it with you.
No, we shared it.
I don't spend that much for groceries for a week.
Yeah, that's a treat. Here, take stuff.
It was a treat, and it was yeah. Then you know what? It's a very beautiful.
Wow, you really are not giving this a rave review.
Great service, very beautiful room, brand new place.
What is this restaurant? What is it?
Alston.
Alston? You don't know? Are you?
But you can't even pronounce it. It's that fancy.
Elston, like the street?
No, Alston.
Oh, Alston.
I think it's the name, and it was like it's brand new, so it's really beautiful.
All right, I gotta look at this. I gotta see what $200 buys me.
They had steaks and.
Oh, it's right on State Street. That great street.
Yeah.
Okay.
You know.
Ooh, fine dining in Chicago's Gold Coast.
It's pretty.
You were in the Gold Coast?
I know, rare trip.
Wow.
I'm not a big.
My old hood.
Not a big.
Oh, snap. Their website has drone shots. I know I can't afford this. A French-inspired steakhouse. Oh, duck à la presse, served carved at the table. and bread and cheese carts. Do you have the bread and cheese cart?
Yeah.
Really? The charcuterie? The charcuterie?
Everything was nice. I mean, I probably wouldn't go back because I didn't think the food was great, but it was pretty.
Wow. Was it a scene where they're beautiful people? See, there you go. See, look at this.
There was a lot of beautiful people.
Look, it does. It's beautiful on the inside. John's trying to get it.
So
It's a really nice
This
website.
is so out of your league.
Look how nice
You guys
this
got bow
is.
ties on that or something.
Look, see, it's
This is so
drone.
out of your league.
I was
You
there.
are a fish out of water.
I was there in a T-shirt.
Yeah, this is not your.
fair.
I'm surprised they let you in, really, honestly.
Well, they
This
knew
is
me.
not your jam.
Oh, just kidding.
Oh no, this.
Oh, and there's a private club membership available.
I don't know.
Okay, this place I give it under a year.
Wow.
Yeah, it's
It looks really nice.
a little snazzy. But my friend was this is his style.
Yeah. Who was your friend? Are you allowed to say or?
Tooch.
Oh, Tucci. Oh, yeah.
He makes one sale.
He didn't make the sale.
He
It was
made
like-
one sale.
It was another. It was like width. It was a width sale. Like when we were trading on the floor, if I did something and it was a good buy or a good sale, Tom would start yelling, "Width, bat, width," meaning he was there too, and I'd have to throw him a piece.
No, it was a really nice dinner. Don't get me wrong.
I'm sure it was.
Yeah.
Oh, Tooch paid. Tooch paid. You can come. You can come
No,
clean.
No, last night was my turn.
Oh, was it? Oh, wow. I don't. This
They
is
just have a
really
section on the menu that's just called La Selection Prestige.
This Tooch is doing good. He got me for Ema. He got you for here. I mean, if he gets a couple more friends like us, he won't have to pay for dinner all week long.
Do not tell Vinny about this because their bone-in ribeye Wagyu, 30 ounce, is $300.
Ooh, he'd have to split that with somebody.
Oh my goodness. Ooh.
Now, Vinny doesn't go past the golf polo. That's his high end.
Hey, this was high.
He goes, Dad, do I have to get dressed up? I'm like, yeah. You're gonna have to wear one of those golf polos. Ugh.
Yeah, that's a kid after me. You know? I don't.
Did you get an Aperol spritz?
Oh, or did you get a paloma? What did you do?
They give you something. I don't know.
They give
to
you
cleanse your
something.
palate? A little something,
No, sweetie, you have to order drinks. They don't
Yeah, they're
just
not gonna
give
give you
you
alcohol.
drinks.
no,
Did
we
you
had-
guys hold hands, you
We
and
had
the Tooch?
tequila. We held hands.
You had tequila and you held hands.
Yeah.
Wait, did you have dessert?
I did not.
Oh.
Tooch didn't have dessert either then. You said you did not.
He had a little
did?
ice cream. He had a little ice cream. He felt like a little,
Yeah, a little ice cream. Wow.
like an avocado, but
Oh, an affogato. Man, this Tooch, he knows how to live, man. When it's your turn.
yeah.
Unbelievable.
Ooh, they have a Basque cheesecake. I've never had the Basque cheesecake.
you know what? I almost ordered it.
I want to try it. It looks
Had a
different.
Basque.
It's a
had one.
different preparation.
had
I've
one.
never had a Basque cheesecake, but
I
I
don't even know
want to
what
try
you're
it.
talking about.
I've had.
It's from the Basque region, I believe, in Spain, and they prepare it in a different way. I think
different
it's
than an
lighter.
Italian cheesecake.
Yeah.
It's lighter than an American
lighter.
cheesecake.
Yeah.
I mean, my favorite cheesecake. It's really one of the only things the Italians do well. Is an Italian cheesecake.
Wow. Okay, shots fired.
Ladies and gentlemen and those of Italian descent, this is just towards me right now. It has nothing to do with you.
Nobody. I will say, a ricotta cheesecake is my favorite
Yeah, that's not.
because it's not sweet.
I don't know if they use ricotta in Basque cheese. Maybe they do.
I don't think they do, but I think
Yeah.
an Italian.
I never heard of it. I want to go to
cheesecake.
Spain. John's been to Spain. John, you ever had this mythical cheesecake they're talking about?
Missed it.
What do you say?
He said missed it.
Missed it.
I have had it,
Yeah.
and it's I had, and this is a
Oh, it's Basque, B-A-S-Q.
Yeah, like the Basque. Yeah, the
I thought
Basque.
you were saying bass, like the
So-
fish.
No,
when I was
Basque.
when I was in
Also known as Cheesecake San Sebastian.
Barcelona. We
When you were in Barcelona, yes.
went to some restaurant, and they'd written up this restaurant. They said, whatever you do, you have to get the cheesecake.
Oh, okay.
Like it's their
Their specialty, yeah.
Caramelized exterior, custard-like interior.
Yeah.
Yeah, yeah. It looks
Known
sounds
around
really.
the
I've
world
just never
for
had one. Yeah,
best cheesecake.
yeah.
And
It
so
does have cream cheese in it. It's one of the few ingredients. Not very many ingredients.
anyway, so I ordered it, and
No crust.
Corinne doesn't eat. She doesn't. Yeah,
She doesn't do dairy.
So I had this. They give you an individual cheesecake. Like they make a whole
A
cheesecake.
personal
Oh, my
cheesecake.
girl Nigella Lawson made it popular in 2021. It's
Just
only been
Nigella
around.
Lawson.
What the? No,
The chef?
she's the
Nigella?
chef.
I don't know.
She's a chef, yes.
Anyway, I had it. It was
She's
amazing.
a good chef.
Okay. Put your hands down.
Ample.
Click, boom. Put your hands down.
It was
Yeah.
right in the way. Wheelhouse.
It was amazing.
Okay. All right.
Looks wonderful. They're coming up
Yep.
with pictures now. Now I'm hungry.
Yeah,
Show
there you
this
go.
picture. This looks good. See, this looks good. Yeah.
Yeah, it's like it's a different preparation style, and it's like a different way of
Yeah, very high.
like
heat.
looking at it. Yeah.
It was unbelievable.
Wow, you should have gotten it last night,
Yeah, I
though.
just
Then.
stuffed. I ate so
Very
much
nice.
duck.
Very
All right.
Duck steak. Oh, it's crap.
Ruin it for me. What are we having for lunch today?
Greek.
Oh, okay. I can deal.
It's not bad.
No, Greek kitchen's good.
Yeah.
I can deal with that.
I like that place. They have the spicy tahini. It's great.
Oh.
There we
Have
go.
you ever had their spicy tahini?
I'm not a big tahini. I'm a tzatziki girl. I'm not a
They
big
have tzatziki
tahini.
too, but
I
they have
know.
spicy tahini.
Not everything has to be spicy.
I got
man.
sick on tzatziki. John, if you have that, you can play it on the break. Remember that day? A long
yeah.
time
we don't
ago.
know.
That was
No,
oh,
nobody needs to. We don't need to relive that.
That was the beginning of this whole thing, man. That was,
It was a little bit into it, but
we were still at.
No, we were still at 62. It was like we were still pretty
First, how many
early.
years were we there? 4
I
years?
drove by 62 last night.
I was.
I wonder who's there now.
Same.
I wonder what occupies the space.
I have no idea. The
Interesting.
guy was trying to sell it. I mean, I wish we had bought that floor. Remember?
We would have outgrown it so
No,
fast.
I don't mean that.
though.
I mean, I think it would have been a good investment. That
Would have definitely been a nice place to go, and it's a lot of snow outside, and you can't make it home.
Okay.
You know what I'm talking
it's a nice floor.
Beautiful. It's great.
Yeah, it was a nice
neighborhood,
space.
Nice everything.
All right.
Great memories.
Well, I'm glad that you had a dinner that cost more than my mortgage last night. Bat, how about you? What'd you get up to last night?
Me, last night, it was schlepping night. Last night was a schlepping night. Vinny decided that it was time for him to play some golf, so I had to schlep him there and back.
Oh no!
Schlepping night. It was a schlepping night.
Where did you take him to?
A local place, but it's just too far for him to take his bike, basically.
Sure.
So-
And also with clubs, right? Does he have?
Well, you can take a limited amount of clubs. Like I tell him, how many clubs do you really use?
Sure.
You don't need the lofted sand wedge for your game.
Okay.
You take 4 or 5,
How dare you?
wrap it back your bike, with yourself and go.
Right.
It's a little bit too far. So schlepping night. So nothing other than that.
Nah.
Schlepping.
Schlepping.
Who's schlepping?
Schlepping. My son, schlepping him.
Were you not listening? You were not listening
Not
at
one
all.
thing. No, he was reading an email.
Just-
not.
I mean, I just heard Tony use the word schlepping, and I'm like, it's not a typical word for him.
The schlepper? Oh, it's.
Yeah, I'm not. That's right, Sosnoff. I'm not a schlepper anymore. Okay, I've elevated my game.
Oh, John's got it.
Oh God, this is virus.
Oh, there we go. Yeah, this is me. Yeah,
A little cucumber and yogurt will kill you. Oh, I cannot listen to you moan. So we're gonna be we're gonna bring in the replacement crew.
Yeah.
All right. So what'd you do this weekend?
I think you might want to take a break.
Yeah. Oh no.
7:06 in the
Short
morning.
break and then come back. All right.
Gross. That was me rethinking all of my life choices at
I
that
still
point.
have that same.
I know, and I'm
here
just
in
like,
case
what
I
is
need
my
it.
job? I'm like, what am I doing here? Like, I got hoodwinked into this job.
Came back for 7:30 segment.
You did. You
Yep.
laid on the couch for a little bit, and someone got you like some.
No,
Gatorade.
no, I was in the bathroom on the
Tony.
floor. Sosnoff
Yeah.
shamed me.
Bring me some ginger ale.
Sosnoff shamed me. He's like,
My tummy
you're not gonna
hurts.
leave, are you? I'm like, I just puked, man. I'm sick. He goes,
Boot and rally. Boot
Get
and
back
rally.
in there.
Yeah, there you go. Although to be fair, we had to wrap you up in a blanket and put you on a couch in the office once too. So
yeah.
yeah, a couple times, 2-3 times. So
Yeah, a couple of times.
yeah, it's gonna be it's gonna be fine. Hey, we got a great show for you today. How about that? It is a hump day. It is a wonderful Wednesday here at Tasty Live, and that means a lot of great content is headed your way. At the top of the 8 o'clock hour, we have an options jive. Can I scale my P&L? It almost rhymes.
Can I scale my P&L?
Yeah, can I scale my P&L?
Hope so.
I hope so too. Hopefully scale it up, not down. We are going to look into that during Options Jive at 8 o'clock. Then 8:40, because it is Assume the Position Wednesday, we got What's Your Assumptions, where viewers write in with an underlying. They have a directional bias. Tom and Bat try to put on as many viewer-submitted trades as possible. That's at 8:40. At 9 o'clock, Jacob in the house, skinny on options math, volatility versus a momentum. What does that mean?
Well, go ahead.
Okay. Do you want to?
No, please.
So it has to do with which is kind of it's a really interesting piece, actually. It's which is a more interesting or which is a more reliable way to trade based on shorting volatility or betting on a trend, like a momentum trend.
Okay.
You know, it's basically a dig. It's a little bit of a dig at technical analysis.
Oh, okay.
Among other things.
Okay.
Like this morning?
Interesting. That is going to be at 9 a.m.
You won't understand it. I won't understand it, but Jacob will understand. Jacob having a fight with himself.
So if you're a technician, maybe don't watch this segment then. Or maybe you should. Maybe it'll enlighten you and it'll change your mind.
If you want to see the math.
Yeah, if you want to see the math.
It's not going to be a very subjective segment. Jacob's going to present the math.
Okay. And then we got Nikki Bad in the house, 9:40 for Johnny Trades. If you have a Tasty Bite Size account, Nikki Bat has trade ideas for you. He is going to be in with his trade ideas. And he and the crew, Mike, Nick, and Katie, are going to be in Seattle in 2 weeks for the whiteboard tour. Why are you looking at me like that? They're going to be in Seattle in 2 weeks. I know it's not your show. I'm sorry I'm not promoting your show, but it's still company related, so I am allowed to promote it.
Yeah, we don't really promote their stuff until our stuff's done.
Okay. Well, if you are on the West Coast, the best coast.
The big dogs have to eat first.
Okay.
That's right.
If you are on the West Coast and you would like to see Mike, Nick, and Katie, you can sign up for all of our events, tastylive.com/events. Special guest today on the Liz and Jenny show. It's going to be Liz and TP today. Liz and TP.
Ooh.
So I hope you like shirts with flames on them.
I actually had a very nice conversation with TP yesterday.
Beautiful.
Beautiful. And then Truth or Skepticism, 1 o'clock today. Tom Sosnoff, Dylan Radigan. What are you talking about with Dylan today? Do you know?
Yeah, sure. We're talking about free speech.
Okay.
Free speech. Is that something we have here? Do we have?
No, not anymore.
No. I meant the show. Do we have free speech on the show?
Not on the show either.
Okay, well, if this sounds like something that you're interested in, good luck with that. That's going to be 1 o'clock here at tastylive.com, but also on our Tasty Live YouTube channel. Join us in the chat. You can catch all of our content and extra content that we don't even have room for on the show on YouTube.
Our YouTube chat, when Dylan and I do Truth or Skepticism, it's a free-for-all.
Yeah, well, Godspeed there. That's going to be at 1 o'clock.
Dylan's also going to do tomorrow, Hear Me Out.
Yes. So you're not going to end the show by then?
We're going to do Hear Me Out, and then you're going
to dip?
We're going to skedoodle to
what was
you
this?
You learned all these cool words that these kids use these days. Can't you use one besides skedaddle? I mean, what are you going backwards?
It's a process.
It's a process. Unk.
Oh, there you go. That was actually good. That was that was the right way to use that. That's pretty good. Anyway, that is the run of show for today. In the meantime, in between time, I got your daily dose. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
You got no Riz.
All right, everybody. Today is a wonderful Wednesday. It's July the 23rd. This is part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings today, Mr. Bat. I know there's a couple.
The moment you've been waiting for, Tesla, Google, Tom's beloved IBM that you reminded me.
My beloved Chipotle.
Your beloved Chipotle. Vinny's beloved Chipotle.
Where's Chipotle trading now? I haven't traded in a while.
What do you think?
I'm going to say, I haven't not looked at it in forever. I'm going to say last time was like...
Ivy rank at 38.
I'm going to say last time it was around somewhere in the mid-50s, 55-ish or so. I'm going to say 57 and a half.
52. Good guess. Good
oh,
guess.
You're close. Good Pretty good. That's not bad.
It's been going kind of sideways. Made a high of around 58 about a month or so ago.
All right.
I go there every week.
I mean, do they have something going on? Is Chipotle any good anymore?
I go there every week.
Yeah,
it's good. They have the honey chicken right
honey
now.
chicken. I said they have a new product. Yeah. No, it's disgusting.
It's good.
I mean,
last time it was gross.
Casa Bonita might be a step above.
All right, I will not take this. I will not take this Chipotle slander. Hey, getting to my first headline of the day. The stock market has been running low on investors who want to sell, but that may be starting to shift. It's difficult to see what is going to drive the next leg higher for stocks, but obviously, investors have continued to shrug off tariffs and economic worries, and retail engagement seems to be driving the market to new highs. How long can we sustain this?
Yeah, how long?
Well, it's been 15 years right now, so I mean, why not for another 15?
No, all joking aside, but when Chris Vecchio was on yesterday, he said, normally with August and September does come a little bit more like market volatility and maybe some churn and stuff. What?
Oh, Chris said that.
He did say that yesterday.
Yeah, I know. I'm saying, well, if Chris said that, it must be true.
Okay. All right. You are just a snarky little princess today. No, but seriously,
Chris Vecchio said that. Okay.
I know that you have a bearish. I know you have a bearish sentiment. What market indicators are you looking for that you would say that now things are starting, the tide is starting to turn?
I would look for, I would look for sellers to be creeping in. So if you get an up opening like today, and then you end up down, I would say that sellers are starting to creep in.
Okay.
I think you see today, I agree with Tom. Actually, when I woke up this morning, I see when the S&Ps were up like 25, they're up 23 right now. I thought it was encouraging for some two-sided action at the very least.
Yeah, I agree with you.
Today. Now you've got some earnings here with Tesla and Google.
Sure.
Let's see what they do. That could be it. Setting up for Friday.
Tesla and Google are two of the weirdest thing about Tesla and Google for all the earnings plays. Those are the two stocks where they haven't really done anything to the upside.
No.
They are the not so magnificent part of the Magnificent Seven. Yeah.
Yeah.
Hey, in other news, did I? Hey, U.S. exchanges are set to reap windfalls as market volatility fuels trading rush. I think CME reported their earnings this morning, and they were like, yeah, we made a crap ton of money because everybody's trading. No, but major U.S. stock exchanges are expected to report higher second quarter profits driven by increased fee collection from record-breaking trading volumes as investors rush to reposition portfolios hit by tariff volatility.
I mean, come on, that's BS. You're in the market. Tariff volatility, any volatility, forget about what somebody thinks it's related to. Volatility's on its lows, right? I mean,
no, but you can't argue that people in April were confused and they were like just doing a bunch of things to try to recalibrate some of their positions.
If they're talking
in the market, I'm just saying.
If they're talking about volumes from April,
yeah,
sure. But recently, like if you look at CME volumes in the last month, they've fallen off a cliff.
Yes. Sure.
But if you look at their volumes back in April, they were
right. That's what I'm saying in Q2.
Headline. I mean, this is.
Yeah, the headline.
I'm saying Q2. Yeah.
Stupid.
Okay. Great. Thank you very much. So excited for this. I'm going to move on. Hey, retail traders just don't know how to quit.
$42 to UPS for something that my son ordered, which is BS, Trump, okay? BS. I'm not.
Retail traders just can't quit risky zero DTE options as trading volume booms. Option trading volumes are booming again in 2025 as the industry heads towards what would be the sixth straight year of record activity. But one subset of the market has been particularly active as of late, so-called zero DTE contracts.
Who?
Byline here says, Yo mama.
Who wrote this?
Arabis.
Joseph Adanolfi from MarketWatch. I can't pronounce his last name. I don't know this man.
Last week he was at Uber.
I don't know this man's. It's in MarketWatch. Yeah. Why are you saying that this is cap?
What?
This is cap.
It's just a it's a headline.
I know it's just a headline, but at least it's an opportunity for a larger discussion. Because we do series on zero DTEs.
Yes, we do.
Yeah, we do.
And they are widely popular.
So he's not saying that they're good or bad. I mean, he's just saying that retail is.
It's not like when they can't quit risky 0-day trading. I mean, it's not a positive thing.
Okay, but do you not know how journalism and clickbait works? Like,
evidently not.
Right, like.
No,
what's your favorite way to trade 0-day options? How about that? How about we talk about that?
We do a lot.
Or if you had to like give advice to someone,
Do a lot of defined
or if you had to give advice to someone who's like, I want to start trading 0 day.
Best advice we can give you with 0 day trades, based on all our research, is just take your profits as soon as you get them.
Okay, the time,
Quick
the
profit.
management matters.
You'll have a 90% success rate if you take your profits, take small profits, like 10%.
Sure.
And do it quick.
Okay.
The research is so conclusive. We've done
really hasn't wavered.
2.5 years of research on this, literally thousands of hours. We have all of it in our archives.
Okay.
If you take your profits very quickly and keep it to a small percentage, like 10%,
You run like a thief in the night.
run like a thief in the night, because you'll end up with a 90+% win rate.
See? So instead of being like Vanetta, this is a very
but-
crappy headline, but this is a very
but
good
that's-
discussion though.
But
Then.
that's like somebody that works for MarketWatch, okay, makes their living based
Mm-hmm.
on markets.
Yeah.
Okay, what you should do is spend a little time and actually write an article that makes sense rather than scare the children.
Sure.
Write an article that says, "Hey, if you want to,
Yeah, but that's the establishment. Like they don't know any better. Like
if you want to trade 0 day options, try trading them for a very short period of time." And this is another reason to get rid of all the stupid pattern day trading rules. Try trading them for a very short period of time, and you could have a win rate as high as 90%. And you know what? A lot more people would read that article.
You see, this started out like one of those 3 therapy sessions I mentioned yesterday. It was so good in the very beginning. You guys were on the same page, and then he told you what you were doing wrong with this article.
no, actually, I think it was the opposite. I think it started out bad, but then I think it turned into something like
good,
really like
good.
a
Then we
nice,
would still be married.
fruitful discussion there. Hey, this is great. Benchmark small cap index is approaching its first golden cross in
Oh, no,
18
not this
months.
again.
Although my personal favorite is death cross, but a golden cross, I mean, that's obviously way better. But let's talk small caps. While investors have been piling into big tech and AI like it's the only game in town, something unexpected is happening. In July, small cap and cyclical stocks have quietly staged a breakout. Let's talk about small caps, industrials, materials, consumer discretionary. What do you got? Or what's your play in small caps? Start there.
Right now, nothing.
Why not? I thought they had a breakout.
That's what the article just.
Yeah, come on.
IWM is not near its highs in the 240s area. It's 220 and change. Just to give you an example, even the S&Ps, SPY, Qs, they're all at the high end or making new highs.
Sure.
In each one of those. So yes, the Russell's caught up or catching up.
If you want to read a good article on Russell, you can read our cherry picks from yesterday.
Okay.
Oh, there you go.
Yeah, sign up to that. tastylive.com/newsletters.
We covered Russell versus NVIDIA.
Oh, okay.
See,
Thank you, Mike and Nikki.
Yeah. Yeah. Yeah.
Doing that.
Hey, JP Morgan is exploring plans to offer loans backed by clients' cryptocurrency holdings, including Bitcoin and Ethereum, as soon as next year. The Financial Times reported the move comes as other major U.S. banks, including Bank of America and Citibank, are developing stable coins amid a broader push for crypto-friendly regulation. Oh, how the tide has turned. Oh, how the turntables. No, from The Office.
Yeah.
But JP Morgan gonna do loans backed by crypto.
yeah, I can't wait to see what this looks like.
Well, are they gonna offer it to you because you're a private client?
Oh, this is gonna be great.
Can't wait to see what
You're
this
gonna probably need 5 times as much.
Exactly,
or maybe
exactly.
10
You
times.
want to borrow $100,000, you're going to put up 5 coins.
Right, at least.
We're going to need 2 times the.
We're gonna need $2 million for that $10,000 in.
JP Morgan considers offering loans.
Mm-hmm.
That's not bad.
Cryptocurrency holders.
Yep.
By the way, you're going to have to buy the cryptocurrency at JP Morgan.
Yes.
You're going to have to pay a ridiculous rate to buy it.
Sure.
And then you're going to have 2x so that the worst they could do is take half your money.
I like those odds. What's Bitcoin doing this morning?
Bitcoin hanging out at let's just round up and say 120,000. Trade up to 121, almost 5.
Oh wow.
It's 119.6 right now. I'm talking about Bitcoin futures actually down 700. Ethereum is down $50.
Well, Coinbase and PNC are working together as crypto reaches for Main Street. The largest U.S. crypto exchange and a Pittsburgh regional lender announced a strategic partnership yesterday that shows how crypto and old school banking are coming closer together. The new agreement will give retail and institutional customers of the seventh largest U.S. bank a way to buy, sell, and hold crypto through their PNC accounts.
Coinbase can't be found. It's Eric 404 is the stock price. So
I see what you did there.
code
Yeah,
Code,
cool, yeah. Coinbase PNC.
Well, we don't trade PNC. And
Well, I know you don't trade PNC.
Ivy rank at 36 in Coinbase, even though it has earnings July 31st.
Coinbase.
Coming up,
Yes.
looming.
Yes.
I have a short Coinbase right here.
Okay. But what do you think about being able to buy and sell crypto through your bank account?
What took them so long?
Okay, there it is. Hey, let's get to some earnings from last night. Enphase is going to see a 20% drop in U.S. home solar market on a tax credit loss, they reported. The residential market's going to shrink 20% next year as tax credits for homeowners end under President Trump's sweeping economic legislation. What did you do in Enphase?
I sold a strangle with bigger puts than calls. So I was playing it to the upside. The stock's down about $2.50 or so.
Okay, that's not bad.
It should still work out.
It's way inside the expected move. I think it's still going to be a winner, but I played Enphase to the upside, and we'll see what happens. I think it's still going to be a winner.
Enphase is traded down to as low as $35-ish.
Yeah, Enphase has been a PIG pick.
Poor
I think when
Enphase.
this all comes out and said, that'll probably mark the low in Enphase.
Yeah,
Yeah.
I agree. But I'm going to buy, I'm short of August Strangle for like, whatever, let's see, 348. Yeah, it closed last night at 254. I think it's going to close. I think it's going to open lower, actually. I think it's going to be a winner.
Beautiful.
The White House intends to publish a plan of action today that calls for the export of American AI technology abroad, as well as a crackdown on state laws that are deemed too restrictive to let it flourish. The Trump administration is going to unleash this big, beautiful AI plan today, but that should be very beneficial to stocks like NVIDIA because they play well with this administration. What are you doing in NVIDIA?
NVIDIA slid the last 3 days down to around 169, if that's really a 167.
I wouldn't call that a slide.
169. 173 is its high.
Yes.
Just to give you an idea, in April it was $95.
Anything in like AMD and Intel, I think, has earnings this week.
Intel might have earnings tomorrow.
Intel has
Would that not be this week?
on the 24th after the close, so we would take a look at that.
Yeah, we'll be selling some puts in Intel here.
Okay.
Some putties here,
Here, putty.
Here, putty. Okay. In other news, AI startups raised $104 billion in the first half of the year, which was already all of what they raised in 2024. But startups that are building AI applications are seeing much more activity by volume. The dollar amounts are lower than at the infrastructure and AI model layer. So people are really going more for AI applications. And most exits have been bolt-on acquisitions. What do you think of just the amount of money just funneling into AI right now?
I think it's good. I mean, we need.
You don't think it's frothy?
Oh, I think it's really frothy.
Okay.
Oh, I mean, I'm not putting my money in there, but
Sure. But like these companies that no one's ever heard of, they're like, oh, we're worth $8 billion now. And I'm just like, I ain't never heard of you.
I'm all in on AI. I just, I think the valuations are frothy, but I'm all in.
Okay. You do with that what you will. Hey, speaking of AI valuations, OpenAI and Oracle are deepening their AI data center push. Oracle's going to have a new contract to get around $30 billion, I think, out of this deal. OpenAI and Oracle are going to develop another 4.5 gigawatts of data center capacity. I mean, look, the only
How many
goal
people do
here.
you think are trading open, thinking it's OpenAI?
A lot. Really.
Oh, that's what you think was driving it?
I mean, I'm asking
I
you.
think it's the.
I mean, do I think?
Oh, interesting.
Do I think that some people are trading open, thinking it's OpenAI?
Oh, interesting. I never thought about that.
It's open door technologies. Sounds like it. Could be. I mean, yeah.
Isn't Open Door real estate technology?
Yes, it is. Yes.
It is.
So I bet.
I just told you, Open Door Technology.
I know, but I think a lot of people think it's OpenAI.
Well, get in when you can.
Well, Open, the
Get in.
technology one, is down 20 cents, trading 260 or something like that.
No.
Or Oracle, on the other hand, is trading 239, up around $1.
What are you doing in Oracle?
Ivy rank at 27, earnings September 8th.
Nothing.
But okay, all right. Amazon is buying an AI company called Bee that makes wearable listening devices. Oh no! Amazon confirmed it plans to acquire Bee, the startup that makes a $50 AI-infused wearable. The terms of the deal were not disclosed. Amazon, as of late, has launched a flurry of AI products and services.
AI infused doesn't mean you can eat it, okay? I just want you to know, because I know you go to a lot of restaurants that have infused stuff, so I don't know, you can't eat this.
AI infused sounds like the biggest crock of shit I've ever heard in my life.
Okay, I'm just.
My product's AI infused.
All right. Amazon.
You're AI infused.
Amazon.
Up $1, 228, earnings July 31st.
You're over infused with AI.
Okay, I don't know what's
Crock of
happening.
duty.
I don't know what's happening. Hey, Tesla set to report earnings after the bell, and all eyes are going to be on how Tesla is going to explain some of its recent numbers. Tesla's California sales were down for 7 straight quarters. Tesla's sales and deliveries overall were down. They reported their delivery numbers. That's not private information. But Tesla EV registrations in California fell 21% in the second quarter. Tesla doesn't have a ton of opportunities to even expand abroad just because of the polarization of some of his policies. Like, he's not picking up sales in Germany or China, for example, to offset the loss of sales.
Not picking up sales in California,
in
that's for sure.
In the U.S. But something that is interesting that did come out yesterday, did you see the pictures? I'm going to the next story here, John, of the Tesla Diner. He wants to launch a series of concepts of these across the country. So the first Tesla Diner opened in Hollywood. It has charging stations and 2 66-foot movie screens, so Tesla owners can congregate, eat, be entertained, have stuff like this. But again, this started in the before times, and then now obviously took a while to come to fruition.
When the Democrats loved them and the Republicans hated them, now that the Republicans love them, the Democrats hate them. That's the before time.
Yeah.
All right, I just want to make sure.
Yeah, but I would say that I would say that it's not as equal though, because Republicans aren't buying the cars though. They may like his political stance, but they're not contributing to his bottom line.
He has this is the dumbest idea, because when you start building diners.
Well, but you have to sit and wait for your car to charge. Like, it takes a long time. It's not instantaneous. So you may as well have like a brand. I'm just saying, like, I'm not,
Well, the food industry is a tough industry as a whole.
That's my point. That's my point.
Yeah, but it's got movie screens and you could have meetups and stuff there.
I got a guy who's got a couple of sushi places. He just bought himself a $5 million home. Do you think it's a front for something? 100%. 100%, right?
What's the expected move in Tesla?
How do you make any money selling sushi?
I get it.
What are you gonna do in Tesla for earnings?
331, down around $1. It's had some volatility. Everything's only 19.
I have no position on in Tesla right now.
Okay.
280 to about 360. It's 330. It's right in the middle of its range, pretty much. I mean, for the last month or two.
I don't know yet. I have no position on.
Well, off its highs of 500, off its lows at 220.
I don't know what I'm gonna do yet. I'll probably sell some junky strangles with a day to go.
Some junkety strangles?
Junky.
Oh, junky. They said junkety. Okay. Hey, Kohl's shares jumped yesterday as retail traders drove a meme stock-like rally in the beleaguered retailer. Kohl's briefly doubled in value yesterday. Kohl's shares opened up at around 100%. Briefly. Yeah, I know. But this morning, guess what's joining the meme stock party? GoPro and Krispy Kreme. So I just saw the banner come across CNBC. So
what's the symbol for GoPro?
GPRO and D-Nut for Krispy Kreme.
All right, D-Nut and
it's the best, yeah.
Have to be, especially Kohl's, has to be the dumbest meme stock phenomenon, if that's what it really is.
What about GoPro?
GoPro, I can almost see the sale, like from a salesman point of view, like you could sell it. They've got some technology, AI.
Or like Apple should buy
Kohl's.
GoPro.
I mean, do you see who goes to Kohl's? I mean, this is suburbia. Kohl's is like
GoPro was $1.37, now it's $2.37, it's up $1.
Kohl's was $10. It traded up to $20 yesterday. It's unchanged at 14. But Kohl's, I mean, it's a brick and mortar.
Stupid. Like, who would buy GoPro up $1?
I'm not telling you to do this, but I'm just saying
Kohl's
meme
did trade
stocks.
what was it, 190 at one point? I mean, not Kohl's, GoPro, didn't it trade up to?
Trade over 100.
Yeah.
Yeah, but that doesn't mean anything. That was just.
I get it.
What do you think is driving this? Are people just bored? Like,
I think it's a couple things.
I think the people from the penny world, stock world, have come over and infiltrated our space. That's what I think.
I think it's a bunch of things.
okay.
I think it's the fact that this is the worst sports gambling market right now. There's nothing.
Oh, interesting. Okay.
Nothing to bet on.
Okay.
Baseball, and people hate betting on baseball because it's so slow.
Right.
So I think it's a lot of sports gamblers
Okay.
that are jumping in stock market because this is cheap stuff. No.
Interesting. Okay.
That's one thing. I think it's also, it's summertime. There's a lot of kids like Tony's son sitting around with nothing to do, so they're buying $1 stocks.
So they're YOLOing calls and
Yeah.
Kohl's?
Yeah, exactly. No, not that, but just finding anything that's trading for $1 or $2.
Sure, yeah.
I mean, these are rinky-dink, worthless companies.
Yeah.
Who cares?
Is it the crypto? Is it the crypto
Yeah, kind of.
trading space?
It's just like so they're moving off of a meme coin into a meme stock.
Well, hey, you and Dylan are going to tackle the issue of free speech at 1 o'clock. Maybe you throw this in the mix too. The billionaire owner of the Los Angeles Times says he's going to take the paper public in the coming year. The Times, like some other papers that have been acquired by billionaires, has faced its fair share of controversy for firing people and, trying to more align with more private equity values than
I don't know who
journalistic
owns the Los
integrity.
Angeles
Dr. Patrick Soon-Shiong is the billionaire owner of the LA Times since 2018 and wants to take the paper public.
Timing.
What?
All right. I don't have any idea what
Yeah, okay.
the LA Times.
Yeah, all right. Do what you want to do. Hey, sad news. Hershey's is going to raise chocolate prices as cocoa costs remain high. Hershey's told retailers they will be taking a double-digit price increase on average across its confection portfolio due to a surge in the cost of cocoa.
How about making good chocolate, Hershey?
Oh, come on. Hershey's with almonds. Iconic. Whole almonds.
HSY, you ain't got no alibi, is Hershey. HSY.
IV rank of 60, trading 180.
Whoa.
Yeah, 181. Earnings coming July 30th or so. I'm going to look at September options. They're untradeable. They're $1.30 wide. Never.
Okay.
Although I have been to Hershey, Pennsylvania.
Okay.
That's where Hershey's is made.
That is true. Hey, Netflix, they are post earnings, but the company during their earnings call, they announced.
Hold on one second, because he dissed Hershey's and he gave me that side eye stink. He almost opened one of his eyes like the two piss holes in snow that they are. What's your favorite chocolate?
Cadbury. Cadbury makes good.
What's your favorite chocolate?
Cadbury makes the best commercially
Don't give him ideas.
available chocolate.
What's your favorite chocolate?
Okay.
I don't really have a favorite. I like dark chocolate.
Yeah, you do.
What's your favorite dark chocolate?
Like I'm happy with Trader Joe's dark chocolate.
That was too easy.
Yeah, you do.
I like
Okay.
dark chocolate.
Hey, Netflix, post earnings, but they announced during
I
their
don't like
earnings
dark
call.
chocolate that talks.
Okay. They Netflix announced during their earnings call that they have used AI to generate scenes in some of their series to save money. Netflix used AI in a show's production recently, and they're now experimenting with other similar tools. Fair game or foul?
That's
This
fair.
big studio can,
Sure.
well, instead of paying actors and directors and producers and gaffers and all this other stuff, they just use AI?
I mean, listen, you're asking. They have to do it on budget, right? Yeah, sure. I'm okay with it.
Okay, well, Netflix though, what's Netflix doing post earnings?
Up $3 or $4, 194, but that doesn't tell you the whole story.
Had a bad day yesterday.
It had a bad day yesterday. Bad day.
And
had a
you
bad
had a bad day.
Just a week ago, the stock was almost $100 higher.
How's the IV in there? Did it get totally crushed?
11.
Yeah,
It's a directional play here for sure.
This is the funniest story I've come across in a while. A firefighter in Montgomery County, Maryland, flooded a high school baseball field after a home run ball struck his personal car. The Montgomery County Fire and Rescue Service had to issue an apology following a water discharge after the fireman, he heard someone, so a ball got knocked and they said, hey, watch out, the ball hit his car. He got mad about it. So he literally unleashed the hose, flooded the field, and the people were like, what the heck?
What an idiot.
Yeah, that's letting your anger get away from you.
Yeah.
This is no good.
Anyway,
The rule for there is don't park where you can hit home runs.
I mean, but if it's like any municipality, sometimes the firehouse is next to like the field. Like you can't.
Yeah, where we
play.
used to play softball, we had a firehouse. I used to hit the ball in their parking lot
Sure you did.
all the time. Tony knows.
Sure you did.
It was a regular thing. I would have to send.
It was a regular thing. It was a police.
Tony,
station.
can you
He
go
has
get
the story wrong?
Tony, can you go get the ball? It's underneath that car.
That's fine. Hey, finally today.
Go on the roof of the building, and the building
Finally
is very
today,
close.
in my viral video of the day, I love to follow just social
Tony,
media
go get
accounts.
the ball from me. You know what?
Okay, I'm so close to being done. I'm almost there. I can taste it. So I like to.
4 days of this.
Oh my God! I hit another one into the.
Oh my God! It's only practice.
Tony, go get the ball. We're out of balls.
I like to follow social media accounts that are just basically titled "Why Women Live Longer," and I know the holiday season is far away unless you go into the store and then everything is ready for Christmas now. But this dude tested out a question that I'm sure a lot of people have had, but he executed it. Watch this.
Was that the Christmas?
Ready? So if you ever buy a U-cut tree, they have a thing that and the guy was like, well, what happens?
I like it.
Jump through it.
I like it. I would love to shove Sosnoff through there.
I like that.
I like it.
Oh, men.
I like it a lot.
It was funny. It was, he didn't
I like
get
the Christmas wrap you, Sosnoff. Be nice.
Hey, look at me finishing right on time. Bat, what's coming up next?
You did so good. We're going to take a quick 90-second
You
break
get
and come
extra tzatziki today.
Yeah.
We'll be back in 90 seconds. It's Tasty Live.
I didn't get sick last night. I was fine last night. Woke up.
It's the virus. It's the tzatziki virus. A little cucumber and yogurt will kill you. Oh, I cannot listen to you moan. So we're gonna be we're gonna bring in the replacement crew.
Yeah.
All right. So what'd you do this weekend?
I think you might want to take a break.
Yeah. Oh,
All
no.
We are gonna take a short break and then come back. All right.
Gross.
All right.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Leadership.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P is in record territory, up 2250. NASDAQ up 18, trying to get to record territory. Russell up 15. It too trying to get to record territory on the upside. The Dow up 229 for the year. It won't be there as the Dow was trading around 45, 7 or 8 at one point. Volatility in by 38 cents. That's the biggest move pre-market we've seen in volatility to the downside, with the market up. Even the S&P's up 22. We'll see if that holds. Bonds down 17 ticks, out enough 113.14 after trading over 114 or just a skosh over 114. They're mid-range at 113.14, tight range of 07 to 25, high to low. Bitcoin 119.4 after trading up to 121.4, down around 1100 or so. Oil down 34 cents and gold down $10 to 34.33 or so. From the earnings play, ENPH was down around $3 early on. It's down around $2.25. FCX was up small. Is it still up small? Basically unchanged, down 30 cents. And telephone was down $1 earlier. It is still just about down $1. That's all I got. Tesla, Google, IBM, CMG, AAL. Go.
Ooh, I got to do some stuff in some of those stocks.
Got positions?
Not in all of them, but do I have an IBM position?
Love a little IBM.
A small one, yeah. IBM, I got to write those down. AAL, IBM, Google, Tesla. What was the other one?
CMG.
Oh, CMG.
I mean, obviously, there are more.
I like selling some puts in CMG.
Okie dokie. Well, you'll be able to do that.
I'm sure I will. There'll be put buyers.
Mm-hmm.
I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live, and thanks for spending another morning with us. It's 7:52 at Central Time. Let's see what we got here. These are confirm and send emails that came into us over last night. It's Wednesday, July 23rd. Can't believe we're plowing through this summer. Slow down. Time. Let's see what we got. It seems high volatility is non-existent with the exception of a few stocks and earnings plays. Because of that, would you wait until next week to roll your positions and maybe try squeezing a little more from them?
No. I mean, if you really think about it, you've got volatility low. Means volatility is low in the front month. That's what you're short. You're almost getting like an acceleration of theta because you've had this position on for a couple of weeks and now volatility is low. So taking it off, you could take it off now and roll if you wanted to. If you were going out to the back month, this is irrelevant to me. I'm doing it on time or sooner. I'm probably not doing it later.
I agree with the bat here. You know what? Just because volatility is non-existent in a lot of stocks, and some things you got to do, you got to play with earnings and things like that. That doesn't change the way we think. That's every cycle.
Mm-hmm.
We're not going to roll. We're just going to keep our stuff going. I mean, we're going to roll our stuff forward, and we're not going to try to squeeze a little more. Now, Tony and I are going to be on the road on Friday morning, so it's going to be hard for us to do stuff. We're going to be on the road tomorrow afternoon. We're going to be on the road Friday morning, and then Friday afternoon too. So we're going to probably be a weekend behind. I mean, to be fair, we're not going to be able to do much on Friday. So we're going to be a little behind. We may roll a little bit today. We may roll some tomorrow, when we're heading out to Denver. But for the most part, we'll probably be a day behind. So we'll probably roll mostly on Monday. But that's fine. That's totally fine. It doesn't mean anything. Let's go to the next slide. I was recently reviewing the 2 Top Dog series that you did in the past. We did those years back. We talked about those were kind of like portfolio series. In the first one, you discussed lowering the cost basis extensively. In the second one, you really didn't talk much about that, but instead you talked about focusing on theta. Is this because your thinking's changed on how to manage a larger account, or was it because in the second series, the account was not quite large enough to justify portfolio margin and owning underlyings didn't make sense?
You did the series. I'm going to let you default to this. I don't remember for details in here.
The funny thing about this is both those answers are right. First of all, the first one we did was specifically on cost basis reduction because it was a portfolio with a lot of underlyings. So what we were doing was buying stocks we liked, selling stocks we didn't like, selling puts against stocks we didn't like, and selling calls against the stocks we liked. It was basically covered called covered puts. And that was essentially the kind of the core of that discussion. In the second one, we advanced it to talk more about writing premium around a kind of a core portfolio. So we changed it up a little bit. They were not the same exact discussion. So in this series, the second one, the portfolio was smaller, and owning underlyings wasn't the best use of capital. So we did focus more on selling premium and creating positive theta. Yeah, don't overthink this. They were both directed towards a slightly different, discussion, different audience. But I think you nailed it. Let's go to the next slide. You aren't a macro trader, but this week we've seen both gold and silver make big moves. The dollar resumed its fall, bonds have rallied, and for good measure, the meme stock mania is back. Do you think the market is sending a signal, or have we moved to a place where there really are no tells?
I don't know if we've moved to a place where there really are no tells, but I don't see any tells with volatility being as low as it's been today. Now making new lows, finally. It's been holding its head up, actually. I'm talking about /VX. But this could be one of those tells right now today. You finally got the market a little bit higher on the opening, something we really haven't seen too much. With volatility low, volatility in by 2%, market's only up, let's call it a 0.5 percentage point or less. You finally got bonds kind of going sideways. You got gold down $11. Maybe today's the day where you get a little bit of a breather in the market, but I don't mean that's the top in the market in the end. So for me, I don't know. Maybe today's the day.
I would say that
a little frothy with meme stocks too, I would imagine.
Do we think the market's sending a signal? I mean, the market could be sending up a few pretty distant red flags saying, listen, anytime you get back to meme stock mania, you are a little detached from reality. Because, I mean, if you're buying GoPro right now or Krispy Kreme donuts, yeah, you're detached from reality. Mm-hmm. But first of all, have we moved to a place where there really are no tells? There's never been any tells. Go find a tell. Go back as far as you want. There's no tells. And we're not macro traders, but gold and silver making big moves, we're cool with that. Dollar making big moves, we're cool with that. Bonds rallying, we're definitely cool with that. We're contrarians. We like fading all these prior moves. So we've done really well on the dollar, on bonds, and we've done okay on gold and silver. So that stuff hasn't hurt us, But is the market sending a signal? Everybody wants to know that. Yes, we'll see. I don't know. Let's go next slide. As I understand it, delta can be used as a share approximation for hedging purposes. For example, if I want to hedge 100 shares of long stock, I could sell 2 50 delta calls and I'd be perfectly hedged. But as we all know, stocks move. My question is, how much slack would you provide if you're looking for the perfect hedge? If you begin with 2 50 delta, short 50 delta calls, would you adjust them when they hit 45 deltas, 40 deltas, when they hit, 45
whatever,
deltas,
the number,
whatever
it is. I mean, first of all, I normally do, if I'm going to do this, it's a bullish strategy covered call. I do 1-to-1. That leaves me long around 70-ish deltas, 60 to 70 deltas on the play. You're doing this as completely delta neutral, so I would hope that the stock has high IVR. So at least you're selling, on entry, you're selling, rich premium on this, and you're left with 0 delta when you put it on. You're synthetically on this play, a little bit short if the stock rallies as you mentioned here. So for me, when my delta got from 0 to around 25 to 50 on the overall position, not the options themselves, I would look to do something. That would mean probably looking to sell a put, which would give me, 25-ish delta, get me back to neutral on the overall play, or 15 to 25-ish deltas, meaning ever so slightly short, looking for the move to come back a little bit, which would use no buying power. That's one thing that you could do. Sounds enough? So that would make the calls that you're short go from 30 to about 40-ish.
So when you're asking how much slack would you give to the perfect hedge, it really depends how aggressive you want to be.
Yeah.
If I begin with 250
pretty aggressive
calls
right on entry, right?
Against 100 shares of stock, that's really flat. Mm-hmm. If it moves like 10%? Am I going to touch it? 20%, 30%? Like, it really depends on the trader. I can tell you right now, if you're trying to be exactly delta neutral, it's next to impossible. If you're trying to, all the time, if you're trying to auto adjust, for example, it's almost impossible. But if you want to adjust when your deltas move by, 10,
how would you adjust?
10 or 20%. Well, you just roll up or down the calls or puts. That's all you do.
Oh, you would move the calls.
Yeah. Well, that's all I do.
So if the stock went higher, you would buy that now in the money call and sell at the money or just out of the money call?
I mean, like I said, you can always adjust the calls. You can do anything. Here, the point is you're not going to want to be, you're not going to be always exactly neutral. So if you want to adjust, you adjust. I said 10%, 20%.
Disregard his answer, ladies and gentlemen.
30%.
Please, thank you.
Yeah. The right answer. Let's go next slide. When stocks like Open or KSS, Coal, get going, sometimes it's fun to take a shot. But I'm not sure what the best way to do it is. Are these better played by simply buying the stock?
Probably, yes. That's the way that I would go to, would be looking at the stock. The options are okay. There's plenty of volume in them. I think you'll get filled at, mid-price. You'll be able to get fair trades. Coal's IV rank is 122, which means it's never been higher. Open, Coal's a $14 stock. Open, on the other hand, is a $2.50 to $3.50 stock. That's just a pure stock play. You're either buy or sell the stock.
Yeah,
it's a hard to borrow stock, so it's going to be hard to sell Open on an opening trade.
If you're trading like GoPro or Open or DNOT, whatever, I mean, you could take a shot with the options if you want. The markets are a little wider than I'd like them to be, believe it or not. The stock market's really tight. It's like a penny wide with no commissions. So we'd probably do stock, but hey, Coals, I'd probably do options. Open, I'd probably do stock. It's really hard to say. I tried to trade Open the other day, and I couldn't get anything done in the options. So, you can easily get stuff done. I didn't want to force it. I would say stock. Best way is probably stock. Not the most capital efficient, but probably the best way in some of these cases. Let's go next slide. And this is the last one. The 21 DTE mark is coming up on Friday. And for my short put spreads that expire on August 15th, they look good, but they haven't reached the 50% target yet. Sometimes tastylive says not to add more time to spreads. Sometimes they do. For naked positions, we certainly do add time. Do I just let short put spreads expire in August if the 50% is not reached yet? Or do the studies at tastylive say it's best to try and roll those spreads and iron condors for credits to September?
Yeah, I get your point that you're making here on, a vertical spread, adding a little bit more time. But let's be completely transparent on this. At 21 days, we're going to make that decision. So it's coming to you right now. Like today, you can make it. You got 23 days to expiration. Make your decision. If you decide to stay with that defined risk spread that you have on, more power to you. Me, I probably close it. Or at the very least, roll it from August to September if you still want to be synthetically long of this stock by being short a put spread. But I move everything from August to September now, Friday. I'm moving it. Closing it or moving it?
I agree with you. So I am in the school here that I am going to listen. I don't roll like iron condors forward. I would probably close them. If I want to reestablish, I will. If it's a vertical spread,
I think this is a vertical spread, right?
I know. If it's a vertical spread and it's a winner, I probably take my profits, even if it's not even close to 50%. If it's a vertical spread and it's a loser, I probably roll it forward. My guess is on vertical spreads, the IVR is pretty low. So if you want to roll it forward and you can do it for a credit or a small debit, I probably roll it forward.
Yeah.
So vertical spreads, I roll forward. Naked options, that's up to you. You can do an aggressive offensive roll here and roll it forward if you want. But like stuff like iron condors, I close those out.
Very good, sir. You know what? Let's take a quick 90-second break and come back. We got even the S&Ps up 23. They really haven't moved too much. NASDAQ up 15. We got volatility in by 35 cents. We got an option jive coming up next. We'll be back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Oh my God, I forgot to tell you something. Hold on one second. My last day, early in the morning, I'm washing my hands in this place, you know, like this communal shower, bathroom area. I'm washing, and the guy in the stall is listening to the show.
You're in the shower in a campsite in Missouri.
Well, there's showers and there's stalls to do number 2 in.
I got it. And you're telling me that somebody...
And a guy starts laughing. He's laughing, so I stop washing my hands and I'm grabbing like towels to clean. I'm listening to, and I hear your voice.
Why didn't you go knock on the door and say...
He's taking a shit, all right?
I know. Oh, why didn't you knock on the door and say, hey, Tony Batista here?
I mean, what do I do? Hey.
Right, autograph session happening right now.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0, really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
All right, Tom. All right, Glenn. All right, Julia. What's one stock or trade strategy that everybody's really hyped on right now that you think is all smoke and mirrors?
I feel like the hype is changing a lot. Like it was quantum stocks. Tesla's obviously like in and out of being hyped. The dollar now is like a big hype trade. I think quantum stocks are going to come back, right? Like I think that in the AI hype's not over yet. So any like AI heavy stocks, any like, you know, Microsoft, IBM in there a little bit. Yeah, I feel like the AI hype's still going.
Well, I mean, if it's trading there, it's probably not smoke and mirrors, but I do think that there are certain sectors that have blown up to kind of like somewhat ridiculous levels. You know, I think that some of the digital asset, the crypto stocks, are trading at a huge premium to the price of spot crypto.
I think following the taco trade, the Trump always chickens out, that's a dangerous one because even if it's played out 9 times out of 10, those have been the biggest movers. So if he doesn't chicken out, I'd watch out.
It's options. Jive. Option jive. Even the S&P's up 23 and change. John doesn't like your attitude today, so change it, okay? He says you're a little
What?
a little too happy or something. I don't know. John doesn't like it.
My attitude's good. I got a crazy packed day.
I just got a text message from my son, who will be driving in January if he passes his road test.
That's scary.
Yes, he's now going with the driver, you know what I mean, around, you know what I mean, taking his lessons.
Read?
Yeah, well, he's going in a car, you know what I mean? He's done the classroom part of it. Now he's doing the car part of it. It's mandatory here in Illinois to get your license earlier.
Right.
So now he's talking about cars that he wants.
When does he turn 16?
He turns 16 in January.
Okay. Got it.
Okay. January 27th. So that's when he
Okay.
So that's his drop dead line in the sand date.
Yeah, okay.
He's warming my heart here, Sosnoff. What car does he want?
Oh, you're gonna buy him a car. Don't buy him a car.
I have to get him a car. I'm not gonna let him drive mine. I have to get him something. I'm gonna buy him a used car. I'm not gonna buy him a new car. But what car does he want?
It's gonna hurt Nikki. Got him a car.
I got Nikki a car.
Okay.
Chevy Impala. No, 30-year-old Mercedes.
Here's what you do. Why is a kid a 30-year-old Mercedes?
Me, I wanted his first car to be a Mercedes. I wanted his last car to be a Mercedes. Had like 30,000 miles on it. It was beautiful. But go ahead.
Okay.
He turned it in.
First of all, when I got my first car, I had to make my own money to get my
Of course, I had a $200 Chevy. I mean, yeah, I get it.
car. I had a $500.
When I was handy. I could change the oil. I could give it a tune-up. I had a timing light. You didn't have those kind of things. You know, I would work on the car.
Oh my God.
Because I'm a man. I mean, I wasn't, raised to be, like you. Go ahead.
I can't get oil on my fingers. Anyway.
Because they're so soft, it would dirty the palms. But go ahead.
So, what kind of car are you going to get him?
Yeah.
I mean.
No, he asked for this make and model of a car.
Oh.
He warmed my heart, Sosnoff. That should be the hint.
Oh, it's probably going to be some kind of, like, Camaro. Or...
Ding, 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 ding. The kid wants a Camaro. Who is he? Where does he come from? I mean, that just shows you, what is it? Not flight or fight. What's the other one? That they say, nurture versus nature? Is that what it is? It's just ingrained in him, Sosnoff. He doesn't know anything about a Camaro and Italians. I mean, he's the only Italian in the neighborhood, for crying out loud. This is so good.
Oh, God.
This is so good.
You're so gullible. What he did is he went to his mom. He said, Mom.
What's
Dad? I can tell the conversation. Mom, that's pretty easy. Yeah, he is. And her answer, yeah, he is. And what kind of car does he like? Like, what's his thing? Camaro.
I never had a Camaro. Mark Scally had a Camaro. Mark Scally's brother had a Camaro.
Tell me you want a Camaro. Hey, Dad, I want a Camaro. Oh.
Isn't that, I mean, come on. Doesn't that just warm your heart?
Not really.
I want to get him a Jeep. That would make Nicky very...
I never bought my kids a car.
You never... Oh, you only just buy them homes and islands and palatial estates? I mean, you never bought them a car. You know what? Stop yourself.
Islands.
Stop yourself.
I only buy my kids islands.
It sounds...
You're right. No, I know you're right. But no, when they were kids, we lived in the city. We not learn car.
They probably didn't drive for years.
I was like, Ace got her license when she was 16.
Did she drive?
Of course she drove. She got her license when she was 16. One of our cars.
A Porsche?
I mean, listen, we live in the city. You don't want kids having cars.
So would they drive the Porsche?
Whatever car we had.
Ugh, unbelievable.
Cars.
Oh, me. Kid's got a Camaro. God love him.
Red.
The C28. Do they still make those?
Sure, I know what
Do
a C28 is.
Do they?
All my Italian friends said Camaro.
I'm going to have to talk to Tucci and ask him which one I have to get.
All my Italian friends had Camaros.
Seriously?
When we were kids. Every single one of them. They were all Z28s or Z whatever they were.
In that neighborhood?
What?
Who lives in that neighborhood?
They were all...
Did any of them wear Dago tees?
They were all the same. They were all the same.
And what did you guys drive? Subarus?
Peugeots. Saabs.
Sorry, ladies and gentlemen. I totally digress.
Peugeots and Saab.
The occasional Volvo.
I don't even know if Volvo's around that. Oh my God.
Going straight to hell.
Yeah, that's exactly.
I haven't cried in a while.
That is.
Let's go. Option jive. Switch gears. Oh, there you go. Yeah, something like that. That's exactly. Oh, it's a 78. Yeah, I don't know if we're gonna go that old. I mean,
no. This is.
That's good. That's good right there.
No.
I mean, come on.
No, I don't like that car.
With his flow from his cheddar. I mean, come on.
I don't like that car. John,
That's even got a hood.
Let's do it like a. Coupe. I would rather do. Let's see, 16. How about a 73?
I get him. No, 69. The smaller ones, like the smaller 69 Camaros, those were.
I had a 69
badass.
Barracuda.
Of course you did. Of course you did. I was riding around in a 62 Chevy Impala, for crying out loud.
I had a 69 Barracuda with 160,000 miles.
Unbelievable.
Car made
Probably 16,000 miles. So you
car made it to 200,000 miles.
Yeah.
Sold it for $100.
Beautiful. Yeah. You should
All right.
get back, don't you?
No, I don't want that back.
Yeah, you do.
But let's do this.
Can I scale my P&L reliably?
Reliably. Can I scale my P&L reliably? Don't worry, it's too many words for Wordle.
Yeah. Yeah. Yeah.
Can I scale my P&L reliably? Sure. I mean, sure. Let's go to the next slide. Of course. We wouldn't be in this business if you couldn't. In many of our studies, we cite the positive average P&L of trades like short strangles and SPY. Many traders wonder how they can achieve this average P&L of their accounts. How do you achieve an average P&L?
By not making mistakes.
Make a lot of trades. You want to achieve an average P&L, you make a lot of trades. You make one trade, can't help you. You make a lot of trades, we can help you. If the win rate is 75% and this is on a 16 Delta Strangle and the average P&L is $78, how do you achieve that? You make a lot of trades. It's that simple. Let's go next slide. And obviously there's other factors like high implied volatility and everything else. We have lots of deltas to choose from when we're looking at an option chain. We generally default to the 16 to 20 deltas. But can we use IVR to optimize our delta selection and safely increase our profits? Sure. If you want to use IVR to optimize your delta selection, then when IVR is super high, you can bump up your delta selection. We don't necessarily do that much, but you can. Let's go to the next slide. Notice that as you scale deltas in low IVR, your P&L increases, but not dramatically. In high IVR, your P&L goes up by roughly 50% when you scale from the 10 delta strangles to the 30 deltas. So all we're showing here is that you get paid for scaling deltas in high IVR. That's the main takeaway here. You get paid for scaling deltas in high IVR.
I mean, it's dramatic. It's 3 times as much.
Yeah. You get paid for scaling deltas in high IVR. That's all it is. Let's go to the next slide.
But we not high now.
We not high now.
Right.
So does this mean that increasing delta is always a safe bet in high IVR? Not necessarily. There are many other factors to consider, such as volatility and the number of occurrences. It's always going to be the number of occurrences. Let's go to the next slide. So as IVR increases, our P&L increases as well, while our success rate stays relatively the same. So what you see here in IVR is the P&L goes up as IVR goes higher, way better when IVR is over 50, which is we're not going to get there now. But the success rate basically stays the same. We've been talking about this for years. Let's go next slide. However, the standard deviation of our P&L also increases as IVR increases, which means our portfolio is more volatile. So as IVR goes up, you make more money, you take more risk. That's how it works. Nature of the business. It's always a perfect. Let's go next slide. There's 50% more portfolio risk when IVR is significantly higher. How to reduce the higher IVR volatility? Well, you increase the number of occurrences, just like I started off by saying. You know, when you make a lot of trades as opposed to a few trades, your graph looks much more predictable. That's what our goal is at the end of the year, to make everything look like this.
So they're looking at higher number of trades here.
Yeah, it's just number of trades. That's it. Just
Which
all
is
number
hard
of
to
trades.
do too in low IVR. I mean, every gimme is a gotcha, right? I mean, it's not ideal for finding trades. I know you can place trades, but it's not ideal for finding trades.
Let's go next slide. So the number of occurrences is the number of trades with an average P&L getting closer to the theoretical as the number of trades increases. And we've shown this study many, many times, from 10 trades to 100 trades to 1,000 trades to all trades. You get close to your theoretical number by just making more trades. And you're gonna say, well, I would rather do 10 trades and make twice as much. Yeah, but that number could be negative too. Let's go to the next slide. Just so happens this example is positive. So selling higher IVR strangles, selling higher delta strangles when IVR is high provides substantial increases in P&L. That's how you scale your P&L reliably compared to selling lower delta strangles. However, when IVR increases, the standard deviation of the P&L, meaning the swings in your portfolio, increase as well. So in order to reduce this higher volatility, increase the number of occurrences.
Yeah, this was a tough one for me because it's easier said than done, right? I mean, we're both light on trades right now with volatility lower in the overall market. It's hard to do. It's not easy. Correct?
Very hard to do, not easy.
Oh, I'll take that as a win. We're going to take a quick 90-second break. You didn't hear that ding because I'm not allowed to have dings on my computer because of the places I go.
No dings?
No dings. But I just closed my gold 1-by-2 ratio spread that I put on yesterday for option trades today, Sal. Now, still doesn't make up for my Costco trade. But we'll be back in 90 seconds. Close it at $8. Sold it at $9 overnight. You got to run like a thief in the night. We'll take a quick 90-second break. Come back. We've got more Tasty Live after this. Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content. And I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not, just trust us and do this, which is a very dangerous thing in the financial world. But, learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend, and you know what that means. Time for a little more Tasty Live. Starting off with the opening bell, the moment you've been waiting for.
I've been waiting for this moment.
Waiting for this moment all my life. Even the S&P's up 27 handles, starting off about 3 handles off the highs. NASDAQ up 38. NASDAQ was the weakest of the group yesterday. It's still the weakest of the group today, although it is up 39. Russell up 16, the strongest of the group on a percentage basis, and the Dow up 221. Volatility in by 35 cents. Everything signals an up opening here, starting off with volatility in, market in, bonds down 20. Gold just fell out of bed, starting off. It's trading down $25. I don't know if you saw this on the follow page, starting off. This gold trade I put on. Gold only moved $14, and I was able to take a buck out of that spread. Someday I'll teach you about that. What else do we have going on here today? Oil down 22 cents. Looking at your earnings trades, Sadler, have you looked at them lately? ENPH.
Only one I did.
Only down $2 or so, maybe $2.50.
I'm going to try to take profits in the NPH and move on. That stock has been not very, very good to me this year, so
it has not been very, very good.
I think you might want to scoopy some bonds here if they get under 113.10.
Figured you were going to play this.
I haven't played them yet, but I think I'm going.
They trade to 07.
I know. I thought last night they traded even lower than that, did they?
No, they traded down to 07. That's why I said it.
I thought last night they traded even lower than that, did they?
No, that's why I said 07. They did not. But I like it.
Well, I may load up a few bonds if they get down under 113.10. Don't ask me why. They get under 113.07 for sure.
Bitcoin 119.1.
Not touching that PIG pig up here. That's for sure.
Which PIG pig?
Bitcoin or Coinbase. I need those things lower.
Tesla, Google, IBM, CMG for earnings.
Yay.
Jobless claims tomorrow.
Yay.
There's your opening bell. We come spinning out of the turn, my friend.
Spinning out of the turn.
Spinning out of the turn, my friend.
Spinning.
Spinning. This is correct. Spinning out of the turn. No dings from you?
Nah.
Net gas is a pig, down 10 cents. Although if you own a pool, it's good.
Net gas is a pig. I was hoping we'd get a better opening in. I was hoping to get a better opening in ENPH. I did not.
Did it open lower than down 2.5?
Yeah.
Yeah, down 3.5. Ugh. Sadnov, can today be the reversal day? It kind of feels like it. We open higher. Hopefully goes lower. What do you think?
It's a good question. I don't know.
That's why I asked them, Sadnov. Thank you for asking.
Don't know. Looking for. The NASDAQ's already down on the day.
NASDAQ down on the day.
It's kind of a weird. What the hell's going on? Did they not? Oh, they didn't officially open. I was looking at RBLX. They didn't really officially open it yet. Yeah, ENPH. Too bad. Thought I had something going there potentially, but now the stock's down even more. So now we're gonna have to cancel the order. It's gonna be our first.
Oh lordy.
It's gonna be our first losing earnings trade.
Oh no. Oh, woe is me.
Whoa.
Woe is me. Woe is me.
Whoa. Oh my God. Some of these options too, they are not.
Now I feel bad.
You should feel bad for everything.
NASDAQ turning red, Sadnov down 36, the weakest of the group. Like yesterday, I hate it when the NASDAQ's the weakest of the group on a rally day. Russell's the strongest with the Dow.
Oh, I did get filled in there. RBLX.
RBLX, you traded stock. ENPH, you rolled down calls.
Yes. ENPH. I was going to say it's my first losing earnings play, but it's actually nothing. It's nothing. It's a basically a wash. Not quite yet, but it will be by later today. All right.
Oh, you have a memo. Got it.
Yes. CMG, stock's up 17 cents. I would like to sell puts in here. Here, putty. Nothing done yet. CMG, I want to sell some puts. Nothing done yet. AAL, I would like to sell some puts in there. Nothing done yet.
Nothing done yet. Let's see what's moving this market, Sadnov. Let's see what's helping us to the upside. ASML up $14. VRT, these are not usually the stocks that you see on an upside.
VRT?
VRT.
What is that?
Vertiv Holdings, never heard of it, up $4 and change. Reddit up $4 and change. PDD up $4 and change. AppLoving up almost $5. LMT, Lockheed Martin, up $3. TSM up $3. NVIDIA up $2 and change. Meta up $2 and change. Some of the Chinese stocks like Baba higher also. Let's see what's moving us to the downside. Coin down 14. Sadnov, man, you really did pick the top in that one. I have to give you credit for that. Carvana down 6 on the news that Vinny wants in IROC Z. ENPH down $3.35. AVGO down $3. Microsoft down $2. Tesla down $1.70. Sadnov, what do you think here?
That's a damn good question, sir.
I knew it was. That's why I asked.
I don't like
I'm
them.
that kind of guy. That's what I ask here.
I don't like them.
You don't like them.
I don't like them. I think they may give it up. The NASDAQ looks a little bit heavier.
NASDAQ looks heavy, down 17. That's
the S&Ps are
he's in by 33 cents, Sadnov, not helping your cause.
I know. I can read.
I got a screen.
Coinbase down $14 is surprising to me because I needed it down. I just didn't need it down 14.
Never happy.
I know.
Never happy with 2 loaves of bread under your
arm. What the hell stock is this? LN. How do I have a position on in there?
In which one?
TLN. It's not even really.
Who did that to you?
I don't. That's a damn good question. Who did that to me?
Probably me.
Somebody who doesn't like me.
Doesn't matter anymore. You don't care.
Stock's up $22. Somebody doesn't like me.
Somebody doesn't like me up there.
Somebody on What's Your Assumption doesn't like me.
NASDAQ just turned green, up 6.
Yeah. Taking a quick look around to see what else do we got here. Bum, 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 bum. Bum, 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 bum. Not much else. I mean,
did you see the Wall Street Journal headline yesterday? Why are stocks up? Nobody knows. Sadnov, do you think we finally made an impact on terrestrial TV and media?
Do I think we finally made an impact? Well, we at some point in our lives we have to impact something. So sure. Yeah, at some point we have to have some impact on something.
On something.
I actually think a lot of people do take our stuff, without giving us credit for it, but
kind of squish it into their own.
It is what it is. It is what it is. We have
gold down 27, silver up 4.5 cents.
We finally have a profit in IBIT. Should we take it?
Probably.
So this is a very interesting stock because I've never really traded it before. But
how'd the experiment go for you?
Well, we sold naked calls based on somebody on the What's Your Assumption, and they actually worked out. We sold them at $1.30. We sold them at $1.39. Bought them back at 88 cents.
You don't make 40 cents on nothing.
Almost 50.
Almost.
But that was my first.
So it was a good one for you.
That was my first naked short in there, and then in ETNA, which is the Ethereum ETF.
Yes.
Let me just check our option chains here.
Why don't you do that?
A super cool feature. Like,
never talk about that feature. It's a great feature. I think it's the only platform that has it.
Don't. Looks like we sold Strangles in there at 217. They're trading 206. We haven't made much, but something, honey.
Bonds trading 113.11. They haven't moved. South Africa kind of like all quiet here. Nasdaq's had a little two-sided action, unchanged right now. The S&Ps haven't moved up 21.
Yeah, I haven't really done much. P&L-wise, we're down a little.
No, you haven't, South.
P&L-wise, we're down a little because we're short the S&P.
A little disappointed in your performance.
I'm short the S&Ps here, so we're down a little bit. Let's take a quick look at some of the earnings plays for tonight. We have a small IBM position on. We're not going to touch that.
IBM, what's the IV rank in there? 40, pretty good. That's one of the higher IV.
Yeah, I know, but it doesn't. The markets aren't good.
Going to get there. You look at August options, Sadna, 40 cents wide. That's bullcrap.
Yeah, they're not good. I haven't touched my IBM position. Next thing we're going to look at is we have a very small Google position.
Google markets are actually better in Google.
Well, the position lost money yesterday and it's losing money today. So they pumped.
IV rank of 42 and expanding, Sadna. If you could take a look at what Google's volatility has done over the last 5 days, it's up half a percentage point. Not helping you.
They put a lot of premium into Google yesterday. They're putting more back in today. So Google has not been exceptionally good to the good kids. And then lastly, Tesla.
Not lastly, you still got Tesla and CMG and AAL.
Didn't get filled, working to sell puts in AAL, working to sell puts in CMG, not filled in anything. And the last one is Tesla. We have no position on in there. Volatility hasn't really done much in there.
No, but it's an IV rank of 18, pretty low.
I know, hasn't done much. What will you do in Tesla?
Ooh. Is something with defined risk to mitigate some of that volatility that has not expanded? I know you're going to go naked, but that's what I do.
I think in Tesla.
You go to directional in here?
I think you have to go. Ooh, CMG just got filled.
89 cents. Sold some putties.
Yeah. Okay, good. So we did sell some puts in CMG. I think those were August puts, and I'm still working July puts. Tesla. Give me a little help here. 2 days to go. Expected move is $22.
It is $22.
Stock's trading for, let's call it 332. Stock expected move 22.
Two-day options, Sosnoff?
What?
You go into the 2-day options?
Yeah.
I think you almost have to, don't you? I mean, you can go 2 times the expected move in there and still collect around $1.
You go 2 times the expected move. 2 times the expected.
You collect $1 on the put side, and you collect $1.70, obviously, with the call skew you have. on the upside.
Yeah, you can go to the 290s and you get 87 cents, 88 cents.
Okay. We're friends. The offer's 90 cents. I mean, we're friends here. If you move it up 2.5 points, you get over $1. I mean, we're friends here.
Yep. Okay. We'll put some positions on. Nothing yet. I want to see if Tesla goes down in the day.
Oh, so you go to the 290 puts, you get them, but you go down to the 285 puts. Honestly, seriously.
I'm gonna sell calls too.
You tuck.
Tuck. I sit. I tuck.
You sit when you pee.
Who doesn't?
Omaha?
Vinny doesn't, obviously.
He doesn't?
How
did he get permission?
I don't know. I don't have permission. I mean,
I wish I had.
Unless I go to the basement bathroom, I have to sit. I'm man enough to admit that. Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we have coming up next? What's your assumption? That's right, Sound Off. Our viewers came to bat for you. No pun intended. We'll be back in 90 seconds. Tasty Live. I don't look that great, Sound Off.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's going to take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
I hope they don't subscribe to Cherry Bomb. Oh, no.
You better scrub your phone, honey.
Oh, no.
You better wipe it clean.
This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
Because it takes work to maintain friendships, because life gets in the way.
Guys, with women it does.
Well,
it takes work.
Men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean, it's...
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit.
You would not know.
So I said, I have to see what this is like. And it is a boat-worthy apparel, so I'll ship it down to Florida. But I just wanted to be like my man Tom, see what it feels like to be a big shot and stuff like that.
Will you guys please wear them matching on the flight to Denver next Friday?
What's going on? What the hell am I looking at? What the hell's going on here? What is this?
I'm twinning.
Join us. You got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Sadnov, we are back, my friend, and you know what that means. Time for a little bit of what's your assumption, Sadnov. I am 100% confident we are going to roll over today, but I could be wrong.
I'm very confident. Been confident since the opening. Been very confident since the opening, and they are going to roll over. Look.
I hate it when you get like this. Why can't you just let me have my moment when I say it?
They look ugly. You ugly. Just so you know. You ugly. And you getting uglier.
Even the S&P's up 13.
What?
The S&P's up 13.
I know. I'm just telling you. You ugly.
Okay.
All right, we got a bunch of stuff to do.
Hey, EMPH, you closed it. Look at you. You stayed mechanical, bat-like in your approach. You didn't think, Sosnoff. You just traded, rolled down the calls like you're supposed to. A little bit of a quandary there for you, a little tug of war. Boom, you're able to close it for a profit.
Rolled down the calls, sucked in a little premium, stock went a little lower, took it off for a profit, which means the streak is still intact. And
live to fight another day. What do you care about EMPH?
And I sold a September Strangle in there.
Ah, beautiful.
I reloaded in September.
What can't you do?
There you go. I'm Tom Sosnoff. He's Tony Batista. Let's do it. Trade ideas. Let's see what we got. What's your assumption?
They did it right.
Dave, our boy from Cleveland, Ohio. It's been a while. Looking at CAT. He's bearish 1 month out. Hey, guys, I'm trading CAT as the seems to fail at highs. I want to do a small put vertical. Long the 400 and long the 400 put and the 397 short put for 25 DTE. It's a tiny little vertical. Let's see what we can do here.
Yeah, $2.50 vertical, right?
Okay, Dave.
Trying to do.
Oh, the stock's up $8 today. It's even better.
Even better. Hopefully you waited till today to do
Hopefully, Dave. Let's see what we got here. What do you want to do? What
Caterpillar all-time high, Sosnoff.
For 25. Well,
earnings August 5th.
Yeah. So we'll do sure, we'll do 23 days. What the hell? Normally I don't do this, but he wants to do what strikes?
400 397.
Well, I'm not going to do that anymore because that's too far away. Let's do the
hopefully they waited because the stock has rallied the last 2 days.
Yeah, 420 417. I'm going to do your
420 417.
I'm going to do 20 points better.
420 417 amp. It looks like it's trading for $1 something. Markets are about 40 cents wide there. You got filled
98 cents, Mr.
Wow,
Batista.
mid price is 102. Look at you, Scoopy. Ladies and gentlemen, I have to put this on the screen because this is okay. Now it says 98 cents. You got filled at 98 cents. When I looked at it, it was $102, $1.05. But you look at the bid ask here, it's basically $1 wide, meaning the market's basically $1 wide. There's
not
no
great
harm in going underneath the bid and cancel, replace until you get to your price. So good job out of you.
I'll take it. Let's go to the next slide. All right, Dave, we're filled. We did the 420, 417 and a half. So we got the stocks rallied a lot. We just got lucky.
Yep.
I mean,
but we're with you.
Who knows if we got lucky or not, but it looks like a little better price. Let's see what's next. Ajit from Chicago, Illinois, looking at Coinbase. I have been adjusting my Coinbase position all morning. Coinbase is right now.
Coinbase was down around 14 a moment ago.
Now it's down 11. We are completely flat in Coinbase, Ajit, and we are already short Let's give it to you. 340, 470. Completely delta neutral. 0 deltas in there. 340. Oh, look what he said. He's 355, 470. We are 340, 470. We just had that position on. We just adjusted our position. I'm very happy where we're at right now. I'm going to leave it, but could I move the put side up one? Maybe. Let's see. Could I do 450? No, I think we leave it where we're at for now. Stock's down $11. You wouldn't have known that when you put this in. I think this is exactly what you would do. And we're in August. Let's go to the next one. He's a theta. Look at that, a theta farmer. Ajit. A theta farmer from Chicago.
I love it.
Justin from Woodstock, Georgia. He's looking at a Google earnings play. Well, actually, a Google play. Call diagonal for earnings. Small capped risk if it goes to the downside. Sorry about that MU call diagonal. Yeah, you took me down, dude. Now, call diagonal for earnings. What does he want to do? Capped risk if it goes to the downside.
So he's bullish in Google. First, you have to ask yourself, are you bullish in Google, Sosno? Google's gone from around, 143 to 190 since April. Since July, it was gone from 170 to 190.
My current position in Google is relatively flat. We are short the 185 calls and the 197.5 puts. We have got to widen out our strikes in Google. We can do that as we speak. The first thing to do is, if you want to trade Google, what would you do here? IB rank's okay. Markets are
okay at 42. Yeah, I agree with you.
Markets are
Markets are Log volatility is 42. SEP volatility is 35. So I don't mind something calendarized if that's what they want to do. That's what they're doing here, diagonal calendarized. So
in Google, my preference in Google is to just kind of be, to be strangled in there.
I understand.
But I'm completely open.
You just rolled now to kind of neutralize your.
Yeah, I'm in the 172, 215. So now we can do whatever Justin wants to do here. Okay. So which kind of diagonal do you want to do?
Bullish. Are you bullish? That's the first thing I have to ask you.
Not really. So but I'll do it.
Bullish diagonal?
What does he know? What do I know? I mean, I'm not, Yeah, what's the bullish diagonal?
Okay. He didn't give you any time frame. He just said 38 days. So if 38 days is your time frame, August has 23, September has 58. I like the differential between the two, 7 vol point differential between August and SEP. You can do an August.
Okay, so I'm going to buy SEP.
That's correct. You buy a SEP call.
Right. So let's say I buy the SEP.
Closer to the money.
I'll buy the SEP 200s.
Okay, that's about a 38 delta in September.
And sell which August?
Well, if you're buying the 200s, you got to sell something over 200 if you're going to do a diagonal, 205. Trading for 364 mid price?
No. That's not how you trade this.
It's $3.64.
I know, but I like selling the August 197.5s.
Well, that would not be a bullish diagonal.
Well, it has delta, positive delta.
0.41.
It's okay for me.
Less than 1 is not positive delta. If you can say a strangle with -2 or 3 deltas is delta neutral, you cannot say 0.41. I'm actually.
Is it your money or my money?
I'm just about to quit. I'm just about to quit. I'm about to. I am embarrassed by your behavior right now.
Well,
embarrassed.
Just tell me. Remind me whose money it is.
It's nobody's. This is. You could kiss your sister with this money. This is
sold
disgusting.
the August 197.5 calls.
I mean, if I told you were doing a 200 calendar spread, you would say that was neutral.
I don't care.
You're going to sell a 197.5.
What the SEP 200 sold the Augie 197.
I forbid you from talking to CNBC, Yahoo Finance, or anybody else. At least if you're going to represent my name on this show.
Justin, I did it. I don't care. And I like the trade, actually. I'm going to do more probably later. And the fact that Tony
hold on that too. I will bet a testicle you don't do more.
I might do a lot more now. It's the fact that you just don't like it, I'm going to do a lot more.
Italians, we got big testicles. You're right. You're going to have to do a lot more.
God. Let's go next slide.
It's disgusting. I hate your behavior right now.
Temji from Princeton. MSTY.
Princeton.
ETF yields based on similar strategies to Tasty, but works with MSTR underlying. Tom does not like MSTR because of the valuation, but I can buy a long-term 2026 put. And, hold on, I'm confused here. What does this person want to do?
Must I do everything here? It's
Yes.
a neutral play in MSTY.
Okay, I know, but what's the play? I can buy a long-term Jan 2026 put in the low 20s, trading MSTY in the low 20. I'm a little confused.
I'm a little confused too.
MSTY, have you ever traded this?
Never.
Either have I.
And I know why. I mean, markets are 30 cents wide. It's a $20 stock, and you can't even. September volume is anemic. It's a yield product.
Let's say January
IB rank of
2026.
1.
January of 2026. Well, the IB rank doesn't matter because it's brand new. January of 2026. Let me think about what you're doing here.
It's not brand new.
It's not?
No.
CMG, we just got filled. Oh, nice.
Oh, 55 cents. Look at you.
Nice.
That's for earnings.
MSTY.
I think you abstain.
I've never traded this before. I
think you could abstain.
I like this. Because Tony doesn't like it.
You like this option income strategy? You like this?
Yes.
Oh, okay.
I mean, I'm not
You're
exactly
talking about buying the stock, Sadnov, because it has a big dividend. I think that's what it is. If there's a $1.24 dividend.
That's only because the stock's.
No, it's a yield play on. Come on.
Because I'm not familiar with this stock, Tamchi, I'm going to try doing something here. I'm going to do the poor man's covered call thing, poor man's covered put. And I want to test it out just to see if I can make any money in here.
It seeks current income while maintaining the opportunity exposure to the share price of micro strategies. So it's basically a micro strategies covered call play that I can see here.
Yeah, I got it. So I'm going to do a micro strategies.
Fund is not diversified.
Yeah, I know. So I'm going to do a micro strategies. So I'm going to buy a put and sell a near term out of the money put. You don't make much. You don't get much for it. And
sometimes I question my life's decisions to have you represent me.
Have me represent you?
Yes.
I want to see if I can make any money in the stock. Playing the downside.
Oh, baby cheeses.
Can't get filled though.
Oh.
I'm gonna give it one more shot, and if I don't get filled, I will leave it in.
Fill him. I almost want to see him get filled. I want to see him.
We're gonna leave it in. I'm working this, Tamshi. I'm trying to do a poor man's covered put in here. Buy the Jan put and then sell the. I don't want to buy this stock at all because I'm so bearish in MSTY.
Mm-hmm.
I mean, I'm in 2026. I expect them to be out of business. Let's go next slide. Oh man, Conte.
Who?
Conte Bowie.
Bowie, Maryland, not Conte Bowie.
Conte from Bowie, Maryland.
Yes.
Meta.
Did you out that day when they were teaching reading in school? Was you calling sick that day?
I never heard of Conte. Conte.
I've never heard of the name
Bowie.
Conte.
I've never heard of the word. I've never heard of the place Bowie.
I dated
Maryland.
a Gina Conte back in the day.
Where's Bowie, Maryland?
Loved her. She was
Look it
beautiful.
up. See where it is.
What's that?
Meta bullish. Since it has not reached an all-time high, it is my assumption that earnings will provide the necessary catalyst. Oh, dude. Conte, I am not bullish in Meta. I can't.
When does that stop you from doing anything that these people have asked you to do?
I don't like anything about Meta. I think the stock is
up $1.90.
I think the stock's overpriced by $150. I'm not touching this stock from the upside. Let's go next slide. I'm very bearish in Meta. Roberto from the south side of Chicago or the Netherlands, whatever you want to say. EBF, what's that? You guys are
EBF. That sounds like
EBF.
something that no longer on TV.
PBF.
Energy, Sadnov.
Oh,
good. You got filled in MSTY. This is, God, I can't wait to see you. What'd you pay for this? $5.33? I can't wait if you lose $6.33 on this. I want you to lose more than the debit you paid for it. That's my goal. I don't ask you for anything. Very kind to me. But I don't ask you for anything. I need him to lose $6 on this $5 trade.
When I make money on it, I'll donate it to charity under your name. PBF.
Sold on it too.
PBF. I've never traded this. It's only traded
energy.
It's only traded 197 shares. Sideways expectation, neutral.
197 shares. What are you talking about?
I mean, 197,000 or something like that. 159,000.
159,000. What are you?
Ironfly. Sell the 25 straddle. Nothing trades in here, dude. So I'm not sure that we can do this. And he wants to buy the 20s and the 30s. And wants to do it for a 330 credit. Now, I have no idea if this is doable. And especially doable.
You'll find out, aren't you, though?
At 330? It's
327 credit.
I had to just try it, just to put it on. I want to see what price I can fill. I'll do more in a few minutes.
Earnings, July 31st.
I don't care. Let's go to the next slide.
You don't care about nothing because you're swinging.
Jack Ma, the billionaire, is writing in. Yes. Buy JD and sell Baba. I don't think Jack Ma's buying JD and selling Baba, but it sounds.
But he's got an inside scoop here. JD hasn't gone anywhere. It's up 14 cents, and Baba's up $1.30 or $1.20 or so. It's gone from 105 to 121 the last 2 weeks.
Babalicious. So our buddy Jack Ma here in Baba.
So he wants to buy JD, and he wants to sell Baba, right? Sadnov, look at what I'm going to do for you.
Use. I'm going to buy JD September. Oh, he wants to do August. Well, we're going to do September because we're rolling on Friday. So, let's see. September, rules of engagement. The markets are pretty good in JD.
Yes, they are.
We'll sell the 31 puts. Filled.
Oh, boy.
And in Baba.
Pairs trade using puts. Not stock. Got it.
In Baba, he wants to get short Baba, right?
Mm-hmm.
But we're going to sell the out of the money calls in there.
Mm-hmm.
Sold the puts. So we'll sell the 165 calls. We'll just do a little. You got to do. The ratio's 2 to 1. Ratios two puts in JD to 1 call in Baba. That's the ratio. All right, I'm filled. You're still bothered about Misty?
Yeah.
All right, Jack Ma, we're filled.
Misty, I'm still bothered about a lot of things.
Let's go to the next slide.
CMG for 56 cents. I'm still bothered.
Almir from Newark, California. CL neutral. When oil gets below 66, it is all puts or schmutz for me. 57 puts in August all day long. Almir, oh wow, bold move, dude.
Bold move.
Well, it's below 65 now.
Mm-hmm.
So let's see. We got to go to SEP though. I know you want to do August, but we're rolling in 2 days. So we'll go to SEP. What do you want to do? 57s? All day. 57s all day, according to the dude. 87 cents. Nothing done yet, working it. Let's go to the next slide.
Next slide we go.
WIT. Bearish. In the ES. What does he want to do here? Sell 2 puts at the 50 delta filled in crude oil. Sell 2 puts at the 50 delta.
87 cents. Boy, what did Corinne cut you back or something like that? Oh, it's the end of the month. You didn't budget properly. You went out for that big fancy dinner last night. You paid for Tucci. Now I know why you're doing all these like fakakta baby options.
I didn't perform well this month. I got
You didn't perform well this month, so you got less. It's a paid for performance? I understand.
I got less of it.
I understand. I do it quarterly so I can have a few bad quarters, a few bad weeks.
What are you trying to do here, Whit? You want to sell the 50 Delta puts and buy the 70 Delta puts?
Oh, this is way too expensive for Tom.
But you're buying twice as.
Oh, God.
What does 28% mean?
I don't know.
It says for 28%.
GTC for 28% profit. GTC for 28%.
Oh, GTC for 28% profit.
I got to imagine. I'm not going to say it's a loss.
Okay. Let's see what we got here. So he wants to do a 1 by, well, it doesn't make, I mean, I do a 1 by 1.
Mm-hmm.
Let's do trade.
Sell 2 puts at 50 Delta, buy 4 puts at 70 Delta. Why don't we just do 1 by 2?
That's right.
You don't have to do this.
But I'm going to do 1 by 1.
A real wit going real expensive with my money.
Yeah,
Wait, who do you think you are? You putting out wit? I don't think you're putting out. That's right. There you go, Tom. Got him.
64.50.
Oh, canceled crash. $1,000 canceled.
63.50. How's that? 100 points wide.
Amazing. Absolutely amazing.
Should have done this one on the opening. Take a fill. Take a fill, Phil.
Mm-hmm.
Let's go to the next slide. Oh, man, you guys are hitting me with this weird stuff today.
Did you use his strikes on this vertical, on this?
No, because I didn't understand this strike.
No, okay.
I did my own strikes.
Vertical spread.
I did a 100-point wide vertical.
Got it.
APP.
100-point wide vertical. You manned up. Look at you.
APP.
Finally found a
Iron Condor and APP. David from Toledo, Ohio. Iron Condor and APP. I haven't traded APP in a while. You got to do SEP here, dude. Because I'm rolling in 2 days. What does he want to do? 280, 290?
He just did an earnings trade, an obscure stock that you don't know anything about, but you're gonna do SEP here because of earnings.
I'll do 280, 270. What does he want to do the other side?
John, I think I'm quitting, John.
I'm right behind you, Tony.
John, you can't quit. Who would water the flowers?
Hey, you can't quit.
Intern.
Okay, $10 wide. 460, 470, 280, 270. These markets are so wide, I have no idea. I have no idea, dude.
Uh-huh.
David from Toledo.
Mm-hmm.
I mean, I'm just going to play around and see where we can get filled. And then
APP up $3 at $352 stock. September markets are $1 plus wide.
Yeah, they're $1 wide.
I think the last time you traded this, you told me never to make a trade.
I said I'd never make a trade. David, I hope you got filled in this thing because I can't even fathom where I can get filled.
I can't do it.
I'm gonna leave this in at 340, 340. 342. All right, now I know where you can get filled. Now I can work it better. Okay.
So that means you would work it at a higher credit.
Yeah. I work it for higher credit. I get 342 now. I'm going to work it better. All right, we're filled. Let's see what we did.
Oh.
Caterpillar.
These are not approved by me.
Caterpillar, we put debit spread.
Put spread is there.
Yeah. Coinbase, we sold a strangle. Google, we did a diagonal that Tony hated. MSTY, we did a poor man's cover put that Tony hated. Meta, we skipped. PBF, we did an iron fly. Who knows? We did a pairs trade where we sold.
We did an iron fly nobody likes. Go ahead.
Puts in JD and calls in Baba. In CL, we sold a naked put. Crazy, weird trades today. In ES, we bought a 100-point wide vertical spread. And in App Loving, we did an iron condor in September. Godspeed.
Godspeed to us. So more importantly, if you're looking at gold, that's right, gold is down $13 and change. That spread I bought back at $8 is back to $9.30, Sadnov, higher than where I sold it. The research is solid, Sadnov. Take your profits early. We'll be back in 90 seconds. We got more Tasty Live. Sadnov, what comes up next?
I don't know.
The Skinny on Options Math. We'll be back in 90 seconds with Jacob. This is Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Rolling to the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. But, oh, the Skinny on Options Math. Jacob's in the house. What's up, Jacob?
Yeah, Tony, that's the excitement. I love so.
I'm so happy you're here.
Oh, you really are. Just the party every time I arrive. It's what I live for.
Hey!
John's got a soundboard too. That's always good.
We're off the rails, Jacob. 2 weeks of non-movement in the market has driven me crazy, and Tom's lost all sense of trading ability.
He's off his meds today, so just be careful.
I don't take any meds.
As a research-driven
Sure,
trader
that's
who
what they say.
primarily sells far out of the money strangles, I've liked it.
Take a little thyroid medication.
You don't have to start.
Oh, no.
You don't have to show us your medical records, okay? Everybody watch the show knows. Okay, if anybody in the world's on meds, it's you.
That's good. Got to change them up every once in a while. Just keep it fresh.
Yeah.
New meds. Who this?
Sad but true. Sad but true.
Sad but true.
What you got for us today, Jacob?
So today I wanted to sort of touch back on one of the things I like to harp on pretty frequently, which is that there's no such thing as momentum. If we really try to understand volatility, we can see why things can look like there might be momentum and why it's such an appealing thing to look for in the market, but that if we really take the efficient market hypothesis seriously, there's no place for momentum as we, as it's like intuitively considered, right? Because momentum is a word from the physical world around us, so people have some idea about what it means, and it doesn't apply to prices. And I sort of want to explain like how that can be and how we really should understand price dynamics, given that we should probably put aside our ideas about momentum.
Okie dokie.
Yeah.
You're gonna hurt some people.
I mean, listen, if they think they know better, they can keep putting their money where their mouth is. But I don't think it works.
You're 100% correct. That is 100%. You are 100% right.
Let's look at it. We'll talk about momentum. We'll talk about temperature, heat. So physical world, momentum is mass times velocity, right? So mass is a property of objects. It says how heavy they are, how hard they are to change the movement of, right? So if they are moving, they stay moving. If they're still, they stay still. And then velocity, which is a direction and a speed. Prices are only going to have one dimension because they just go up and down. They don't move around in space. But because physical momentum is conserved, objects in motion tend to stay in roughly similar motion. And momentum traders take this intuition and think that, well, if something starts moving up, well, then it's got this momentum behind it. It's going to keep going up, so I want to go long it. If it starts falling down, it's going to keep going down, so I want to get shorted, which is exactly at odds with the efficient market hypothesis. So I wanted to sort of say, like, why we can get into this misunderstanding, like what is actually going on that can give this impression of momentum. Because certainly when you look at historical data, you see there are these times where, like, oh, man, it went down and then it kept going down. So why isn't that momentum? Why is what's happening there something otherwise? Why is it really just volatility dynamics? And how can that be without a directionality to it? So let's look. So here we're going to sort of take what I think is sort of, since I started working for Tom, 12 years ago, the thing I've learned the most, because at the time I was just like an abstract probabilist theorist, was what is a valid way to try to model prices? And the thing is that the Black-Scholes model isn't true. We've talked about that a lot of times before, but it was founded on some really powerful insights. And a thing you can do is you can prove the same result in different ways and get different insights via that. So like the original argument for Black-Scholes, like the proof in the original paper, goes by this dynamic hedging operation where they say, well, we know the value of cash, we know the value of the underlying, and I can balance my option position against some cash and some underlying, and thus figure out what a fair price for the option is. And that was a really powerful way to get to the formula, but it doesn't really reveal any deep secrets about how markets work, really. But there's more modern arguments for it, derivations. And my personal favorite really only takes two ingredients. It takes the efficient market hypothesis, saying that the current prices are right, that the future prices have to be balanced around them, that they're martingales. That's the fancy way of saying it. The prices are martingales. And then time homogeneity. And then, of course, when we say that the Black-Scholes model isn't true, the thing that we're saying isn't true isn't the efficient market hypothesis, it's the time homogeneity, right? That, in fact, things do change how they behave over time. It's not all uniform. And so if we take the efficient market hypothesis seriously, we see that the price dynamics, they're not going to be like Black-Scholes model, right? They're not going to be a geometric Brownian motion, but they're going to be something that's mathematically very similar to that. It's going to be the exponential of a driving function, and that driving function is going to have some drift, and the drift has to be the same across all asset classes, because otherwise you'd have a risk-free rate arbitrage. And the thing that can change is the infinitesimal variance of a Brownian motion is the technical term, but when we think about it, we should think about it as the instantaneous volatility. And this relevance of the instantaneous volatility, I think, is part of the reason why we often use IVX or at the money volatility, is because when you're trying to estimate how quickly and how rapidly the underlying is moving right this moment, those at the money options are going to reflect that the most accurately. And so that sort of gives you an idea about how it's moving, but it's always just going to be infinitesimal variance. And infinitesimal variance has no direction to it. It's just saying how unstable it is in its current position. So let's go forward and we can sort of see how that's going to apply into things. Brownian motions came out when Black-Scholes were doing their computation. They come up in all sorts of places in math and in physics, and one of the reasons for that is because Brownian motions solve the heat equation. I've written it here in its very elegant short form, that the partial with respect to time is equal to the Laplacian of heat. And what that says is that's the heat diffusion, right? That's if you have a hot kettle sitting in the middle of your room, it radiates heat outward, right? The stuff around it becomes warmer and the kettle cools down unless you've got fire underneath it, right? There's this heat exchange and it diffuses outwards. And if Brownian motions both describe price dynamics and heat particle dynamics, then we can try to use our intuition about them as each other, right? We don't want to think about prices like a ball rolling down a hill that has momentum. We want to think about them like a gas particle in a hot room, right? So it's buzzing around sort of randomly, right? The price is just going to be able to just pick an axis, right? Say how high up it is. And when it's low temperature, that means it's moving pretty slowly. It buzzes kind of, and when it's high temperature, it makes big steps, right? When it's high volatility, every step of the simple random walk is pretty big. When it's low volatility, the steps of the simple random walk that generate the Brownian motion are very small. But that's all that it's doing, right? The steps never have a directional to them. They just have size changing. So as it goes, over towards the hot end, it starts taking bigger steps, either up or down. As it goes towards the colder end, it starts taking smaller steps, so it becomes more stable. And that'll sort of inform how we actually see price dynamics go, and it will fit with the option chains. Let's go forward. Yeah. Right, so we've got the efficient market hypothesis telling us that all prices in the market should be believed all at once, which means that not just the current asset price, but also all of its option chain prices. And because of that, we can use it to anticipate how volatility is going to change. The local volatility model, which we've talked about a bunch of times, gives the unique deterministic solution. There's no reason to say that volatility isn't changing stochastically, other than the fact that once you say it's changing stochastically, you open up this big bag of worms about, well, how? Is it a spring equation like Heston says? Is it a quarter exponent, right? And then people just start making stuff up and pulling things out of their butts. But whether or not they're dynamic or stochastic, the current option prices tell us that we expect volatility to expand for most underlyings. We expect volatility to expand under a big down move or a really big up move, but like really big, way more than expected. And that it will contract if it does sort of the most likely thing, right? The most likely thing for an underlying is a small up move, and that's the move that makes volatility contract, and that sort of surprising things mean volatility expands. Which fits with a good understanding of what volatility is. It's the degree of uncertainty in the current price, right? The price is correct, but it's correct because it's the average of the future prices. How broad that distribution of future prices is given by the volatility, right? How actually predictable it is. So now we've got this idea that, right, prices should behave like a gas particle in a room where there's a temperature gradient, right? Where it's cold over there where prices go up, right? Or near the ceiling, sort of a reverse of actual physical world where heat rises, we'll say, as price rises, temperature decreases. As price falls, temperature increases. And so then you want to think about, well, what happens to these particles, right? They move around and they're moving randomly, but if they go up, they slow down. So they get kind of stuck there, and they can come back down and they can keep going up, but they get slower and slower as they go up, and they get faster and faster as they go down. So if they go down and they go down twice in a row, then they're taking a bigger step down the second time. But if they go down and go back up, then they've undone what they did before, right? It's this volatility. In a sense, I think this is the missing ingredient, right? We've had all of these like very brief market crashes over the past 10 years. There's like the 2018 one. There was the one last summer, right? Things where we had like a big market down move, and then everything was back to normal 2 weeks later. And that's because the price went down, but volatility stayed high, which meant that low price wasn't stable, and it could have kept going down, but it also could go back up, and then volatility will contract again. Whereas like in 2008, or if there were volatility metrics in 1929, what you would have seen was prices fall, volatility spikes while the prices fall, but then the volatility contracts before the prices come back up, right? And then you get like these stable low prices, right? And that's what it takes to have sort of this sustained recession or depression kind of effect, is that you have to have the price fall and then and then the volatility fall before the price bounces up, right? Because the price falls, but then it's very unstable at its new low level. And so you have to, in order to actually stay low, you need to have it stay there long enough for volatility to contract again. Yeah. So if we think this as these are the dynamics, I think the next one will sort of give us a bit of a nicer picture, right? Maybe you don't think about heat particles very well, but you can replace them with insects. Imagine, bees buzzing around in a room, and bees, it is the case for insects that if they're warmer, they move faster, and if they're colder, they move slower. And they just sort of buzz around, and they don't really they don't go towards the heat or towards the cold. But when they're in the cold, they don't move very fast, so they tend to stay over there. But if they get away from it, they wind up in the hot part of the room, then they become very active, and they might buzz around over there for a while, or they might fly back towards the cold one and then cool down and become more still. But this means that each individual bee is not at all predictable. You don't know where any particular bee is going. You can look at the whole room and make a good estimate about, well, at the end of, in an hour, I'm going to expect there to be more bees over here in the cold end and fewer bees over here in the hot end, because it's hard for them to stay in the hot end because they're fast, because they move fast when they're over there. But you can't actually pick any bee and make any prediction about where it is. You can only forecast probabilistically where they're going to be, as opposed to a physical object that has momentum, where once you see it in motion, you have if you take 2 photographs and you know their timestamps, you can tell a Physics 100 student to tell me where this asteroid is going to be in 100 years, and they can work out the equation and tell you exactly where the asteroid will be in 100 years. And that's really the difference between prices and physical objects, and why I think momentum is this really misleading term that people use in trading, because it tries to get people to use this physical intuition of things moving and then continuing their motion. In a situation where that's just not how things work, right? If there was already any given motion about it continuing its direction, well, then someone would have traded on that already, right? The efficient market comes in and says that part, the expected part, the predictable part, is already factored into the current price. And so all you're left with is the random part, the infinitesimal variance, the heat, the volatility of it. And that's what you have to focus on to try to understand how price dynamics really work, and let go of this idea of momentum. That said, of course, the efficient market hypothesis says that your directional assumptions are completely unfounded. They're so unfounded that the opposite one is also unfounded, which means that you're not hurting yourself really if you trade on them. It's just you shouldn't believe them, right? You can trade on them. That's fine. The trades are still good trades, but that doesn't mean that they're true. It's sort of an interesting irony, I think.
Yeah, that's a really good example. Really good. I mean, it makes sense. I mean, it just makes sense. That's really good.
Rarely do I think you not get things to make sense.
Not gonna offend anybody. You're not gonna offend the bees. No, it's good, because that argument, would make a lot of people really understand. It's really a game of, I mean, the volatility is somewhat predictable, but where the market's going to end up, you have no idea.
Each individual underlying is completely unpredictable,
That's
right? Is completely unpredictable, right? They can be forecasted, right? You can see the percent in the monies, to get an idea of where the likelihood of all the strikes breaks are going to be. But that doesn't tell you where it will be. That just gives you, right, if it's 30% to rain tomorrow, do you pack your umbrella? Probably. Or do you chance it? But you have to understand that you're chancing it. You're not seeing the clouds roll in and being sure it's raining.
That's really good. I like it.
Modern arguments for the black trolls contain within them a stronger argument that price dynamics must be dictated by dynamic infinitesimal variance, this like unobservable volatility. And I think one of the reasons that we like to focus on the at the money or IVX volatility is because that's the one that's the closest to this infinitesimal variance, right? The out of the money volatilities give you a better idea about how volatility is going to respond to underlying price moves. But in terms of how volatile, right, the current price is, it's the at the money volatility that tells you that most accurately. In a sense, the option chain tells us to expect volatility to come down when the most likely thing happens, you get a small up move, and to expand if you get surprising things to happen, which, fits with a good understanding of what volatility is. It's the degree of uncertainty. And so surprising things make people less certain. And this results in price dynamics that can give us the impression of momentum despite the efficient market hypothesis telling us that there is no directional bias. While there's nothing wrong with trading on your directional assumption, remember that the efficient market hypothesis does not support them. So you're really just picking a side for the sake of picking a side, not because it has a probabilistic advantage to it.
What do you think of that, Sosnoff?
I agree with them. While there's nothing wrong with trading based on a directional assumption, remember that the efficient market hypothesis does not support them. Could end up anywhere. It
can end up anywhere. It can go up, it can go down. But if you want to be long something, you can. Right? Because it's not more likely to go down on you. It's not like there's a reverse momentum effect either. So you can feel free to be long if you want to, but you shouldn't put your faith in your directional assumptions.
Yeah, exactly.
There's nothing really behind them.
You can put your heart into them, but not your faith. I got it. Totally agree.
Good job out of you, my friend.
Good job, Mr. Perlman.
Good job, Mr. Perlman. But you know what? I got to let you go because I got my friend, Mr. Scott Sheridan, coming in the room, and I have Johnny Trades Nick Batista next. Good job out of you. We'll see if they can be equally as good. We'll be back in 90 seconds with TT Live. Thank you, Jacob.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means? We got a lot to talk about, so let's get right to this.
A lot to talk about.
Tasty Trade World headquarters, your friend of mine, the very popular Mr. Scott Sheridan. The Scott Sheridan Studios. I know. I just learned some things about Sosnoff that are really...
So, okay. We were talking about movies, one of the all-time great movies, Rashomon, which is Kiyosari, the Japanese director. 4 people witness a murder, and the whole movie, you see the murder, and the whole movie is them explaining the murder, and you would swear there was 4 different murders. You just heard the description of the restaurant from Tom.
Yeah.
Without giving it a rating or review, he didn't say it. What would you say? 3 stars, 3.5 stars? Like, he liked it, right?
I can tell you what.
Didn't love it, he liked it.
But all he did was complain.
Yes, all he did was complain. Nikki? He didn't say one positive thing.
Complain.
Complain.
There was a lot of complaining.
All you did was complain.
We both rated it 7 out of 10.
That's
Scott, turn a little bit to your left, my friend, so they can get a better picture of it.
That's 3.5.
A little bit more.
3 out of 4 stars. I mean,
a little bit more. A little bit more,
excluding price.
Yeah.
7 out of 10. It's 3.5.
Okay, whatever.
I mean, 7 out of 10 is.
You're a math person. 7 out of 10 is 3.5.
Yeah, I got it.
Okay.
Corinne just gave you a 3.5. Does she do it inversely? Is she doing an inverse?
Okay.
3.5 means
so
again.
All you did was complain about everything.
I didn't complain about anything. I just gave you out.
There's 3 other.
You wanted an honest review. I gave you an honest.
I actually don't care. I was just trying to create conversation.
Actually, I don't even like talking to you.
My favorite though is that somehow your duck was $50 more than the duck. I didn't pay in fairness, but at least it was on the menu.
He's a mark. I mean,
And
we saw him
still
come
on the
in.
menu.
They were like, yeah, this guy got 50 more.
They gave me the.
You got taxed.
You got the tourist.
I got the tourist menu.
Right. See, now that makes sense.
Well, let's figure it out. Were you sitting at a table or a booth?
Booth.
Yeah, you were a tourist.
I got a tourist menu.
Now,
I didn't realize.
Nobody said
the best.
Nobody
the
puts
best
me in that
comment
room.
was Tom and I were doing something yesterday afternoon, and I looked at him and I said, in his black T-shirt, I said, "You're not going to dinner like that, are you?" He said, and he looks at me. He's like,
"Yeah."
Can I not go in a T-shirt? I said, I mean, you can, but people are gonna look at you a little funny. It's kind of fancy.
I saw it. I mean, they had bow ties.
It's
on
kind of
and stuff.
fancy.
It's fancy.
When I walked in, the woman that was.
Did she try?
She went like this.
Did she try to say the membership at the club?
No, they don't.
I didn't get that either. Todd got that.
Yeah, well, that's Todd because he's he's Todd. No, I didn't try.
Todd got pitched on the club membership.
They didn't try some of the club membership, but she goes.
Because you were dressed apart.
I really like your shirt.
Yeah, sure.
Anyway,
I really like to see your shirt walk out the door.
I really like that shirt. Is that a 32 below? Like this.
I really like your shirt. Did you get that at a sale shop?
Please tell me at least Nikki was. Nikki for sure was probably.
Oh yeah, he had a sport coat on. I went to
for sure.
EMA.
A nice dress shirt, jacket.
He's a touche. I mean,
does he still go in cowboy boots?
Yes. He's vertical.
See, the nice about Touche, he doesn't care about fats. Now the boots are back in. He never left.
Oh, he waited. He waited them out. Boy,
Right?
boy, did he wait.
He waited a good
Cowboy
30,
boot.
35
And
years.
the eelskin one still. I mean, we haven't gotten there yet, but
He always has a sports coat. He's always
And boots.
always.
Yeah.
I mean, you don't.
I mean, the only other person.
You'd think he's from Denver, which we're going to.
He's my suit.
He's your beard. The only.
Which makes you the woman of the,
Yes.
of the relationship, which scares the shit out of me for Tucci because he can do so much better.
Obviously, he can't.
Obviously, he can is right.
So the other person who would have been a boot, still was a boot person, was R&D. Big boot person, right?
Yeah.
He
Rest in peace, R&D.
Boot person. Boot. Rock the boots.
Always.
the
Yeah,
boots.
cowboy boots.
Yeah, sure.
I could see you in a pair of boots.
I used to have a pair of cowboy.
But he was cowboy boot pirate shirt. I mean, he had a whole different look to him.
He would get offended if you asked. I remember I asked once, and he looked at me. He's like, "Don't touch."
Yeah.
Like, don't touch it. From Ultimo.
Yeah. You're not worthy. You're not worthy.
Please don't even think about asking how much this was because it's just
that's true.
Right? We don't.
I'll give you that.
Okay, so that's the Cubs game last night.
You went to the Cubs game on a school night?
On a school night. It was late.
Wow.
It was
Oh
late.
my God. It was
I
a
didn't go to
late
bed
night.
till after 10. That's late.
Oh. How late did you stay? 7th inning stretch?
Yes, exactly. 7th inning stretch.
You legally can't leave before the 7th inning.
Only reason the 6 wanted to leave before, but I couldn't tell her why I needed.
I don't know. I saw her at dinner. If she wanted to leave before.
Why did you?
I leave before.
The reason I wanted to stay was because
By the way, she had him flying.
I had a
everything.
parlay
Wow.
with the Cubs laying 1.5 and Boyd 6 strikeouts, and he had 5 going in to the top of the 7th.
Oh,
first, so I'm like, come on, I got to get this one. First 2 batters, he's 1 and 2 on both of them.
Didn't get it.
Didn't get it, and then I'm watching the payouts because you're not on DraftKings, but you can.
No, you never do a cash out.
So you can cash out.
Never
less,
cash out.
But they don't let you cash out for partial bet. It's the whole thing, which
Yeah.
they should. Okay, so listen.
You never cash out. They never give you the bet.
I know, but
You
I'm
can't
like,
do
okay,
that.
so I'm watching because statistically, you figure that's probably his last inning. Maybe he comes out for the maybe the 8th, but probably not.
No, he doesn't.
Probably not. So I'm watching. I'm like, no, I can't do it. And then first batter out, but not a strikeout. Next one, I'm like, oh damn. Well, now I'm not doing it because it was a little over what my bet was. Punches out the third guy. Stand up. I go, all right, let's leave.
Oh, what a story.
Oh.
There you go.
What a story.
Got to be glad you didn't cash out.
See? No, then I did cash out because there was a 20-1 at that point. And at that point, the parlay was the Cubs. They were up by 4-0. I'm like, I'll take the money.
Well, I'm happy you finally.
Enough for the duck at this fancy bougie restaurant that Sadlov was put into a booth.
My price, not his price. I could pay the local price. I didn't make enough to pay the.
You didn't make enough to get the tourist price.
I did not pay enough to get the
enough
tourist
to get
price.
the local
You should.
price.
You should
All you gotta
actually
do.
see. I will tell you based off of that conversation. If they did have an upstairs, you would have been upstairs.
Yeah,
for sure.
you did, for sure.
For sure, you would have. Been.
You would put you upstairs.
Yeah,
You would.
Yeah, you would. Like if you
I
walk,
try to put me upstairs, but I don't go upstairs.
they don't have an upstairs.
I don't go to the back room.
It's the bar.
I don't go there either.
I think it's a nice. Have you been, Nikki?
Yeah, because you scare all the
nice
hookers
bar.
away. I mean, you
Which one?
I think that's all there was hookers.
So I want to go because I've heard the burger's good. I want to go in, sit at the bar, and have a burger. Good spot. Dark.
Sceney.
I don't know if it's seen yet. They just opened.
You might see a Todd McCarthy there.
Yeah, you can see.
It's that kind of sceney. So I haven't got to that level yet.
Now, but according to Todd,
I got like 10 more years.
he got
you know?
the tour of the invitation only.
Oh.
So you become a member.
Bougie.
So they
It's good that he graduated from the Gibson's bar.
Yeah.
Good.
I know we have more important things to do today.
We do. We have Johnny
membership and equity membership.
I don't think so. All he said was it was $10,000, and I said for what?
$10,000 gets you what?
That's what I said. I said, what do you get for $10,000?
You get at least a free meal or something.
He said, please tell me, like, is that a lifetime membership? Is like, what is this? He's like, I told her no, thank you, and I didn't make it that far. So I don't know. And clearly, we weren't private.
Should we get Todd in here?
worthy.
He's probably signing the paperwork.
I mean, I don't want to be a naysayer, but I don't think that place may be around long enough to
to get your $10,000 out of it.
Yeah.
Not disagreeing with you. It's odd because there's no signage. I mean, you got to go upstairs. There's really no signage on that. If you were driving by, you'd have no idea that was a restaurant. Did you go where I told you to go? Chicago Avenue State?
What do you mean? Yeah.
Okay, so you pulled up. If you didn't know that was a
There's a
restaurant,
valet guy there.
okay, there's a valet guy, but you don't. I mean, okay, whatever.
I mean, they were fine and everything was fine.
I'm not saying they weren't fine. I'm
But I
just
don't
saying
like-
there's no
I
like
don't like
Gibson's. You walk by Gibson's, you're like, what is this
I
place?
don't like the plastic plants.
Oh God,
Fake plants.
You seriously? What has happened to you?
I just don't like people. I don't
He's
like
just
restaurants-
crotchety. He's just like
I'm not
he's-
crotchety. I don't like.
You are a little
Okay.
bit.
I don't like restaurants that have fake plants.
The transformation is happening.
I don't like places that put fake plants everywhere. Like even in our coffee shop, everything's real. It's live. Like I don't put fake things anywhere. I don't like fake.
Unless they're in your hands, then they're real.
I don't like fake plants.
Has he been like this all day?
All day.
I've been perfect.
All day.
Are you going out tonight?
No, but this is the second of 4 days together.
No. But tomorrow we're going out.
What do you mean together?
Second
Casa
of 4 days
Bonita
together.
tomorrow.
I was in the office yesterday. I'm in the office today. We're going to see each other on the plane tomorrow.
Oh,
all
right,
day
right,
tomorrow.
right.
Then
Do you
we're
get to
in
sit up front?
Denver? What's that?
Do you sit up front with him?
I
thought they.
up front of the
coach.
I'm in the first few rows
of
coach.
Okay.
Right. So I'm up front in coach.
So you can see him.
I can see
You
him.
guys can
I
talk.
can see him. I can see him.
Does he pull the curtain like
Damn straight.
when he's like, okay, bye, Tony?
I don't want the roof raffle.
My best move is because in first class they get all pissy when you like somebody from
Yeah, you go to the bathroom up there.
be up there. So I go up there when everybody looks. I go, he's my friend. He said I can come up and I'll stare at him. The best thing I can do.
The best is that I let him come on the plane with me.
That's just the worst thing
early
ever.
boarding.
No, it's not early
As
boarding.
a dependent.
It's before women, children, and cripples.
Of course,
I swear to
yeah.
you.
I
swear to
wave
you.
him up.
The
I'm
army
not
vets
doing it.
wait
I
for
did it
Tom
one
to
time.
board.
I am
I
not
wave him
doing
up.
it.
I wave him up. I go, excuse me, my friend's a little.
No, my plus one.
He's a little
Plus
awkward.
one.
Yeah.
Excuse me, out of the way. Let him in.
I can't do it because I walk like a normal human being. Like,
Yeah.
You know, I mean, at least he drags his leg. They think he's handicapped or something
Yeah.
like that. I cannot do it. It's before service. It's before everybody.
Yes.
And people.
Is that 'cause you got the
wait
new
for him.
status?
I'm not doing it. I'm not doing it. It's the most embarrassing thing, and I've done some embarrassing things in my life. It's the most embarrassing thing I've ever done in my life was get on with.
Was it as
I will not do
embarrassing the time you thought that was a woman?
No, that was the second most embarrassing. This is the first. This is the first. Anybody could be fooled.
No, I let him go up to the good lounge with me too.
Because you're plus one.
Being rejected from the good round is up there too. From the good lounge, I got rejected from the good lounge with my family and my son, who looked at me like, "Dad, we got no yank." I'm like, "Sorry."
That's pretty embarrassing.
And then
I got the
picture-
lounges.
I sent them a picture of my like plastic cheese thing that I was eating. Let's get to your. We can get to
We get the good sushi tomorrow. The breakfast sushi.
You take a to-go container for him?
Yeah, he brings it on the plane. It says
Bring it
stinky
in,
sushi on the plane.
It's nice. They got nice. Ooh,
What time's the flight tomorrow?
the breakfast.
11:50 or something.
So,
You'll be with the boys tomorrow at night.
Yes.
Yeah.
and Friday?
Nick and Mike.
Yes. We're taking over Friday. Yes.
Cool.
But we're doing the show for the first 2 hours tomorrow. Tony needs a little extra time to get to the airport.
What do you want, Scott? It's the life I lead.
He needs a little extra
I
time.
need a little extra time to pick up Tom's bag.
He's got to meet me in the parking lot.
There's a nice one now. I saw a kid. It's a carry-on, but there's a little seat and wheels.
Oh yeah.
Oh yeah, they just scoot around on them.
That's a good one.
They're
Yeah,
You should get
terrorists.
that. You should get that. The problem is you couldn't get down that low. You couldn't
No way.
stand up.
I have the
And
one
he'd
that
fall
attaches-
right
You
over.
get on it and you go,
I
help,
have the one that
please.
attaches onto my bag so I can pull.
Help, please. All right. Let's get to some business.
I'm ready.
Top 20 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Tom, for you, number 20, TGT at a 59. For everybody else, ENPH at a 28. Tesla at a 17. NVIDIA at a 3. Google with an L at a 42. Apple at a 27. GLD at a 33. HIMS at a 44. Netflix at a 13. Coin at a 34. AMD at a 27. PLTR at a 35. TXN at a 13. DNUT at a 112. IBIT at a 19. MSTR at a 3. Amara at a 15, Amazon at a 23, OKLO at a 21, WFC at a 5, and number 20 for Tom, TGT at a 59. And inquiring minds want to know, what are you doing in Google?
Oh, that's a good question.
We haven't done much anything yet.
I mean, Google, we don't really like that much.
Probably
Tesla,
wait till 2:30.
Tesla, we like.
Tesla's today?
Yeah, Tesla.
Tesla,
IBM, Google.
Well, IBM will, what they do every time. Go ahead.
There's nothing to do in IBM. You can't get filled in there.
What about Tesla?
Tesla, we already sold some strangles. And Google, we have some strangles on, but I haven't done anything new today. And CMG, we sold a bunch of puts today.
for 50 cents.
Yeah, it was embarrassing. I don't even want to mention it in front of you. I really don't.
They were some of the best puts I've ever seen.
And he did a Bakakta diagonal spread that
where he sells the
absolutely embarrassing.
Yeah,
it has 0.41.
Oh, I'm sorry.
He does it for 5 cents or something.
Oh, I'm
5 cent
sorry.
credit. It's just like.
Listen, I want to do a public service announcement.
Oh, I'm sorry.
Tom is right at the coffee shop. Everything is real except for the dog service vests. Okay, those are fake. Scott, I'm going to have to let you go.
Bring in the real talent.
Play some music.
Johnny
My son,
Trades.
that's right, Johnny Trades. How are you, my friend?
I'm doing good. I'm doing good. It's always a pleasure to be with all the boys.
I know
You know,
that.
full house. It's nice.
Damn
Nice.
straight.
Yeah. Most of the time I'm in that seat and I gotta, look over and see over there.
Mm-hmm.
So this is much better.
Much better.
Couple 2-tree trade ideas. You want them?
Couple 2-tree. Yeah, sure. Go.
All right, let's do it. I got a Google trade for you.
You got a Google trade?
Yeah, I think it's. I said this on Monday when I filled in for overtime. I think it's inside up, just kind of like nothing burgers for the big names. So I'm playing that with Google like that.
Yeah, you've had it right so far.
Yeah.
Okay.
So I'm doing a little crab trade. I know this one confuses you. It's a debit, and it's
What is it?
it's calendarized. There's multiple legs. It's like it's really tough. I get it.
All right, give it to me.
Buying the August 23-day 195 call, selling 2 of the 200s.
Oh, you're buying the August?
He can't do this. He doesn't know.
I know he can't do that.
Which
It's
one are you
impossible.
doing? You're buying which one? August 192.5 calls?
Yeah, the ones that are on the screen.
The 195. I'm buying the 195.
I don't have
the
that
ones that
screen.
are on the screen.
Wrong screen. 195s. Okay, go ahead.
I'm selling 2 of the 200s. For the Johnnies, I have to buy the wing at 210. You should do it naked. Right at 2.
In August?
No, I'm doing the August 195, and then in the weekly, I'm selling the 200s. 2 of them. You're going to do it for $1. If you want to sell 3, do a 1x3, and you'll get your low credit. It'll make you feel good.
You're going to sell the one. You're going to sell the.
I'm buying the 195 in August. I'm selling 2 of the 200s in the weekly. What is so confusing?
Ooh, I don't like that attitude.
I do it 1x2. You want to do it bigly, you do it 1x3.
It's $1.28.
That's exactly what I said. Trade for $1. If you want to do it for low credit, you sell the third. And do it for a.
What price did you do it for?
Well, I'm a Johnny. I got to buy the wings, so my trade's up there for the people watching.
220 debit, but has positive data decay.
Yeah,
I know. I'm just.
I tried.
All right, I'll do it. Small, just whatever.
There you
what
go.
else you got?
All right.
I mean, just to shut the Batistas up.
Yeah, we do that one small. All right.
All right, not filled yet. Working it.
All right.
Working.
Perfect.
I'm working it, boss.
I think I'll be filled.
Uber, got a position?
No.
It's got earnings coming up, I think, on this August 6th.
I do have a position. Uber. We're just short the 80 puts.
Besides, those bonds you bought at 9 or 15. Just letting you
Are
know.
they really? We'll take some profits. You see, Nick, that's what we do.
Amazing.
We take profits.
I'm in.
Buy them at 9, sell them at 15.
You just bought them.
All right, Uber, we're short the we are short the 80 puts, I believe.
Okay.
Yeah, we're short the 80 puts in August. What else can I do for you?
I did a little $10 wide iron condor, 85 and 75 put spread, 110 call spread, $2.45, pretty cookie cutter. I did it in August to play into the earnings, but you could be a Johnny and go to SEP.
What'd you do? 85, 75?
Yes.
And 105?
I did the 100, 110.
100, 110. 100, 110. And you got what price for this?
245, but I did it in August.
Okay. SEP is 370. Okay, not filled yet. Working it.
Beautiful. Last one.
That's two working.
Pigs are flying. I'm looking at Hims here, doing an upside call ratio spread into this nuttiness. Buying the 55 call, selling one of the 60s, one of the 70s. I did in the August monthly expiration. I did a 50-cent credit.
Hims?
Yeah, call skew off the chain.
Yeah, I just rolled up some calls and their stock's up $5 today. What strikes you doing?
I bought the
Selling your bond side, not 15.
Yeah,
Way
got
to go.
15s. Nice 6 little ticks there.
Yeah.
Bought the 55, sold the 60, sold one of the 70s.
In SEP?
I did it in August.
Because it says August on the screen.
Okay, I got to do. I'm rolling tomorrow though, so I got to do. I like a call ratio spread in here.
Do a 1x3 or something like that.
How wide are you?
Earnings are August 4th.
I did a 5. Well, I staggered the strikes. So I did the closer at the money call spread, sold the further out of the money call, the naked call. But you could probably, if you're going to
do it at the expected move, which is $14 in September, it takes you up to 68. So we'll do the 70s. I'll buy the 70s and sell
3 of them. Sell 3 of the.
Which ones?
80s. I don't know what they're trading for.
You can do the set. You can. I like this actually. You can buy.
Yeah, 1x3.
You can sell 85s.
85s. There you go.
And you can do this trade. 1x2 is a 46-cent credit. 5x12 is a $700 credit. Oof.
Yeah. See?
But you can do that 70-90, 5x12 for a 217 credit. Phil.
Son, I'm so glad I got to at least teach you in the infancy.
I actually like.
trading, and
That's
you
my
took it
favorite
to a
trade of
different
all the
level
trades.
And made it your own, and not having him teach you, and me having to correct.
He's still the creator.
That's my favorite trade of all those trades.
No.
We filled Google.
But you're destined to be a loser now, so close yours immediately, if not.
Of course.
Since he gave you that vote of confidence.
We sold Google. We filled Google and Uber. We're not done yet.
There you go. Beautiful. Fantastic.
We're going to take a quick 90-second break. Even the S&P's up 16, NASDAQ down 30, Russell up 23, Dow up 186, volatility by 30 cents, cancel crash, bonds down 17. We'll take a quick 90-second break and come back. We got more Tasty Live with, was it TP and Liz? Liz and TP, I believe,
Liz and
right?
TP.
Liz and TP next. You're not going to want to miss that. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Hello, everybody, and welcome to the first of 3 of TP and the LD show.
What's the likelihood of having the TP and the LD show 3 days in a row? The network is taking a big gamble with this, Liz. We're pushing out, we're violating the network rules by, showing primetime content, primetime shows 3 days in a row. Typically, it's only on 1 day a week. No, we are pushing this 3 days this week.
And TP, I am very excited to have you for 3 days. I love Jenny. I do love doing my shows with Jenny, too.
Of course, you're best friends. You've been best friends forever.
Yeah, but with you, we like to dive deep into your knowledge. So we've got some really good questions for tomorrow. We're gonna put a pin in those until tomorrow, because today we have Jacob's study, which I'm excited to have you on for. Every day on Wednesdays, we get a market measures piece, and we get it before Tom and Tony. So because we are live in the middle of the SPX pit on Wednesdays, so we get the 0 DTE piece before the boys do. So we get to go over it, and our take is sometimes different than what Tom and Tony take away from it. And so it's pretty interesting the way that works. But I've got you on, and we're going to talk through that. We also have lots of earnings today. I have some volatility questions for you. So if we don't get to any of these things, earnings are topical, but if we need to, we can push the volatility questions to Friday. I've got you Wednesday, Thursday, Friday. So we've got lots to do, and I'm very excited, but I would be remiss if I didn't bring up, you look amazing. Is that a new shirt?
Thank you. Thank you. It's my Wednesday Splash shirt.
Ooh, Splash Wednesday. I like it.
Yeah, Splash Wednesdays. Splash Down Wednesday.
Now, I know I already requested it the last time, but you are on a Friday again. Is the shirt clean? Flame shirt Friday.
Yeah, I can clean the fire shirt. I can clean the flame shirt, yeah.
Because we need a flame shirt.
And it's not like doing the show with you is a real, it's not like I'm working with grease or paint, it's not like that. It's a pretty cerebral, intellectual interaction, the TP and LD show. So it's not like, it's not like I'm out there digging dirt or anything.
And in my mind, the shirt goes into like a hermetic immediately following the show, right? So you just take it off and delicately place it in a bag. So it's
right. And there's a little psst that little hissing sound when it opens and closes, like. Psst.
Yes, that's how I envision it. That's how I envision it. Okay, so that being said, TP, can we, John, can we please jump into Twitter? Because I loved this and I wanted to show it to you. And I think you knew this probably already, but Tony Batista posted this and I heard Vanetta talking about it. And I know JJ and Scott had so much to do with this. But did you know that they are going to start loosening the PDT rule?
Yeah. So this is a big change, and this takes away one of my presidential election platforms. When I was going to run for president, one of my big 3 pieces was to get rid of the day trading restrictions, and this is movement towards that. So you and Jenny talk a lot about how to avoid pattern day trading rules.
We do.
And pattern day trading rules were introduced, I don't know how many decades ago, where unless
you know what? TP, it says it right here. I read this in 2001.
Okay, right.
Okay.
So 2001, so 24 years ago, if you had less than $25,000 of net lick in your account, not cash, not buying power, net lick, you needed a $25,000 account. Only then could you buy and sell an option 3 times on the same day for 3 times in 5 days, if I have that right?
That's correct.
Or 4 days, 4 days and 5 days, whatever. 4 times in 5 days. So if I buy an IBM put spread today, and IBM goes down, and I sell that put spread, and I make a little bit of money, that's 2 day trades.
Yes.
And if I do the same thing tomorrow, I just did 4 day trades in 2 days. And if I don't have $25,000 net lick, I will be restricted from opening any new trades for, I don't know, months, 3 months, something like that. It's crazy. The genesis, the reason they wanted this is it's where people with a little bit of knowledge can be a dangerous thing, right? Where people saw this behavior, people day trading, buying 100 shares, selling 100 shares, buying 100 shares, selling 100 shares, and losing money. Retail traders are trying their hand at day trading and losing money. And they thought, well, okay, let's save these day traders, these retail day traders from themselves, okay? And say that unless you have $25,000, which in 2001 is probably equivalent to something like $40,000 today.
For sure.
But the point is, it was an attempt to get smaller investors, smaller retail investors, to stop them from doing day trading. What they didn't realize, in my opinion, were the unintended consequences. So every, whether it was a 100 shares of stock or an option, or a spread, those were considered in-day trades, and it sucked. It sucks. No, I should say yes, it sucks. It is one of the worst, most restrictive rules that really hurts retail investors. It really does. It
stops them from taking profits. And I think that's insane. So
Yes.
I'm glad you talked about why it was put in place, because that's really what I was wondering, because I really never understood it and I couldn't quite grasp how it was protecting people, because it says the existing rule is put in place to protect investors from massive losses and borrowing more than they can cover. I mean, I get it, but in 2001 things were so different.
We had just started, Thinkorswim, and options were just beginning to be traded online, right?
Yeah.
That we were, the first iteration, the first online trading companies were just starting to launch in 2001. That was us, right? And, we pushed options really hard, and they made sense to a lot of people, and we changed the industry with that. The other thing too is you could leverage your day trading. So somebody with, let's say, $5,000 could buy more than $10,000 worth of stock. In other words, it's the day trading margin, right?
Yes.
It isn't just 2 to 1. I forget what the number is. So you could take a lot of risk. You could buy a lot of stock with a small amount of money with day trading rules or with day trading margins. That means the losses could be bigger too. But that's a different question. In other words, that isn't necessarily solved by the pattern day trading rules.
Yeah, that
It's
doesn't
not
seem
don't
like
stop day
itself.
trading, it's stop giving people leverage.
Yeah,
Right?
that seems kind of crazy, but nonetheless, big strides have been taking place, and kind of springboarding off of this TP is that with the 0 DTE SPX, which I think has been a big game changer. Now, granted, I have a little bit of a bias because I'm in the pit 2 days a week with the SPX traders and we're watching all the volume that's going up and things like that. But we've been doing, with Jacob's study, he's been adding on to these. But every day around 9 o'clock, I put on a 0 DTE $10 wide SPX at 9 o'clock. This is like following Jacob's rules, and then put an order to close it for 10%, which has been great. But the reason I'm saying this is because I was trying to teach my son this, but he opened up a $5,000 account when he turned 18. So he couldn't do this because SPX, if you're doing the Iron Condor, in and out, it was actually 2 and 2. So he could only do it once a week. So because of that, I had him going into the E-mini S&P futures because that doesn't go under the pattern day trading rule. But it was a big risk on me because I had to monitor his account because it doesn't settle to cash.
Okay. So I don't know if anybody remembers Sanford and Sons. Do you remember Sanford and Sons?
Yes.
And old Fred Sanford would grab us and say, "Oh, I'm coming home, Elizabeth. I'm coming home." Right when his son would stress him out. There aren't many things that stress me out, Liz. This discussion is one of them. So Liz, you understand the SPX better than anybody. So can I, with those SPX options, get 500 symbol? Can I get 500 stocks in my account if I have an in-the-money SPX call at expiration? No. In other words, I don't get any stock with the SPX. It's a cash index.
But when I would do it with my son,
let me make this point. And it is priced off of the ES. So if you're wondering why SPX option prices look a little funky sometimes, especially going out, let's say 60 days, that's because they're looking not at the SPX price, but at the ES price. And it's just the hedge, okay? My point is, it is purely an arbitrary decision to make cash-settled European-style options a security, a stock. Okay, subject to the day trading rules. It is mind-boggling. It is mind-boggling. So your son, who would like to work with the SPX, cannot. Okay, mind-boggling.
And I feel like the SPX takes a lot of the risk away. So when I have him doing these with the E-mini S&Ps, so you got to double it. So if it's a $10 wide, you got to go $20 wide. So something to this effect, he'd be putting on every day and putting in a GTC to close it for 10%. But if it doesn't close TP, I've watched his account get crazy because even though everything is defined risk, it kind of blows up in capital at the end. But I've got to keep an eye on it because he's not that versed in doing it. I just want him to learn the trade.
Hey, you're always a parent. That never stops. I'm learning now.
Because he puts his order in to close it. That's as far as we've got. He doesn't realize like the warning signs that will go off if it gets away from him.
Right. And so I'll trade ES options too. I probably trade as many, probably more ES options than I do, let's say, SPX options.
Yeah.
And I go between them, and I do the same trade that you do, Liz. I'll sell the at the money premium, that sort of stuff. But it seems unfair because your son doesn't have a $25,000 account that he cannot take advantage of the SPX. Okay.
Yes.
That makes a lot more sense for somebody like him.
Well, and it's just so much easier because no matter what happens in your account. So when we do this on a daily basis, now I do it at 9, so I'm getting a lot more. I'm usually, oh wow, that's not bad. Oh wait, hold on. I'm usually getting over $8, like 8.10 or something like that. So the drawdown is very, very little. So that's why we've been doing this. And Jacob is great because the drawdown is if you're collecting 8.10 on a $10 wide, you're risking $190. You put a GTC in or a closing order for 10%. You have a 90% success rate. And if you get one loss, you're losing $190. It's going to take 2 wins to cover it. So it's a very small baby way to dip a toe in the water. And it's been really fun to do and really fun to teach him. So I am beyond thrilled that this pattern day trading rule is going to go away in December.
And just to let you know, one of the reasons the margins explode for the ES is that it is possible for your son, if the ES is in between his strikes, that he can take a future on delivery. Okay, so he can be assigned a long or short future, and the margin on that, Liz, if you just click on the margin just click a buy or sell.
I'm going to click
on the ES, see what the margin is.
Oh yeah, here
on the future.
Yeah. Yes, $23,000.
Holy smokes. Okay. I mean, your son shouldn't have to deal with that.
No, but I watched it you're absolutely right. Because I mean, this is a defined risk trade, right? So when you're putting it in like this, very defined risk, you're only going to use your maximum loss is $425. But I've seen it if ES is going to close at 63.70, at the end of the day, his account is a negative $23,000.
Mm-hmm. Yeah, and it's like I said, there aren't many things that stress me out as much as this. I hate it. Your poor son.
And it's happening. He doesn't. Please, TP. This guy doesn't look at it after he puts it in. He puts it in the morning, puts his good till cancel order in, or puts his closing order in, and then it's on me to be like, what is happening in your account?
Hey, you're doing your parental duties. You're managing his trades when he can't. I get it.
But and I do want to get into Jacob's study, but like from a perspective of learning. It was fascinating, TP, and we talk about our kids all the time, and learning how to trade. But so he's got all these kids that want to trade, and they're trying to zing futures. Where I've got him slow and steady wins the race. Where on average, if you win some and lose some, 90%, all that stuff in 2 days to recover. If you do it every day, over 2 years, Jacob says you're getting basically on average $50 a day. And for a kid in college getting $50 a day, that's game changing.
It really is. And there's so many misconceptions about what trading is. When I'll tell a young person I'm a trader, oh, day trading, oh, buying mutual fund, they don't know, right? So there's a huge learning curve young people have to do. They'll do it quickly. They can learn it in a couple of days. Oh, it's not day trading. They're smart, right? But unless they're shown like you're doing with your son, like I do with my girls, you have to be shown what our style of trading is. And that's why we're a growth business, because not everybody's doing it.
And I think, like I said, I'm a terrible teacher and I might be going backwards with it, but I'm like, open it up, you see where that line is, sell both of those, then count 1, 2, 3, 4, buy. Go on the downside, 1, 2, 3, 4, buy.
I guarantee you, Liz, if I talked to your son for 10 minutes, he'd be doing all the right stuff the next day. It's because it's his parent talking to him in one ear, out the other. Somebody from the outside comes in, oh, yeah, this is great. Oh, yeah. And you could have been telling him for the past 5 years. No, it's just being a parent is challenging.
It is challenging. Okay, so now we're going to go into, can we jump into Jacob's study? I want to make sure we get to it. Keep an eye on the time because it's already 20 after. Okay, and we are taking live tweets, so we will go into live tweets after that. And then if you have any questions that you want TP and I to answer, tomorrow you can either put them in Twitter, put the hashtag LIZJNY, or send me an email, liz@tastylive, and we'll see if we can get to those with TP tomorrow because we've got some good ones coming up. But I'm going to go into, okay. TP, every Wednesday, these are from Jacob, and keep in mind, it's Jacob, okay? So they're very in-depth, a little bit heady, and this is springboarding off something that we did 2 weeks ago. Okay. So I'm going to kind of go back and forth with it because you haven't been in here for a very long time. But so what he's saying, the reason he's saying testing momentum with the 0 DTEs is 2 weeks ago, he did a study where he was testing being the counter, saying that if the SPOOs are down X amount, sell a put spread. If they're up X amount, sell a call spread. And if they haven't moved that much, do the neutral iron condor. So he was saying be a contrarian move. Now he's kind of flipping the cards over, and it didn't really work, by the way. So 2 weeks ago, when you were doing that, it didn't necessarily work. Still kind of being non-directional, seemed to be around about the winner. Some people might have looked at it and got a different take, but that was the take that we took from it. Now he's going the exact opposite. So saying if SPOOs are up, sell a put spread versus selling a call spread. So that's kind of where we're going with this. And I keep saying SPOOs, and I apologize. These are all in SPX 0 DTEs, but SPOOs just come out of my mouth. Okay. So this is kind of what he's going with. The emergence of robust 0 DTE options markets introduces brand new dimension to trading, distinct from the traditional longer dated options trades. The difference in dynamics and opportunities necessitates a reevaluation of our trading strategies and mechanics. This is all correct. Recently, we delved into the contrarian approach. That's what I was just telling you about. However, the results were less than stellar. In two-sided market, when something doesn't work, should you consider the opposite? This week we'll experiment with embracing the momentum instead of being the contrarian. Okay. So the studies are always the same. He's got over 2 years of 0 DTE data, and they consider selling at this. And I love that he does this because he in the past, TP, and this is 9 a.m. Chicago time, because in the past they have shown that the 0 DTE theta curve does not start decaying for the first 30 minutes. So selling premium in the first 30 minutes doesn't necessarily help. So that's why he changed. Then each one builds on it. So he starts doing everything at 9 a.m. Give or take 5 minutes. Okay. So and that's kind of what I said. If the move in the previous SPX open to today was less than the expected move, they sold the butterfly, non-directional. Okay. If the move was more than the expected move, they sold call spread. So they're trying to go with the momentum, right?
Yes.
And then if it was more than expected to the other side, they sold a put vertical. So if it's the upside, they're trying to go to the upside. They're just trying to go with the momentum instead of fight it. Now this is where it gets a little tricky, and I'm going to actually go to the takeaways first and kind of bounce back and forth. But they repeated it. You'll see him doing it with just the call spreads, and then he also does the same thing with 20 delta and $30 iron condors, because lots of people are looking at those as well. Okay. Just kind of, and all the trades, the farther out of the monies are held till 25. Everything that's at the money is closed at 10%.
Okay.
Fair enough?
Yep.
Okay.
What are the takeaways?
So let's go to the takeaways. Yeah, let's go to takeaways and then we'll go backwards. And this is all in here. All of these slides are going to be attached because the people that have watched the first one asked about with the momentum trading. Because if it doesn't work to be the contrarian, if it doesn't work one way, if you flip the cards over, does it work the other? So that's kind of the question he's answering here. But the takeaways are when selling at the money, 0 DTE premium, delta neutral was king. So in both contrarian and following the momentum, delta neutral was king. Adding any directional assumption both increased the risk and hurt long-term results. So I'm not surprised by that because no one can get the market. Anytime I kind of look at this, like anytime I think I know something, I'm always wrong. You know what I mean?
Well, the other point is that just because one trade idea isn't really great doesn't mean doing the opposite is good. Okay. Right. So it doesn't really work that way. It's like saying, well, if you wouldn't sell the put spreads, why wouldn't you buy the put spreads? Those would make money too. In other words, if shorting the put spread loses money, why wouldn't you buy the put spreads? Because it doesn't work. It doesn't always work like that. And that's what Jacob is showing here is that, okay, going with the momentum. In other words, if the market is up, I'm going to sell a put spread. Market's going down, I'm going to sell a call spread. That wasn't great. Now he's doing the contrarian, or is he doing what's he doing today? The momentum.
This is like ride the wave, follow the momentum.
Right. So the opposite, in other words, if the market's down, contrarian is sell a put spread, market's up, sell a call spread. He's doing the opposite today. And what he's showing is that market neutral, delta neutral, outperforms either of those.
Correct. It is pretty interesting. If you kind of go down and look at these takeaways, then now that's what I do love about Jacob's pieces is that people can take a look at these because the results are there, but they're minor, right? So I look at this, and I'm glad he said this. Delta neutral was king. I did not write that, but that's what I've been doing every day. And we have so many viewers, like your Jack Tuckers and your Eric and your Blue Wackadoo on Twitter, and they're with
Polish Warrior.
The Polish Warrior. They're religiously selling these iron condors in the 0 DTEs and taking them off and getting amazing results. So he's just kind of edifying that. And don't get me wrong, there are losing days. Everybody's going to have the losing days. So they can look at this and they might say, like looking this, the short 30 delta outperforming selling iron condors every day. So you can look at this and you can tweak your strikes however you want to with your own risk reward with these results. That's my favorite thing about what Jacob does is that I haven't seen a study yet where it's the blue light special where it's like, this is it, this is it, this is it. It's kind of like, oh, this works. This works a little bit better.
Is lit, and I've said this before, I'll say it again. It's the people like you and me who are long time traders never think we figured it out. It's the traders who think Liz, I figured it out. This is how I'm going to make money. They never last because markets change, the world changes. And this is what's happening.
With TV.
We didn't have Jacob 30 years ago.
No, but haven't we all been there before? I mean, you know how many times Jenny and I have been like, we got this. This is the holy grail of trading. And it works until it doesn't. Yes.
Yeah, well, that's exactly right. It works until it doesn't. So let's look at some of the results, and we can actually put numbers on what's happening here.
Okay, and like I said, we're going to get into the weeds here. That's why these are going to be, we're going to attach these slides, and people can go through them with a fine-tooth comb to look at what they want to look for, because it is a lot, okay? So here, if you went, this is the short at the money with $10 wings. So this is always. So this isn't when it's up or down. This is just doing it on a daily basis, right? So you're doing just put verticals, which a lot of people have been doing. So just selling the $10 wide put always at 9 o'clock, just selling the $10 wide call at the money always, and then doing the iron butterfly, meaning you're selling both. And so you have the least drawdown in the iron flies. Okay.
And can I
go ahead.
Okay, go ahead, Liz. Go ahead. What were you going to say?
Go right ahead.
So here are the numbers that I want people to look at. Look at the CVAR. That's a value at risk. That's basically a risk number of the trade.
Yes.
The iron butterflies are about a third of what the call and put vertical trades are. Don't focus so much on the P&Ls. The put verticals make 33, call verticals minus 24, iron butterflies 58. Yeah, I mean, but they're all kind of the same scale. Nothing's making $2,000, right?
Well, and it can't, right? Because if you're looking at it, if you're selling a $10 wide with $730 and $730 in conditional value at risk, all you can ever make in one of those trades would be what, $300?
Right.
$270? Yeah.
So the P&Ls are relatively small with these trades. That's an important reason why they're great for retail traders.
Yes. And so keep in mind, TP, take a look at this. This is what I love. And this is what I've got my son doing. So 70% of the time he's going to win. If not, it goes till expiration and he's going to lose, $257. But average P&L, profit and loss per day over 2 years is $58.92. This is what I've got him doing. So it's hard for a small account to see 2 or 3 streaks of losers in a row. But if you can consistently do it, net, you'll make on average $50 a day, which is pretty good.
It's awesome.
Yeah, which is pretty good. And with a very little, and also there's, if he loses 100 or 257 over the time, but if you're getting $8, he's losing 200. It's what he's seen so far. It's not that big of a loss where it's not, a lot like your Jack Tuckers, he's got so much at risk throughout the day, that might be hard for a smaller account or for a trader to kind of watch. So this is all days. This isn't following the momentum. Okay. So then we're going to go to the next slide where this is where they're doing the directional. So directional, this is the short at the money wings. And this is if they are certain expected moves. And I think the whole point of this is if you wanted to say, oh, it's up today, I'm going to follow the momentum. It kind of looks fine, right? They're all right there. But why wouldn't you just stick with the simplest instead of saying, let me check SPX from yesterday to today to see what's going on. They're not that different.
No. And so you're not making these directional bets. The max profit's $57.92 a day on average compared to $58 for the iron butterfly.
Yep.
So you're adding extra work and taking, if we go to the next slide, then remember 257, we're taking more risk for smaller profits. It doesn't, you're doing more work for no extra results.
That was kind of my takeaway in Jacobs as well. Now he does go in, and this is for your Jack Tuckers and people that do the short delta. So these are just iron condors, not iron flies. And you can see the results always not following the contrarian. And that's what they're doing on a daily basis. They're doing these iron condors. Your conditional value at risk is a lot more. But we did the put verticals because the market, the nature of the positive drift have been good, have been pretty successful. You're just risking quite a bit more. So from this perspective, look at this. Your average P&L is $61, but you have a 94% win rate. So that put vertical isn't bad.
No, if you generally believe in the upward drift, and so the reason the stocks move an upward drift in a risk neutral world is positive interest rates. So I have to be rewarded at least 5% or so, whatever the current interest rates are, to take on a risky trade. If the riskless trades gives me 5%, a risky trade has to give me at least 5%. So that gives the upward drift to stocks. But here's a little bit more into the weeds just for a second. The reason the put verticals show a profit and the call verticals don't is you're not getting good credits for those call spreads. The call spreads are cheap. Okay. Are they underpriced? No. Does this mean I should buy them? No. Okay. That's not what I'm saying here. But because of the skew, and we'll talk about skew later this week, is the price of those call spreads is relatively low and doesn't give you enough credit to generate a profit. The put side does.
And these aren't at the monies. These are 30 deltas. So even in this realm, and I love this, TP. This is one of my favorite lines you've ever said to me. Puts are neutral too, because don't get me wrong, they're neutral. Even if you stay right here, that's a neutral trade. You'll make it.
Right.
Yeah. Okay, so kind of going forward, and then they do the directional bias. This seems to be your reward isn't there for a lot of risk, right?
Yeah, the average P&L is really low, and look at the value at risk. These are over $1,400 of risk that you're taking when you try to add a directional element to the out of the money spreads. It doesn't pay off.
It does not. It definitely doesn't. So I'm going to keep going. Then they give you 20 delta. It's the same thing. Then he's doing 20 deltas, $20 wide. So instead of the 30 deltas, here's your 20 deltas, and then kind of so on and so forth. So I think the takeaways, and I think we're both of that opinion, is when you're trying to either be a contrarian or follow the momentum, it seems like a whole heck of a lot of work when this seems to be working.
And if you're pulling a directional if you look at charts, if you look at fundamentals, if you do technical, whatever you do, okay, and this also, by the way, carries over a little less to individual stocks, but the principles are the same. Okay, the numbers aren't as stark as this with individual stocks, but the principles are the same. The general direction is the same. Look, if you have a directional opinion, if you think the market's going up or the market's going down, okay, use some of this momentum indication. So you're not doing it every day, right? You're just picking your spots. You're saying, okay, I'm waiting for the market to sell off. Therefore, the contrarian didn't really work, but Jacob is showing that the momentum works a little bit better. So if I'm bearish and the SPY is or SPX is down in the morning, maybe I'll sell that call spread. Okay.
Yeah,
You're
sure.
picking your spots.
No,
So
and I think that's great. If somebody's got a directional assumption, go for it.
go for it. Use a high probability strategy that puts the odds in your favor. But if you just want to make money, okay, I'm not looking to outsmart the market. I'm not looking to prove everybody wrong. I'm not looking to show off, oh, yeah, I told you the market was going to sell off. That's not me. I just want to put some money in the account, okay? That market neutral strategies tend to work over time. The reason is that the options price in more risk than the market typically displays. Okay, that's why the iron butterflies work.
And you know, I'm not a huge fan of durational iron butterflies, but I am a fan of getting out of 10% in a day.
Because it takes forever for those if you go out, let's say, 45 days or something, it takes forever for those butterflies to make money.
Oh, for
They're just
sure.
not. The zero DTEs. The zero DTEs are they are another tool in the box.
But look at how cheap these would be. $10 wides out. Oh wait, did I do that right? No. Those aren't $10 wide because it's weird wonky strikes.
And so, Liz, you and Jenny have probably done as much as anybody, and probably more, to popularize the use of the zero DTE options. The explanations that you do, the discussions that you have changed the way retail traders use these zero DTE options. And that's why when I hear discussion, now I might be bearish on the market. Okay, sure, I'm kind of bearish. I think we might see a sell-off at some point. But when I see these Wall Street people complaining that the growth in zero DTE options means sort of irrational exuberance, if you remember that line from Alan Greenspan or whoever it was back in 2000, that it's, oh no, they're now gambling. That traders, that retail traders, not the smart money managers or Wall Street people, no, the poor little retail traders being suckered into zero DTE options because it's gambling, okay? And that shows that the public taking risk is way beyond what it should be, and the market's going to sell off because of that. That couldn't be more wrong. Okay, that retail traders are just using zero DTE options as cheap lottery tickets, which is basically what he's saying. That is wrong. We have so many customers who are making money reliably over the past few years in zero DTE options. Sorry, our retail customers are booking profits.
Well, and it's so fascinating to me, TP, and it probably is because, number one, we came from the trading floor, so we've all seen, you and I have seen the SPX pit, and we're back in the SPX pit. But in my opinion, in my small humble opinion, I think the exact opposite of saying that this is the angry animal. This has been one of the biggest game changers I've seen in this industry in a very long time. And when I say zero DTEs, I specifically mean SPX because of the fact that it is cash settled.
Yes.
Or XSP. So XSP and SPX, they are big, they are liquid, and they are cash settled, which is amazing. And because the nature of how they are, so SPX was something that was before this kind of out of my budget, for lack of a better term, even defining my risk. But because there's no time left in these, look at how cheap it is to define your risk. If you're in a zero DTE option, it's $1, 80 cents to define your risk, versus if you're going to go out to these 45 days, which we used to have all the time, to define your risk, you can't.
No.
It's too expensive. You're looking at $33.
You're not getting rewarded. People in institutional money, hedge funds, money managers, all these people, they don't realize how smart retail traders have become. Our customers, your viewers in particular, our customers more broadly, and retail traders in general are really, really smart. These are people who, they're doctors, lawyers, engineers, teachers, professors, whatevers, right?
Yeah.
They run companies, they're entrepreneurs. They're smart people. Okay. They aren't like, oh, I'm going to make $1 million buying that put. No, that's not what they're doing. Okay.
Oh.
I would put our viewers' knowledge of zero DTE options against anybody on Wall Street. Anybody.
It's so funny that you say it's doctors and lawyers. I think I've told you this before, where I went to my son had whatever. He had to go to a chiropractor, and then I had to go to that same chiropractor. And while my head is down and while I'm being worked on, he found out that I'm an options trader. So the entire time, all he wanted to do was talk to me about zero DTE SPX trades that he's doing.
Oh, no kidding. I have my little heart doctors and stuff. One guy talking to, we talked for literally 2.5 minutes about my heart, and then spent the next 45 minutes talking about option trading. And it's like, I'm happy to do it, dude. Look, I'm happy. This is, you don't understand who, it's like, you don't know who you're talking to. Is like, no, it's not because I'm kind of genius. I will talk your ear off for the next 8 hours if you let me. Okay. Don't ask me about the VIX because we'll be here all night. Okay.
It's so funny because you're right. You like 2 minutes about the heart. We're here for the heart, but I will stay here all day if we need to talk about options.
It's funny. Yeah.
Okay. While I got you, speaking of the VIX, I have one question, and Jenny was kicking me saying, make sure you ask TP this, and I said okay because we're going to talk about this. The VIX is trading 1588.
Yep.
The VX is trading 1866. Talk to me.
Why is that?
Yes.
So is the question is why?
When we say it, it just sounds a lot more eloquent coming from you because you are our VIX guru, our VIX expert, our VIX everything. So why? Pray tell.
Okay. So let me preface whatever I'm going to say with those neither is wrong. The numbers are correct for what they are. Okay.
Okay.
The VIX, if we go back to the VIX for a second, Liz, the VIX is a simple calculation. It's not simple. Well, it's mathematically pretty simple, but it is a calculation based on SPX options. So if you now go into SPX, Liz, and you open up let's say the 30, let's say open up the 22 days. Let's open up the 22 days just for the sake of argument. It looks at all the out of the money puts and all the out of the money calls.
Okay.
And distills them down into a single volatility number. It's a formula. Okay. And for anybody who's playing at home, it's called a variance swap. It's a mathematical formula. It takes those option prices and turns them into the VIX. So the VIX is simply a reflection of SPX option prices right now. Right now. Okay.
Okay. So this VIX price, let me just kind of go with this. This VIX price, which is 1590.
Yep.
Is the reflection of what cycle in SPX? Because I know the VIX, if I open this up, the VIX isn't trading 1590 here. I know the VIX is trading. Let me see where it is trading right now because I'm looking where the calls and puts are the closest. VIX, the September 17 VIX is trading for 20.5, where the calls and puts are the closest.
So let's step back for a second. So so you can actually go into the CBOE and read the white paper of exactly which expirations the VIX uses, and there are some different volatility numbers that take in the zero DTE options, things like that. But this is typically the 30-day volatility. So in other words, the SPX options that straddle 30 days, let's say the 22 and the 39 or something like that. The 22-day.
Here's a 30-day. We could just go right to the 30.
Oh, the 30-day. That it's using the 30 days. So it's using the 30-day options to calculate the VIX. Now, what is the VX?
Let's go
The
to it.
VX, you can't trade the VIX. You can trade VIX options, but you can't actually buy the VIX, right? Just like you can't buy the SPX. The VX is the future price, is the future of what the market thinks volatility will be in this case, what, 30 days? Okay.
Yes.
That's the market's estimate of what volatility will be in the future.
So how can we see it? So this is a Q. How can we see where this future is, where it's 1850?
So if you go into the VIX, okay, and you go into the August 27 DTE options, and you
1850.
It's uncanny how it works. If you click on the ask price of the 18 call, go to the 18 strike the 18 call. You can let's change to a buy
go 18,
just to make it easier. Switch it to a buy.
Okay, there we go.
And then sell the 18 half put. And that debit, what does that debit mean? 18 cents debit means that thing, that synthetic future, which is what buying a call and selling a put is, it is a synthetic long future, is trading 18 cents under 18 half. So what's that? 1850 minus 18 is 1832, right?
Yes. Yep.
What's the VXQ? What's the VX?
18, right there. Back of the neck and math, right there.
No, it's 1860. What did I say? 1832?
Yeah, you said 1832, but I think don't you add the 18 cents instead of subtract it? Yeah.
I was thinking it was a credit. My mistake. I was getting too excited.
But you're spot on.
You add
spot on.
Okay.
Yeah.
So it's all tied together. So which number is right? Well, they're both right, but they're telling you different things. The VIX is telling you how much premium is in SPX options. Are they rich? Are they cheap? Okay. So
Yeah.
Right now, the VIX trading the 15 handle, SPX options are kind of inexpensive. The VX future price is a tradable instrument. It is the market's expectation. It's buying and selling. Oh, volatility is going to be higher, so let's push that VXQ up. People expect higher volatility in, 27 days?
So
by
it's
about
usually
$3.
So just to kind of clarify, whatever the VX is, so this is Q right now, whatever that is going to be around about 30 days out.
Yeah, well, yeah, if you look at the Qs, yeah, but you can look at the Septembers. I think there are September options, September futures.
There were September in VIX.
But if you type in VXU25, do you get a number?
Let me see.
/VXU.
Do I have to do the 2.5?
Yep.
Yeah, it looks like we will. And that's 2050. That's right. So that's the U. That's the September.
It's $1.70 higher, right? Or whatever.
Yeah, because and then you go to September, and that's the one I was looking at, where I just look where the calls and puts are closest to be trading. So in here, it's going to be 20, 25 for lack of a better, just back of the napkin. Because it's this,
and you can go even further. Go open up the Z's, or do /VXZ25.
Okay, VXZ25, and then so that is
21.
trading 2140, and that to VIX would be, if I were going to go in here, that would be to October.
December. To make it easier, it's going to be the Ds. The Z's are going to be the December.
And look at that.
Right, it's right there.
Wow.
So my point is the two lessons for this is the VIX and the VX are different animals, but they're tied very closely together.
Yes.
Okay.
So that makes sense there, because this just seemed like a big differential with the VIX trading 1585 and the VX trading 18. That seemed like a very large differential.
And that's what it is. Now, when you say large differential, what I look at is the basis between, let's say, the August VIX, the September VIX, the December VIX. right? So in other words, the VIX futures going out in time. So I'll look at a strip of VIX futures to see what the basis is between them. And what that can be informative of, Liz, is whether or not I want to be, if I want to put on a bullish trade in the VX, in the VIX, do I use VIX options or do I use VXX? Okay.
And which would you use right now?
Right now I'm looking at VIX options, just using straight VIX, because right now the basis between those VIX futures is wide enough to create too much drag on the VXX. You want to see how far you can go down the rabbit hole with this? VXX is a portfolio of VX futures.
And this has a drag, meaning because the futures are farther out in time or higher, so every time they have to rebalance, it drags it down.
It drags it down. So the point is, that's why the VXX goes down to is when the basis widens out, like you're seeing when the cash VIX is so low and the front month is relatively low compared to the back month, that's lousy for the VXX. So if I'm bullish on VIX, I'm not touching VXX.
Oh, okay.
I'm going into VIX. I'm making it a more pure VIX trade.
Interesting. Very interesting.
So if I were bullish, so if I'm bullish, I'm selling an August put, for example, or a put spread.
And now, this isn't when you normally open it up. You'd have to look at where the VIX is actually trading, which we just went through that. So you'd go down here and maybe sell the 18.
Something like that.
Yes. Yeah. So and no, it looks like it's in the money. You cannot use that line. But it's just the VIX that has this to see where things are trading.
Right. And so, but that's how, and I'm not saying the VIX is going to go up. This isn't a trade recommendation. I'm just saying that if I were bullish on volatility, if I think the market might sell off, if I think the market might get spooked and the VIX would go up, the way I would speculate that is with an August VIX trade. I might even buy a call spread.
So, TP, when you think, so if you're bullish on the VIX, that means the market might sell off, and you kind of just said that. So when you're doing that, do you lean towards being bullish VIX, or do you lean towards shorting the general market?
Both. Because I already have put spreads in the SPX. So, in the S&Ps, I've bought put spreads in SPY. I've got all sorts of stuff pointing down. Those have been not doing well, by the way. But so I will spread it out a little bit, and I will put on a VIX trade just to diversify, even though it's not really diversified. The other point is too, I'm not taking a huge amount of risk in VIX. I'm buying one call spread.
Yeah, I see what you're saying. You're not like loading the flotilla with VIX call spreads.
Yeah, and I'm not like, oh gee, I'm going to hedge my well, no, it's not a hedge. I'm not, and I would never use a short VIX trade. In other words, sell VIX calls or VIX futures to hedge short S&P deltas. No. So in other words, if I'm short deltas in the S&Ps and I'm worried about a market rally that would take the VIX down, would I sell VIX call spreads, for example, as a hedge against my SPX? No. Homie, don't play that.
Homie,
don't play that. When the VIX is this low, I'm not tempting fate. I'm not going to sell VIX. I'm not getting short deltas here in the VIX. No.
Yes. No, I agree with you. Now, TP, only because you and I have a tendency to go off the rails, the crazy train, I'm going to get into Twitter. We don't necessarily know that we're going to do dive deep into these because it is 52 already. But Ajit, I love it. One of our favorites. He's saying, see if you both like the following. So ARM, he's shorting puts. Reddit, he's shorting puts. Target, he's shorting puts in BABA. So I would like to tell you, Ajit, we are short puts in Target, and we have been liking it. And I think that's probably going to come up today. And I have no problem with anything else.
Yeah, if you're looking to make bets, those are perfectly liquid products. They're expensive though. They're big. They're $100 means that there's a lot of margin on naked short puts. So I would agree with Ajit here. These are decent trading opportunities. Just understand, therefore, larger accounts.
Larger accounts, right? And then Jackie, small profit of 133 out of $400 credit. Great, about 20%. SPX, he sold the 62, or she sold the 62.90 put spread, $20 wide, put on this morning, victorious, done for the day. Oh, I love it, Jackie.
Jackie is big by big.
Big by big. But so
huge.
This is what I love about this is that $133 done for the day. Like, walk away.
And here's Brad. Nice iron condor trade today.
Yep. Already done. So
made 40 cents. Bing.
40 cents overnight. Look at Eric. Watch this. I love Eric. This is the blue wackadoo. Done for the day. Final 10 lot closed. Collected $16.09 after fees. And they ate me up today with that accidental GTC close reopen. So there you go.
Now, to emphasize what you and I were talking about earlier, if we look at Eric's trading here, all these opens and close, they're probably like 10-day trades in here.
Oh, yeah, for sure.
If you don't have $25,000, unfortunately, you can't do this. And that's if they reduce that, get rid of that stupid rule, I'm all for it.
Yes. And I mean, what I love about this is you're not sweating it overnight. You're not worried about tariffs. You're not worried about anything. You're trading. You walk away. Hopefully he's at the beach or doing something fun for the rest of the day. I love it.
And I'm not going to be surprised at the end of the day with some rogue future position that I took on delivery.
No. Yeah,
I don't want that.
No one wants that, TP.
No.
Okay, and then here is the OG, Jack Tucker. He's the one who started posting all this for us. IV is low, 2 half tranches today in SPX. So he collected $5,300 in premium.
Yep.
Which is great. So there he is. There's his strikes, and people are really posting these. Let me see what this is. This is Mr. G. Does TT teach or either of you apply the use of market thesis, bullish or bearish, other each day when selecting strategies? No, I'm a volatility chaser.
What's market thesis?
Meaning, do you think you're do you think you're picking a direction?
No.
Bullish, bearish, or other? I don't.
I do not.
I don't attempt to know anything. No. Okay. Now Bob on Fire comes in. We love Bob. Earnings plays. There's a lot in here.
Yeah, Tesla's the big one.
We don't have positions in any of these right now. Oh, we do actually. Let me close one thing. We put something in Dow, and I think they had earnings today. There's no reason to keep this on for 18 cents. So I'm going to close this. I think they might have had earnings this
good call.
morning.
I saw the put in Dow.
Did you?
Dang. Yep.
Good job.
Close that.
Yeah, so we're going to close that too. And I will push anything that I do out on the follow page just because. Now, do we want to do any earnings trades? Tesla and Google are big. IBM, Chipotle, Mexican Grill, American Airlines, Dow, and then Southwest. There's a lot of things on here. Now, Jenny and I do earnings, but
a lot of these are pretty good. Like, Love you can trade, AAL you can trade. Not sure about QS. And yeah, if you're... Earnings trades are not my bread and butter.
No.
I will put on an earnings trade just to play, but it's not my bread and butter.
So I'm going to trade Love only because Jenny's on a Southwest flight right now.
Nice. So what are you going to do, sell the 36?
I think I was just, 36 for 60 cents. And I was thinking about throwing a call spread on there just to give me a little bit more credit.
And look at this. So you can take in, and I'm sorry, I don't want to hijack your discussion, but you're making $28 of theta. Now, granted, it's 2 days. I get it. But you're making $28 of theta for $626 of capital requirement. That's huge.
Yeah, that is decent. And then worst case scenario, it's just like an put dance. So what? Because then you're long the stock. We'll roll it and sell calls. So I have one earnings trade in, and that is because Jenny is on a Southwest Airlines flight right now. Okay, so I'm going to keep going back here. And then Ajit, I love Ajit does it. He's great. We need to put him on the payroll. He gives the names with the highest IVR, IVP, and IV and HV this morning. So this is great. We appreciate it. Punished Pixels comes in with the $20 wide iron fly, very similar to what we were talking about, out in 1 hour for 10%.
Nice. And they don't call this work, please. This is work.
Right.
We're sitting in front of the computers, collecting $50 here, $50 there. Oh, that's not work. Of course it's work.
It's so fun though. And then Blue Wackadoo comes in. It's already Wednesday, so we saw how he was already in and out. This was 2 hours ago. He put his trades in, and then the previous trade showed how he was out. I wanted to get to this is the one I wanted to end on because I saw it after I posted the pattern day trading rule. This is and everybody's entitled to their own opinions. I do not believe it should stay in place, but I believe the current rules should stay in place. He's talking about the PDT. Unfortunately, some do need to be protected from themselves. And then he says editorials will be rebutted. I think that trade responsibly. I think that releasing and letting people trade those pattern day trading rules, keeping it down, I think it's huge. Do I think some people are gonna maybe, I don't know, take advantage of it? Sure.
I can go in with $2,000 and sell a giant, use every nickel of my capital to sell a giant put spread in Tesla. Okay?
Yeah.
And tomorrow I can lose that entire $2,000. Okay? And that's not a day trade. That's not a day trade. I just lost all of my account on one big trade I put on. You can do that now. Okay? The day trading rules does not protect people from themselves. Protecting people from themselves would keep them from buying lottery tickets. Okay? It's doing stupid stuff with cash. No, the day trading rules are regulators and politicians, a little bit of knowledge, thinking that a rule will help people, and it led to a lot of unintended bad consequences. And by the way, to anybody who supports this, they have never written the algorithms on trading platforms to accommodate day trading rules. I've done that. They're pain in the butt. Okay?
Yes.
Massive pain in the butt.
Yeah.
Massive pain in the butt.
All right, TP, we are out of time. This was the fastest hour of the day, done and dusted. I want to say thank you very much for joining me, and I get you for 2 more days. So tomorrow is Question Thursday. That doesn't rhyme, but that's what we're going to go with. Question Thursday.
That's
Rapid fire questions with TP. Anything you want, send me an email, put it on Twitter. We're going to get to it.
Make them easy, please.
All right, TV, thank you very much for your time. And everybody out there, remember to trade small, trade often, laugh with us, learn with us, watch TP and the LD Show. See you tomorrow, everybody.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
What's one stock or trade that everybody's hyped on right now that you think is all smoke and mirrors?
Probably CoreWeave. It's a good one. Basically, any stock that, first of all, goes from like $10 to $60, has an implied volatility over 100%, closer to like 150, 200%. Those stocks are usually the ones that lose all their steam, go back down to a more normal level, implied volatility collapses. If you're buying options trying to capitalize on movements, you're just getting crushed on IV collapses. So I think that can apply to all of those stocks that have multiplied and have over 100%, closer to like 150% IV.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddy Mikey Butler. How are you, sir? Good morning.
Good morning.
Yes.
Things are good. Things are good. Not much to report here.
Okay.
Other than the market being up 35.
Yes. Tariffs.
Tariffs are gone.
Well, no, we EU 15% may be agreed upon. Tariff news, baby.
Love to see it. We do have some earnings today, so that's exciting.
Tesla, Google.
Yeah. Tesla, Google.
What are the other ones? There's a couple other ones too. Was it
Southwest,
IBM?
Chipotle. Yeah, Southwest, Chipotle, Google, Tesla.
IBM. Yep. ServiceNow.
Yeah. Yep, that's it. Handful of them. So yeah, if you have any trade ideas for those stonks,
yes,
let us know in the YouTube chat.
Hit us up.
We got plenty of dry powder, as they say, ready to deploy. But yeah, we're starting off with those stocks for earnings, but next week there's a ton of them.
Mm-hmm.
So let us know what you're thinking. And we'll see if we can get something on here.
I think I might get a little short delta in IBM here. I feel like they're down on every single earning. So yeah, let's see if we could do that. Get that filled real quick.
Well, IBM, wow, they're up $5 right now.
I'm just doing a short call spread if I can get filled.
Yeah.
Did it out in August. Give me a little bit more time. 250 is where I'm stopping. All right, I'm in. Quick little market update. We got, as Mikey said, E-minis up 33. We're at the highs of the day. They just rallied about 20 handles or so to the highs here. They've been choppy throughout most of the session today, but sitting here at the highs. NASDAQ up 20. It's the weakest of the group relative to everything else. Kind of a mix of moves here. You had Tesla, which was down. It's now up a little bit. Google's down a couple. NVIDIA was down at one. Meta's been kind of on the stronger end. Apple's been kind of a weaker laggard of the group. So it's definitely been a mixed bag in the tech names. You've got the Dow up 400 and change and the Russell up 28. The Russell, the biggest mover of the day, up over 1%. Oil basically flat here at 65 and change. Volatility coming in significantly here, down 48 cents. The VIX itself, 1552. No vol on the horizon here.
Not any vol.
Bonds down 26 ticks. You have gold and silver both getting killed. Gold down $27. It just moved, or I'm sorry, $47. It just moved like 40 points in the last 5 minutes here. Silver down 10 cents. Bitcoin down 1,000 on the futures spot, basically unchanged here. It just had a big rally as well. It was a buy everything rally there in the last 30 minutes here.
Mm-hmm. Yeah. Even HIMS ripping higher, 13%. What did you say? Peloton?
Peloton was up. The pigs are flying, which piques my interest of just, maybe this being a good place to get a little bit of short delta. If you go to the high option volume list and look at the big movers, it is just piles of duty. I mean, our Replimune group up 34%.
Naturally.
Biotech, you have HIMS in here, Oklo, Krispy Kreme. I know that's been on the Wall Street Bets favorites. You got the quantum stocks, Pony, an ADR. You have Beyond Meat up, 20% in, or 30% in a span of a couple days. It's ugh. That's what it is. Clover.
Yeah, I would say the fact that Donut is up 30% in 1-2 days is kind of crazy.
Yes.
But here we are. Here we are.
Yeah, I guess.
Yeah, I haven't done anything in this portfolio yet. I mean, everything that is on the table is kind of within $100, or I've been managing it. So yeah, I'm waiting to see if we can get some movements here. Nice move in gold to the downside. That's helping my Iron Condor in the V contract. I got the 3,200, 35 shorts, 20 points wide. And it appears my gold butterfly, 5 days left, will basically just expire worthless unless we have a 200-point sell-off towards the spread. So that'll be a nice $250 winner. But yeah, I'm intrigued to see what the YouTube chat has to say about earnings today and the rest of the week. So let us know. If you want to join us on the YouTube channel or streaming live, just pop over to Tasty Live and you'll see this video front and center.
Yes. I also closed out of a handful of positions. I had a couple Johnny trades. Maybe you'll be interested in those. But I closed out of that Target call diagonal spread. Somebody from the YouTube chat gave us that. Took a couple bucks out of that, 100 and change. I also bought in the risk on my Shopify call ratio. Had some questions on that yesterday. It was a trade that we put in the cherry picks. Shopify was down like $2 or $3. I think it's probably unchanged now because everything just rallied. No, it's still down $2 and change here. But I bought in the risk on that, so I now have like a upside free butterfly. I closed out of the NVO call that I had left over from a calendar spread / diagonal spread that we did. MVO having a $2 or $3 move today, so just took advantage of that move, closed that, leftover call out, basically a scratch, maybe small little profit there. And then I closed out the Eli Lilly short put spread. Somebody in the YouTube chat gave us that as well. So took off a couple winners into this move. I added 3 new positions for my Johnny Trader account. I did kind of a neutral / bullish trade in Google with an upside crab trade. Long the August 195 call. I sold 2 of the 200 strikes in the weekly expiration, bought the wing just to cap the risk on the upside there. Playing for inside / sideways move to the upside mainly. Maybe we pin 200-ish. That would be perfect for the spread. I also did an Iron Condor and an Uber. So I did the 85-75 put spread, the 100-110 call spread. And then in HIMS, I played into the madness here with a call ratio spread, long the 55-60 call spread, and then I sold the 70 call against it for 50-cent credit. So kind of playing that game here. But yeah, interesting move that we have going on here in the markets.
Indeed. Okay, so you got some short delta in IBM.
Yes, I sold a call spread in the August monthly expiration.
Cool.
300, 310, round number.
Yeah.
Stock, I feel like, is usually down on earnings or flat on earnings from my past experience. I know it's had a couple big moves, but I feel like that's my history there.
Hear ya. I think I'm gonna do a downside diagonal in IBM. $8, 10 points wide. Long September, short the weekly. I was just filled at 814.
There you go.
So I'll join you on the downside there. I also posted direct links to the IBM, Tesla, and Google earnings previews in the YouTube chat. So let's look at Google here. I feel like Google. I feel like it's a bullish play for me. Okay. It's recovered nicely from the lows, but there's still some room to the upside. I think there's a lot of concern around Google and the fact that people are going to AI platforms instead of searching things in Google, although Google does have the AI overview. But I feel like it's
baked in.
They'll be able to just withstand. Yeah. But it's also pretty low IV. Like it's at 190 right now. a September weekly diagonal spread is similarly priced to IBM, $800 for a 10-point wide.
Yep.
So I think I'm going to do that to the upside.
Okay.
813, 1 penny difference. Same structure, 10 points wide, long September, short the weekly. And then in Tesla, I have no idea what to do.
Tesla's a tough one.
Maybe it's an Iron Condor play.
Yeah.
That could be it.
And just, play the range. Do you go September or August?
I think you go August.
Like one standard deviation?
Yeah. Like maybe 300. I
was going 290.
Like if you just do the expected move, 300, 375 for almost $4. And really you just need, even if it's a big move, you just need it to pass through this range. If you do nothing, if you don't touch it, you just need it to pass through the range sometime in the next 23 days and it'll be a profitable trade. Or it can just open within the range and it'll be fine. I think I'm doing that. I think I'm going to do the expected move in August.
300, 290, and then what else? The 370?
375, 385.
All right, I'm gonna move it to the 290, 400 for $3 for me.
Yeah, Adam in the chat talking about Google, people shifting to ChatGPT, the antitrust stuff is still ongoing. These are all true.
Those are all knowns, though.
Yeah.
Already in the price.
But yeah, and maybe it's an inside move. If you think it's going to be mixed results, maybe it's an inside move.
Yeah.
But it's certainly on the lower end. Only a 10-point move on a $190 stock. That's low for a big name tech stock. So yeah, Tesla, I'm working that order at 360. I'll let it sit. I'll let it simmer for a little bit.
Yeah. Don't have to chase. We got time. Got a full hour, 45 minutes now, but you got time.
Yeah. So I'm going to post these to the follow page.
I also just did an end phase short put out in September. I sold the 35 strike at 277.
Little end phase, huh?
Yeah.
Yeah, I like it. I think I already have a position.
Gives you a break
No, I
even
don't.
and new lows.
Yeah, that could work. I'll check it out. So yeah, just like that, we've got 3 earnings trades on.
Very nice.
Anything else here? End phase. Wow. Do I go back in? At least this time I'm not feeling this one.
I know.
I don't have a position. I feel like I have to get back in.
Yeah.
Short put?
I just did a naked put 35 strike in September at 277. It gives you a break even at 33, 32, 25.
Yeah.
It's just, volatility is still relatively high. You got a 67 IV rank, 67% implied volatility, 21 IV rank.
I'm going to do the 40.
Cover call?
Yeah.
Ooh. Sure. All right.
Why not? It's $30 stock. What's the worst that can happen other than going to zero?
Oh, no.
Yeah, I'm going to get in at 555. Just got filled on the 40 strike. So yeah, in the money short put is the same as a covered call, but you use a lot less buying power with a short put than the covered call. Filled there.
Very nice. How's your IBIT position looking right now?
It's looking really great.
It's got to be a great trade.
It really is. It's been the best year-long trade I've had, not even close.
For sure.
And that's just because implied volatility has way overstated realized volatility, even though we've seen big moves in Bitcoin.
Yeah.
But when you think about the opening print in Bitcoin for the year, for IBIT specifically, we're talking about a 55 open on January 2nd, and we're currently at 66. So a 10-point move, which is certainly
20%.
not reflected in the implied volatility. If you look at the implied volatility right now, from now until December 31st, we're looking at a 16-point implied volatility. And that's with, IV rank at 15. That's a
Yeah.
low expected move. When we started this trade, it was about a 30-point expected move, if I remember correctly, which makes sense because if you look at the 500-day cycle in Jan 2027, that's a 30-point expected move, but we're at low IV. We had much higher IV. If we look at ibit.ivr in January, we had an IV rank. We opened at 65 IV rank. Now we're sitting at 15. So implied volatility was significantly higher when I started this trade. And yeah, we've only had a 10-point move, which is well inside the implied volatility. And we've just been collecting that premium. And I really haven't been in the money at all on this trade. It's going to be a very exciting visual at the end of the year.
Yeah.
With the green
Big
dotted
one.
lines just going
Gonna be a
way
big
outside
boy.
of the range.
Yeah. Yes, for sure.
Cool. Filled on those 3 trades. Still working on Tesla here. I will not move it from 360.
There you go.
The market will fill me. Maybe.
I know with vol contracting. This is a weird one. Vol getting smoked.
Yeah.
NASDAQ basically unchanged here. You got some whippiness.
Whippy. How about Kava? Someone in the YouTube chat. Eddie.
Kava.
Potential upswing. They have earnings late August.
All right. We're playing this to the upside.
Yeah, I mean, they absolutely tanked from February to March. It's kind of crazy.
Do like a cheapy diagonal spread.
A cheapy?
9,500.
Cheapy.
Could do that. Into earnings. September, August. 494.
Sure. Could work.
Let's see if I can do this.
Certainly could.
What the buying power is here. Let's see. What about a cheapy crab trade?
Yeah.
This
Someone in the YouTube chat asking about crab trades.
up to 100 maybe.
Is it your favorite trade? Would you say a crab or diagonal or other?
I would say the diagonal is probably my my go-to.
Yeah, I would agree. Because diagonal, you don't have risk on one side.
Yeah.
Crab trade, it reduces your risk. You get a lot more IV and premium exposure, but if the move is too much, it can be a loser.
Yeah.
Where a diagonal is not, it's not going to happen. So yeah, diagonal is a happier trade if you're directionally right.
Yes, diagonal is more
works.
directional.
Yeah.
Crab trade is a more neutral trade. I almost think of it as like a neutral, as a more neutral trade than a directional trade.
Mm-hmm.
Diagonal spreads, you're playing for the move.
Yeah.
You know, that's the bigger kicker of the trade. All right, I'm working that. I don't know if I'm ever going to get filled on this. The market's that
I think you
bad.
might.
I'll leave it at 340. I'm not gonna change it.
I think you might. Let's see. Bond market not liking the tariff news.
Guess not. Rates up. Bonds down, rates up. NASDAQ down. Ooh. Was it a buy the rumor, sell the news? No, it's
Down 100 tomorrow.
down 100 tomorrow on the E-minis.
Well, we're doing the morning show on Friday, so.
And Tom and Tony are
They're
going to be.
leaving. They're fleeing.
leaving. Yeah, they're
Fleeing the state.
fleeing. They're fleeing.
So I think that will spark some volatility in itself.
Mm.
But yeah, NASDAQ down, E-mini's still up. Certainly a sector difference there. Usually when that happens, it's because one sector is pulling down in a big way. So
Bitcoin
if
moving.
you look at the NASDAQ 100, yeah, you've got a ton of stocks that are down over 2%, 1%.
We had Texas Instruments, which had earnings after the close yesterday, down huge, 12%, $26 and change. Big old gap there.
Calculator sales down. down bad. Yeah, that's a huge move.
Yes.
Let's see. Aklo running today up 730.
Yes.
Weren't we talking about a position yesterday
Yeah.
and we didn't do it?
Yeah.
It's tough.
Yeah, I would like to do something like I did in hymns, like a call ratio spread here, but you use too much capital. It's a nearly cash secured type underlying $3,000 in buying power. You like are kind of forced to buy a wing.
Yeah. It's tough.
Yeah. One that I'll have to pass on, unfortunately. Good move if you caught it, though.
Yeah. Brandon looking at an AMD inverted strangle.
Okay.
130 call, 140 put in August. After many rolls collected 1042.
Mm-hmm. Got earnings coming up.
130, 140. Yeah, we looked at this the other day.
Mm-hmm.
But yeah, there's nothing. I mean, it's deep in the money. So you basically have short stock right now with a $200 extrinsic value kicker if there's a sell-off here. But yeah, I mean, it's continuing higher. You could move it to September and pick up $4 in premium on the same strikes.
Mm-hmm.
Or you could give up some of that premium and move the strikes higher. So like moving it from a 130, 140 to a 140, 150. You pay a small debit, but you would add a ton of extrinsic value to that trade relative to intrinsic.
Reduce your delta by 32.
Yeah.
Probably a conservative way to approach this situation.
Yeah. But if you're leaning short for earnings,
then you
maybe
got
you
it.
hold. Yeah. But yeah, there's the nice thing is there's still plenty of premium when you roll from August to September, and that will eventually boost your break evens much wider than your inversion.
Mm.
So
yeah, you'll definitely need, unless you hold it into earnings and you get the 20-point down move, you're definitely going to need multiple more rolls.
Yeah.
2, 3 of them to get back to like kind of a scratch here. But yeah, stocks near highs, maybe you lean a little bit short into earnings.
Yep.
I know it stinks right now, but maybe get bailed out on earnings.
Indeed. What else we got here? I like your hymns crab.
Thank you. Do I just lean short gold here, or do I put my put spread back on? Let's see. So it's now marked at 110. I could probably roll the put spread up. So I had the 3,200. Maybe I go to like 3,275. What am I? 15 points. 3,260. Where's 3,275? Yeah, it's still right there. All right, I'm going to sell this put spread against my call spread into this move. See if I get filled above the mid.
What do we think about an Intel short?
What's that stock trading at? 21.50?
23.
23?
Mm-hmm.
Ooh. All right, 250. All right, so that puts me 630 on this 15-point wide, but Iron Condor and gold. Intel, INTC. It's had a nice little run here.
Texas Instruments worst sell-off since 08.
Ooh.
That's bad.
Yeah. Good, definitely not good.
Not good. Yeah, I mean, Intel, I would lump Intel into the IBM stratosphere. Kind of just...
IBM has gone up.
IBM has gone up.
Yeah, it's moved.
But they're kind of the fringe tech stocks these days.
Yeah, if I was doing some sort of short here, I would, just, if you want to be short the stock, I get it. You could buy a call as an upside because, Intel has a lot of like potential news events of a takeover, buyout, split off, tariff. There's a lot of things that can happen with Intel. So I would cap my risk by buying a call. Whatever your time frame is, sell the stock and then buy a 30 strike call in August. It removes a lot of the upside risk for cheap. Something crazy were to happen.
Yeah. It's a small stock, though. You can do a lot of different things. Let's see here. Tesla 2-day iron condor, 10 points wide.
There you go. Instant pain or instant gain. I respect it.
Elon texted me not to expect anything crazy.
Yeah.
I don't think that happens because Elon is going to stir. But yeah, if you do the 2 days, it's just instant pain, instant gain. There's no details.
Oh, I got my Kava.
Nice. Let's see. With the year-long trade, does that mean you're rolling the position monthly, or are you buying leaps that are a year out? The year-long trade is rolling short premium consistently.
Yes.
So monthly, month to month. But because I know I'm holding it for a whole year, I don't really have strict guidelines with my movement, especially now. But I have said I don't want to have short delta and IBIT. So anytime my short call is about to be tested in the strangle, I just move the whole thing up. So I did that a couple times. Filled on Tesla at 360.
There you go.
Iron Condor. So yeah, there was a couple of rolls I made where I moved the 50-65 strangle into a 55-70. So I've shifted it up. I did that again. I moved it to I moved the 55-60 up into a 60-65. So literally just shifting the whole thing up. Instead of just moving the put up and keeping the call there, I'm just moving the whole thing up.
Where are you now?
Now I'm at the 65-75.
In September?
So sitting at the put strike, short call, still giving me a lot of premium with the call skew in there. But yeah, I've collected $21.61 so far, $2,000, and I started with $500 in late December, early January. So quadrupled the premium received, and we're still out of the money with 10-point wide strikes. So we're looking good.
Do you ever consider buying some wings, like 15-point wide wings? You could do it for like $1.
You could.
Just to cut buying power if you find yourself in a situation where you need some extra buying power, that's a pretty cheap way to do it.
Yeah, buying wings for $1 would free up $1,400 in premium.
If you need it. And you want to reduce some risk or whatever, Volatility's still relatively low, IV rank here.
Yep.
You could consider.
Put ratio and natty gas. I am long the micro natty gas contract.
Oof.
So taking some heat today, down 5%. But yeah, if you want to do a put ratio, you can. It's just you got to recognize that it's a huge product. It's a $30,000 product, and it takes $3K in buying power. Yeah. And it does move. But yeah, you can do a put ratio in there. If you're just trying to pick up $300-$400, you can do like a 3129 or a 328. But just recognize the notional risk there. Gregor playing Google and Tesla long bullish into earnings.
I like it. I'm neutral bullish in Google. Tesla neutral.
Lovely.
Short premium.
Lovely. Yeah, the PDT rule changing.
It's a huge
big leap.
Huge thing.
I don't know about the reset every 90 days until then. I don't think they're going to change that. I think it's just a wait until the change was made and then it'll open up.
From what I understand, it's probably a next year thing, if not maybe end of this year. So there's still, some time until that gets dealt with, but it's a great development. Very positive shift.
Yes, Whit, I was kidding about the Texas insurance calculators.
Yes.
But clearly, they had a very weak guidance for the rest of the year, which is leading to people pulling out of the stock. Handful of trades here. ARM short put at 135, August 1st. So an earnings short put.
Yeah, I don't mind it.
Yeah, I think if you're selling the weekly for earnings, totally fine.
Right.
If you want to pick up some more delta, I would go to August.
Mm-hmm.
And it really just premium. Like if you think it's going to go up, then I would go to August or September and get that delta move in your favor. But if you're just trying to collect that premium, and even if ARM goes down, you're still going to make that money, then yes, the 9-day cycle works. RDDT, Reddit.
RDDT.
Same thing.
Where all the memes are getting pumped.
Yep. Same thing, 9-day 126 put for 350.
That's some juicy premium.
Mm-hmm.
Too capital intensive for me, but.
Target, August 22nd, earnings.
When does this have earnings? 31st.
96 put.
Wait, this is a wide iron condor. Reddit. Might be able to do like the 15-ish. 120 is a standard deviation. You do like the up to 200-ish. Let's see if I can get filled on this at $3. There we go. All right, 1/3 the width of strikes. I like that.
Beautiful.
Reddit. 120, 110, 180, 190.
Perfect.
Yep.
Target, 96 put in the 30-day. Same story.
Mm-hmm.
Earnings, $2 premium.
Why 96 though?
Just right at the expected move.
Yeah. Kind of low. Yeah, I don't mind that.
Yeah.
I took off some long delta today in targets. So I'll wait, but yeah, I feel ya.
Yeah, Target, I feel like the IV is low enough to where I would still just rather do diagonal.
Mm-hmm.
Like a 105, 115 for $7. But yeah, the short premium, I like it. Last one, Baba, 108 short put. August 22nd.
My last Baba trade was a winner, which is a shock. $110.
Yeah, short put for $1 with $3K in buying power.
Too much.
It's just a lot of buying power for $1. So I would define risk here if you're doing something like that, but up to you. Okay, Brett's got an Oclo diagonal. Long the 75 September, short the August 85. Was down a bit, now it's up, considering taking it, but lots of time left and believe in the potential. Also considering rolling down the short to take some delta cost basis back.
Mm-hmm.
So 75.85.
Tons of call skew, obviously, into this move.
Yeah, I mean, it's still trading for $5. I don't think you can roll down the call, but if you roll it down, you're probably only rolling it down to the 80 strike. And you're reducing your 10-point wide into a 5-point wide, and you're picking up $1. That's really all you can do there. But I kind of like, because there's so much call skew, I kind of like the idea of just keeping it as a 10-point wide. And if this move continues, if this move continues, then you're going to want to have the 10-point wide versus the 5. AJIT, slinging the puts. AJIT. Oh, no, never mind.
That's the name.
They're talking, Cancel that.
Ajit.
Let's see. I'm waiting for GEV to calm himself down to sell a call credit spread.
Yeah, these stocks are going nuts. GV, VST.
Everything's up. I haven't looked at a chart
That
in the last
doesn't
3 weeks.
look
That's not up and
goofy.
to the right.
Yeah.
It's really insane.
Been a great run, you know?
Wow, even UNH is up $3 again.
Dog. Pig.
For now.
For now. Let's see where my spread. Still right at the money. Stock stinks.
How are we managing the RCL short call spread?
I think I have this in my Johnny Trader account. I forget the exact strikes. I think
Everyone's on cruises.
I think I'm right at the money here. Let's see. Yes, I have the 350, 360. I did it at 220. It's probably marked at $4 or $5. Yep. It's right at the money. 50-50 shot. I have no problem leaning a little short into this. So nothing to do. I like having a little short delta here. I'm good.
Yeah. All right, let's throw on some short delta in either SPX or SPY or the Qs.
No.
Andrew's looking at a bearish calendar diagonal and SPX a month out. So
I got my big wide butterfly that I'm now losing $300 on today into this rally. Looked like it was going to be perfect yesterday.
I'm gonna use SPY.
Okay.
I'm gonna do a little downside. 630 put.
September.
630. 615.
In August.
So there's the nice thing about SPY and the Qs too is the put skew here. So like you could do a 10-point wide going to 630 and 620 with August, but the difference between the 620 and the 615 is only 80 cents. So I'd rather move it to the 615, give up that 80 cents, have a 15-point wide for $8 versus a 10-point wide for $7. So I'll throw that on right now.
I like it. Do you consider going to the NASDAQ with all the big name stocks reporting? NASDAQ being a little bit weaker.
If you're just looking for like a macro exposure to the downside for tech stocks reporting earnings, certainly could.
555, you could do like the 555, 540, same sort of thing, $8.46.
Mm-hmm.
We'll try that. I mean, who gets short the mags into earnings? I guess we are. The sacrificial lambs here.
I think yeah, but I think it's just a good time to put on a hedge, like you've talked about. Low vol.
Pigs are flying.
Yeah. Low vol markets are at highs. It's the cheapest time you're going to be able to get on a 15, 20-point wide diagonal.
Yeah.
And the highest prices too, highest strikes. So we'll throw on some hedges here. And yeah. Any suggestion for a Lulu up move 60 days out?
Stock has been left for dead.
It's done. Tariffs killed Lulu. Look at this thing, down to 200. But yeah, I mean, the nice thing is the stock's down. IV is down.
Mm-hmm.
Earnings are early September. So I think it's more of the same. I would just go with a diagonal spread, something like that, or a calendar spread even.
Yeah.
September, August. Placing your long option in September will help you retain value because it's in the earnings cycle. But yeah, you could do like a 240 or 250 calendar spread for less than $1,000, or a short put spread, something like that. But I like the calendar or diagonal in this low IV environment.
Yeah, I was looking at like just a short put spread, but they're cheapies. Volatility this low, so I tend to agree with Mikey here. Maybe you lean towards the call diagonal.
Boeing is up almost 100% from the April lows.
What isn't?
Boeing is the easiest thing on the board. Like really, it's one of those stocks that's just too big to fail. Anytime it drops, it just always recovers.
It stayed at like 160 for 5 years.
Yeah. It's nuts.
I mean, going back to 2020, COVID, it was, 150.
Then it went back to 200. Then it dropped to 150. Then it back to 200. Then it went back to 140. Then it's back to 200. It's insane. Crazy. This might be. I mean, this is literally this same magnitude as the COVID rally. It's nuts. But yeah, thinking of playing the downside with puts. What do you think in RTX and Boeing? Yeah, I think you just keep it small, keep it defined risk. Same kind of thing with Lulu. Like Boeing implied volatility in September is 30%. It's really low. So yeah, like a September and then August 1st short option. Like you can do a 230, 220 diagonal spread for $7, or you can do a calendar spread, something like that. But yeah, it's on the board. RTX, $155 stock, also on a tear. Yeah, I don't have as much of a bone to pick with RTX, but it's the same thing. $5 at the money options in September on a $150 stock. Like this is really low IV. I think I might rather do RTX just because of how low the IV is.
23%.
Yeah.
Monthly. IV ranking 9. I think it reported earnings this morning or yesterday after the close, something like that.
Yeah. Let's see. Roblox down bigly today.
Yeah, I need more. I think I'm right at the money. Yeah. I need
more.
110. I have the 110, 120 in this account. I think my Johnny Trader account is the 115, 125. But yeah, this stock is another one that has this might be the first downtick it's ever had. 50 to 125 in 3 months. Earnings coming up on the 31st.
It's nuts. Let's see. What else we got here? What else we got? Google Crab. 190, 200, 210. August, July.
I went into the weekly for mine. I did it in the Johnny Trader account. So,
yeah. August monthly and then the weekly for the shorts.
Yeah.
So $4 for a 10-point wide.
Yeah, I did a 5 by 10. So I got $5. I got a little bit of extra risk on the upside. I just bought that wing to cap the risk. I could do something here.
Yeah. Google Crab. I like it.
I could do so they had the 190, 200.
190, 200, 210.
Yeah, I like that. $4. Yeah.
$4 where your long call is worth almost $800. So you're reducing basis by about 50%. And yeah, you need an inside out move and you'll be golden.
See if I can get filled here. There we go.
Do Johnny trades only come out on Wednesdays?
Oh, new opening trades, yes, on Wednesdays. But I manage them throughout the week when things are happening. But they all get posted, of course. But the new trades are on Wednesdays, yes.
B. Enjoying the content. Hoping to see people in Dallas.
Coming up end of August.
I think that's November.
Oh. Which one's the next one? Seattle?
Seattle for us. Denver is
Seattle, San Diego, then Dallas.
yes. Seattle, Dallas is October 12th.
Ah.
October 12th, and then San Diego, November 2nd.
Yes.
So yeah, we will see you in Dallas.
Yes.
That's for sure. What did I do with my skewed iron condor and Peloton? Or no, Palantir? I did nothing. If you bought in the risk on the upside, then yes, you're doing good.
Mm-hmm.
Up $100 in profit. Yeah. I didn't do anything. I've just let it rot for 26 days. But
Let it rot?
yeah. But yeah, we're up 20 cents here. Most likely because I did not buy in the risk into this rally. But we'll let it go. We'll see what happens here.
I am gonna roll up this put that I have.
I think we got earnings moved into this cycle. Because I've literally had this on for 26 days and it's a scratch. This is why I don't like selling premium on both sides into earnings cycles. But I think it was moved into here because I don't think I would have opened this trade for this reason. But now I have an earnings iron condor on.
Yeah, it's fine.
Yeah.
Survive.
Luckily. 10 minutes left here. Quick recap of stuff we got on.
I
IBM.
did a whole lot.
Yeah,
That was
IBM.
rapid fire. That was a lot. $4 or $5 grand and just thrown out there.
IBM downside diagonal. Long the 285, short the 275. Long September, short the weekly. Same setup in Google to the upside. Long the 190 September, short the 200 weekly. Both of those are $8.13 or 14 cents, literally. End phase short put in September in the money for 555.
Cover call type.
40 strike in September. Tesla Iron Condor, 10 points wide with the short put at 300 and the short call at 375 in August. So earnings Iron Condor, but pushed out 20 some odd days so that if there's a huge move, I just let it sit there, or I'll close the untested side if I can do it for pennies, and we let it sit. And then SPY doing a very scary thing and throwing on some downside delta.
Who would ever do such a thing?
15 points wide, long the 630 put in September, short the 615 in August for 850. So yeah, one undefined risk trade. The rest are defined risk here.
For me, I did the call spread in IBM. I have the short put in end phase, Iron Condor in Tesla. Sold the put spread in gold against my call spread. I did the Kava crab. I did the Reddit Iron Condor. I did the Q's downside play, the Google upside play into earnings, and just rolled up my Palantir puts. It's a whole lot. It's a full day right there.
Lovely. Yeah. It's great stuff. Since this segment has opened about an hour ago, we've had a little bit of movement. E-mini is still up more than NASDAQ, still red a little bit, but
still a nothing burger of a day.
Yeah, it's sad. Any thoughts on the Dow? Seen rotation over the last couple of days, a nice setup in reaction to EU trade news.
Let's see what's moving the Dow today. Following a big part of that. Cat. Stock 280 to 420.
Yeah, I mean, I like the rotation idea. I mean, if you've been playing the tech stocks and you think you'll see rotation into other sectors, I like that.
Yeah.
Especially the Mag 7 stocks like Apple, very different chart compared to Microsoft.
Yes.
Yeah, I mean, Apple, Tesla, Netflix has come down a little bit from the highs. So there's still some room to the upside if you think the market will grind higher and these other stocks will catch up. We saw the same story play out with Ethereum and Bitcoin. Ethereum's had a huge move relative to Bitcoin. So yeah, I think Apple is probably where I would go if I were to pick one.
Fall down 3%. 1835. They've smoked volatility. Absolutely killed it. Look at this.
It's sad. The chart saddens me.
Yeah. No more vol. Dead. Over.
Yeah.
Crazy.
And here's SVXY. This is the reverse vol trade. A lot of people ask, how do you play for an upside move in vol? I think you do something like this instead. You wait for the vol pop, like in April. Saw this thing just absolutely tank. And then you just do it small. You can just buy a couple shares. It's up 30% from April lows, which coincides with vol collapsing. So anytime vol is just in the doldrums, you'll see SVXY grind higher. Insurance down, AIG, CB, PGR.
Okay, so there's some big moves here. I have no bone to pick on any of those names.
Progressive. Yeah, I think that's pretty much it here.
Was there some sort of news that came out? Tariff? Something?
I don't know. Simply don't know. But I've got my eye on AMD. I have a short put at 145 in AMD. That's up 40 cents. Picking up some steam today. I've got my eye on my Google diagonal after the close today. Tesla as well, and IBM. All three earnings after the close today. And maybe we'll get lucky with, like, let's call it a 100-point sell-off in SPY. Or at the E-minis, I should say.
Those are outlawed, Mikey. Yeah. No more.
I'm trying
Never
to get
again.
paid on a downside hedge the day after.
Yeah.
That's what I want.
Because you ain't going to hold that.
No.
You're going to take that money and
I'm
run.
going to hedge it immediately. If we get another 30-point rally, I'm going to hedge it tomorrow. But yeah, very excited about the IBIT year-long trade. Currently sitting with a 65.75 strangle in September. It's been an absolute darling of a year-long trade. Finally. And yeah.
Cool.
I think we're good.
Yeah.
We can get out of here a couple minutes early here.
What do we got for lunch?
Greek kitchen.
Thank you, John. John always knows the lunch.
The Wizard
he
of John.
always knows the lunch. He's always there for us.
He does.
Thank you, John.
That's exciting. That's good stuff. So yeah, let's go get some Greek food.
Beautiful.
Some skewers, if you will. But yeah, let us know if you got any further questions. You can reach us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nikki Bat. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Check out the News and Insights tab. We've got earnings previews for all the big stocks. I posted them in the chat as well. And sign up for the Cherry Picks free newsletter as well. That's pinned to the top of the YouTube chat. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then.
Peace.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
Well, I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We are back, still Wednesday, July 23rd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, you and I have become familiar faces this week on air. Ilya's out. A few people are out around here. So I guess we can continue the conversation, which has a different contour today. We now have trade deals to discuss.
Yeah, they're coming in. Japan, the big one that we've seen, and I believe they're meeting in Stockholm this week or next week for the China talks.
They are meeting for China talks. The China talks with a deadline implicitly of August 12th, given the pause that was announced in Geneva, Switzerland back in the middle of May. The news that we have out overnight, Japan has reached an agreement with the U.S. Japanese tariffs on U.S. goods will drop to 0%. U.S. tariffs on Japanese goods will rise to 15%. Similar situation for the EU, going up to 15% today. It's an interesting market reaction here because while there are some places that suggest the trade war is over, like gold, perhaps, there are certainly others that suggest this is not a solution. The bond market seems to be upset by today's news. But how did this market react? I think we can turn our attention to the slides and get a quick heat map check here, Thomas. This is a good way to visualize what's been going on here today in the market action. The industrial companies have been doing quite well. If tariffs from foreign nations are going to go down to 0% from Japan, for example, they may import more of these heavy machinery items that we produce. But with respect to anything else outside of healthcare manufacturers or heavy equipment industrials, you're not seeing a huge kick up in tech today. You're not seeing a huge kick up in anything related to the U.S. consumer today. It's not like Walmart or Coca-Cola is doing well. It's a mixed bag. Might argue it's good breadth because it's the Russell and the Dow that's leading, and the NASDAQ ahead of Google, Tesla, IBM earnings, a touch softer. That is a perspective. But the actual details of these deals matter, which there are scant details out yet. And what we do know is that tariff rates are going to be higher than they were previously. So we're still kind of waiting to see how this market takes it all. And a NASDAQ that's flat right now on the other side of all of it.
Yeah, so tariff rates still higher than they were before this. So overall, I mean, it's a win that these trade deals are getting done, but maybe they're not the greatest deals or as good of deals as they were forecasted to be.
Yes, the U.S. effective tariff rate coming into this year was about 2.3%, and it's going to be going up towards 15% prior to substitution effects, which we saw in 2018. I think this is really my point here. In 2018, after the U.S.-China trade war started, the market, once it digested the impact, the economic impact of the tariffs, the second half of that year wasn't good. It took the plunge protection team right around Christmas, after a 20% decline in the Russell in the final few months of that year, to step into the market to stabilize things. And then the Fed starts to cut rates, right? That's part of why the Fed actually moved off of its high horse about normalizing policy, because there was an economic impact from the tariffs themselves that subsumed inflation pressures and just led to weaker economic outcomes overall. So we do have that to look forward to around the corner, perhaps, Thomas. The market here today, as we think about this reaction, stocks are up and tech is here lagging a little bit. NASDAQ's now up by 0.05%, 23,236. It's really a story about the Russell today, which moving to the top side of its trading range here. 2 days ago when you and I were discussing this, we felt pretty ambivalent about any directional move because we were sitting in the midst of a range. But now we're looking at the uptrend here holding, Thomas, from that April low. We're looking at a potential flag having formed here, and the Russell has been a laggard. I know I have my own seasonality superstitions right now, but should we be thinking about throwing those cautions to the wind and potentially sizing up a trade in the Russell for a move up to, say, 2,400?
I mean, yeah, if anything's itching me right now to play an index or equities, it's the Russell, because it's making a really strong technical move right now. Tech, it's lagging. Are we waiting for some earnings to come in? Are we waiting for the EU trade deal? I'm not sure what's happening there, but the Russell definitely looking like it's prone for a breakout here.
Maybe it's time for the catch-up trade. The Russell 2000 on this continuous contract has been chopping around for the better part of July. It looks very similar to the NASDAQ setup that we saw prior to really this week when you had several days there. Let's switch that over to the rectangle. You had several days here at the start of July where the market just kind of chopped around before ultimately settling to the upside. But I suppose that's also a takeaway here for stocks to a certain extent. The best laid plans of bears looking at this rising bearish wedge were not quite cracking through the uptrend off the June 22nd and July 16th lows thus far. We've made a number of attempts there over the past day or two, Thomas, but we're still riding that line. To that end, I've seen some folks on Twitter begin to circulate charts that this is a head and shoulders pattern in the NASDAQ. Be that as it may, I think it's always a good time for a little public service announcement. We don't call them head and shoulders patterns until the neckline breaks. Otherwise, it's just chop. And you don't want to get short of market when you have not yet broken through support. So if folks are really thinking about getting bared up down here, Thomas, or bared up here, I think yesterday's low, the 23,108 level, which very neatly coincides with some of the swing highs that we had earlier this month, If we were to break down through 23,100, then you have a legitimate technical case for a top, at least in the short term, being into play. Otherwise, without that level breaking, and you look at ES extending to the upside and the Russell pressing the top side of its range, getting ready to break out, you don't have the technical infrastructure just yet to say that the timing's right to push the short side. Is that a fair assessment?
Yeah, I think that's fair.
Today's not the best day for me because the only equity positions that I have on are long puts in ES, although they are risk defined and constrained. I think I'm out like $200 total, all things considered. And that's the whole point of these high convexity trades. Have a little insurance in the pocket if things do go south. Risk 1 to make 5, 6, 7. So I'm not uncomfortable with how that's behaving. I'm having trouble. If this is the reaction, Thomas, right? This is the reaction to the big deals. The EU, Japan, South Korea, Canada, Mexico. If you wrap those regions up, you've effectively resolved most of the trade war issues ex-China. This isn't a market that's screaming enthusiasm on the other side of finding out that we're going to have a 15% tariff rate on some of our largest trading partners. And if only to emphasize the math here, about 14% of U.S. GDP are imports. If we're going to be levying a 15% tariff rate across the board against that amount of GDP, about 14%, you could take out 1 to 2% of GDP over a 3-year window. And the math being that tariffs are paid for by consumers and businesses. That's money that goes into the government's pocket from us. And so that's less money to consume, Thomas. I recall the market did not like the high tariff rates in early April. And these are not that far removed from that scenario. So I still feel like I need to take a beat here if I'm going to chase this to the upside a little bit more. That may have been the prudent thing to do in ES. Quite frankly, getting out of NASDAQ earlier this week was the right thing because we're about 200 points lower still. So no regrets there. But I'm having trouble reconciling the market reaction with the trade deals being received as this wasn't already priced in.
Yeah. I mean, when you say insurance, are you talking about like hedging your view in your portfolio, like your overall long, and you're taking that trade as, are you seeing it the same thing as hedging, I guess?
No, it's like I want to keep pushing the long side with some longer term equity holdings. And I generally like being a bull, but given the window of time that we're in and how, spooky things tend to happen in volatility this time of year, if we look at seasonality charts, that's certainly the case. Part of it's like I want to continue to play long in the short term, but right now I feel with volatility so low, why not get something in my pocket that if things do go sideways and my equity longs get hit, at least I have something that it's not going to make me feel terrible every time I put on my trading screen.
Yeah, I mean, that makes sense.
Especially it's like a psychological hedge.
Right. and puts are cheap when volatility is low. So if you want to take, the insurance, I mean, I don't hate that. I'm wondering if this is something where you could do more of something neutral on the NASDAQ if you're getting long RTY, because there's kind of this divergence forming. And if this Russell gets over this level, the 2300, and it breaks out, is the NASDAQ going to continue to just lag and move sideways while the Russell breaks out? I mean, what would be the drivers there?
I mean, given the Russell's constitution, you're thinking Dr. Data was going over this yesterday. In fact, I'm just going to pull this up here on the screen. Give me a quick hot moment. And this is the one I want. Okay. So thank you, Dr. Data, for this chart yesterday. We're going to use it here on screen right now. Between healthcare and financial services, that's 38.5%, 38.51% of the Russell 2000 as it's currently constituted. Today's top sectors, among the top sectors in this market, healthcare, financials. Healthcare is up 1.55%. Financials are up 0.38%. That's better than what the Nasdaq's doing for certain, and healthcare certainly outpacing what's going on here in the S&P 500. And then you sprinkle in the fact, if only to pull that chart up quickly again once more, energy is 4.64% of your Russell 2000, and the top performing sectors in the day are actually oil services, up 5.72% right now. XOP is up 0.53%. The point I'm getting at is the companies that are in the Russell, healthcare, financials predominantly, add in some energy, you're looking at 43% of the overall index, and those are some of your leading sectors today. So that would have to be the case then. You'd have to see financials continue to do well. You'd have to see that healthcare continues to do well in this environment to get that kind of Russell outperformance. I question whether or not that's feasible for anything more than a tactical trade. I don't know if I'd be expecting the Russell to outperform the Nasdaq for the rest of 2025, but maybe for the next few weeks, it's not out of the question. I just don't find a world possible where the Nasdaq's going down 3 to 5% and the Russell is up 1, 2, 3%. It's hard for me to reconcile that view. I suppose I'd ask the chat, Thomas, in what world is that occurring, right? How does that happen? What's the path to getting there? Do you have an idea?
I don't. But, the Russell, compared to a month ago for September, we were pricing in a 66.5% chance of a September cut. Now it's up from a week ago, but it's still lower from a month ago. It's at 60%.
Mm-hmm.
So, if you're banking on the Russell going up on lower rate cuts for the financial component, the rate cut bet odds, they're still on the supportive side, but not as much as they were a month ago. So is it tariffs coming off is going to be less of a burn for these lower capitalized companies? You have a deregulatory environment that may help these regional banks and smaller banks that are in the Russell. I think the Russell could really break out here if we see these September cut odds go up more and eclipse where we were at a month ago.
Russell expected move in either direction over the next nearly 60 days, 140 points. Thomas, talking about a move up towards 2,400. How did you get there? The range low, 22,100. The range high, 2290. It's 80 points, we'll call it. Slap that on top, 2370. So then looking into that neighborhood of out, we'll call it 57. That's the morning. We go to 50. There we go. Okay, 2375, long 2400, 34% probability of profit, risking 1 to make a little bit under 3. Not terrible risk to reward as a way to express that view. If that were to occur, I would just question here, even today, as we get to the top side of the range, the high here at 2292.60 in RTY. We can't breach that, and we're starting to turn a little bit lower here as the day goes on. The S&P is giving up some of its gains. The Nasdaq here, not able to hold into positive territory. I think this goes back in the market reaction here. I don't want to wave a flag, but somewhat cheekily, we've been discussing here and on overtime that it seems unlikely that the plan is to have higher tariff rates on U.S. trade partners than it is on China. And given the timing of all this, do we really think that the August 1st deadline is a legitimate deadline? Otherwise, you have a weird world where you're incentivizing people to buy more from China and less from other countries. And that just goes against the strategic overarching view that China is our big geopolitical adversary and we need to decouple from them, according to the Trump administration. So it's never really made sense that these August 1st deadlines were anything more than that. There's an outside chance that maybe he wants to prove to the world that he's not a taco man, so he puts them into effect. That's my insurance play. But now we're seeing that the market is looking at this today and saying, yeah, we all know that you weren't going to do anything substantial on August 1st. So the question is whether or not these deals are above or below expectations. Japan was threatened with 25%. The whisper number was 20. They're getting 15. It's higher than it was, but it's lower than what we were pricing in. That's good. You could say the same thing about the EU. Today's an interesting day, Thomas. This is not nearly as enthusiastic as I personally thought a market reaction would be once EU and Japan signed deals with us. So My interest is piqued. If we can't make hay on this, then what will we make hay on?
Yeah, I mean, that's a good point because Japan is a pretty big trading partner in the grand scheme of things. So you would expect, at least the NASDAQ just unchanged here is kind of giving a tepid reaction. And, the longer these tariffs go on, the more inflation concerns come out. But are we reaching a point where these trade restrictions have been on so long that companies are starting to, pass them on to the consumer? We've seen things like headlines like Walmart is increasing prices now for some products. Target is ending price matching with Walmart and Amazon, et cetera. These are Target and Walmart are big, players for where consumers go to get their everyday goods. Do you think this is something the administration is seeing and starting to get the feel that corporations are going to start passing on these costs more now that these tariffs have been in place for a while?
I think so. And I think so, if only because it's consistent with a view that was previously discussed here on the show, which is the fact that if you're really going to be doing the tariffs from a corporate perspective, there are a few layers, a few steps before you get to rising prices for the end consumer. Okay. The first thing that you do is you're going to negotiate with your suppliers. You're going to try to squeeze them. Walmart's saying to its suppliers, we're your biggest bulk buyer. Work with us on these new prices. You guys absorb half of the cost. That way we stay in business together. We each chip in, right? Everyone suffers equally under this new regime. That's one thing. Then the discounts go, right? The sales start to go away. You just pointed out Target getting rid of price matching with Walmart, with Amazon. That's step 2. Step 3 is raising prices and figuring out how far you can raise prices with an understanding that you're going to sacrifice some volume, but you can do so in a manner where it's going to lead to a net zero change in overall sales. That's the revenue management part that comes. And that's what we've been hearing throughout second quarter earnings, by the way. There's a fantastic social media user on X called The Transcript, whose tweets we've brought up here on the show here in Overtime before previously. And they just basically summarize earnings calls and comments made from key industry executives, and you will see a lot of companies, doesn't need to be the big ones, but companies are mentioning revenue management tactics a lot more frequently than they've had to, a lot like they were in 2022. So there is that sense where I know the economists have been saying inflation will come a little bit later this year, and it hasn't fully materialized yet. And I know economists exist only to make weathermen look good, Mr. Westwater. But when you strip away the inflation data, we saw that core goods prices were rising, and they were rising at their fastest level in years. And we see that, but for housing, inflation would be up. So there's a few things that are going on right now that raise my eyebrow. Maybe just to give the fair and balanced view, because Ilya hasn't been here all week, I feel a pull to be a little bit less of my rambunctious, bullish self. But got to give credit where it's due, and the credit goes to the fact that we are looking at now the start of the cycle where companies say, okay, if it's 15% tariffs, how can we keep our margins intact? What do we need to pull back on? What do we need to push more of? So the game really begins now. I would think that if we're going to see tariff-induced inflation broadly by October, start of the fourth quarter.
Yeah, so I think the calls that were saying tariffs aren't going to lead to inflation just because we saw, the May and the June numbers not increase that much. I think that's a little premature. I think it's also maybe premature to say that it is going to substantially lead to an increase in inflation, but now we're getting signs that are pointing more towards that. And how is that going to impact the Federal Reserve's calculus on rate cut bets? I mean, you even have, who is it, Jamie Dimon saying don't discount the chance for a rate hike? I'm not sure if it was him, but one of the big bank CEOs said that.
That was, I think that was Dimon, yeah. Where to play a potential pullback in the NASDAQ if we were to get down below 23,100? Well, the beautiful thing about measured moves with technical analysis, Thomas, just like the range that we had previously, 22,800 to 23,100, gave us a 300-point move up to 23,400, which on Monday's show, we called this out. If we're up here, this is the basis of your trade. There's no longer a reason to be long. The breakout was fulfilled. If we were to move to the downside here, it's effectively the same kind of trading range, a little bit different, slightly different, a little bit wider. But we do that here, and that gives you a downside target that's, well, 22,800. It's effectively right at the swing lows that you see after July 3rd when we get the breakout. That range low is where we go. This is not calling for a crash, right? This is if the market starts to break down, you then look 300 points lower and then reassess from there. And that might be a good buying point. As far as we know, the news could change, sentiment turns. But there's a roadmap right now. I'm going to follow my roadmap. I'm still jittery and skittish about late July, August. Today's deals did not impress me. I think we can say confirmed the market was of the mind that August 1st wasn't going to happen. And so by and large, this is priced in to a degree. To a degree. Because there's still tariffs, Thomas. And tariffs mean less money going outside of our borders, which mean we're giving other country less US dollars, fewer US dollars, which means they don't need to recirculate those dollars back into our debt. And so today, on the backside of this Japanese and EU tariff announcement, we have bonds and notes both trading weaker here. Is that a surprise to you?
No, it's not a surprise.
We did.
I mean, they've had a good little run over the past week, but I think it was time for this pullback, and kind of on this news, it makes sense that they're dropping a little bit.
We did have a 20-year bond auction result come out at the top of the hour, and I will say, if there is anything to make bulls feel good on the other side of the action for today's tariff announcements, it's this 20-year bond auction. This might be the best 20-year bond auction that we've seen in a few weeks, months. I don't say that lightly. High yield, 4.935% versus 4.951 ahead of the auction, which means we stopped through by 1.6 basis points. That's very, very healthy. Bid to cover ratio up to 2.79. Previously, the bid to cover ratio was 2.63. That's good. That's 2.68, but that's still good. We're moving on up. Other key stats here in the bond auction, indirects, 67.43%. Not exactly a sign that foreigners are turning away from our long-term debt, Thomas. This is the best bond auction that we've seen in a while. So maybe this is the potion the market needed, the medicine to stop today's bleeding. Because if foreigners are still going to show up to our auctions, then aren't we just hand-wringing over nothing?
Yeah, I think so. I mean, I'm still long ZB, and I'm probably gonna hang in there for a little bit more, but the position hasn't really given me much outside of the past few days. You know, getting back to neutral on it, and now back in the reds. So I'm gonna stick with it for a little bit longer, but if I had to take the trade today, I'm not sure I would again.
I'm looking at this swing area down here that we've been flirting with for a number of weeks. Something wrapped around 113. We seem to be pivoting around it on numerous occasions, finding some support or resistance. I'd like to see 113 hold today. I know it's been a bad session. We're down 25 ticks right now. But if we don't give up this swing area where the market found resistance on July 15th and we've held support here on July 22nd and perhaps the 23rd so far, one has to look a little bit more constructive at the long end of the curve. And with what happened in 2018 post-China tariffs and trade war, yields are able to go down because the economic consequences of such policy became too great for even the market to ignore. I'm gold off today. Strong sign that maybe the trade war in its current form and fashion is done. Bonds off today, buttressed by this auction. I feel very comfortable doing what I've been doing here, which is directionally neutral with a light upside kicker in both bonds and notes. That chop hasn't changed. We're a little bit weaker. We're off by what, 12 and a half ticks here. We got back to the midpoint yesterday. So this is what happens. We're going to trade around the midpoint. It's not going to stick there for 45 and 21 out, Thomas. We're not just going to see 111 and a half every single session. But right now, this is fine. This is exactly what you'd like to see. Volatility staying in. Bonds aren't going much of anywhere right now. So weakness, yes. I don't think bulls have too much to worry about, because if the economic consequences subsume the enthusiasm, then bonds have been the best place to hide during recessions. And I'm not going to step away from that long-term trend.
Yeah, I think that makes sense. Over the short term, it's more questionable, but long term, going into the end of the year, I mean, you assume the Federal Reserve is still going to be looking at cuts later this year. It'd be natural for there to be some upside movement over beyond the short term.
You were mentioning Fed rates earlier about how those probabilities have evolved. It's about a 4.7% chance of a cut in July. From a week ago, it's 4.1%, so I guess slightly higher. September, we're sitting at 65.34%, so that's just above the comfortable threshold to say that September is happening. 2 cuts are still on the board for this year, though. If at the end of the year, we turn around and say the Fed still gave us 2 cuts, would that have been good or bad for the bond market?
I'd say slightly positive. I think it's you also have to consider the next year. Is next year's cuts still, have they just been pulled forward and we're getting rid of cuts later? I mean, I don't know. I think we need more time for this inflation data to evolve a little bit before we really know. I think this September cut, it could just have maybe just as good of a chance as the July cut of going away. September only at, just below 60, down from 66 a month ago. Is it going to get lower as the next month's inflation data comes out?
I have this crazy bifurcated view where the Fed is not going to cut in September, or they're going to cut by 50 basis points. But I don't see how they just get away with 25. And it's not because of political pressure from Trump, but it feels like there's so much talk of should they cut rates. They want to cut rates, but for tariffs, they would have already cut rates. And then we go into August where Congress is now in recess. There's no Fed meeting that could produce a policy change. That's why this time of year tends to be spooky, by the way. The folks who are supposed to be the firefighters, if something goes wrong, they're all on vacation. So if we do get bad economic data churning down the pipeline over the next few weeks, you get to September, and then the chatter of the Fed's late, that's just like last summer. So I could see 50 happening, but if we're not going to have the Fed's not late conversation by the September meeting, then as things stand on the board right now, with inflation edging up, with the unemployment rate at 4.1% and GDP sitting somewhere 2.4% according to the Atlanta Fed, 1.71% according to the New York Fed. So let's split the baby and call it 1.9 to 2.1. That's a Goldilocks economy. Sign me up for 2% real GDP, 4.1% unemployment rate. That's not an economy you can cut in if inflation's rising. So that's also why I think a zero cut scenario is feasible. 25 just doesn't make any sense if they're going to start cutting.
Yeah, that's interesting. I haven't considered a 50 basis point cut for September. I'm not
25 is going to be like, I guess we can do it, right? Like the data hasn't materialized the way we thought, but we're still worried. So
yeah,
here's a little something.
I think what you said, if it wasn't for tariffs, would we have already cut? So the Fed has a less clear path going, from now than they did at the start of the year. But again, if inflation rises, is that going to come alongside some weakness in the labor market? Are consumers going to be burdened a little bit more. And then, you know, corporations have already increased prices. What do you have to do next? If these trade wars keep going on, then we could get into, you know, a stickier situation because you have prices going up, employment weakening.
Right, that whole good bag of goodies. Stocks here holding on, bonds bouncing back a little bit post-auction. Notes here, on the other hand, stability for now. But again, a very, very nice 20-year auction result. Bid to cover ratio higher than the previous auction or the 6-month average. We stopped through. Foreign demand is still up. Check, check, check. I don't know if we can say that there's too much worry there. And while the bonds don't like the tariffs, the metals don't either, but I suppose it's for the reason that maybe we've finally gotten away from a place of uncertainty in trade war world, and we're moving towards more of a place of understanding of what the future is going to look like. I'm still holding long gold, Thomas, here. I would point out that 33.90 or so swing highs that we have back on July 11th, swing low that we had yesterday morning before the market broke out. That's more or less in play right now. If you get below 33.90, probably a deeper setback below 33.40 into that area becomes feasible. But the consolidation would remain. This does mean it's a false breakout, and false breakouts often mean returns to the other side of the consolidation. So if you are bullish on gold in the short term, and you're getting close to 21 DT and you have a position that was in the money, that's still in the money, or maybe just getting to break even, this is a good point to reassess and say, if I want to stay bullish, do I need a little bit more time for this to work out? Should I get out of the way? But technically 33.90 and below, I think then we could chalk this up as a fake breakout in the short term. 33.25 to 33.40 becomes the immediate point of interest, another 1.5 to 2% decline.
Yeah, I'm waiting on gold right now. I think, you know, if it does hold that level, that's good. But it's definitely, this is a risky place to take the trade. I'm a little surprised that copper is having such a strong move when silver is lagging. We've kind of seen that growth, you know, factor play into both copper and silver recently, and now that, you know, the Japan trade deal appears to have boosted copper, but not silver. So gold doing a little better. Is it more of the risk off kind of safe haven buying in gold, and then, you know, copper's paying more attention to Japan, whereas silver's just taking a back seat to it all? But then again, you get this is a good place to take profit for silver. And then copper,
which is what I did
kind
today.
of a breakout area, you know, going above the previous swing high. So maybe now we get the profit taking later this week in copper. I took off my long micro copper contract yesterday because I thought, you know, we're up against the swing high now. It's going to be hard for us to move forward. I thought there'd be a little bit of maybe digestion here.
Mm-hmm. Well, I'm with you. I mean, you took off your copper position yesterday. I took off my silver position this morning when I saw that the tariff headline crossed, because quite frankly, even up at the highs today, when silver was up 0.5%, the 38.39 call spread had only gained like $60. And that's not the kind of convexity I want. If silver's up 0.5%, my position better be moving. Right. That's kind of what I'm getting at. My position better be moving. And it really wasn't. So we saw the tariff headline come. I got the silver position off the books. Good trade. Worked out really, really well. Couldn't be happier with actually how it turned out. That said, still want to stay long silver. So it's a function of sizing up the right opportunity and ultimately making sure that we have the convexity that we'd like. I'm going to jump right back in here immediately. So I see this 39.40 level or so holding up right now, similar to gold, where we think about that 33.90 level, recent pivot point. That to me is enough to operate around. And you mentioned copper going up, but silver not. I don't know if anything changes, We're going into a world where that tariff rates now are going to be the highest since the 1920s on the other side of these deals. Fewer US dollars in circulation. You're probably going to want to be holding on to some metals still. So longer term, trade 64 days. We were looking at 38, 39 previously. That obviously worked out well. A 40-41 doesn't necessarily give the kind of upside convexity that I'm interested in. But if we were to go out a little bit more, what's the cost here? 42.43. Let's just play with something here, Thomas. So we go down to 42.43. We're talking about a 30% pop, risking 1 to make 3. That's right in the wheelhouse of what I like. If we were to go out a little bit more, though, because we're still in the SIZ5 contract, we would give ourselves 42.43 here. Okay. How much would this cost? So this is going to be 13.45 max loss. And in the 64 days, the 42.43 be 12.35. Is risking another $100 worth adding another month on to this position? You bet. That's exactly the kind of thing that we need to consider when we're sizing up these trades. Because if we're wrong, also if this goes down and metals crash and stocks surge, this position is going to have enough time on the board where it's not going to be dented as significantly. So part of this is looking for continued vol expansion in silver, not just bullish price action, but IVRs expanding up towards 40 or 50 during a bull run. This gives us into October 28th. Yeah, this is something that I'm very, very, very interested in. So hopefully this gets filled. The sooner it gets filled, the better, quite frankly. But I don't think having something with less than 35 days to expiration with these headlines is just not worth it. The upside convexity wasn't good anymore. And if you get a 50 cent or $1 pullback in silver here, I would just be such an unhappy camper with myself for mismanaging the position. So at least we have that potentially going, Thomas. Do you find that objectionable?
Yeah, no, I like that. Giving yourself more time right now with these, we're in the throe of getting these headlines on trade and stuff. I think giving yourself some time is, it protects you against the downside moves. It gives you a little bit more time to recover, adjust the position if you have to. So I like that.
I think we may have just gotten filled on that. And we did. So out of silver just for a few bucks. Today's been a miserable day otherwise, Thomas, for me, because of what's been going on in bonds and natural gas. I hate natural gas now. I understand why people hate it. It's breaking my heart. So we have our silver position reestablished. Gold's in a little bit. I'm going to sit tight for now in gold, even though it's off 1.34% again. Wait to see what happens at 33.90, a close below there on the 4-hour chart. I'll take any longs off the table and then reassess closer to 33.25, 33.40. That's my game plan. Copper to me is, I still not interested in touching it personally. Before we go off, though, you mentioned that you're trading the micro copper contract. How has that been for you? Easy access, good product to trade?
Yeah, I've gotten in and out of it just fine. I mean, sometimes depending on the time of day, there's pretty low volume, but I've been getting in just fine. So I've been trading the micro copper a few times now over the past couple months.
Thomas, nothing binds people together like shared trauma. So let's talk about natural gas and how it's hurting both of us. 3.129 here. This has been a bloodbath this week for natural gas. Why?
Yeah, I mean, inventories have recovered substantially this summer. We're above the 5-year average, trending towards, the upper limit for the 5-year look-back period. The weather models continue to shift to give some relief in August. So cooler temperatures, that's less cooling degree days, less demand. At the same time, Bloomberg data for nat gas is reporting record high for production. So we're producing a lot. The demand expectations are going down over the next couple weeks. I thought the bears would concede yesterday, but we're getting another pretty strong push down. The 3 handle is going to be really interesting if we get down there. So I sold a put spread in Natty Gas at 3. You know, I'm giving myself 64 days for that on the September 25 contract. And I also got long yesterday a micro natty gas, so taking some pain on that for sure. I'm going to stay in this for now. I think it's definitely, you know, a risky position. The Bears seem to be in pretty good control here. But I think that 3, when you get near there, that's going to be a potential zone for some profit taking. And then, you know, since the weather models are already as pretty much probably as bearish as you could get for August, I think any retracement back towards, you know, getting above average warm temps in the US, especially on that East Coast, that could squeeze some of these shorts. So this trade's definitely, you know, I wouldn't say it's high conviction, but for the price we're at, I think it, you know, there's that chance that you can get a pretty moderate to strong upswing in the coming days.
You mentioned the gas storage here. The most recent gas storage report I saw from the EIA gave us this little gem to show that inventories were going up. Lower 48 states, stocks up from 3,006 billion cubic feet to 3,052. And then you talk about temperature changes. If we were to draw a geographic line, okay, across the country, just straight from here, the tip of Minnesota, down to basically Galveston, Texas, most of the country lives on that side of the population line. So to that point, when we see that below average temperatures are creeping in for this northern tier, 40% of the country lives right over here. So
yeah. And
inventory's up, demand, implied demand at least, given the temperature forecast, down over the next 2-week window. I would want to add one more thing to this conversation. This has been a driver of U.S. natural gas in years past. European inventories are pretty low right now. It's one of the reasons why I just can't shake natural gas. I got to make this a little bit bigger. But as it stands, we're currently looking at 2.541 billion cubic feet, or 2,541 billion cubic feet. That's not far off from some of the weaker storage levels that we've seen in recent years in Europe. And so as we get towards these winter months, if European inventories and storage is a little bit softer, you have a scenario where if the conditions are right in the US, you talk about a short covering rally, there's enough green shoots here that you could work with. They're not in line yet, but they're there. You can see them.
Yeah, and I mean, if you look at things like the spread between the Dutch futures, you know, the TTF, which is the European benchmark in the U.S., we're, you know, those are only trading at an $8 premium to U.S. prices, and that's within the middle of the range of what we've been trading at going back all the way towards March before we had a big drop off in that premium. So, I mean, last year we saw that premium really start to actually spike in August. You know, we were actually trading right at this level last year in July. And then August, we went from an $8 premium all the way up to $11, $12. So if Europe needs to start refilling its storage for this winter, they need to start doing it aggressively soon. And maybe that, you know, will underpin U.S. prices. Maybe that's something, a bullish factor that could be coming in if this plays out like it did last year.
I think that's an excellent point. It's exactly where my head was at, thinking about the storage situation from last summer, where natural gas was sliding into the summer months. It's going down through July and into early August. And then we basically find a floor around 310. Not guarantee that it's going to happen again. We did flash lower through there in early November. But the conditions, it's been kind of a perfect storm for natural gas prices to get clobbered the way that they have been here. Inventories up, implied demand over the next few weeks going down. When you look around that corner, though, and you see that 53 IVR, That's why I'm sticking with it. Unfortunately, I'm sticking with it. It's been punishing me. I'm getting close to my downside strikes here. The downside strikes in part established because are we really going to be breaking through the lows that we had from November of last year? I mean, the way natural gas moves, that's certainly feasible. But that's the bet I made. We'll see if we're right. But it's not been a fun few days. This is going to be the second bad trade in gas for me in a row. And consistent with my rules, 2 bad trades in a row in a futures product, take a few weeks off.
Yeah.
Doesn't matter what the volatility is. Just got to step away and get fresh eyes.
Yeah, I think, looking into the weekend with the move we've had, I think it would make sense for shorts to take some profit going into the weekend, because over that weekend, that's when weather models have a couple days to shift. You come back in on Monday, and there could be a big difference from Friday to Monday. And since we're already in a bearish, weather outlook, especially for the Northeast, like you showed on that NOAA graph, I think we could find some relief over the next couple days. If I didn't take the MNG long yesterday, I'd be taking it today for sure.
Yeah, that got me thinking. Like, oh, what's the 10-day forecaster here if things are going to be below average temperatures? I mean, 82 highs. We're 35 to 50 miles north of New York City. Not going to give an exact location, but that's Northeast. So yeah, high of 84 in early August. Not exactly screaming hot this time of year up here. Although we do have a 95-degree day on Friday coming up. That's nice. Crude oil, Thomas. You know what continues to work just perfectly well? Crude oil. Yesterday, I got out of all of my crude positions in the CLU5 contract, in the CLV5 contract, put them back on because this is still a range-bound market. So instead of sitting at 24 days to expiration, Thomas, and okay, again, looking at the move yesterday, we're recentering to the midpoint of the short iron condor trade. And am I squeezing much more juice from this? Not really. So I needed to get back, get myself a little bit more time, play for the theta decay. The fact of the matter is, as boring as oil has been over the past few weeks, it is worth reminding everyone, if there's no geopolitical risk on the table, the most likely thing for oil to do in the short term is simply just to move sideways. And right now we're at the 50% mark of the post-Liberation Day low, Israel-Iran war high. Directionally neutral here makes a good deal of sense. It's only a 20.3 IVR. But as far as I'm concerned, there are your yeoman trades, Thomas, where you just put them on because they keep working for you and you keep doing them until they stop working for you. It's not the greatest risk to reward. It's closer to risking 4 to make 1. But it's still rational and viable to do. So I'm doing it. I don't love it, but it's worked. So we're going to keep doing with what works, given the environment in front of us.
Yeah, I think that makes sense. We had API numbers out today. Cushing, small build in Cushing, overall commercial stocks dropped, but you got to build in distillates. So overall, I mean, inventory is still on the lower side compared to recent years, but we've been trending higher. At the same time, field production in the U.S. is dropping, rig counts are dropping. The drill baby drill thing, it's not going to happen with prices where we are. Distillate stocks still really low, but now trending higher a little bit too, now that we're past the summer demand season, the July 4th holiday. Maybe we see those distillates continue to go up, but we'll have to look at the EIA data tomorrow.
Yes, we will. As we round the corner here into the close, we look at close of futures power hour. Market's still open for 2 hours, 8 minutes. FX is shrugging at these deals, and that's the most generous way I could describe it. The Japanese yen is up by 0.03% today. The euro is up by 0.06% today. Granted, both currencies are off of their lows versus the US dollar, but there's no consistent read through. The Canadian dollar's off by 0.05%. Until a little while ago, the pound was barely holding in positive territory. It's a dollar negative day because, again, more tariffs. We're going to be sending less money outside of our borders, which means there's going to be less demand for US dollars around the world. That's it. It's all it comes down to. Japan is in a different situation than the euro, of course, because their prime minister is rumored to now be thinking about resigning. Shigeru Ishiba rumored to be doing that after the elections, and now that the trade deal is signed, 15 IVR, Thomas, we're holding basically where we were yesterday. Yields are up at the long end of the curve, and I think this is one of those eyebrow-raising moments for dollar bulls. You have your higher yields today. The past few sessions, it was lower yields, lower dollar. Today you have higher yields. You don't have a stronger dollar. That can't feel good. It doesn't feel good, let me tell you, actually. It doesn't feel good. So if you're going to be a dollar bull and it's predicated on, well, what is it predicated on? I think you need to look a little bit closer. And I say this largely as a message to myself, because myself, Nick, Dylan, Ilya, maybe even you, thinking about some dollar bullishness, although I believe you're long the pound and short the yen, so that is working well today. This is a chart that's about to fall back below its trend line from the February high. The bounce that we've had off the July lows, done, no matter how you slice it. Just absolutely cooked. And maybe breaking to a new low again here momentarily. You get below 97.25 in DXY, Thomas, I feel like this thing is, what else can we look forward to? There's no reason to be structurally bullish on the dollar anymore. I'll have to reassess my priors on the yen and the positioning trade. I'm not going to give up on it, but I'm probably going to just extend duration because positioning takes a long time to resolve, and the dollar's clearly going to go back into the barrel if the charts are any sort of indication of what the future holds.
Yeah, I'm staying with my pound long right here. We had a nice double bottom. Now we're coming back above the 1 month moving average for the EMA. I think the dollar has more room to go down.
I'm going to give him credit one last time in his absence. Ilya always says we pay more attention to horizontals than diagonal lines here. If you shorted the British pound on the break of the diagonal line alone, you sold right at the low. If you waited for the horizontal line to break and never got a close below there on a daily basis. Thomas, I know you played that very well getting long the pound here, so kudos to you in recent sessions. The dollar, not an enigma, but it's flipping on and off what matters to it. And similar to in months and years past, really the past year plus, where gold's had a lot of narrative flexibility, as we like to call it, positive narrative flexibility. This happens, good for gold. That happens, good for gold. This week, yields down, dollar down. Yields back up, dollar also down. Okay, calendar. This is for today. I put that in by a mistake earlier, so we're just going to flip over to tomorrow here, and I apologize about that, folks. The PMIs. It's PMI day in Europe. It's an ECB rate decision day here as well. We have jobless claims in the U.S. We're going to have some Canadian retail sales. But those PMIs, the PMIs do matter. PMIs changed the game in February. They've helped gild the path higher in recent months as it appeared the U.S. economy was on better footing. Good news is still good news at the end of the day. So better PMIs, you probably get a nice market reaction. What do you have to complain about? I'll fix the calendar here before it gets posted on the website. With that said, we are done dusted because it's Wednesday. Wednesday afternoon can only mean one thing here on Tasty Live. It's time for a break because Truth or Skepticism is coming up next with Radigan and Sosnoff. Stick around. They're here at the top of the hour. So for Westwater, I've been Vecchio. See you later today.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for one day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for one day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Hello, everybody. We are back. I'm Tom Sosnoff. I'm here with Dylan Radigan. And this is going to be a fun one today, Dylan. How are you?
I think I'm going to surprise you. I'm very well.
You think you're going to surprise me? All right.
I do.
Now
I do think that.
Now you've piqued my interest a little bit, sir. Not sure what that means, but
why don't you kick us off and see where it goes?
Okay. So, by the way, this is Truth or Skepticism, and Dylan and I have been doing this for a long, long time, and we try to pick different topics each week that we think will elicit some kind of response: positive, negative, interest, engagement, whatever. Get you mad, get you happy, who knows? But we don't hold anything back. Dylan, let's tackle free speech. You, more than anybody, as somebody who's been famously You've gone on some of the most famous rants in the history of cable television on MSNBC, on CNBC.
I have a history of being I have a history of being a free speaker.
You have a history of being a free speaker. So I would think that free speech is very important to Dylan Ratigan. Doesn't matter what you want to say.
Sure.
Very important.
Sure.
With everything that's going on right now, you a little concerned about America? I know you're not in America right now, but are you concerned?
Yeah, no, I mean, I am. I think that the sort of use of the legal infrastructure by the President of the United States to go after the media companies is a huge disaster, actually. And I'm embarrassed on behalf of the media companies that they're actually tolerating this level, that they're being so cooperative with the entire situation. So I actually think it's a huge problem. With that said, Tom, I'm going to switch my network, so this should take about 3 seconds. So if there's an issue, don't hold it against me, because I think we need a better connection.
Okay.
But I just want to tell everybody, just in case.
I mean, it's such an interesting topic, because I think that the accommodation piece is only part of it. And I would agree that that's
okay.
The accommodation piece is really disturbing. But what's also disturbing to me is the President of the United States constantly questioning the integrity of the media. I mean, you've been in media, financial, political, for your entire
30
career.
years.
30 years. Your entire career, ever since you got out of school. I mean, doesn't it?
Yeah.
Like if somebody was to go out and question the integrity of traders all over, like, and they just made that kind of their, everything's fake, it's all manipulated, you're just all a bunch of criminals, blah blah blah. That would really bother me. I would think in given your history and stuff like that, that just somebody, the leader of the free world, questioning your integrity on every single thing that he doesn't agree with is disturbing on its own, even before it gets down to the level of some kind of cooperation by different networks and media outlets and everything else. And then
I would even get bigger than big. The thing is, I think that whatever, it's even been 15 years. It's been happening for a long time, actually. But the fundamental degradation, I guess, or I don't know how you would describe it. I mean, you could even call it the destruction if you wanted to, but for sure the degradation of any sense of trust of information, period. And that's not the president, I think, is exploiting and propelling and expanding that. But I actually believe that the whole sort of information, you could blame Facebook, you could blame Google, you could blame lots of people, you could blame the traditional media companies for sloppy journalism. But I actually think that the biggest risk to the United States, the single biggest risk to the United States, is the absence of confidence in the quality of information, and is the absence of a sense of shared information across the entire country. So what one group of people believe, that the idea that each group of people, or many, many different groups of people, each subscribe to a different set of facts that they feel are their set of facts, is perhaps the biggest risk to the country. If America ultimately goes into real decline, which I'm hopeful that that's not going to happen, and I think there's plenty of reasons why that might not happen. But if it does happen, I think that one of the things that we'll point to as seeding the foundation of the decline will be the absence of a shared set of facts, and that the absence of the shared set of facts goes back to decades. And in fact, I think it's a bastardization of the idea of free speech, that I can create any set of facts that I want, and you can't criticize me because it's free speech. And the idea that that opinion, in fact, there was once a time when there was a shared fact set, or at least something like a shared fact set. The election being the sort of Trump's claims that he didn't lose that election is probably the best example of this, where there was a huge percentage of the country that legitimately believed Trump did not lose that election. And there was no set of facts or data that could persuade them otherwise. And that sort of becomes this insane, that once
I mean, I guess I'll use the sport. The thing that's most so appealing to me about sports and the stock market, and so unpleasant about political news and all the other news is, if I tell you that the Cubs won 3-2, there's no world where you can say that no, the Cubs lost 4-3. We can argue why the Cubs won. I can say, well, the Cubs won because they hit a home run in the third, and that was it. And you'd say, well, it wasn't really that home run. It was because of the pitcher did a thing. And sure, there's room for debate as to why. If I say, Google stock was up today, you can't say, no, actually Google stock was down today. We can argue about why it was up today. We can argue about, whether it is up for any reason or not. But when you go away from the stock market and sports, you find yourself in a world where I say Trump lost the election and you say, no, he didn't. And it's like saying the Cubs won, and now the other person says the Cubs lost. And I think the absence of that shared fact set is the underlying problem. And then what you're seeing from the current president is a very, I think, effective exploitation of that underlying reality that's been developing for years in a way that is very concerning. And as I mentioned, I don't mean to be circular, but I actually think that they use the idea of free speech as a justification for the creation of a fact set that is just a fabrication as a set of facts. That, in other words, that it entitles me to say anything that I want.
Yeah, I mean, I hear you, and I think we're both truly disturbed by what we're seeing. It's on many levels just the nonstop attack on media, but then taking it a step further into where it kind of starts to get to where it's more than an attack. It actually becomes like control or blackmail. Like one of your buddies, Stephen Colbert, was basically fired this past week, right? Mm-hmm. I mean, you were on his show before, weren't you?
I have been on his show before, yes, sir.
Yeah, I thought so. And you told me, I think once, you really liked the guy. You thought he was really interesting.
He's a really smart, really talented, really hardworking fellow. Really worthy of a job like that.
And with a huge following. With one of the
tens of millions, I would say. Tens of millions, not just millions.
Huge following and a very loyal following. I mean, we came to Chicago, the shows were completely sold out, all that kind of stuff. But, it's kind of sad what's going on there. And it's not, and this is not like a case of, this is not Alex Jones. This is not the inverse of Alex Jones. Okay. This is not somebody who's spewing, hate and lies and just all that kind of garbage and crap and, just a disgusting human. Alex Jones, the scum of the earth. But Colbert, completely different animal. Okay, he doesn't like Trump. Who cares? You know what? Who cares?
Yeah, for me, and that's why I sort of want to be careful where we go with this. So I consider myself one of the greatest fans, I would even say student of the late night genre of that time slot. Meaning I think that both Johnny Carson and David Letterman, those two individuals, are two of the greatest broadcasters in the history of television, and I think that the greatest time slot in television, and what was traditional television, it's just not the same world now, but what was that evening time slot. And the reason I thought it was the reason I thought those two individuals did such a good job, and the reason I thought that what they did was so important was that they never ground a political act. So Johnny Carson might make fun of Ronald Reagan for being senile, or Jimmy Carter for being a peanut farmer, or whoever the targets were, but they made the space. I always perceived that Johnny Carson and David Letterman, with that time slot, made the space for everybody in America to be included in the audience. which was unique to that time slot, because you may not be a Cubs fan, or you may not be a Wall Street guy, or you may not be a sports person, or you may not be a leftist or a rightist or a politics person or whatever, but everybody was an American at the end of the day. And I looked at those really late time slots as TV shows that were a unified world for America and Americans. And I think that, and it's not to blame Colbert per se, but I do think that the time slot has been lost, in the sense that I think Colbert made a big mistake in making in positioning it as a politically left, as opposed to positioning that time slot as a world for everybody. He positioned that time slot as a world for the left, and I think that was a mistake. Not because I don't agree with him. I generally agree with his points of view, and not that because he's one of the most talented rhetorical people out there for that. He did it on Comedy Central for years. He'd probably come back and do it again now, I suspect, in some independent or other media. But I do think that using that particular time slot for a political agenda was a mistake and made him vulnerable to what happened. Which that's neither here nor there. But I do think that using that particular time slot to grind a political axe created a lot of vulnerability for him.
Oh, I mean, if you're worried about him, sure, but I don't think he was for one second ever worried about himself. And I think it was actually a really good use of his time slot and his time, because, I mean, you said it before, he's got tens of millions of followers, and he really he separated himself from, he did what was really hard to do. And, in a world where if you really believe that free speech is under fire, then what he did was he took it head on. Him, Jimmy Kimmel, whoever else it is, they basically said, you know what? Screw it. This is not about us. This is bigger than us. And somebody needs to tell this story, because this is the side that's not being told. And if certain politicians are unable or unwilling to tell that side because they're fear for their job, these guys don't fear for their job. And so I actually think the opposite, that he used it very effectively, and it helped to build up to wherever he is today. Who cares? The network fired him. He'll have 50 choices, going down the road.
Sure. Yeah. No. He'll be bigger than ever. He'll consolidate into a big audience. There's no question about that. I mean, how concerned are you? Just to ask you a couple of questions. How concerned are you for the future of? I mean, how concerned are you about this dynamic of attacking the press that has sort of taken on a new level with the new Trump administration, simply because the networks are paying the bribes. The networks are conceding the deals. The networks are giving up. They're firing people. They're making the payoffs. They're sort of conceding. They're deferring to the aggression that they are. They're not fighting the aggression, which is something that, that's the most disappointing thing for me, because I can tell you, certainly in the Bloomberg era, Bloomberg was out of control in terms of their willingness to use lawyers and the First Amendment to tell any inbound, adversary to pound sand. And that was what I thought I thought, especially billionaire Manhattan journalism was, if it's true and it's under the First Amendment, take a hike. And so it's sort of peculiar for me to see sort of these billionaire Manhattan institutions, these television networks, behave in such a weak way.
Well, one of the reasons is because they're public companies, and they answer, they're public companies, and the board might think differently than you just mentioned. There are a few standouts in the case of, for example, the Wall Street Journal. You have a multi-billionaire like Rupert Murdoch, who's a conservative, but who says, you know what, I'm going to protect the integrity of that free speech. I'm going to protect my journalists before I'm going to protect whatever my, political beliefs are. And so there are, you get to the point, and there are certain points out there with people that have enough They have fuck you money. You know, Rupert Murdoch is, I don't know how old he is, got to be late 80s or whatever he is.
I think he's in his 90s even.
In 90s. Okay. So when you're in the 90s and you've got FU money and you're Bloomberg, you're Michael Bloomberg and you have FU money, you don't give a crap. Like, you're going to say, you know, you're going to protect the integrity of free speech no matter what, because that's your legacy. And you're never going to have somebody say, hey, you know what? He didn't stand up for free speech. He went down with this tyrant, this liar, whatever it is. And they're never, ever going to do that. But that's Bloomberg, isolated case. That's Murdoch, isolated case. Most of these are public companies, and they answer to a different group. They answer to a board. They answer to an appointed CEO. They don't have a billionaire behind the scenes that's going to come and protect them. So it's a little bit different animal. And you're going up against, in the history of the modern world, there has never been, a bully, a pulpit bully like Trump before. He's the first of his kind. And so nobody really knows exactly how to deal with this, and they're being challenged by how do you deal with it. Yeah, you're going to get an occasional person that's willing to risk it all. You're going to get the person that doesn't care. You're going to get the person that's, that will say.
But you're talking about a Colbert or a Kimmel. You're saying a talent,
or even an occasion, even a certain
executive.
Even a certain executive or a politician, a congressman or congresswoman or a senator or something like that. But the way people have fallen into line and with the complete disregard for free speech is freaking scary.
I mean, how do you interpret that? Is that sort of like a historical, that's like the same thing that happened to the Jews in Germany, or the same thing? Like, is just sort of like the true indication of the average character of the average human is actually generally?
I don't believe that. I don't believe that. I believe in America, our flaws have been, we have a lot of flaws that we didn't realize we had, and those flaws have been exposed. And it's a scary thing because, we've gone through decades, like my first, when I first, like kind of the first politics I really remember outside of, when I was a little kid, but like the first kind of things I remember is kind of, George Wallace running for president. I think he was the governor of Alabama or something. I don't remember. But, George Wallace running for president, then he was shot, and then he was, but he was a racist, whatever, blah, blah, blah. And I remember, the pushback was really interesting, but it was also, it opened your eyes and it made you realize that, okay, not everything is perfect in this country, and I don't remember the time before that, but I used to listen to my dad, who was a civil rights attorney, talk about, he was very, he was very passionate about, about a lot of things, but equal rights being the most important. And I remember, and it never really registered with me, and then fast forward, 40, 50 years, 60 years. And I'm like, okay, I see not all of this went away. It was kind of hidden, and it's been.
You see what?
I see things that are scary. I see things that make me think, hey, how is this possible in 2025? Like, how is it possible? Do you
see why your father was so passionate? Do you have a different perspective on why he was so urgent and so intense?
Oh yeah, of course.
On the top.
I mean, I used to think he was crazy. I mean, I was like, what are you doing? I don't even get it.
Why don't you calm down there, buddy?
It's not that bad. But now I get it. And when I look around and I read certain things and I hear certain things and I see certain things, and then I feel like, okay, why is this acceptable? Why are we okay with this? Why is anybody okay with this? Is it just about money? Is it just about power? Is it just about, getting what you want? Like, how are really smart people that have changed the world as far as technology goes, that have changed the world as far as, market structure and engineering and everything. How are all these smart people like not really bothered by this? And maybe they are, but how are they scared to say something? Like if you're,
you're talking about the top 100 CEOs or the top, or the you're talking about public figures, big CEOs and big.
If Dylan Ratigan if you had Jeff Bezos money, you wouldn't shut the hell up. You would be the most you wouldn't care. You would not hold back for 1 second. If you had Zuckerberg money, you wouldn't, there's nothing you wouldn't say.
Mark Cuban? I mean, I guess the closest thing to that, wouldn't that be Mark Cuban? Would be sort of the approximation of that, where he sort of tried to be as aggressive as possible. I
mean,
with some version of a massive bank account.
I mean, Mark Cuban, yeah, but he's a 10 or 20 billion dollar player. These guys are hundreds of billions. I mean, to a certain extent, Elon Musk, whether you love him or hate him, he speaks up. Whatever. I mean, there are people that will. That have a position that will speak up, but I just don't understand how everybody's so quiet. I just don't get it.
I mean, I think that's the most. I totally agree. I mean, I find that I find that fascinating myself. I mean, I found it fascinating in the first Trump era. I found it fascinating in the Biden era. I mean, I suppose at the end of the day, the people who have all those resources just don't want they don't want to be a target. They don't want to be a target for their tax audits. They don't want to be a target for their permits. They don't want to be a target for their bank relationships. I mean, there's sort of all this vulnerability that comes with being super powerful in terms of government contracts, taxes, permits, banking relationships, et cetera, et cetera. And I'm not saying that that's why, but it's the only answer I can even conjure, which is a sort of a don't rock the boat vibe that is, because it makes life more inconvenient if you go into the battle. And at the end of the day, the office of the president of the United States is more powerful than you, whoever you are. So who needs the trouble?
So I get it. If you're talking about Warren Buffett or Michael Bloomberg or Rupert Murdoch because those guys are, they're in their 90s, late 80s, 90s. I get it. At that point, listen, it's tough. But for the younger generation, the ones in their 30s,
Zuckerberg and Bezos and all these
30s,
guys,
40s, and 50s, they do not get a pass from me. They're all.
It's a response. It's an obligation as far as you're concerned.
It is an obligation. Yeah. It's an absolute obligation. And those guys do not get a pass. They are all pieces of garbage, and they will never have my business. They will never have my support. They are gutless, and it's embarrassing. We sit back and we and we watch what's happening, and we're like, listen, somebody's got to say something. Somebody will listen to. Like, nobody's going to quote me, so I can only say whatever. But they have to. There are people out there that have to speak up and say, hey, you know what? There's something wrong with this. Discourse is good. Debate is good. Press is good. All news.
I mean, it's more than discourse or press is good. I mean,
all news that doesn't agree with you is not fake. Everybody that doesn't agree with you is not fake. What are we, 2-year-olds?
It's the foundation of the United States. I would say it's the foundation of the United States of America. It's the First Amendment to the Constitution, is the right to free speech as considered the single most fundamental principle of allowing the United States to be a more creative, dynamic, trustworthy, and prosperous nation on earth. And when you take that away, you take away the foundation of American government.
What the hypocrisy of every time somebody gets shot in America, the hypocrisy of defending the Second Amendment, bringing up the Second Amendment and defending the Second Amendment on every single time somebody gets shot as so important, but yet the unwillingness to defend the First Amendment, okay, of free speech, is just sickening. Like it blows you away. You're like, oh my God, this is just everybody's, this is a pick and choose. There is no such thing as, quote, constitutionalist or whatever it is. It's complete garbage. It's total hypocrisy. And
yeah, well, I mean, it reminds me of the Chris Rock special, Selective Outrage.
Yeah, exactly.
I mean, and this is the exact dynamic that's in play here, which eliminates everybody's credibility. But because the selective outrage means that basically the things that you were, anyway, it speaks for itself. But selective outrage eliminates all credibility. Full stop.
Yeah, I mean, when you go into London now, and you go to, that's just the last place I was outside the U.S. And it's like, we are an absolute laughing stock. It's like, how can you guys, how do you let everybody get away with this? It's ridiculous. I mean, anyway, you can see it. It's plain as day. It's not, from the outside looking in, it's an embarrassment. But yet, that's what we've become. So when you say something like, well, maybe Colbert picked the wrong path, I don't think so. I don't think any of these guys did. I think these are the guys are the heroes because they didn't back down. And I think that, I was never a huge fan of the Wall Street Journal, but I give them a hell of a lot of credit for at least, standing behind their columnists and their op-ed people and saying, hey, you know what? This is okay.
Do you think that having publicly traded media companies has proven a failure? Is this evidence of the fact that media companies are better to have sovereign billionaire owners, whether it's Bezos and the Washington Post?
No, because Bezos and the Washington
Bloomberg or Rupert.
No, because Bezos and the Washington Post is a letdown too. I don't think you can pick and choose, who's going to be public and who's going to be private and stuff like that. But I do think that, if you're going to join the board of a media company, you've got to give them, you've got to say, listen, we're going to stand behind you as long as what you are writing about or talking about is real. It's not fake.
And we have, because at Bloomberg, the implication was that Bloomberg had an unlimited budget to pay lawyers to deal with First Amendment issues.
Well, they very well might have. I mean, I don't know. I mean, listen.
I'm not saying I ever tested that, but I'm just saying that anytime a First Amendment issue came up, it had nothing to do with the story or the reporter or whether you liked Colbert or whether you liked my story or anybody in between. It was between whoever the adversary was and the Constitution, and it was a constitutional lawyer who was basically there to squash anybody that dared try to not attack a reporter or a TV host, but to try to attack the Constitution. And I do think that that's sort of the really alarming thing with whoever the new regime at these media companies, which is that they lack that fundamental worldview.
As I sit here and listen, one of the things that is probably the most concerning for me is that we're barely over 6 months in, and the damage that can be done in the next 3.5 years is scary, because the damage that's been done, we're having a discussion here about free speech. When did you ever think that in your lifetime this would be a discussion topic?
Didn't even exist. I mean, there was nothing. Because I remember I was 22 when I started at Bloomberg. So for me, Mike Bloomberg was like God. And so and there were certain things that you just always had to do. And there was no debating them. And there was nothing more fundamental to that organization than the legal staff on First Amendment was as sure as, there's 4 tires on a car and there's, whatever, the sun rises in the east and sets in the west. First Amendment issues are dealt with with an iron fist.
Of course,
it wasn't even. There was no. It was.
It's not. There's no debate.
Even if you were the reporter, I would be the reporter. They wouldn't even have. You weren't even invited to the meeting. It had nothing to do with you. The meeting was between the constitutional lawyers and the adversary. They didn't care.
It's like I said, we've entered into a really dark period, and it's, you know, it's another one of the kind of, it's another thing that happens when you build a policy around isolationists and you become completely just totally self-reliant on everything, and we're entering a phase where I worry about, you know, what happens 2 and 3 years from now, and who's going to carry this discussion, who's going to carry the torch, who are going to be the leaders, you know, who's going to bring this to the table, who is going to do it.
If anything, it seems like the leadership is getting weaker, not stronger. It seems like the current. It actually seems like it's getting that the culture of that the Bloomberg culture or the Murdoch culture is on the way out, and that it's this sort of very accommodating, wimpy board sort of.
That was my point. I mean, and then you're relying on politicians, because you can't fire politicians. You can just decide you don't want to reelect them, but you can't fire them. But, you know, if you can start firing people and all the networks start getting rid of everybody and all the newspapers start firing all the columnists, then, you know, then yeah, you have a very, you know, very, very dark situation. And what scares me is we are early into this regime, very early.
Don't you also think there's a world, though, where there's a vacuum that can be filled by someone who is extremely of an extremely firm character?
Yeah,
you know, sure. Even if you say Mike Bloomberg is old or Rupert is old or whatever, but I mean, that doesn't mean that they're not willing to sort of step forward and have at it.
It doesn't. It doesn't mean that they're not willing to bankroll too. I mean, if you're Michael Bloomberg, you know, what are you going to do with $75 billion? You know, I mean, exactly. You can bankroll. You can if you feel there's somebody out there that, you know, that you basically, you know, want to put in a position to tell a story, you can bankroll it, and it doesn't even move the dial. It doesn't make one bit of difference.
I mean, isn't that person theoretically the editor? Like, if you're not, I'm not saying Bloomberg per se, although Bloom could be, but whether it's Bloomberg or the Wall Street Journal, isn't that person the editor in chief of either the Wall Street Journal or Bloomberg?
It could be.
I mean, that's the title. That's the sort of the chair you want to sit in, I think, if you're going to have at it.
Could be, but it could be anybody too. Could be anybody. It could be, you know, it just could be a politician. It could be. It really could be anybody. But yes,
you're saying it's just about money and a loudspeaker and an organized sort of communications campaign.
Yeah. How do you get
as long as you have a budget, you can swing.
Yeah. I mean, in today's world, you know, there's plenty of people that are doing it on TikTok and Instagram and things like that. But, you know, beyond that, that's hard to have a lasting impact that really speaks to just a very small piece of the potential audience. And it's not like people don't realize there's a problem. People know this is a problem. You know, if the leader of the free world, I've talked about this before, cannot accept the results of a national election, then how can they accept the results of anything? Like anything, everything's going to be fake. Anything you don't agree with is going to be a lie or fake or made up. You know, how's that possible? You know, and so, you know, we need to talk about this. It needs to be brought up. It can't be brushed under the rug or any of that kind of stuff. It needs to come out.
Do you think it's to the detriment of CBS and that the wimpy organizations will also suffer themselves?
Yeah, of course. Of course. Absolutely. 100%. How could it not be?
Yeah.
I mean, you know, yeah, of course. Listen, America, if nothing else, we hate like the pussy culture. Wimps.
Yeah.
You know, we hate wimps. We hate people that we perceive to be pussies or whatever. And so we just want to, you know, that they don't, that's not, you know, that's not who we want to listen to, we want to follow or any of that kind of stuff. So, yeah, no, I mean, no, CBS is, you know, they're going to dig their own grave on this one.
The other interesting thing, just because I've spent, as you know, a bunch of time in New York the last couple of weeks doing a bunch of different media things and going on television and all this jazz, and all the talk in New York is about the fact that Comcast, which owns CNBC, MSNBC, all these cable channels, is getting rid of them because they don't want to deal with any of the inbound. Brian Roberts at Comcast has zero interest in having incoming from the president about something anybody said on any of his television networks.
So
he's reducing it.
That's another risk, Dylan.
You know,
that's a huge
same
risk.
thing. CNN, by the way, same thing, getting thrown out of Time Warner or whatever that Warner Brothers Discovery or whatever they call that company now. Like all these news organizations, because they're seen to be vulnerable to some form of unwanted incoming from the president, have motivated boardroom decisions in the last year to just toss them overboard.
Yeah. And that's a dangerous thing too, because then, where do the objective stories come from? Where's the objective reporting from? Are we relying 100% on sports? I mean, I'm just saying, like that's
no. I think this conversation has revealed that the only two institutions that have any apparent independence and backbone are Bloomberg and the Wall Street Journal, neither of which are really big producers of content in the way most people consume it, which is by way of short videos. So that doesn't get much done. But outside, I can't think of an organization outside of Bloomberg and the Wall Street Journal that has the sort of distribution and brand awareness combined with the underlying reporting horsepower, combined with a billionaire backer that's willing to go to war if need be. I mean, these television networks, forget it. They're obviously useless.
I mean, when you think about it, the only place you can go listen to a really heated debate nowadays is on sports radio or sports talk, because they'll go at it because, okay, great. You're a Cubs fan. You're a White Sox fan. You're a Yankees fan. You're a Mets fan. Okay, we can have this battle, and and they're fun. It's fun, but we can't have that anymore on any other level. It's absolutely scary.
Because it's dangerous, because you're risking an unwanted inbound from a powerful adversary.
Sure.
Just because you're rooting for because you're saying something they don't like.
That's right. You should be able to say things that people don't like. I like saying things on this network that some people like and some people don't like. I'm not nervous about it or worried about it or anything like that, because I think it's really important, and I don't think we should ever shut up, and I don't think we should ever shut anybody up. But there's not enough of it, and we're too small.
Mm-hmm. Do you think the Colbert firing is like a meaningful? Is it like a substantial event? Is it like a signal of some kind that is like a warning?
Yeah, I think
how do you interpret it?
It's a huge red flag. It's a scary thing. It's a huge red flag. It's a dangerous thing, and I think that I worry about things like what does the Colbert firing lead to? Does it lead to censoring Lauren Michaels on Saturday Night Live? Does it lead to the end of Jimmy Kimmel? I mean, where does it? What's the next step? It makes me nervous.
And what do you think is at risk for America what do you think because I know you skew towards an optimist more than as much as anybody.
Well,
but what do you think?
I'm always going to be an optimist about America. Again, I've said this many times. America's too big to fail, and I'm always going to be an American optimist, and I'm always going to be, a big, huge person, positive drift guy. Things are always going to be better in the future. This is just a really dark time in our history. There's somebody in charge that is in cognitive decline, early stages of dementia, that is, wants his legacy to be something that I think is incredibly dangerous. Now, as soon as he's gone or dead or whatever, everything will go right back. We'll snap back. But, he's a cult leader right now.
Mm-hmm. And has no worthy adversaries.
No,
the worthy adversary should be the media. It should be the executive class. It should be the political majority, and it should be you have the Supreme Court, the political majority, the top 100 CEOs in the world, and then the media are the sort of theoretically the institutional adversaries.
Well, when you're a lame duck, it doesn't matter. This is not a parliamentary system. You can't call an election, so there's nothing we can do. You got to wait it out 3.5 years, and then you deal with it. And you hope in the midterms things normalize a little bit, and you get at least a little, checks and balances maybe, and you focus on, putting the pressure on people that can make a difference. You don't waste your time with Trump because it's not worth it. You waste your time with the people that can make a difference. And those are the people that you try to inspire or go after or do whatever so that they can, so they stand up. We're going to leave it here, Dylan, because we're out of time today. Right. But thanks so much. And we're going to see you tomorrow morning on Hear Me Out. We've got some totally different topics. I think you're going to like them tomorrow.
I look forward to it. I'll see you tomorrow morning on Hear Me Out with, what time is it again?
8:40 our time.
8:40 in Chicago. I'll see you then.
Thanks, Dylan.
All right, bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
With rate cuts back on the table, are there any trades that you're watching in particular?
Well, rate cuts have never been off the table, but every time bonds drop, I think they're a buy.
Not really watching any specific trades in the interest rate space. I do keep an eye on, the futures options like the ZBs, the ZMs, the ZTs to see if there's any volatility types of plays that I can integrate into them. Unfortunately, I don't really feel like there is a really great micro future to trade the changes in interest rates just yet. I feel like they need a little bit more volume, but when those get a little more active, that will be definitely one way I will be participating.
Yeah, I am. I would say honestly the dollar trade, and I know that is one trade that has been very crowded as far as a lot of people are short the dollar. And if you look over the last couple of years, typically when interest rates are higher, the dollar is higher, and we've seen the opposite. So it would definitely be the dollar and how I'm going to trade that based on what happens with rate cut.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
What is going on, everybody, and welcome back to today's assignment. We're back in the classroom with Dr. Jim. We have some earnings to touch on today, so we'll get into that in a moment. Before we do, Dr. Jim, how we doing? Middle of the week.
Man, I'm well. You know, it's Wednesday. It's another Wednesday. I think next Wednesday is going to be FOMC. I know tonight after the bell, we have a slew of earnings. Google, Tesla, and some others are coming out today after the bell. So this is what we train for, E.
It is.
Like I see you with that side delt pump. Like this is why you're doing all those lateral raises, bro.
No,
look at you filling the frame.
No.
Like
actually,
you're filling the frame, dude.
Actually, one of the best feelings is whenever you're going to the gym, you put on a shirt or something and it's a little bit tighter. Mine's actually the opposite
right.
lately. I've been putting stuff on. It's been feeling a little bit looser, but I appreciate it though. But no,
that's tough. That's a tough feeling. That's why I always have Autumn wash my favorite T-shirts every day.
Right.
So that they're nice and snug when I go to the gym. Yeah, that's 100%.
100%.
That's the only way to play it, man.
Yeah, because I was gonna ask you, Dr. Jim, you either been hitting the gym or your shirt's been getting a little smaller there. But
no, it's freshly washed. So that's all it is.
A little bit of
the
both.
Same size.
Yeah.
Yeah.
No, we got earnings upon us, Dr. Jim. Are you guys on your side of things already entered some things? What have you guys been eyeing? We have 5 slides. 5 slides minus the welcome slide. So 4 tickers we're gonna look at that have earnings, and then we're gonna choose one of the 4 and get a trade on. But do you have any earnings trades that you guys got on prior to this?
Yeah, no, definitely. I wonder if the 4 tickers are the same. We did 4 trades yesterday. We did 4 earnings trades.
Okay, let me guess 2 of the 4. You guys got a Chipotle on and maybe a Google. I don't know if you guys did something in Tesla, but we'll get into those. What about you guys did any of those?
Chipotle, 100%. Google, 100%.
Okay.
Tesla, 100%. And then the 4th one, and I'll be curious to know. Actually, I'm going to wait and see.
Okay.
I want to see what your 4th one is for the slides. I mean, it has to be. I think there's only one other notable earnings today, but let's see. Let's wait and see. Let's wait and see.
Yeah,
but no, we did all 30, and I mean, for me, I'm just playing everything to the upside now. I feel like the market's never. I'm serious.
No,
I'm serious.
I know you.
I feel like the market's never going down again. I feel like if you can't beat them, join them. I feel like we're bullish across the board, and we'll see how it works.
I don't think I've learned my lesson yet. I might have a few more reps until I learn that lesson, but we can go ahead and pull up these slides, and then we'll get into these 4 tickers for today that we'll be looking at. Again, it's 2025. We're halfway into 2025. I think it was my New Year's resolution for 2024 to not do too much in earnings. So we're going to look at it. We're not going to put something on in every earnings, but let's gain a little bit of context on what the sentiment is, what people are looking at, and kind of what the overall focus is for their individual earnings. We got Tesla.
Okay,
the
Paul,
OG.
I can't see the slides.
No,
just
all
so
good,
Paul
all good,
knows.
all good.
Yeah, I'm sure he'll get me set up here, but go ahead.
Yeah. Right off the bat, we got Tesla for the first ones. Did you guys do anything in Tesla, Dr. Jim?
Yes, I'm trying to think about what we did. I think we did. Yes, Paul. Thank you. That's perfect. I think we did. I'm pretty sure we did an expect to move butterfly to the upside. In fact, I'm almost positive that's what we did. And so that was the play for Tesla. Yes.
I know the talk of the town for Tesla has been these robo-taxis, the robo-taxi roadmap, when that's going to be implemented, what it is, when it's going to be adopted. Why? Everyone's, everyone's been looking at Tesla's profit margin. So it's just been a key focus. But for the most part, the robo-taxis has been the talk of the town. So regardless on if you're a believer or not in robo-taxis, it's not that the earnings is going to care, but this is a little bit of the sentiment that, people might have a key focus on. So that's what we got there for Tesla, Dr. Jim. I'm not a big fan of Tesla for this time around. I think Tesla's going to be one I'm going to be watching from the sidelines, but if I did play Tesla, I'd probably get on some long delta in there.
So wait, hold on. You said you get on some long delta? You just said you weren't a fan of Tesla. So I don't understand that.
I'm not a big fan of Tesla. I mean, Dr. Jim, I believe in the overall, I believe in the US, but I'm definitely a contrarian. I definitely have a little bit more short delta on at any given moment. I'm not against the market though, you know what I mean? So I kind of feel the same way with Tesla. It's like I'm a long-term believer in Tesla, but for earnings this time around, my personal sentiment is leaning a little bearish. That's where I'm at.
But you just said if you were going to do something, it would be long delta, though.
Oh, I'm
that doesn't
sorry.
make any sense.
I'm sorry. Short
Did you
delta
mean to
then.
say short delta?
Probably meant to say short delta.
Okay.
Yeah.
That makes sense.
Yeah.
Okay. Yeah. I mean, you could certainly make that case. And I mean, you've got Elon with, the Optimus stuff, and like, he's just going off in all kinds of different directions. Which that's kind of par for the course, right?
Yeah.
Like that's what you sign up for with Elon. So
100%.
It's always interesting to see how the market reacts. It's always interesting to see what the conference call, brings and things of that nature. So I think after the bell, one way or another, it is going to be quite a circus.
Yeah, I think when you're trading Tesla, you're pretty much signing up for volatility. You're going to get something. You just might not know what you're going to get and how much of it you're going to get. So that's kind of how I see Tesla. We can go ahead and jump to the second slide here. We got Google, Dr. Jim. I'm a little bit more keen on Google, but a huge focus is going to be on just their revenue and their AI cloud monetization model, things like that. Again, I know I went into my email the other night. I got another receipt notification from Google, and it's kind of funny. This key focus is going to be on those revenue models from Google. I don't know if you have any thoughts on Google, but we know Google has a lot to do with their AdSense. And then again, the AI hype is kind of dying out a little bit, but I'll be curious to see if the AI catches any momentum with the shareholders and the overall reaction. But we got Google, Dr. Jim.
So AI is dying out. Like dying out in what way? Like you mean specifically for Google, or you mean for everybody?
No, not AI, not dying out. More just the AI hype, that AI train, that AI momentum. I know last year, last earnings season, whenever AI was mentioned in any type of headlines, it was making the underlying pop off. I don't know if it's as much of a buzzword just right now at the time being like it was 3-4 months ago.
Okay, that's fair. I think that's totally fair. One thing that's kind of interesting to me, and I'll be curious to hear your take on this.
Yeah.
So generally speaking, when it comes to like if you're looking for information on the internet, right, that you don't already have, what do? You Google it, right?
Right.
I mean, the company itself has become the verb that we, act on to find information.
Yeah.
Yes, 100%. I actually think, though, that is changing right before our very eyes, because whatever AI engine or prompt or whatever you like to use, whether it's ChatGPT, whether it's Grok, whether it's whatever, I mean, I can now say from firsthand experience, like rather, because I'm on Twitter so much, Grok just makes a lot of sense for me. When I'm looking for information, I'm going to say I'm only Googling it maybe 40% of the time now. I'm actually usually going into Grok to find the information because it gives me better information that's more tailored to what I'm looking for. As opposed to I go into Google, I search for whatever I'm searching for. Now I've got to find the answer. I've still got to go through the first page. I've got to find the answer, blah, 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 blah. Grok or whatever AI engine you might use is going to serve it up right to you. It's going to give you the exact answer that you were looking for.
100%.
And so I'm like, wow, maybe this is taking the place of what used to be Google searches. That would not be good for Google, I would not think.
No, not at all. And I mean, when it comes down to things, and I'm curious, how has your experience been on Grok? I know ChatGPT was something I thought you were going to bring up right away. Curious of your experience on that. And then number two, that is why I've been of the proponent of the fact that the idea is going to be the hot commodity, not the actual busyness of getting said task done. It's going to be whoever has the ideas and know how to angle that idea to get what you want back out of Grok or ChatGPT or whatever it is going to be. But it's like the input of the idea now is going to be the hot commodity, and the idea itself is going to be the most valuable, in my opinion. And just to build off of the point that you're making there.
I think you might be onto something there. I absolutely do think you might be onto something. You know, I mean, my experience, Grok is the only one I've used, so I can't compare it to any of the others. I don't know. I've heard ChatGPT is great. I've heard Facebook's version is great. I've heard they're all pretty good. I mean, it's been a pretty positive experience. I mean, I'm kind of blown away. I mean, the thing that I've gotten the most value from, I would say, is, I mean, finding random information, like finding whatever. But I'll tell you what. So I've been to going to the doctor for various things over the last year or so.
Right.
It's amazing. If you like input your labs and you input like whatever into Grok, like it will help you kind of diagnose what's going on.
Yeah.
And what's amazing about that, it's not so much to have it take the place of, your doctor or whatever, although maybe it could for some people in some situations. But it arms you with so much information that you're now able to ask much better questions about what's going on.
Right.
And so I've done that a couple times now, like the dentist or whatever, because it's a space that most of us are not well versed in. And most of the time we go into those situations and we feel very kind of, uninformed.
Right.
And I'm like, man, this has completely destroyed the barrier to entry when it comes to learning a little bit about the space. That's been really, really cool.
Well, and then I think the conversations are a little bit more productive, right? It's like you can sit there all day and have your doctor speak to you, at you, all you want, but when you both can carry the conversation, it's productive, mutually beneficial, 100%. Lastly, before we go on to the next slide here, I've seen Grok used in the mentions as like you're going in the Twitter threads to fact check things or to get more clarity on a specific topic. I see people asking Grok like, yo, Grok, pull this up, or yo, Grok, this. And that's something I see on a daily basis, and that's kind of cool. Never seen that before.
That is pretty cool. Yeah, I've never done that myself, but I do see it a lot.
I could see you doing that. If I ever catch Grok talking about every gimme got a gotcha.
Why could you see me doing that? Like, why'd you single me out there?
Nobody's singling you. I'm saying if I ever see Grok talking about every gimmy's got a gotcha, I'm gonna be like, they're sourcing information from Dr. Jim's show right now. Literally.
That's true. That's true. There you go.
Third slide here. We got AT&T. Focused free cash flow fiber deployment. Why? People want to know if AT&T has enough free cash coming in to pay down debt and still invest to faster internet without stretching itself too thin. So some of these are the key focuses. We got any internet enthusiasts out there, but we got AT&T. You a T-Mobile, Verizon, AT&T. Which side are you on, Dr. Jim? Be careful with your answer.
I didn't even know AT&T was still in business. Like, I'm shocked that they're actually. Yeah, I mean, I haven't used AT&T. It's been many, many years. No, we're Verizon all the way, dude. I mean, T-Mobile apparently is kind of making a run. It's making a push, and I'm not gonna lie, it's kind of caught my gaze a couple times.
Okay,
but
let me hear.
No, AT&T is brutal, dude. Okay. Oh my gosh, come on.
You sound like Stephen A. Smith.
You're not. Are you AT&T?
Oh no, I'm more of like a Cricket Wireless. No, I'm just kidding. I'm a Verizon.
Oh, you're a Boost guy?
No, I'm a Boost. No, back in the day, more of T-Mobile than Verizon, then kind of forgot about the rest of the competitors for the most part.
So what are you right now though?
I think I'm Verizon. Let me see. I'm Verizon.
Okay, yeah.
Verizon.
I mean, Verizon's solid. I feel like Verizon is very consistent, very solid. Again, T-Mobile might have a leg up in certain instances, but
Yeah, I think
AT&T, I mean, if they have earnings today, it must be to report that they're going insolvent because it's only a matter of time now.
Bro, bad day to be AT&T or Coca-Cola. Bad day to be anything on the opposing side of what Dr. Jim likes. But we'll jump to the fourth slide here.
AT&T was not the fourth one for earnings that I thought you were gonna pull.
I got you. We got another one here. We got Chipotle, one of my favorite spots to eat. Think I had it the last couple of days, but same store sales and consumer spending. The big question is whether people are still willing to drop $15 on a burrito when inflation is higher, if sales are starting to slow down. Is this the new recession indicator? I will say I don't think the burritos are around $15. I think they're around 12. You know, maybe that's a little bit of an exaggeration, but that's a big question. Consumer sales, Dr. Jim. Chipotle.
I mean, Chipotle is solid, right?
Oh, it's
Chipotle
solid.
is just
It's Old Faithful.
It's very solid.
Old Faithful.
It's very solid. It's very consistent.
Yeah.
You know, it's like, you know, I mean, you get what you pay for when you go in there.
Absolutely.
Like, is it going to blow you away? Is it going to be a meal that you'll never forget? Like, no.
Yeah.
But is it going to be solid? Yeah. Is the guacamole going to be pretty solid? Yeah, of course. Yeah. Are the chips going to be 3 days old? Yeah, but that's the gotcha.
So that's a universal experience.
Dude, that's universal,
okay.
bro.
I thought that was just me.
Never go in and get
That's a universal experience.
No,
yeah.
that's what I'm saying.
Yeah.
It's really amazing. I'm always shocked. I'm not surprised anymore because I've just come to accept it. But I'm just like, man, just by the sheer probability distribution, you would think that you would walk in on a day when they just made them. But somehow we're consistently in that 2 days old to 4 days old window.
Consistently stale. I admire it,
It's pretty incredible, man.
I mean,
it's pretty incredible.
I do admire it, Dr. Jim. So one thing, especially when I first got into the market, it was not even just like, okay, focus on green trades, focus on green trades, focus on green. It was more so like, okay, these are some risk parameters that I want to see if I can follow. Like, see if you can keep your risk, even if I take a red trade, see if you can keep your risk parameters within this parameter and see if you can even be consistent with that. So even if it was like consistently staying within your risk parameters, even if it was consistently red. So, I mean, any type of consistency is pretty fire. So I'll give it to Chipotle. At least it's consistent. You know what to expect, at least, Dr. Jim.
That's right. That's right. All right. So which one of these are we going to trade? The other one, by the way, that I traded yesterday was IBM. IBM has earnings today.
IBM does have earnings. I wasn't super fond of IBM. IBM was one of those where whenever I read any past old textbook about trading, IBM is used as the example almost all the time. Like almost all the time.
That's so
Gus
true,
brought it to my attention the other day, and I was like, every book does have IBM as the example. So, and it's like trading at $5.50 in the example when it like after I
That's
IPO'd.
so funny, dude, because oh my gosh, that's so funny because so like when I used to teach like principles of finance, MBA finance at the university I taught at, it's so funny. Like the examples we would always use were stock ABC,
right?
Stock XYZ, or IBM. If we wanted to pull a real example, it was always IBM. That's so funny. Oh my gosh, that's so funny.
I don't know what it is, but between these four, Dr. Jim, I'm leaning Google, but I'm open to my opinion being changed before we send this through. So we can go ahead and jump.
So how are you going to play it though? How are you going to dial it up, man? How are you going to play Google?
I'm leaning long. I would look to get on a little bit of long delta if we can get into that. But we can jump over here to the platform here in a moment. We can just take a quick peek. But as we get in Google, after the bell, today is July 23rd. IV rank is 38 right now. Google's been going on an absolute tear. I don't want to step in front of a moving train, Dr. Jim. But no, I'm leaning long. I need to get on some long delta too, so I don't mind. I do still have on UAL. This was an earnings trade. It still hasn't panned out yet.
Is that a Carvana trade?
Oh, shout out to Carvana. I was doing some deep research the other day. I was like, how is Carvana making their money? And after actually sitting down, taking the time and doing some research, I'm a fan of Carvana. You know, I think they definitely have an edge on some other, you know, I don't care about the fundamentals too much. Outside of the trade, I'm feeling Carvana, Dr. Jim. So
how do they make money? What did you learn? Because I'm curious now. I don't know how they make money.
I mean, well, they make money because they do everything in-house. So third party this, third party that, they do everything in-house. Financing, you name it. So that is a little bit of a different business model. I know Chase here, he's on the trade side, but he just sold his car with Carvana. He said he had a great experience, super easy. I think selling your vehicle, buying or selling a vehicle is a process that people want to avoid after like moving to a new home or moving to a new apartment. Like after that, a headache, it can be anything to do with cars, buying and selling cars. And Carvana just reduces a lot of the friction, I guess, to wrap it up into a couple words.
Yeah. I mean, I would imagine, I would just have to guess. Okay, so you've got all the in-house stuff, but I would just have to imagine that the markup is pretty significant too. Like, I mean, because they're providing so much convenience to you, that obviously the price you pay to buy or the price you receive when you sell has to be significantly
And
different.
that's a really good point that you brought up. The thing is, so I know Chase, for example, again, this is why word of mouth is powerful too, because if you know somebody that's had a good experience, you might consider it. He said he got, when he sold his vehicle, he got more for it than he would have gotten elsewhere and anywhere else. It was his highest.
What? That doesn't make any sense.
Right? And then Gus and I were like, how are they making money? So went into the details about that. We'll circle back around to that conversation.
Okay.
But I don't know why you're so speculative, Dr. Jim. That's $6 on the open. Things are going well so far.
I mean, I mean, hats off to you on the trade, but I'm just like, man, times are tough when you're trading Carvana.
Hey,
like times are lean.
You can find something. Times are timing.
I mean, you got the VIX at what, 15 something now?
Yeah, it's sold an out of the money call spread. We got for Carvana quickly. We sold it for 228. Did that on the 21st. So we had it a couple days. On Monday. That's going to be
all right. Well, there you go.
That's going to be Carvana. Eli.
Well, let's do Google though. Let's do Google because we only have a few minutes left. I don't want to miss it.
Let's throw that on real quick. Right.
So, are you a Goog guy or are you a Goog with an L guy?
With an L?
The ticker symbol. You can do Goog like you did, or you can do Goog plus the L. It's basically the same stock.
I'm more of a Goog guy. Even though I'm more of a Google with the L. Even though I just typed in Goog, it's because my brain just saw Goog. That's why I typed it in. But typically I would
yeah. It doesn't really matter. It's basically the same trade.
More of a Goog. But no. I'm looking to get long here, Dr. Jim. I'm going to look at the 23-day cycle. UAL, I'm happy I chose a little bit further out in time. I'm not going to avoid every earnings trade, but if I want a little extra time, I will put a little extra time on it. So we're going to look at the August 15th expiration. What did you guys do in Google, Dr. Jim? You guys were leaning a little long, weren't you?
Yeah, a little bit long, but I think what we did was we did a strangle that was slightly skewed to the upside.
A skewed strangle on earnings?
Yeah, it wasn't much. It wasn't much.
Yeah.
But I didn't do it. We chose the September cycle. So I went like super long term.
Okay.
It was nice and wide. I'm like, all right, as long as there's nothing crazy from Google, we should be fine.
Yeah.
So that was our play.
I got you. I don't think I've done a strangle for earnings. I think for earnings, it's been one of those things where I haven't been the most comfortable just because I haven't purchased those outer wings. What would you have to say to that? I'm not opposed. I'm not against it, but I know that's one reason why I never really used a strangle on earnings is because I didn't have those extra wings.
Yep.
If you're a mentor, what would you say to that thought process?
Yeah. So my advice, if you were going to do it, I would actually treat it just like a normal trade.
Right.
So you're getting in around 45 days. I wouldn't do things in like the front week. I wouldn't even do like you got 23 days queued up. I wouldn't even do that.
Right.
I would go to September because by choosing the longer duration, it's going to essentially soften your exposure to all the Greeks. The deltas are going to be lower. The Vegas the Vega actually might be a little bit higher, but the volatility cross won't be as significant, which you could argue actually works against you. But it's going to be just a more gradual process. Whereas when you're in like a 2-day cycle, even like a 21-day cycle, the movements can be pretty severe. And so, you might not be ready to handle that. So if you wanted to do one, I would go to September. I mean, you could go to, the buying power is a couple $1,000, and so, it depends on, how much capital you have that you can utilize. But if you look at that trade right there that you have queued up, that's a 160-220. You're 30 points down and 30 points up, and you're collecting over $3 on the trade.
Yeah,
$330.
I'm just outside of the one standard deviation too, highlighted by that dashed line over here. And I'm outside of the expected move too. I know it's earnings. Anything can happen. Anything is possible. But to all the points you just stated, Dr. Jim, and considering those factors, I like it. The buying power 1900, not too bad. It is undefined risk. One of the biggest bottlenecks for that is usually buying power. Hopefully we get this IV crush. Hopefully we get a little bit.
So what's the play going to be though? What's the plan? Like, so what are you looking for? Are you going to go for 50% of max profit, or is this kind of an overnight play?
Yeah, it's just going to be more of an overnight play. I just want to see what that implied volatility crush is looking like. Hopefully it's something substantial, something significant, but I don't know. But I'm going to be keeping an eye on that IV, most definitely.
Okay. Well, here's one quick little note on that. I know we don't have much time left, but when you choose 59 days or 58 days, whatever, you have to understand that because there are so many days, you don't have as much of a chance for IV crush as you would if you chose like this week or even like 20 days, because the implied volatility crush that does happen, it's still going to happen, but it's going to kind of get lost in the shuffle of all the other days that are in that cycle. So don't be surprised if Google doesn't go anywhere, but you're not up that much money because you have so many days to go in the position.
No, most definitely. I mean, we got 2 months. We're going to be sitting tight in this one. We got a little bit of time. But great point, Dr. Jim. I think that was one of the caveats when first getting into options. He was like, I was getting the move I was looking for, but we had so much time value still left on the contracts. I wasn't seeing that move yet. But we're going to send this Google trade through real quick, see if we can get filled. See if we can get filled. Got an instant fill.
Look at you.
Instant fill.
Man, look at you. I like it, man. I like it a lot.
How much time do we got? We have 45 minutes. We'll see what the verdict is. Anything else to add before we head on out of here today, Dr. Jim? Google earnings after the bell.
Nah, man, I like it. And, I mean, you're giving me the inspiration, dude. Like, I'm going to hit some lateral raises tonight. I wasn't even supposed to, but I'm like, man, I got to catch. Look at this guy.
What's today?
I mean, he's filling the frame. I mean, I know it's a portrait frame. It's not landscape, but you're filling it, dude. It's man, that's pretty good.
Today's going to be it's going to be a nice chest day. Yesterday was legs. I'm very
chest day on Wednesday?
Yeah, I know. It's a little off.
That's
Again,
so
my
weird.
whole routine is thrown off. I don't even have an actual membership yet. I'm just using the weights that I got right now, but I'm like, I don't want to slack off too much. Today's a chest day on a Wednesday.
Well, you know where you got to go. I hooked your boy Gus up. You know where you got to go, right?
Where's that? The trenches? Where
you got to go to Quads, dude. Talk to your boy Gus. I set him up.
Quads?
Yeah, dude. It's the best gym in America. It's right there, right next to Wrigley Field.
Quads? I don't even like hitting legs. You want me to go somewhere called Quads every day, Dr. Jim? You really?
Yeah, that's right, baby.
Yeah.
Every day is leg day.
Grow.
Every day is leg day.
Yeah. No, that's going to wrap it up for today's segment. Thanks for joining us. We'll see how Google plays out here after the bell. Dr. Jim, we always appreciate you having your insights here and getting your thoughts. That's going to do it for today's segment. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Hello, everybody. Tonight here, another record high. How about that? The trade deadline next Friday, August 1st, is looming, but deals are coming, and with big countries too. Japan was last night. Apparently, the EU was today. So they seem to be getting it together, and the market's loving it. We have vaulted lifetime highs pretty much across the board. I mean, there are some exceptions like the Russell 2000, things like that, but on the whole, lifetime highs everywhere you look. It is a big day for earnings. This is the juicy stuff. We've got ServiceNow, Alphabet, Tesla, IBM. A lot of action after the close today. So let's jump in and look at the lifetime high charts together. We begin with a spider. And this fella spent a little time hugging this midline, but afterwards it is respected that as support, up, 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 and now we've vaulted higher like so. So S&P 500, S&P 100, et cetera, all cleanly at lifetime highs. The diamonds also finally burst forth. Just a few weeks ago, this was a real laggard. It was way down here, well beneath its own height. It had a peak here and here, and then back here, even with tech stocks raging, the diamonds, the Dow Industrials were a little bit mushy. They've really caught up, and today they've zipped higher so that the diamond ETF at least is at a lifetime high. I haven't checked the Dow Industrial average itself, the cash index. There are instances where the ETF can be at a lifetime high because of dividends, whereas the cash index isn't. So suffice it to say that diamonds never before seen levels. And the IWM, the small caps, in this case, also strong. These are up about 1.25%. The next major resistance on this, and it's not especially important, but it's really all we've got at this point, is this dash red line, which was the last principal lower high. So here's the lifetime high like so back in November. Here's the lower high, which was back in this February. And we're getting kind of close to it now, but haven't crossed it yet. So the lower highs are still intact for the small caps. Outside the US, also strong. Emerging markets, EEM, not at lifetime highs, but very steadily higher ever since the this April 8th bottom here. It's been almost an uninterrupted string of plus signs. So this is a recovery high on the emerging markets. The lifetime high, though, back from 2021, still intact up there. And China, also strong, not quite 1%. The only slightly interesting tidbit on this one is this trend line, which we're getting close to. This had been support for decades. Recently, as you can see here, and perhaps today, this line does represent important resistance, which we haven't been above that line since February 2022. So literally, this has served as resistance for years, and this is a new recovery high for China. So quite lofty if you consider that line to still be intact as resistance. Earnings last night weren't as thrilling as earnings tonight are going to be, but there's some big ones. Intuitive Surgical, ISRG. If you were watching this like I was last night after it was announced, at first it roared higher, huge gain. Then it collapsed lower, and then it went to almost exactly unchanged. So it looked like an EKG appropriately enough. So it was just all over the place. Once all the dust settled and you got into the day session, the market has kind of resolutely just sold the thing off. So ISRG, I didn't have a position in this. I tossed out. I was inclined to think it would go down, and it's down, not dramatically, but it is down over 2%. So the lifetime high very much intact here from early this year, and it's just been lower high, lower high, lower high, lower high, one after the other, like so. We did open strong this morning, but you can see a big bearish engulfing pattern. That is to say, the open here, the last, which will be the close before long, here gobbling up all of yesterday's bar. So bearish engulfing pattern right there. Now, the other item which went down and stayed down was Texas Instruments. It's TXN. And this is down quite hard. Texas Instruments down 13.5%. This is a pretty big company, almost $30. And its own lifetime high was very recent, right there, this very month on July 11. It peaked at 221.69, and we've shed about $36 or so off of that, most of which is today. So we've been easing down, and then just a plunge today. Opened weak, and it's been selling off ever since. So there's some lucky ducks out there that are long, some short-dated puts that have, I'm sure, big triple-digit gains. This was a real wipeout. Now, as much as I've been involved in tech, to me, just a semiconductor versus a semiconductor, that's not true. It turns out that companies like Texas Instruments are more about analog semiconductors, which to me is like a contradiction in terms, almost like an oxymoron, but it's a thing. And so if someone saw Texas Instruments getting wiped out, they might assume, oh, NVIDIA must be having a terrible time too. No, they're up. Digital and analog, different worlds. So TXM was down. That bled over in sympathy to ON Semiconductors, ON, which is down over 4%. And this is a chart I've mentioned a bunch of times because of this rather substantial top that it's got. And also microchip technology down over 6%. So these are sort of in the same genre as TXN, so they're feeling the heat from that. But like I said, all semiconductors are not the same, and so NVIDIA is doing just fine. It's up again, 3.72, over 2% at not a lifetime high, but in the vicinity. We were at a lifetime high just 3 trading days ago. So just kind of hanging out up here. And as you probably remember, NVIDIA is weird. They don't, their earnings are like a month after everybody else's. So they're very off cycle. So we're not going to see anything from them for weeks. Broadly speaking, as you look at SMH, the biggest component of which is NVIDIA, that one is up a little, 0.17%. Zoom in on that. And it's got sort of the same phenomena going as NVIDIA, which is lifetime high a few days ago. But through any selling over the past couple of weeks, it has consistently respected this level, 281.82, as support. If it cracks below that, that's a little bit bearish. It broke above it and it's been hanging out there safely ever since. But as I mentioned, NVIDIA is quite a ways off in terms of its own results. Another big NASDAQ stock that I mentioned yesterday is Netflix. And we spoke about this with respect to its long-term price channel and its shorter-term price channel. And it was that in particular that I mentioned how the next level of support on this would be the midline of this channel. So just to kind of, that was a lot to absorb, but basically this price channel goes all the way back to when this company went public 23 years ago. And it's been within it ever since, banging within support and resistance and using this midline as an important delineation between support and resistance itself. Shorter term, zooming in here, this smaller price channel is still pretty big, 3 years going. And the cool part is that as we got close to this line, which is the midline of that multi-decade channel, it hit resistance, got a little above it briefly, but went tumbling down. And what's going on now? Check it out. All the way down, and we're daintily perched right on that midline of the smaller channel. So notice how much smaller this drop is compared to yesterday. It's a little interesting that today's red, even though it's an up day at lifetime highs. But Netflix kind of needs to respect that really today's low as support. If we have another down day tomorrow, that really opens up the prospect of yet more weakness on this. Netflix has been doing pretty poorly anyway. Because of all this relief, the sigh of relief with these trade deals, a lot of your safe havens are selling off. Gold, GLD, which yesterday I mentioned was getting close to its resistance, is backed off again. So here's the lifetime high, lower high, and then a lower high yesterday. It really needs to get above this line to get the precious metals excited again. Still could do it. Today's a very modest diminishment. We're basically back to where we were on Monday. But yeah, no prize for that one. It did back off. And silver off just by the smallest little bit. And as I've mentioned, I really wouldn't consider this rally done until we reach that target up at 38.75. Still talking about commodities a little. Oil, USO also down a little bit, 0.2%. Crude oil itself is actually, the front month's up 0.17%, but USO is down a touch, really not doing much of anything there. And one other kind of anti-equity trade would be the bonds. TLT is down about 0.6%. This tremendous reversal pattern is still prospectively, it could prospectively complete. It's well a ways from doing so now, but it could happen. We're going to keep an eye on that, and it would require a push below this this giant pink zone I've drawn here, which is at around 82.68 on TLT. I believe next week, Wednesday, I suppose, is the next Fed meeting. No one's expecting really any action from that, but that's the next kind of key event for them. There's a term, a new acronym came out recently called the dork stocks. You may have seen it. I just seen it earlier today, but it's kind of like 2021 all over again. Meme stocks are a thing. Trading until recently ignored issues heavily is a thing. So you get things like, remember Tupperware of all stocks. Tupperware was a really hot stock for a while. And then Kohl's is one day, and GameStop back in the day, et cetera. So these sort of fourth-rate stocks become like super hot. And the dork stocks are the latest incarnation of that. They are an interesting sight. On the whole, long-term, they've been just horrible. Like here's the D of dork, which is DNUT, Krispy Kreme, a favorite treat of mine from my deep South upbringing. And as you can see, it's just been a horrible stock. It plunged from 20 down to like 2. It lost about 90% of its value. But recently, it has gone berserk. You can see the volume here. The volume was ambling along at 1 million shares, 2 million shares. Then all of a sudden, 145 million. It's just going to go insane. But these are it's like just hot potato. And we talked about this, you and I, before about open the past couple of days, which, by the way, is the O of dork. But yeah, Krispy Kreme here, it's up, but was much stronger earlier today. The O, as I said, is Open Door, which only back here late last month was a penny stock, and it blasted higher a couple of days ago, got up to almost $5. And what's it trading at now? Around 2.5. So a 50% drop in just a couple of days. And so we first talked about it here. And I likened it to musical chairs or a hot potato or whatever metaphor you want to use. And this is exactly the kind of thing that can happen because you get these huge volume, and it's just the greater fool theory for miniature equities. The R is rocket companies, which of the dork stocks is the only one that doesn't look absolutely horrible to me. And then finally K, which is Kohl's, which has also had a pretty bad time of it. And just look at this. It was down here around 7. Just yesterday, it was at 21.39. And what's it at now? Like 12. So another kind of 50% drop. So crazy stuff. And these are of note because it's call options that have exploded on these, the volume. So bonkers. Anyway, as far as earnings go, the 4 biggies that we'll be watching, there's ServiceNow. I don't have positions in any of these 4, but we'll be watching them with great interest. ServiceNow, NOW, like so. Alphabet, more popularly known as Google, GOOGL. And Tesla, we listened to the conference call on that one because that should be interesting for a lot of reasons. And then finally, IBM, which, as you can see, has been having a fantastic run for many, many months. So those are the 4 big ones there. Tomorrow afternoon, not so much. I think Intel will be the big one. But yeah, it should be a fun afternoon. All right, that's it from me. Hope you're doing all right. I'll see you here Thursday. Bye-bye.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend, and you know what that means. Time for this. Well, the last call, this big, beautiful last call, sounds enough as the E-mini S&Ps are up 41.75, just a skosh off of their highs, trading 43.88, about 5 handles off of their highs. NASDAQ up 53. NASDAQ was the weakest of the group. It's still the weakest of the group, up 55. The Russell's on its horse, Sadnov. Russell up $30.30. That's a 1 1/3% move. Big move in the Russell to the upside. Russell's been strong all day with the Dow up 1%, 450 on the Dow. Volatility in by 73 cents, about 15 cents off of its lows, Sadnov of 1805. We were waiting for volatility to do something today. Well, it didn't disappoint, but it went to the downside, Sadnov. Good for existing positions, bad for finding new
really good for existing positions for sure. I mean, how much longer are we going to be able to ride this little sucker down into we're at record highs and we're not even losing any money.
So when we were on the floor, we used to say, ride the wave, ride the wave. This wave seems to be, I thought the wave was coming on the down slope. You know what I mean? Like we were ready to, we were just getting the last couple of bumps.
Did you not listen to Jacob Perlman today? There is no such thing as a wave. You can ride efficient market hypothesis, but you don't know where it's going to land. You need to listen.
I try to listen, but I can't get over the mustache. Like the mustache just got me. Like it distracts me.
You're so jealous. He told me once.
I'm a little jealous. I'll say that. Yeah, I'll say that. Yeah,
he told me once. He said Tony's going to be so jealous of my mustache, and I know.
Sadnov, more options have traded in open today than Tesla, which has earnings today, if you can believe that.
I can't believe anybody trades an option open to tell you the truth. Where's the stock? I don't even watch it. At 2:30.
Oh,
really?
you're a meme stock expert. You got to watch it. 238, Sadnov. It's had a range today, not quite as large as yesterday, but about 50 cents up to 259, down to 205. It's 238.
I know this is going to be a stupid question, but what options are trading?
Well, you're qualified to say this question. Then go ahead.
What options are trading, sir? I gotta look. The two. Oh yeah, look at this. I mean, like, who's buying this? Well, I guess if you want to buy 1,000,
what's trading? 100,000 of the 2.5s, 50,000 of the 2s, 70,000 of the 3s, 42,000 of 3.5s. I'm talking with 2 days to go, Sadnov.
Go ahead. Why don't you? You know what? The 2.5s. Where's the stock? 237. The 2.5. What's the expected move for 2 days? 46 cents. Let's see. 46 cents. 237.
And get you right there, Sadnov. And get you right there. You might as well just buy the stock.
You're right. You might as well just buy the stock.
I mean, we love Tasty Trading, the brokerage firm, but you might as well buy the free commission stock.
You're right. You might as well. I tried. I thought there was, I mean, let's put it this way.
How about this, Saz? How about this? Buy the stock, buy the 2 put for 12 cents, buy the stock, and you basically have your 40-cent cap loss there, 45 cents, 50 cents, whatever it is.
I have to tell you the truth. I was thinking about this because I was doing an interview earlier today about this. If I was on the trading floor right now, I'd be 24 bid for 500. At least, maybe 1,000, maybe 10,000. I don't even know. On the 2.5s, I don't even care. Like, that's what I would do. Right now, I don't have any interest, like zero interest. Like, you couldn't. If you said what's your bid for the 2.5s, I'm not even 24 bid, and I'm not at 25.
I could understand that. I really could. Earnings are coming August 5th.
Earnings. You think earnings are going to matter? Earnings are going to show that the company is bankrupt. What do you want to know?
A dollar expected move or less for earnings.
Well, a dollar expected move is like 50%.
Yeah. Yes, that is true. When you put in perspective like that, yes, that is true.
Yeah. Anyway, so
I have to mention this before you go any further because sometimes you don't say I mention it. You've got Tesla, Google, Now, if you're interested, IBM, CMG, TMUS, Las Vegas Sands, after the close, AAL, and Love coming tomorrow.
I do have a position TMUS, I covered it. Sorry. I didn't even know it had earnings. Anyway.
My Taiwanese sources say you would be 20 bid at 50 cents. Okay, if they're 24.25, you would be 20 bid at 50 cents.
I'd be at 20 bid, no offer. I'm not offering. I'm 20 bid. Anyway,
unbelievable.
I did roll some positions today. I rolled about maybe 30 positions today, so not bad. Got to jump on it because we're going to be busy the next 2 days. So I just decided to roll some stuff.
Yes.
For earnings, I'll give you a brief little thing. American Airlines, I did not trade. TMUS, I had a position on. I actually covered it, so we're flat in there. Love, did not trade it. American Airlines and Love did not trade either one of those two. There's no premium in American Airlines. Nothing.
Yeah.
In IBM, we had an existing position, so I just widened it out. It didn't really do much today. We're short the 255, 315 strangle in August. I'm not going to touch it. I'm just leaving it. I don't care.
250, 255, what?
315
in August.
Yeah,
I mean, you're outside the expected move. Yeah. I don't.
It's like a $4
strangle.
Yeah, whatever. Yeah. That's what I got in there. I'm bidding for bonds right now.
IBM's expected move is $16. Just to give you.
Yeah. Traded bonds a couple times today. Bought them on the dips. I am 07 bid right now into the close. Hopefully they'll take them down a few ticks in the close and we can scoop some up at 07. Biggest winner for us today was, believe it or not, Coinbase, down 8.5. Biggest winner, they killed premium
Premium and Coinbase today.
They killed Premium and they killed the stock. You were leaning a little bit short, and they annihilated Premium. It's a good win for you.
Yeah, another good win today was Roblox. The biggest loser for us today was SPY. That was our biggest loser because we're short a lot of deltas in there. On the other earnings stocks, the two big kids are Google.
This is correct. Google has earnings IV rank of 38, an expected move of just under $10.
We have a small position in August. That's it. We have a strangle, the 170, 215. I'm not going crazy in Google. I don't care about it.
170, 215. Well, the volatility is telling you shouldn't be crazy about it. And if you're trading it at all, you probably should reduce your size.
Yeah, and they killed Premium in there today, just so you know.
Does that lead you to believe that it might be less of a move than even what's implied? I mean, that's what it's setting up to be.
Not really. I mean,
so?
It's just I just don't think it's that interesting to play, to tell you the truth. So, so I have just a relatively small position in there. And then the last one is Tesla. Now, I didn't know what to do in Tesla. I've been looking at this thing on and off all day.
You just bought that, right?
In Google, yeah. Okay. No, I just lightened up a little bit. I had too many short options on. In Tesla, I didn't do anything. Like, I looked and looked. I huffed and I puffed, and I sold some junky July Premium. But I don't know. What do you do in Tesla?
Yeah, I don't know either. Tesla IVR of 16, Thomas.
I know that's what held me back. 17 now, but whatever. It's crappy. I don't like selling Premium with IVR that low. And Tesla's a pretty active stock, like you said. It didn't trade that much today. It's very undertraded for this earnings cycle.
Well, compared to Mighty Open, yeah, sure.
Well, compared to past Tesla cycles too. Yeah. So I didn't do much in Tesla. I took my, I sold some July Premium, some junk calls, junk puts, and that's it. Just to, make a little money. So,
I think it's probably both sides. I agree with you there.
Yeah, I did tiny crap. I didn't do anything.
Bias.
Yeah, I didn't see the play there. A big movers today, and
Nat Gas
has been on a crash mode the last couple of days. I've been defending the bone. Gold was in crash mode today as well.
Gold had some two sides, Sosnoff. I mean, gold was higher this morning. I know I had gold short calls, and they were losers, became nice winners, and now they'd be even better winners. But gold
was down big. Natural gas was down big. Bonds were down big. Notes were down big. Those are most. Bitcoin was down a little bit, not that much. And those are kind of the big losers. Surprising thing for me about the market today is the NASDAQ was, on a relative basis, was pretty weak. Apple down, Microsoft down, Google down, Netflix down. The big kids were, Coinbase down. RBLX was down all day. Tesla was down most of the day. I don't know if Tesla's down now, but it's up 60 cents. But that's all. I have stayed away from anything with low implied volatility rank, just because that's what the research says. That's what we're doing.
Yeah.
So I've kind of stayed away. The rally today kind of surprised me. I didn't have much on at the time. I got a little bit short this morning, so that didn't help. But that was a pretty strong rally at around 10:30 this morning, and it never sold off.
Yeah. Yes, it was. And no, it never did sell off. You are correct. Yeah.
Once they started moving, they were up 30. They hung around there for about 2 hours. Then they're up 40. They hung around here for the rest of the day. And I just don't see I never saw an opportunity to jump in and sell them. I thought today was going to be possibly a weekday, especially with the NASDAQ really heavy, but never materialized.
Yeah, it never materialized. I was on the same page as you, although before we got off the show around 9:30, I said, you can cancel Crash Sosnoff. We're not doing anything. Volatility started to downtick, and it's been soft all day long. 1820. I mean, they really took volatility out to the woodshed. Going into Google, going into Tesla earnings, I mean, you would expect volatility to hang in there, but no bueno. Setting up for a surprise, Sosnoff, when you least expect it. You expect it?
I mean, yeah, this is yeah.
This
I
is
think
about
so.
as complacent as you can get a market. Would you
Yeah.
agree? I mean, this.
Yeah, yeah. Today was. I don't even think we did 1,000 cards from now.
Even the S&Ps.
Yeah, I don't even know
Yeah,
if we did.
960 right now. Yep.
Yeah. Yeah, just kind of a slow day. This is the anniversary, by the way, of Mark Burley's perfect game, in case you cared.
I didn't have that. I didn't have that today. I'm sorry. I didn't have that on my
2009.
scorecard.
We were watching it on the trade desk at Thinkorswim, and it was 2009, and everybody was going crazy. It was an afternoon game, and the markets were still open. And yeah, for those of you that don't remember, we will remind you. Mark Burley pitched a perfect game. Anyway, let's see what else do we got going on here today. Now we'll watch the earnings. What time is it? 2:47. Yeah, we'll watch the earnings.
You got a little time. You got a little time before you have to worry.
I don't know if Tesla. I'm not sure. I don't think if Tesla and Google were down big, they may move the market a little. If they're up big, I mean, I think they'll move.
Well,
the
certainly
NASDAQ.
going to have a bearing on the Nasdaq.
Yeah, it's certainly going to have a bearing on the Nasdaq, and you'll be able to watch that. You'll be able to watch that right after the close. That's for sure. I don't. But the crazy thing is, Netflix had no bearing.
Yeah, none. Yeah, I
Netflix
agree.
dropped 100 points this week. It hasn't shaken anything, not even for a tick.
No, you're right. You're right.
I think Tesla will. I think if it's an up move in Tesla, it will move the market. If it's a down move, I don't know how much it'll move it. I think Google will be kind of a little bit bigger play as far as the market's concerned. I think Google can hurt the Nasdaq if it's ugly, and obviously it'll help the Nasdaq tremendously if it's up. But we're at record highs. Not surprising anybody. Yeah.
Good news is good news, and bad news is good news. It's all good news, Sosnoff.
Good news is good news, and bad news is good news. We know how this works until it reverses, and then bad news is bad news, and good news is bad news. The market has its own way of interpreting everything. So
every dog has their day, Sosnoff. Every dog has their day.
Yep. The Bat and I will be doing the show tomorrow morning. We're going to be on till about 9, a few minutes after 9 when we finish up with Dylan on Hear Me Out. And then we will be turning it over to Nikki and Mike, who will take it into the close of the morning show. We're going to
class up to join a little bit, Sosnoff.
They'll do the market measure, and then they'll chit chat with Scott for a little bit. And then we will go to the weekend. On the weekend, on Friday, Mike and Nick will be on the show again, doing the show in the morning for me and Tony. We'll be out in Denver doing the live trading session. So if you haven't signed up yet, please sign up. And if you're coming out to Denver, can't wait to see you on Friday morning. And then if you miss Denver, we'll be out on Sunday night at 4:55 for first call. Myself, Chris, and Ilya. All right, let's see what else you got here. So a quick look of the of my watch list, Bat, just to see if there's anything. I'm going to give you a couple stocks that have been. One stock is UNH that's been grossly oversold. It finally had a bounce back today. That stock has been a PIG pig.
No bigger pig than Costco, which is basically unchanged.
Still not another update. I mean, how long do we have to wait for Costco to have a bounce?
How long do we have to wait for Costco to get to 985, Sosnoff? Well, let me tell you, you've got about a $33 expected move over the next 23 days. So if it gets there, you probably should sell it.
Okay. The VIX one day is up about $2 today, which is 20%. That's just on the basis of these earnings coming out overnight, because it's the 1 day and it's the 0 day option. So that's all. One stock that's been on a crazy tear as of late has been Nike. So I don't know if you're trading it all, but it's been from 70 to 77. Another stock is Boeing at 233. Big moves, big
move, big.
And if you're trading Intel for earnings tomorrow, well, Godspeed, but it's up 23 cents today. But the puts have no juice in them, so whatever you want to trade in there.
And Intel's tomorrow after the close. You don't have to do it today. Just letting you know. But if you're looking to sell puts, you probably should sell them today, because the stock obviously going to be higher tomorrow, because stocks only go higher. Correct, Thomas?
Yes, that's true. So sell them today.
There we go. We said it.
I mean, I sold puts in CMG today, which has earning. I forgot about to mention that CMG has earnings tonight, and the stock was down this morning. It's probably my best trade of the day, just selling crappy puts in CMG. So
it would have been a better trade if you sold big fat puts in CMG.
Yes, it would have been better if I bought the stock. If we're going to go that far.
Good point.
Let's see what else. If there's anything else jumping off at me, I don't think so. Big move today in the Dow, up almost 500 points. Dow and the Russell finally made a little comeback. But a lot of sector rotation today out of NASDAQ into everything else. I don't think that holds, but just, maybe people are nervous about earnings today. Who knows?
You don't. Oh, okay. Yeah, I get that too.
How you playing? Are you playing anything at all? I mean, I'm long.
Last earnings play I did was Netflix. It worked out. I sold puts and I was wrong on the direction, but at least the volatility seemed to be there. I don't see the volatility in either one of these. No. Personally, I don't see the volatility in either one of these plays.
I sold premium in both Google and Tesla. I sold puts in CMG, and that is.
I get it if you want to be small and you want to participate. I don't know. I don't see this as kind of Mr. Opportunity here. All right. Well, when SPOO's closing on their high, I kind of need to. Oh man, they are closing on their highs. 46, Thomas. I thought we would get a little bit of a sell-off, maybe of 8 or 10 handles, but we're really getting a buyback of about 3 handles. But with 7 minutes to go, anything can happen.
Yeah, they're thank God volatility's down a lot. It's saving. It's saving the good kids.
Yeah, make it hard for new positions though. I'll give you that. It's definitely challenging.
Yep. All right. Well, we've got the overtime boys that are waiting in the wings, and we've got a couple extra minutes to spare, and it's our last moment with them. So I think we have Josh sitting in today for Mr. Spivak. And
we do. Last, because we're going on a 4-day bender, me and you. We're in the middle of it. Tomorrow we really get in the teeth of it.
We got Chris in New York, Dylan in parts unknown, and Josh in Chicago. So, hello, boys.
Good afternoon.
Good afternoon.
Hello. I'm actually not in Chicago. I'm closer to Wisconsin.
Okay, well, you count as Chicago, so just pipe down there. Suburban boy. All right, boys. Well, Chris, we're right near 6,400. Can we hit the sell button yet? Because I thought we could hit the sell button this morning, and it didn't work.
I thought we could hit it at 62.
Listen, I took off my longs in the NASDAQ earlier this week, and I've been leaning a little short in the S&P here, so it's not super – I'm not comfortable ever being short for the record. The Russell's also breaking out. You can't ignore that. So Russell breaking out, S&P closing out at a high. The market really wants to melt up still, I suppose. The rotation is good, though. I mean, it's industrials, it's healthcare, which has been lagging. There's a growth flavor to it as well. It all just feels so ethereal at this point, though.
Stop making me so bearish. All right. Before we get to Josh, we'll go to Dylan. Dylan, throw a little cold water on.
Listen, I'm the blind optimist these days. I mean, I was on with Angeline this morning in London. She was trying to make me feel pessimistic. I refused to take the bait. My man Chris Vecchio, who's been my most reliable bull friend, is heading for the hills. You'll have none of it. I don't see the problem. I mean, I just don't. I don't see the issue. The tariffs are not going to really happen. So come on,
there's no
the
issue.
economy's fine.
You're right. There's no issue. They just go higher. There's no issue. There's no fear.
That's right.
There's no fear. So
earnings are going to be good. You got your Google, you got your Tesla. What's your problem? I don't understand what the problem is. You just need to relax.
No, but we don't know what the problem is, but we're about to find out because we've got Josh here, and Josh is Mr. Negative.
The world's coming to an end. The world's coming to an end.
There you go.
I'm in my bunker.
I knew we would find somebody that knew the world was coming to an end.
Yeah, I mean, everything's great. We got 15% tariffs that we didn't have a year ago. We've got, fundamentally the market's overvalued. But what I really want to know
Wait
is
a minute.
because I've got
I'm the only one here with a kid who buys something from China. Now I had to pay about $80 to UPS. Who else has paid any money to UPS here? Anybody?
Who else orders anything through UPS?
Okay, that's my point. There you go. So who are these tariffs hitting on this panel here? And by the way, Dylan, I got to say one thing. I saw some unrelated to Josh. I apologize. We'll get back on your rant in a minute. Dylan, I saw some pictures of you. Looking quite handsome, my friend. Looks like you dropped a little weight. It's okay for a man. It's okay for a man to compliment another man. Sadnov doesn't know how to do it, but I can do it. You look very good,
I appreciate
Dylan.
that. Thank you.
You're welcome.
Thank you.
You're welcome.
Thank you.
Well, he's
back to
now that I'm a Milan fashion
over, Josh.
He's a
Milan
model
fashion
now.
executive.
He's an international model. I mean, he can't be.
There are standards. There are
he's a
standards.
foot model. He's a leg model.
There are standards.
Now that's where I draw the line. I'm not looking at Dylan's
model.
It's good money. It's good money.
Listen, I've got 2.5 minutes. I need to know because I may have to change this. How did you guys play Tesla and Google? Because I may have to change my position.
Did you not listen to the show?
No, I did.
Okay.
But I'm kind of with you. I couldn't find anything in Google that I liked.
And by the way, Josh, I don't know if you know how this show works, but you don't have any time. You don't have 2.5 minutes. Okay, you are you get to talk. You get to talk when we include you.
I don't ever get included. This is the first time I've been included.
I know, so I would use your time wisely here. You got about 20 seconds. What do you want to say?
Thank you for having me.
Okay, that's a good answer. All right, Tony. Before we get to the numbers, because they're coming out, we got about a minute left here before before all the fun starts.
Before all
NASDAQ higher or lower? They just bounced the NASDAQ about 25, 30 handles, whatever. But you think the NASDAQ gets to up 100 from here or down 100 from here? You can only choose 100.
I can only choose 100. I'll take
100 higher, 100 lower.
NASDAQ's been a little weak. It's got some. You could say that it has a little bit to make up for. I think if the NASDAQ goes higher because Google and Tesla are higher, I believe it's a sale. I believe the highs will be made overnight. If you get that.
Ooh, Dylan, what do you think?
Yeah, higher for sure. I don't even debate it. I mean, it's just
not even
for me,
debatable.
It's
I like it.
Plus 100,
Josh?
maybe 2.
Josh, 100 higher, 100 lower.
100 lower.
Josh is 100 lower. Dylan is higher for sure. Tony, higher but making highs. Chris, it's your last word.
Talking my book, I hope it's lower, at least over the next 10 days.
Well, we were really talking between now and tomorrow morning. It's kind of binary for us.
Well, then immediately lower between now and tomorrow morning for my book.
You're allowed.
If they're going to surprise, I think if they're going to surprise, the surprise will be on the upside. If they're going,
surprise.
You mean to tell me you think there's some public playing into the downside? There's a surprise. It's a surprise to the downside.
No, I'm saying I think if there's a surprise movement-wise, the surprise is to the upside. I think personally that the downside will be very short-lived. Like I'm more worried about them opening down and going higher than opening higher going lower.
Wow, I feel so good about my call right now. This is amazing. We're on the opposite sides.
They just
Nothing
the
makes me feel better
S&Ps.
because we've been on the opposite sides of the market for the last month, and there's only been one winner, and he's got 2 thumbs pointing at him. Thank you very much for your time, Sadnov. Thank you very much for your time, Josh. Thank you very much time for you, Chris. And my man Dylan, you're looking marvelous. Thank you for your time. Peace.
You,
Overtime next. Love you guys.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. It's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Your crypto needs a wallet.
And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Well, Dylan, I guess it's you and me.
We're missing our host. We're
Don't know what
befuddled
happened
and confused as the two panelists. As the two panelists awaited our host, who now apparently is gone missing.
Well, this is my virgin endeavor on this show, and that threw me. So hi.
So the only question is, do you have the ability to control the charts and the screens? I bet you don't.
Not even in the slightest bit. No. So it's gonna be a lot of talking until Chris figures out exactly what he did wrong.
Well, it's a pleasure to see you in public for the first time.
Yeah, I mean, this is actually the first. This is the first time we've ever been on air together, and we've been working together since 2020, I believe.
I mean, longer than that.
Since the 2020 election. Yeah, maybe, but I do know. I remember the 2020 election. Doing a bunch of stuff for that. So, I see. Mr. Vecchio has rejoined us. If that was,
I guess I'm back,
Chris. Well played.
Yeah,
good. Appreciated that.
Yeah, no, not my intent. You got to love when the internet just flashes off here. I'm assuming that we're live and you guys are talking about the Google earnings that have just come out.
Well, we were just actually talking. We were waiting for you to arrive to tell us about the Google earnings because we don't have the ability to show the charts. So please tell us what's going on.
Well, for those that are here, I suppose, welcome to the show. Josh sitting in for Ilya today, as he's previously explained. we have a market that's closing up here at all-time highs, and Google earnings are out, and they are better than expected. Google's beating EPS 231 versus 218. Expected revenues were higher, 96.43 billion versus 93.97 billion expected. Their cloud revenues, that's where people hide the AI, those are up 13.62 billion versus 13.14 billion. Here's where some of the numbers get funky. CapEx was up at 85 billion versus an estimate of 73.31. So Google down here slightly after hours. We were looking at a chart that was closer to 190 prior to the release. We touched a high just short of 196. We're now back down to 185. But let's go around the horn here as we look at this market, which an S&P closes up near all-time highs today. We tagged 6,400 right around the close here in ESU5. The NASDAQ lagging a little bit, but still strong, up 0.5%. The leader in today's session is the Russell 2000, up 1.46%, buttressed by the good news that we have some trade deals coming down the pipeline. Last night, Trump announced that Japan and the U.S. have agreed to reduce Japan's tariffs on the U.S. to 0%. The U.S. will be employing 15% tariffs the other way. With the EU, Financial Times reported today that a 15% tariff rate across the board is coming down the pipeline. So markets, good news is good news. We're not going to get the worst of it come August 1st. So much for those fear Mr. Radigan. But I will say that bond yields were higher on the day, and the dollar was weaker, not benefiting from them. And that kind of throws me for a curveball for the sell-off in gold and pullback in silver related to the trade wars potentially coming to an end. I digress, though. We have a lot to cover here in today's show, and we have a new guest, Josh Fabian, who does not come on air all that often, but we had a need, and he raised his hand. So thank you, sir, for joining us in today's session. Dylan, you are the relentless bull around here, though, and you're the only one who's been leaning long stocks. So with that said, what's going right for this market that apparently I was clutching my britches over?
I mean, what's going wrong, I think, is the question. I think the what's going right is that everything the market is afraid of tends to be an illusion. I'm saying specifically with the tariffs and the economy, as evidenced by the earnings, is as strong as ever, and inflation is a basically known at this point. It's priced in. Tariffs are a known discounted item that's going to be less and less relevant as things move forward, and the relative economic strength is high. And the liabilities of the American presidency are being worn in the currency. They're not being worn in the financial markets. So I just don't see why the financial markets, the stock market, the equities market doesn't continue to perform.
Josh, this is a market that's going up to new highs here. I'm waiting for those IBM and those Tesla earnings as well. So if anyone sees those having come out, please let me know here. I just said that and they literally just popped up on my screen. So the devil listens sometimes.
Tesla or IBM?
IBM, EPS at 231. So let me just pull this up on the screen here, in fact, before we start talking about it. IBM out here. I would argue that it's looking a little bit soft.
Doesn't look good. Doesn't look good, Dylan, Mr. Optimist.
Let me find some of the deeper numbers here, though, because I want to see these flash across the screen.
I don't care about IBM.
Well, 231 versus 265 expected on the EPS, but Dylan, it's still a company that makes $17 billion a quarter. It's not nothing.
But it's not a bellwether for anything. It doesn't indicate anything.
Oh, okay.
Talk to me about Google. Talk to me about Tesla. Talk to me about Meta.
It's not part of the modern economy. I'll grant you it's not part of the zeitgeist anymore. But
all right, so go ahead.
Go ahead, Chris. No, I was going to say that you have the S&P trading at, I believe, about 22 times forward earnings, if I'm not mistaken, which is well above the 10 and 5-year average. So this market is priced for perfection. And I think you saw the ramifications of that last Friday when Netflix came out and, by all accounts, it was a stellar report and the stock sold off by 5%. So I think that, this market was giving you a hint then. It was a little bit frothy. And if you wanted any more evidence of its frothiness, you got back into this meme mania this week with I mean, Kohl's, and yeah, that Kohl's taking off, Krispy Kreme. I mean, so I think that this market is starting to get out over its skis, maybe just a little bit, and say what you want about the trade deals that are all of a sudden coming to fruition. We're still, even at 15% on a lot of these deals, still 15% more than what we were at in January. There's inflation that's bubbling beneath the surface. There's structural damage in the job market. We're seeing even the jobs that are being created. If you just peel back the layers a little bit, you're seeing these jobs are in government, they're in education, they're in healthcare. And by healthcare, I mean like home healthcare. It's not innovative jobs. So
Sorry,
it's not
Tesla. Let me cut you off there for a quick second. Tesla earnings just came out. EPS misses at 40 cents versus 42 cents expected. Their revenues were still $22.5 billion versus an estimated $22.64 billion. So small misses, but stock trading up here after hours because, again, Dylan, as we've covered here on the show in recent days, this has been so beaten down sentiment-wise. My own personal bias, as long as the company remains a going concern and it's not shutting its doors, it probably has a big discount attached to it, given recent events around Musk et al. Either way, though, Tesla EPS, again, slight miss here. Slight miss, 40 cents versus 42 cents expected, but stock trading higher here after hours right now. Josh, you were saying before I interrupted you.
Just that, you have these macroeconomic issues that, need to be considered. But turning to Tesla really fast, I'm interested in what they have to say. I think the risk here is that this brand has been politicized, and was it the investor disclosure risk or first time investor disclosure risk for SpaceX?
Yes, that came out yesterday.
Yeah, that they acknowledge that Elon could potentially return to politics, which I've never heard of that before in a disclosure risk for a company. So that really caught my attention. So I think that, there's some questions about this company, and let's see what they have to say on their conference call, what he specifically has to say on this call. I think that people want to hear that he's dedicated to this company. Not only that, but also what are the implications going to be for the lost subsidies moving forward?
Sure. Tesla here. I know that we had Mr. Westwater that was still leaning long vis-a-vis the short put spreads in Tesla. Those would be working out well. Dylan, other side of these earnings, obviously we want to hear what Musk and company have to say, but this is a chart that feels like it's coiling and ready to explode. Is this the moment where we see Tesla finally take the baton and help the NASDAQ stretch its legs to new highs?
I mean, maybe. The problem is Tesla's not performing based on its quarter. It's performing based on, the sort of the ever-changing perceptions of the future value of the company through the lens of this Muskian empire. And that's an almost impossible thing to price. I mean, for sure it is set up to make a run, but whether it happens right now, I don't know. I do think that it's good. I think the more time that passes between the period of time when Musk is super high profile in the political sense, in the Oval Office, just all over everybody's television, and the less public he is and the more he does not exist as a public figure, the more he just exists as a semi-normal CEO, the better off I think the stock will be. I think that just booking a couple of quarters, I think I mentioned this yesterday, but just putting the half-life of the politicization of the company in the past and allowing the company to become more and more what it is as a company, as opposed to having it be a proxy for Musk's political activities. And so I think just getting the quarter well behind, now getting 2 quarters well behind, I think is very valuable in this context. And so I think that that's actually the most important thing, is just adding time.
Time solves all wounds, as they say.
Mm-hmm.
And getting more time between his stint in the administration and today could be helpful. Certainly from when he left in May, at the start of May, we know that he's going out the door. The share prices are up for what it's worth. So Elon Musk leaving government hasn't been bad for the share prices. But Dylan, it still feels like a late April environment where going into earnings, the stock price wasn't following the rest of the Mag 7 complex. And as bad as the earnings were, they weren't as bad as a lot of people still feared. So 336.64 here. The share price is closed at 332.56, so slightly higher after hours. Josh, I mean, we can complain about the market feeling overvalued. CTA positioning now is in the 90th percentile. As Dr. Data pointed out today, similar peaks in allocation. Let me just pull this up here. Similar peaks in allocation. Late 2014, early 2018, late 2020, mid 2023 have often been followed by declines, although not always immediately. This can be interpreted as CTA as being potentially vulnerable to reversals after building up large long positions. So I have my misgivings about the market feeling a little crowded right now near the highs. And I think the data supports that as well. But could this just be a case of rebalancing, right? Tesla just goes up and then this market has another 5% in it. We can't ignore that possibility.
Yeah, I mean, yeah, absolutely. The thing that scares me is when you start to see these meme reactions. That to me is the desperation of people saying, this rally was talked about anywhere you looked as the most hated rally ever. And then it was the rally that nobody wanted to buy. And they were just, and eventually that frustration built up. And I think what you saw was it culminated in the meme stock frenzy. I didn't see where any of those meme stocks closed today because, quite frankly, it was just too aggravating to watch. But that's the type of stuff, that type of behavior is what really makes me get a little bit concerned that, hey, when we start throwing, before the market had even opened this morning, was it open had already traded like 7 million shares. One of them had traded just an astronomical amount of volume. It's like, okay, it's not a casino. And when we start treating it like a casino, bad things happen. So yeah, can we run up another 5%? Absolutely, 100%. But are we getting a little bit careless? Yeah, I can make a pretty good argument for that.
But I mean, by that, can't you make it? We've been careless for a decade by that measure. I mean, I just feel like the market is indifferent to negative information, for a week or two.
Sure, that's a fair assessment. But I also think at some point, people do want to take some profits. So I don't think we're in danger of a 20% correction. I'm not arguing for that, but can we see a 5 or 10% correction? It was around this time last year that we saw something like that when you saw the yen carry trade come off. So I think this market's been kind of reckless going back to 08, 09, when we saw the quantitative easing. So I would agree with you on that. I just think that, at some point people start to say, wait a minute, this is getting excessively reckless. Maybe we take some profits, just enough to scare the children. Then we jump back in and we get reckless, but not so reckless that we can't justify it.
Mm-hmm.
There's we talk about getting reckless in this market. I'm not surprised. Dylan, we called this out on Monday that we were going to see some of this action. We flagged the share prices of RKT, Rocket companies, as a potential place to look, given its very extreme short float, sitting right around 50%. It topped in the market overnight. If you look pre-market on the 4-hour time frame, this hit a high of 1970 overnight before coming back in. There's a difference between like meme stocks rallying, like the Palantirs of the world and the Oklos and the SMR, names that are attached to thematic ideas that you find in FinTwit, like nuclear is going to be the next big thing. And then there's when like the crap starts to rally and pigs fly. And this feels like a pigs fly environment. But is that all that different than what we've seen in recent years?
No, that's kind of my point. That's why I feel like oddly bullish compared to you, because all of a sudden you're saying you don't like the quality of the names in the rally, as if the quality of the names and some of the activity of the last few years was anything particularly impressive. I just don't understand what. I still am a little bit perplexed as to why you're more cautious now than you were in previous moments of effervescence. I'm not saying the market's not effervescent. It's obviously effervescent. I'm just saying I've never seen you view the effervescence with such a cautionary perspective.
I think 3 years in a row I've lost money being long the market through the summer.
Got it. So it's just the seasonal. It's the seasonality. You're like, I'm not doing this again.
I mean, July 22, the market went up a little bit, but I was leaning long then, and it came right back down by the end of August and still headed lower into September, October that year. We got the pullback in July 23, which culminated in the lows in October and November. But then again, great time to buy. Last year, we were dunking on Mike Wilson, the Morgan Stanley strategist, who has a knack for flipping sides at extremes. And sure enough, when he flipped long last July, that was pretty darn close to the top. So, unfortunately, I did see his research note for his second half outlook, Dylan. I just saw today that he's calling for a pullback in August and September now. So it feels like
research.
Well, no,
you're saying your operating principle is to actually be contrary to him.
For the last few
years, that you would prefer to be contrary to him anyway. You would not. Your first choice is not to be on the in alignment with Mr. Wilson. Is that what you're telling me?
He's a pretty interesting timing tool, is what I'll say there. But listen, if this market's going to keep squeezing, there's two things to keep an eye on, and that may mean adding a sprinkle of more upside to counterbalance some of the late August puts that are being held, and maybe even those need to be rolled up from my point of view. But I see a NASDAQ here with a top set of the range of 23,100, give or take a few points, then up to about 23,400, give or take a few points. A breakout would call for a 300-point measured move on top of that, and looking for further squeeze into the end of the month. We look to the July 31st expiration. We would add 300 points to that, 23,700, short the 23,800. It could be in the neighborhood of a 4-to-1 risk to reward trade. Not dissimilar from what was just done the last time the NASDAQ longs were taken, when it was looking long the 23,350, short 23,500 call spread. That was closed out earlier this week. This may have been the dip opportunity to buy, Dylan, right? We pulled back to former resistance, turned support, and now we're rallying. But the measurement still calls for an additional 300. And so I look at that, and I look at the Russell here, which this guy's been trading sideways for the better part of the past few weeks, and it may finally be breaking out itself today. I think even Ilya would agree that we've broken horizontal resistance here, having closed above the previous cycle high. Not just the closing high, but the absolute high. So a Russell breaking out and an S&P hitting an all-time high and a NASDAQ sitting right there and surviving Google and Tesla and those very important IBM earnings. Why not squeeze up a little bit more? Why not keep the party going for another week or two? So why not keep the party going for another week or two? Send it.
There you go. That's my boy.
Let's get back on.
Boy. There we go.
Dylan, you're right, though. I don't know what's going on either with me. Maybe it's like it's my birthday, so I'm feeling a little more conservative.
Today's your birthday?
No, last week, but it was like I'm feeling a little more conservative here.
You're losing your. You need the eye of the tiger, man. We need to get you back in the ring. We need to get. You need to start doing some pull-ups, some push-ups. So you need to get your confidence has been shaken.
He needs sprints still.
Sprints and push-ups.
There was something romantic about the idea of the seasonal peak of the market this year falling on my birthday. And it's like, I just can run this up long until my birthday, blow up some balloons, and then the market will go pop on the other side of it. Like that seems like I'm the main character kind of syndrome. So probably
just sort of self-referential.
Yeah, very main character syndrome.
That's what you consider romantic? That you tell your wife that? Isn't this romantic?
I whisper sweet nothings. S&P is going to 64. We're back.
Tesla's pulled back a little.
My boy is back in the game. Enough of this nonsense.
I feel a
Here
little
we
bit better
go.
about my little short position here.
Dylan, isn't the ethos that the Trump tax bill is funneling all this money from the bottom to the top? The bottom 80% are getting tax hikes. The top 20% are getting a tax cut. The top 20%, they don't throw money back into more blue jeans and knickknacks or trinkets. They
goes into
invest
assets.
in the market, goes into assets.
Yes.
That's the macro trend.
And the tariffs are not going to be that bad.
They're going to be bad. They're still going to be bad. It's just it's going to get passed. It's going to get passed on to consumers. We were talking about this with Westwater earlier today on Futures Power Hour. Target just announced that it's no longer going to do price matching with Walmart or Amazon. And Dylan, was it last week we discussed this on the show, how if companies are going to pass on price pressures, it's really a 3-stage effect. First, they negotiate with their suppliers, try to get them to eat the costs. If they then have to think about ways to pass it on and to maintain their margins, they start cutting promotions. They start cutting sales and discounts. And then they go into their revenue management tactics of raising prices, hoping that the volume down is offset by the prices up, and they can come out on the other side with their margins intact. And so Target's announcing they're ending their price matching with Walmart and Amazon. That's a phase 2 signpost, which means phase 3 probably comes in a few months. And at 14% of US GDP, just thinking about the math here, imports are about 14% of GDP, assuming no impact to exports, increasing the effective tariff rate from 2 and a odd change percent, 2.3%, up to 15, maybe 12 with substitution effects. Still talking about a percent decline on the high end of GDP over the next 3 years. Still talking about prices up a little bit more. But as we've seen over the past few years, tariffs haven't hurt this market. We've had tariffs in play and the consumer just adjusts and just keeps spending. Maybe this time's different. Maybe it's not. So wrong to get bared up the past 2 days. That's all I can say.
There we go. Now we're talking. You still have your insurance policy from the other day, so you're not just brazenly and nakedly long here. You still have your little backup plan. But the underlying issue is massive flow of resources due to the Trump tax bill into the economy. It will all go into assets, and there's no sign of real economic weakness despite inflation, despite the tariffs, despite anything. Any indication of relative economic activity is favorable. And, so I just don't see how you don't sort of hang on to all those things and just enjoy them.
Josh, are you going to stop worrying and learn to love the bomb like I have frequently done?
Well, I don't understand any of those things that you just explained with the 3 stages of grief or whatever that was you're talking about. I mean, I tried to follow. But I do know that when GM announced their earnings, they talked about eating over $1 billion in tariff costs, and next quarter being between $4 and $5 billion, and that seems like a pretty big number to me. And I understand what you guys were just talking about and the flows of the tax bill benefiting the wealthy, and they're going to put that money back into assets, and how that sounds so great. And it's when everything sounds so great that I get that's when you start looking around. Like whenever my health is really good, that's when I get nervous, right? That's when you know something is about to happen. And again, I'm not saying that I think this market's due for some sort of massive correction. It's just, it seems like it's frothy. My trading view is pretty much 15-minute increments. I want to put on a position, go get something to eat, go to the bathroom, come back and be out. That's my window of trading. I'm not a patient person, ask my children, but it's just, the way the tax bill is set, the way that the entire tax bill is set up is absolutely going to benefit wealthier people. They are going to invest that in assets. Logically, that should be good for the stock market. They are going to be buying more assets. Whether or not it plays out that way, there's we'll see what happens. But when you try and make a logical argument with a stock market that can be, incredibly irrational, I think you're asking for trouble. So again, I'm not looking at like we're going to crash, but I just think that we've had an amazing run. Let's just be rational for a minute. And we've had an amazing run since the April lows. At some point, people are going to say, yeah, it's a lot of money I've made. Maybe, I do still want to get my daughter the $12 for Christmas or 70 pencils or whatever the hell it was he said. So I'm going to take some profits and buy that.
The macro level sector rotation here continues to hold up. That's been one of the guiding posts that I've had, Dylan, as you've known here. You're on this boat with me every day. When you have technology, industrials, finance, cyclicals, these are the bull market types of thing that's happened. Today, energy, healthcare outperforming. Maybe that's a sign of the economy being a little bit better than we anticipated. But generally speaking, right, financials here. At this level, this is going to be the second highest weekly close ever for financials. For industrials, this would be the highest weekly. In fact, today is the highest close ever for the industrials ETF. Telecom, highest close ever. Consumer discretionary has finally turned the corner, right? It was really struggling to get back through that January swing low. And when it does, this is just beautiful price action. Put it in a textbook. Resistance becomes support. And then we lift off. Even semis, Dylan. Semis have been the backbone of this entire rally. And today, after falling into their 1 month moving average, as we highlighted on the show yesterday, that's why those boxes are there. We bounced from the 1 month moving average. Again, it's an inside day after 3 days of decline. You'd call that the end of the decline for the time being. We have a level to trade around near 281. We're running it hot. Where is the best opportunity, though, in this stock market, Dylan? Is it getting crypto exposure? Is it semiconductors? Is it buying the stuff that's been lagging now and playing catch up? Is it YOLOing into Rocket and Open?
Well, let's just go down the asset list. I mean, let's assume that you're going to have sort of incremental new dollars looking for a place to go from the wealthiest people in the world. The obvious place for that money to go is into bank stocks, tech stocks, and crypto. I would say would be the three sort of Bitcoin, the Mag 7, and the big banks, who benefit the most, I think, just from the sort of flow of money to the rich from the Trump tax bill.
It's hard to disagree with that, Josh, as we think about not just short-term trading, but long-term portfolio construction.
Yeah, I would agree with that. I think you left out shoe companies. But yeah, I would agree with that for the most part. What I don't get is your optimism on haven't you taken an 18% hit or something just living overseas and
no, but I try not to bring. Listen, this whole situation has been a personal financial catastrophe, the likes of which I've never endured. But I try not to bring my personal issues into the overall discussion, because I believe most people live in a single currency world and they're oblivious to the total annihilation of the U.S. dollar. I don't have that luxury because fortunately, I have half my income in euros and half in dollars, but the dollar half of my income has been reduced by 20% this year. I've taken a 20% pay cut this year. But I just think that is such a tiny percentage of the world that even has that awareness. And so I think that, and in fact, because the dollar is declining so horrendously, I actually think that's why the stock market continues to perform so well, because the penalty for the Trump administration is not being incurred in the U.S. stock market. The penalty for the Trump administration is being incurred in the U.S. currency. And so it actually allows the U.S. stock market to perform much better than it otherwise would, because of the abomination that is this U.S. dollar chart that my dear friend Chris Vecchio has no choice but to remind me of as I look at the catastrophe that is my personal income.
But aren't you worried that that could be contagious?
Contagious for what? I mean,
the currency decimation that that could spread to the euro.
I mean, by definition, the euro has to be stronger as the dollar gets weaker. In fact, there's no greater.
But couldn't there be some degradation to the euro, some improvement to the dollar, but overall net, both currencies end up taking a hit as a result
in favor of what? The yen and the Canadian dollar?
Maybe it's crypto. I don't know.
But what alarms me here, this is again one of those signs. Ilya loves pointing this out all the time. But volatility in the currency market had crept up in March around these tariff headlines, and it started to rally again in early April, started creeping up again in early April once the tariffs went into effect. And the IVRs in the currency market are they're up there once more. 46.2 in the euro. You go over to the pound, 50 even. Canadian dollar, fix you. Canadian dollar, 58.2. Japanese yen, which is a real pita for me, although it's only up by 0.04% today, only a 14.3. When the world's largest currencies have volatility, that's trending higher, and this is the deepest, most liquid portion of the market globally, it always raises an eyebrow. Makes me think that things are a little bit less stable and sturdy than they appear to be. But I'm trying to make heads or tails of today's action. We talk about the buy America, sell America dynamic here frequently, Dylan. Buy America would be stocks up, bonds up, dollar up, gold down. And sell America would be the exact opposite, gold up, and then stocks, bonds, and the dollar down. Half that equation's in check today. Stocks are up, gold is down. Buy America. The other half is not. Bonds are down and the dollar is down. So how do we square the circle here? Is the stock market's jubilation over the news flow over the past 24 hours, is that the tell, or is the bond market?
But I think you have a different fundamental issue, which is the credibility of the U.S. government and U.S. currency is at an all-time low. And so I think you cannot underestimate the degree to which the risk and the penalty for the catastrophic American government is being jammed into the currency to the benefit of the U.S. stock market. That the traditional sort of strong dollar, strong stock, the sort of strong America, like it's a weak America, a weaker than ever America, right? Thus the catastrophic weakening of the currency that's then allowing for what amounts to an inflation offset. On a dollar adjusted basis, are stocks up at all? They're probably down on a dollar if you're a euro investor.
Yeah. Yes. Mm-hmm. That's still true.
So I just still think, I could obviously be wrong, but I just think that in this situation, it's not a traditional buy America, sell America, long America, short America situation. It is how do I say it? It's a America in decline, but the decline is based on a wealth transfer to the wealthiest Americans, which benefits the stock market and diminishes the currency. Like the reason for the decline is because what's left of the money is all being given to the richest Americans so they can jam it into the stock market. And so on the one hand, you're like, oh, this is not a well-run country, and the currency's lost all credibility, and rates are coming up, and inflation is a risk, and all that jazz. And at the same time, the reason, or one of the reasons that the economy is doing, or that the currency is in such jeopardy, and that the countries that the integrity of the country is in such a compromised position, is because there's a short-term phenomenon of raising taxes on the lower 80% and cutting taxes for the richest 20% so they can jam it into the stock market.
Josh, you have anything going on with rates here? It's not a really.
I'm trying to get my head wrapped around it because I'm in the same boat as you. I have a hard time. Initially when I was thinking, rates are we can't cut rates; they're going higher. Then we had this bit of a reversal this week, and was it signaling that a recession? Was it some sort of a recession indicator? I can't get my head around what exactly is going on there. I think what Dylan just suggested makes a lot of sense as well. I don't have a position in bonds. I think right now bonds are in no man's land. When they get down around 112 handle in the long bond, I find them attractive and I'll buy them there. But right here in this 113 area, I don't have a position. They're of no interest to me right here.
I mean, I'm still trading them directionally neutral, so just a little bit of jostling. I'm hoping for theta decay. That's the name of the game. That's it. We just need this thing to continue to bounce back and forth, both in notes and bonds. So I suppose that's not disappointing. Silver today did pull back after stretching to new highs, although we look at that 4-hour time frame, and I'm going to squint and say that we're trying to hold up here. That's why I rolled out of my SIU 5 contract today with 34 days to expiration. I noticed the market was up 0.5% earlier, and I just wasn't making any more money on the position. Right? I should be making hundreds of dollars on a 50-cent move in silver, or 0.5% move in silver, like 15 cents. I should not be making like $75. So I got out of the 38.39 call spread, 34 days to expiration. I went out and looked at what was happening in October, Dylan. And I couldn't help but notice at 64 days, the long 42, short 43 call spread was a max loss of $1,255 at 30% probability of profit. But by just going out to 97 days, that same 42, 43 call spread, it was only $1,370 risk with a 33% probability of profit. And I said to myself, is risking another $120 or so worth another 33 days in a trade from 64 to 97 days? Is it worth $4 a day? And the answer is yes. It's worth $4 a day.
I would think it is, yes.
Yeah, I think it's worth $4 a day to size up a trade where it's still potentially in the neighborhood of like 2.5, 3 to 1 risk to reward on a 33% probability of profit. Looking for the SIZ5 contract to go up there on our charts. We're talking about a move that would extend to the extension here. Swing low, high, low, sweet chariot, and that pulls you into 4150 as a start, as a near-term target. So you get to 4150, you get some vol expansion. These calls go up a little bit in value. Take them off. You get a pullback, put them back on. It's kind of how I intend on playing it. But having long-term exposure to silver, Dylan, as you know, for the past 2 years has been wonderful. So I'm not going to say we're going to corner the market, but this seems like an opportunity to extend duration, to buy ourselves a little bit more time, not expose ourselves to a potential pullback like we saw the last week. As we get closer to expiration, which takes a lot of our gains off the board. Position management is prudent at the end of the day. So yeah, I'm looking for more gains here, but made a slight switch, an extra $120 or so to get another 33 days in the market. Seemed like an easy decision where to lay out the next trade. Can I entice you into getting into silver with me?
Yes. Yes, you can. Yes, wow, you can. I mean, just especially with the dollar gone straight to the in the ditch, you know, what am I left with at this point? I'm never going to buy gold. It makes me, I don't even like gold. And also all I'm left with is silver. So hell, I'll buy some silver.
You're not a buy gold, wear diamonds kind of person as an investing strategy?
No, but maybe I should be.
Maybe. Josh, what are you doing in the metals here? Today wasn't a great day for gold traders.
I find the metals to be so frustrating to trade.
Mm-hmm.
You know, I've been trading. I started investing when I was 14, I think. Yeah, 14. So I figured out what my tolerance is, what my patience is, and I find metals to be like green vegetables, like just not my thing. Just they don't do anything for me. Silver in particular, I just seem to have the worst timing with, so I don't have a position right now in silver. I actually am looking at it right now. I keep it on my screen and I watch it. and I use it as part of just an overall market awareness piece, but I don't really do too much in it. Same with gold. On a rare occasion, if I think it's in an extreme, I might take a position, but no, I haven't. I couldn't even tell you the last time I had a position in silver actually was the end of last year, and it didn't work. And I swore I'd never trade it again.
I'm on one of those stretches with natural gas right now. I was in some short put spreads. They were working, then they didn't work, and so I got out, and then the market rallied back, and I felt like an idiot, so I decided to go directionally neutral. Now it's down like 10% this week. When I go into the stretches, I find it's a good time to step back from the product. Just personally, there are some things where if like I try to, I put on some like test trades sometimes. I'll paper trade some things just to watch the market. And if I can't like if I can't back test this, including fees and what have you, and not just assuming like there's a zero bid ask spread, which is one of the shortfalls that a lot of back testers do. They don't think about the cost of actually executing their trade. If I can see that it's working out, I may then start to put some capital into an idea. But there are other times where it's like if I get out of the market and I'm with natural gas, if this is a loser for a second time in a row, I'm going hands off for 2 to 4 weeks. I'm not going to touch it again. I just need to let it drip away from my mind, from my mental map. I need to forget my biases that I see when I look at the chart. I want to forget about the fundamental data with inventories and tariffs and just kind of allow my mind to reset for the product. I think that's typically helpful. And I think people should.
I can hold a grudge with the best of them.
But the point I'm getting at is I don't think people should hold a grudge. Just give yourself a reason to back off. I know some people who like just absolutely eschew certain products. Fine. Natural gas is hard to turn away from myself because of the volatility here. It's one of the few things with an IVR north of 60 right now in the futures market. And that's our lantern. So we're drawn to it. I digress, though. Gold here, big pullback today. Dylan, I know that you're not a big gold guy, but in further, respect to our missing Soviet friend here, he would probably argue that this diagonal trend line doesn't matter at all. It's not a false breakout to him because we never really did break out. We never cleared the June 15th high. But the horizontal support here that you see through July 11th, that you see on July 16th, right near 3290, that didn't break down today. So consistent with that view, as someone who is leaning long gold right now in the GCV4 contract, if we see GCQ5 break down below 3390, that sets us up with what I would then consider to be the classic false breakout return to the other side of the consolidation. 3225, look to get long again there or ride it short down. But either way, I again, at a crossroads where for at least gold, if we're going into this frothy environment, it's a catch-up time. And silver and other metals probably catch up more than gold, which has been an absolute monster this year. You're not a gold person, but does this chart stick out to you? Is it interesting to you that gold didn't break down in a more significant manner today?
Yeah, I mean it is. I mean, and I think that if there was a time to buy gold, this looks like a darn good one. I mean that this is of everything that gold has done. This to me is actually the most interesting thing that I've seen since we've talked about it, just because it's performed so well for so long. And it does have that sort of big downdraft in it right there, which seems like, more of an opportunity than a liability.
More of an opportunity than a liability. It's interesting that you say that this is a good spot because we are technically near support. So let's say we wanted to swing something against here. Doing it in the gold futures this time of day and even when the market reopens could be a little difficult. But considering this is a scalp swing trade, you could go in to MGC where your tick value is $1, full point multiplier is 10. Okay, if at 33.99, we'll call it 3,400. We're risking $10 on a potential trade in the MGC contract, risking $100 in GC. I think that's reasonable if you want to just swing this directly through the futures. If you're going to sit on top of it overnight, hold 33.90. That's your support level. You got something to work with tomorrow to scalp around. Below 33.90, you take your dollar tick loss. Tick size is 10 cents. So you're risking $100, you're risking $1,000, like whatever. The point is that there's a way to approach this here that doesn't need to be through options right now. it's feasible if we got to think about trades for the second half of the week. 33.90 is a level to, 33.90, 33.75. It was resistance. We can trade around there. Josh, what's the most important theme that you're looking at in the market? I think having someone like you on the show is really interesting because you're not necessarily on air or in front of the camera. You're one of the people who pulls the levers and makes the rest of us look good. So you have a different, the point is you have a different relationship with the market, right? Than either Dylan or I do. What's your perception here? How have you digested all of everything that we've talked about that you hear Tom and Tony talking about on camera?
I do have a different take, I think, from most of you guys, because I do spend an awful lot of time scalping. Part of that is my personality. Part of that is because my daily activities at work require a lot of time. And so, I try and just get a position on and off quickly when I have a minute. So I'm looking at things in a very finite time period. Like I said earlier, I do like to take a look at things in a bigger, I'm engaged in a macro, in a geopolitical level. So I have opinions about things overall and where we're headed. I certainly have convictions about what's going on in the market and where we're headed. I've said a few times, I think that equities are frothy. I think bonds and interest rates are trying to figure out just exactly where they want to head, what's going on with the Fed. I think that I don't think Powell's going anywhere. But I did hear an interesting perspective earlier today from somebody that they thought he should resign. Because what does he have to lose by resigning? I mean, at this point, it's okay, fine. I'll leave, have it your way, and it's on you. If I leave and you bring in somebody and he cuts rates and the markets respond positively, congratulations. But if I leave and you bring in somebody and they cut rates and the market takes a shit, well, that's on you as well. And it's kind of you're calling a bluff type of move. I don't think that's necessarily going to happen, but it was an interesting perspective. I think that inflation is, even with these trade deals, which, to be very blunt, we haven't seen the details. We've heard
the White House actually just released a statement saying that any discussions around a possible EU trade deal should be considered speculation.
They're all, I'm sorry, they're all bullshit. Okay. He mentioned the deal about Japan last night, and, it's going to include agriculture and other things. Well, that's very hard for me to work with. I want to see the
Boeing. They're going to buy 100 Boeing planes. Is that over the next 5 years?
Exactly.
Is that over the next 40 years?
There's not been any details on any of these things, and, great that we got to deal with, some of these smaller countries, but the countries that we actually trade with, let's get some details, because until we do, as far as I'm concerned, August 1st is problematic for this country. It's going to be a shit show. So, I think that the market, I think equities are frothy to begin with. I think that inflation is a week away, give or take a couple days. And it concerns me. We're about to embark on a course that we haven't gone down, with maybe the exception of Smoot-Hawley. I mean, you got to go back that far really to see excessive tariffs, and that didn't lead to a good place. So I'm a bit pessimistic, obviously politically, if you haven't picked up on that, but also on how that's going to affect us economically. I think that I don't see what was so wrong. I mean, there's certainly economic disparity and those issues, but the policies that we're enacting right now, they're not going to work. Trickle-down economics just doesn't work. There's just so much evidence that it doesn't work, and we're just going knee deep, a little higher than knee, a little lower than
neck
waist.
deep. I think we're neck deep, Josh.
Neck deep. Thank you. Neck deep. It's like, why are we? It's not going to make. It's going to make things better for the
It's going to make the stock market go higher. It's going to make the stock market go higher, bro.
It's going to make the stock market go higher, but who's that going to actually help? I mean,
nobody.
When I started investing, the first stock I ever bought, I'll never forget it. It was Pillsbury, and the stock was trading about $28, and that wasn't an unusual price back then. Today, you can't find a stock under $100 to trade. Who can afford that? So,
listen,
it's the stock.
We have the America has been split into two. Yeah. The haves and the have-nots. The president works for the rich. Everyone else can go to hell. But if you're going to be involved with the stock market, I mean, listen, as you know, I took a massive moral position 13 or 14 years ago, and a lot of good that did me. So I just think that at this point, if you're going to be, you can not play, but if you're going to play, you're better off to play and just play along with the scam that it is than to live in some sort of moral conflict with it, which is only going to prevent you from making money.
Yeah, but you can look yourself in the mirror, and I have respect for that. So, listen,
you guys can see your reflection in the mirror? Something's wrong with mine.
Listen, I can be completely wrong, and I can accept that. And I want the country to do well. I want these policies to work. I've done my homework. I've spent the time doing it, and I have a very, what I would consider to be a pretty educated opinion on it. So, but again, my time frame for trading not that long. So, I mean, I've done like 4 or 5 trades while we've been on there already. They haven't worked out particularly well, by the way. I was kind of expecting Tesla and Google to shit the bed, and they didn't to the extent I was hoping.
Joshua, I'm looking at this S&P 500 contract here, and I'm listening to what you say about doing the work, and you sound like a real nerd. No offense. So we're going to.
By the way, I was like 2 points away from getting out of my cruise trade, and then I just turned and went the other way, and I had to have my 2 more points, and that's the bane of my existence right there.
I'm like that all the time. I'm with you. If we were to take an extension here, the swing that we have on June 22nd, highs mid-July, and then back down to the low on the 16th, that gives you a 100% extension at 6675.75, which would be a heck of a run here if that were to actually transpire. But thinking about that playing out, if we want to go run it real hot, this is the run it real hot trade, 6675. I mean, that's not even outrageous to get there by the end of this year, guys. We're talking about plus or minus 500 points into the end of the year priced, and ESZ5 is trading at 54.62. Getting to 7K is not out of the realm of possibility. That's the 1998 playbook, Dylan. Right? We chop around here for the next few months. We don't have a really big pullback. And then this thing takes another gigantic leg up. And we're closing the year 67 to 3,000. Gosh, it could happen. I can't believe I spent 48 hours doubting the sanctity of this market.
Thank God you've come back to your senses. I was deeply confused.
Is that an adopted baby if it did it? Is that the sign that it would make on the chart? Is that an adopted baby?
These technical terms. I call you a nerd. What am I?
Show me a ninja star. What does that one look like?
3 counting
crows. You guys have all your technical analysis.
We close out the session with stocks at highs. This is going to be a new closing high for the NASDAQ here when the futures market officially closes at the top of the hour. 23,411. S&P 6406. Mission accomplished, gentlemen. We'll be back tomorrow because overtime is out of time. Thanks for tuning in. Overtime is on every Monday through Thursday here on Tasty Live, 4 p.m. Eastern, 3 Central. So be sure to come back for it this Thursday to finish out the week. For Josh Fabian in somewhere close to Wisconsin, Dylan Radigan, parts unknown. I've been Chris Vecchio in New York. Good luck trading. See you soon.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so, for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
It is a quiet day for stock markets as the big, beautiful bill championed by the Trump administration clears its hurdle in the Senate and now heads to the House. We get a little bit of a update from Fed Chair Jerome Powell, and we get some troubling manufacturing data. I'm going to try to make sense of all of it here on Macro Money. This is Ilya Spivak, head of global macro at tastylive. And while we have this opportunity before the next big batch of event risk hits the tape, we're going to try and take this step by step and get into how at least one macro-minded trader, this one, would unpack this news flow on a given day. And the main question that we have here, as I can see it, is whether the makeup of what we saw today suggests that the Fed is right to be as worried as it sounds. Because the markets seem to think that the answer is both yes and no, depending on which worry is in question. And how things are positioning then, and what the markets do across major assets, should be majorly influenced by whether the Fed, at least in the market's estimation, is worried about the right thing. So let's take a look at the price action here. First, we have the S&P here down about, that's not correct, it should be 0.09%, because it was nearly flat here on the day, whereas the decline in the NASDAQ really is as big here as it seems, and it's not the biggest decline in the world. There we go, fixed. That's accurate now. And the S&P, for its part, flat on the day after testing near its year-to-date highs. And that's really on the back, seemingly, of this big, beautiful bill situation. Because what we have once we get into the internals sector-wise is outperformance for small caps. The Russell tellingly higher today by a good margin, adding a meaningful 1% today, and the NASDAQ down by almost an equivalent amount, as we say, 0.89% here. And that breakdown seems to sort of broadly reflect the priorities in this bill, and perhaps the expectation that it is likely to get passed. Healthcare up, financials up, consumer staples up, but technology and communication services, sort of looking at the sector breakdown, both down. So this seems to speak to that impact here. Yields, interestingly, a little bit higher at the front end, but still relatively anchored at the back end. Perhaps this reflects the near-term inflationary implications, at least to some extent, of what we saw in this bill. It is expected to increase the deficit by something on the order of $3 trillion. And of course, that's spread out over 10 years. But one sort of more immediate impact here is an update in the state and local tax deductions. This was a big sticking point after the 2017 tax cut program in the first Trump administration that significantly reduced the amount of state and local taxes that could be written off from federal taxes. And this significantly increases the cap from 10, it looks like, to about $40,000. And so a meaningful increase, and that perhaps puts a little bit more money in the hands of consumers, which may be inflationary in that it sort of gives a cash infusion into consumption sometime next year. So maybe we have a lift in the 2-year that sort of follows along those lines, but the 10-year here is still relatively anchored. Crude oil, despite the marginal increase today, still very much in consolidation mode since those geopolitical tensions washed out of the price. Gold a little bit higher, the dollar a little bit lower against its major counterparts. The pop in gold, in particular, interesting here with yields doing what they're doing. Typically, you wouldn't expect gold to do well in an environment where yields are tracking higher, but the sort of story here seems broadly to follow what's been going on in the yields space today. And that's in the wake of comments from Fed Chair Jerome Powell. He spoke at the annual ECB forum in Sintra, Portugal. And it's an interesting story there because what we seem to have today is a very different kind of a story for Fed policy odds than you necessarily have for the broader yield structure. And of course, there's an impact, but that impact seems to be largely downwind for maturities. The message from Powell was not an unfamiliar one. This is basically a rehash of what was said at the testimony last week when Powell testified in Congress, as well as 2 weeks back when he spoke at the press conference after the FOMC policy announcement. The economy is in a good position. If not for inflation risks from tariffs, we might be cutting rates already, but we are expecting, that is, the Fed is expecting to see higher readings for inflation over the summer because of those tariffs. And what the Fed wants to make sure is that we don't then have those inflation readings enter into inflation expectations and then become anchored, which of course would undermine all the progress that the Fed has already made in bringing inflation down. It is, after all, looking at the latest CPI data, just 2.4% at the headline, so less than 0.5% above its target. And the argument here is a familiar one, that with inflation that low and with the unemployment rate at 4.2%, which is historically low, or low by historical standards, not the lowest in history, certainly. We got as low as 3.4% when we were coming out of COVID, and there was a mass return to employment. Labor force participation obviously has evolved significantly, but nevertheless, historically, 4.2% is very low for U.S. unemployment, and so
not surprisingly, what Powell is still saying here is there isn't a growth emergency, there isn't an inflation emergency. We have this weird thing with the tariffs that is something of a black box in terms of its impact. It doesn't make sense to jump out the window and make a decision when there isn't a flashing red sign somewhere in the economy compelling you to do it. So what they're going to do is sit on the sidelines, and that's despite the general consensus on the Fed clearly being that rate cuts are appropriate this year, and perhaps most interestingly, Powell saying that he can't say whether July is too soon to consider a cut, which basically means that every meeting is live at this point, though the markets are only pricing in about a 20% chance that the cut actually happens in July, and we'll take a look at that momentarily. On the data front, we have a slightly better than expected reading on the manufacturing side of June's ISM economic activity surveys. This is basically another version of PMI. The headline PMI numbers, of course, coming from S&P Global. That's sort of the biggest provider of PMI data for most of the world's countries. Some countries have more than one set of these numbers from different providers. China has that, and so does the U.S. The Institute of Supply Management is a very long-running survey on this, and very closely watched. And what we see here is that the manufacturing sector remains in contraction mode here, as ever this is done in the logic of PMI. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So what you have here is a fourth consecutive month here below 50, and that suggests that whatever pop you had in manufacturing in January and February, that's this right here, where you crossed back over 50 into positive territory, ostensibly around the front running of tariffs, that is increasingly spent, and we're back into a contracting mode here. But it is the internals of this data that really grab attention and give the Fed chair some coverage in what he is saying, because what we have here, there's the 4 months of contraction here, readings sub 50 in the yellow bars. But when you look at the internals, the price component is surging. This is in fact the fastest price growth that we've seen in 3 years, going back to the middle of 2022. And it's happening at a time when that price growth isn't being motivated by economic activity in the sector, clearly, because not only is overall activity actually shrinking, but we can see here employment down. Fastest contraction in employment in 3 months. New orders down. Fastest contraction in new orders in some time. So what we're looking at here is an inflationary shock, not demand pull inflation. That is to say, more people want output, and so they compete on price and the price goes up. That is not what this is. This looks like the kind of stagflationary risk, or at least stagflationary dynamics, certainly not stagflation economy wide, but the kind of stagflation dynamics that the Fed is worried about. And indeed, we saw 2 weeks ago from their summary of economic projections, they're downgrading expectations for growth. They're increasing expectations for the unemployment rate. They're increasing expectations for inflation. And so that's exactly what this ISM data seems to imply. But of course, the big disparity continues to be what to do on rates. The Fed seems to think that we're going to have this kind of shock here where growth veers in a
worse direction. Inflation veers in a higher direction, but ultimately things settle relatively in the longer run. And what this inflationary shock ends up meaning is that the Fed can cut less because they don't want to let inflation out of the bag as this washes through the economy and becomes what the Fed hopes will be a one-off, a transitory influence, as it were. And so what we have is a downgrade in rate cut expectations for 2026 and 2027, where before we were going to get 50 basis points this year and next. Now we're looking, and then the 25 basis point cut in 2027. Now the timeline is extended. We only get one cut next year and one cut in 2027. That, of course, is not at all endorsed by the markets. So here's 50 basis points right here. The markets, for the most part, are where the Fed is there. They have 58 basis points for this year. So they're only a bit over where the Fed is. And indeed, if you look at the disparity here, there is about a 32% chance, 8 basis points out of 25, that you're going to get a third cut. But 32% is not nothing. But it does suggest that the Fed is broadly in line with markets, at least for this year. For next year, though, it's a completely different story. The market has 68 basis points on the menu. That is to say, it's fully baked in 50 basis points in cuts. So that would give you the full 2 cuts there. And in setting it at 68 basis points, it suggests that we are a very good way to getting now to 3 cuts next year. So 68 basis points is 18 on the way to a third 25 basis point cut. So the probability of that third cut next year, relatively elevated now at 72%. Now, if the Fed is saying 1 cut next year and the market is saying 2 and a 72% chance of a third, that's an entirely different kind of perception on what is likely to happen. Indeed, if we take a look at even this year's trajectory, we can see that since the Fed basically made the case for all of this with June's policy announcement and issued that summary of economic projections that we just saw, since then, the path even for this year has become more dovish, even as the Fed has said all of the same things. We can see the curve here has actually edged down. Now, that gives us the first rate cut in September, second cut somewhere here in October, December, with a fairly decent shot, even at a third by December. But as we saw here, the trajectory is still favorable of 2. So what is it that the markets are seeing here? Why are they so much more dovish than what the Fed is saying, even as the Fed keeps saying the same things over and over and over again? And we get back to this idea that from the market's perspective, the Fed is wrong to be worried about inflation risk. When we look at what this begins looking like at the beginning of the year, here's the S&P 500 in the yellow. It is falling alongside the bond market's measure of expected inflation. These break-even rates are the difference between nominal and real interest rates, so nominal yields and TIPS yields, that extracts the inflation adjustment that it would take you to get from nominal to real. Obviously, nominal rates minus expected inflation is what gives you TIPS yields. So if you take the difference between nominal and TIPS interest rates, the magnitude of that inflation adjustment is what you're left with. So you can see that these inflation expectations in the bond market were falling with stocks from about mid-February and until the beginning of April, around the idea that the tariff rollout as it was happening would be negative for economic growth. And of course, when you have that kind of influence, as positive economic growth would boost inflation through demand pull dynamics, here you'd have demand destruction, and so lower inflation, less upside pressure from demand on prices, which is exactly what you see here. Then, of course, we get the Liberation Day back and forth, and clearly sentiment recovers here. The S&P 500 is back to where it was pretty much at the start of the year, but inflation expectations have not followed. In fact, the nearer term 5-year here is basically where it was at April's lows. And so the market is saying here, the bond market, we have a growth scare that hasn't gone anywhere, still very much on the books. Just because stocks have rebounded doesn't mean that it's anything different here in terms of growth dynamics, which is why ostensibly they want all of this easing. Because while the Fed is worried about the tariff risk, the market obviously is not. And it's saying the Fed needs to cut to underpin growth. To that end, we can see here the Atlanta Fed's GDP growth now model. And never mind whether it's actually right about where second quarter GDP is headed, that's ultimately not important. We're far enough away from those numbers that this model is going to change quite significantly between now and then. More importantly, what this model is a distillation of incoming economic data as it appears. And by the way, the ISM numbers from earlier today are now in this model. So what we see here is the tone of the data going into the model since about mid-May has been clearly negative. And so the way the wind is blowing, as it were, for the U.S. economy is toward weakness. We see the same thing from the economic surprise index data that Citigroup puts out. We can see the U.S. is clearly the weaker hand here across the major economies. In the blue here, if you squint, is the global reading. It's been heading lower, and we can see that it's been heading lower because of what's going on in the G10 economies as emerging markets hold up here. And we also see that whatever's happening in these G10 economies isn't happening because of Europe, which we can see is holding pretty well here as well. So clearly, it is the U.S. that is now the main drag on the tone of global economic data. And this, of course, tells the same story. So what we find today, then, is a manufacturing survey that generally tells us the Fed is right to be worried about what is happening here with prices and with demand diverging in an adverse way. And so in that sense, what it's saying here makes sense. But also that the markets are looking through inflation and saying the impact on prices will ultimately register not as sequencing, where first you get the prices, then you get the hit to growth. No, the markets are going to be focused on the growth, which is already coming undone. And that beckons rate cuts because inflation is going to get pushed lower by the demand destruction of an economic downturn. And how this gets resolved and which way it gets resolved ought to be very impactful. The dollar, of course, has been falling with this deterioration in the Fed policy outlook, and stocks seem like this rise was built primarily on sentiment, but certainly not invulnerable to growth concerns when they become acute. And so with that in mind, there is perhaps a vulnerability for stocks to come in and for the dollar to rebound if this starts to shift this way or that. With that, we're going to be watching out for the next layer of this ISM data that's coming later in the week for the all-important service sector. And then, of course, the U.S. jobs report as well, which we're going to focus on in depth tomorrow when Macro Money returns, as it always does, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close. In just 30 minutes' time, I'll be on, as I am every Tuesday, with Victor Jones for The Price of Truth, writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter, and on Blue Sky. If you're watching on YouTube, like and subscribe. Happy trading. Macro Money will be back.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's going to take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
I hope they don't subscribe to cherry bombs. Oh, no.
You better scrub your phone, honey.
Oh, no.
You better wipe it clean.
This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
Because it takes work to maintain friendships, because life gets in the way.
Guys, with women it does.
Well,
it takes work.
Men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean,
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit.
You would not know.
So I said I have to see what this is like, and it is a boat-worthy apparel. So I'll ship it down to Florida. But I just wanted to be like my man Tom, see what it feels like to be a big shot and stuff like that.
Will you guys please wear them matching on the flight to Denver next Friday?
What's going on? What the hell am I looking at? What the hell's going on here? What is this?
I'm twinning.
Join us. You got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com. If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's going to take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
I hope they don't subscribe to cherry bombs. Oh, no.
You better scrub your phone, honey.
Oh, no.
You better wipe it clean.
This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
because it takes work to maintain friendships. Because life gets in the way.
Guys, with women it does.
Well,
It takes work.
men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean, it's.
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
Why not? So you got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
All right, we're back. I'm Dan Cecilia, and with me today is Shelly.
What up?
My partner in crime, part of the Crypto Cave. And Shelly, what we got going on today?
So much, as always. Crypto's an exciting realm to exist within. How are you today? And hello, chat. See Flower Power 2222 in the house.
What's up, chat?
Emmett. Ooh, I have to open our X stream as well.
If you guys are with us today, we got a pretty casual show today. We'll be looking at some stuff. We'll just be going through some coins. If you guys have anything that you want us to cover, you have any questions, literally anything, drop it in the chat. We'll cover it.
Literally anything, he said.
Yes, but also not literally everything. So where do you want to start?
What's up with the headlines? What's going on in the world today?
Hey,
And
yeah,
hello, Lone Sophos, Emmett, Catan, Flower, Dav.
Today we're a little bit down looking at the market. I got Bitcoin chart up here on the Tasty Trade platform. We're down 1%. We're about 117, 118. I see ETH ETFs see third biggest day of inflows while Bitcoin sees net outflows. That could be an indication of rotation to altcoins. Alt season might be upon us. Coinbase partners with PNC Bank for crypto as a service model. Thought that was kind of interesting. Coinbase kind of bringing their capabilities to major banking provider. Goldman and Bank of New York Mellon to offer tokenized money market accounts. Okay. And then the meme coins Pangu and Rect. So Pangu is Pudgy Penguins, for anyone out there that's into NFTs. They hit all new all-time highs. So those are the major headlines that I kind of caught my eye. And yeah, I mean, I think the ETH ETF third biggest day inflows while BTC ETFs see now outflows is kind of that's pretty interesting. I need to find I need to see if I can find the ETF inflow and outflow website, but I don't know, anything you're looking at?
To be honest, I have been a little distracted, Dan. We've got a lot going on internally here with the stablecoin funding, all very exciting things happening. We are bringing so much to the table here at Tasty for our customers. So in chat, if there's anything missing in our products, let us know. We're listening. We're listening like real close. So yell from the rooftops. And but yeah, so we've got the wheel today. I did that with Ryan before. I don't think you and I have ever done it on this show, right?
don't think so.
Okay, so the Wheel of Crypto, running it back. And so for anybody that hasn't experienced the Wheel of Crypto, it is all of our crypto offerings on a wheel. We spin it, and then we just talk rapid fire about whatever it is. And if you have any specific questions, throw them in the chat. But the wheel is just a fun way to cover a lot of content really quickly. But do we have a question for the chat?
Do we have I don't have a question.
I have a personal question. Who's been to Europe? Because I'll be gone for 3 weeks.
We'll be gone.
Yeah. 3 weeks. I'll be out next week, starting next week. So hitting Norway, Italy, Austria, Germany. And I wish crypto was more like just the everyday normal thing, because now I'm like, wait a minute, how does currency work over there? Do I have to bring fiat and transfer to all these different currencies and yada yada? I'm like such a noob when it comes to like traditional money rails, but
I have a couple big, let me see here. Oh, Big Deal Donuts. How'd Link do today? I'm looking at the Link chart right now on the platform. We're down about 10%, 9.7%. So a little bit of a sell-off there. Might be a good time to scale back in. I mean, it did kind of skyrocket here in the month of July. It's been up. Everything's been up. So it's okay. We're taking a little bit of a breather, but yeah, we're down 10% there. Big Deal Donuts. Catan, who is one of our regulars, what's up, Catan, is an Ethereum Ripple trying to get into the Swift game. We're offering RLUSD, which is Ripple's stablecoin. I know that they have a ton of partnerships with banks. I do think Chainlink is powering some of the banking systems, stablecoin, tokenized stock, sort of infrastructure there. So there might be a thesis on Chainlink to do well because of that. I don't know how that translates to the token price, but I do know that infrastructure is being used in some of the banking rails. Lone Sophos been to Sweden, so
let's go.
Not Norway, but Sweden.
Apparently, I'm Norwegian. Didn't know that.
I could have told you that.
Oh, okay.
Emmett says just went to Italy in November. Grumpy Mike rarely leaves the house. Yeah, I feel you.
Respect.
Yeah. So here we go. Which stable coins won't make the Genius Act? Which will? I don't know. That's I should dig into that. I'm not totally sure.
Yeah.
I don't know if it like my interpretation of that Genius Act was not that it was giving certain stable coins certain permission to exist. It was more of the framework for issuers to issue these stable coins, like what they need to follow, right? So I know a big one was they can't pass yield on. So the yield that these stablecoin issuers are generating, which is massive, that's how they make their money. They're not able to pass that on to like the holders.
Right.
So that's out not legal through this act. So I do know that was one big thing, and I think it just gives a framework for stable coins to kind of exist and be issued in the States. So we'll see how that plays out. Chainlink, I got to read up. Yeah, take a look at Chainlink. It's been around for a while. It's probably one of the more useful projects out there. Any coins that are heavy inside owned. Depends on what you mean by inside owned. So it's not like, it's kind of tough. One of the things that you can do is you can track wallets. And wallets are tracking wallets are kind of similar to how you would track maybe like insider shareholders or big institutions owning certain percentages of stock. So I have a couple platforms that I use for that. One's called Arkham. And Arkham is basically a data company, and it's called Arkham Intelligence. Let me see if I can get to it. And it basically just allows you to track and see wallets of certain tokens. That's one way you can track that and just see who's selling, who's buying. Yeah. So, or kind of what's going on in that particular token.
Whale behavior.
Or it tracks Rob. So I see Robinhood's cold wallet here, right? So Robinhood has what $4.8 billion worth of Ethereum on its platform, right? Binance, this beacon deposit contract that's staked, right? That's the staked Ethereum. So about $231 billion worth of Ethereum is locked in staking. So whatever percentage of that supply is, that's being staked. You can see Binance cold wallet here, Upbit's hot wallet. Let's see, Kraken. So you can view kind of what's being held on exchanges, where that flow is coming from. Is it being taken off exchange? Is it being moved on? A lot of people believe that or I guess like the theory is that when a lot of stuff flows on exchange, it's going to be sold and taken out of the system. When it's taken off exchange, it's kind of going out and on, doing DeFi activities, doing things that people believe like is bullish.
Mm-hmm.
So that's slightly different than how we look at traditional side of stuff, but you can track that. The whole thing's an open database. There are programs out here that allow you to do it. I'll drop this in the chat, so if you guys want to take a look, then you guys can do that. So let's see.
Bring your Visa card and leave Amex home. Interesting. Okay. Use your credit card for everything. If you need euros for anything, go to a local bank and pull money from an ATM. You get the best exchange rates that way. Thank you, Emmett. This is all good advice and much needed. Yeah, that'll be interesting. I'm excited. Dan, you've been to Europe, haven't you?
I have been to Europe. I've been to London. I've been to Munich. I've been to Zurich, Switzerland. And then I've been to Amsterdam.
Nice.
Yeah. And same.
All in the same trip?
Yep.
Okay.
Same thing. Actually, if you want to, because it's all Eurozone, you're not going to London, are you? You're not going to UK? It's all Eurozone. You go to the Chase Bank down here on, you can go to the one down here on Michigan Ave,
okay,
or any in the city, and they'll give you a really good exchange rate, and you could take the cash over for you if you want to do that like immediately.
Yeah, I don't know if I want to carry a lot of cash.
Don't buy it at like airports.
Yeah, good grief.
I'm sure they have. I'm sure.
Yeah, my son is there. Like my son is in Italy, so we're meeting in Norway.
Yeah.
But yeah, we'll see. We'll see. But thank you for all the advice, chat. I appreciate it. Let's spin the wheel.
Yeah, let's spin the wheel.
Are you ready?
Yeah.
All right. Oh, my mouse is stuck. All right. Spinning. Oh, Bitcoin. Right out of the gate. Here you go. Let's speed run it, Dan.
Digital gold.
It's too easy. Too easy. Give me a price prediction by the end of this year.
End of this year we'll touch 135.
Okay. It's kind of conservative, I think.
Maybe. By the end of this year, we'll touch 135. Okay.
Touch it. Just tickle it. I want to hear what Chad has to say. Price predictions for Bitcoin.
Price predictions for Bitcoin.
Yeah.
What is yours?
I think we may touch 150.
Okay.
By the end of the year.
Do you think it's like do you feel like this cycle has been a little bit different where the price movements have been a little bit more controlled?
Yeah.
Because don't you feel like, I just remember last cycle, and when I say last cycle, like that 2018 to 2022 kind of years, is like it just felt like, you know what I mean? It felt it was just volatile and like chaotic and
see, that's when I entered the space, or like really got involved. So it's like that's my conditioning now. I keep expecting that. I'm like, we're on the roller coaster, like let's go, and then I'm like, oh, it's just this choppy, it's interesting. Chopsolidation, a lot of that.
Yeah.
But I think with all this new clarity, I think we're going to see some big institutional moves that are just going to drive a lot. But we'll see what that means for, altcoins and everything. I'm optimistic. Primo, 0 in the long run.
Tom Banjo, 68K. Okay.
It'd be interesting. I'd be buying a lot if it pulls back that far.
Yeah, so would I. 0 in the long run. Okay. That sounds like Cope. Primo, that sounds like Cope. I'm not going to lie. Edward, hey, what's up, Edward? Smart way to exchange before you go. Yep. Yeah.
Very cool. All right, spinning again.
Okay.
We got 15 minutes. Let's see if we can get through everything on the wheel. That would be aggressive. AVAX. I just used this chain today.
Okay. We have it on the platform, obviously.
All of these are on the platform.
I am looking at a yearly one-day chart, so let me...
I love that the, what is it? The scan, the like base
Snow scan.
I love that it's called Snow Scan. That makes me happy.
So I guess I would say like a Gen 2 Layer 1 smart contracting platform that is EVM compatible but has something called, what is it, subnets?
I'm not super familiar with this one, so I'm going to lean a little bit more on you.
Yeah.
So this is EVM compatible, but it's not a layer 2?
No, it's a layer 1.
Interesting.
I believe, yeah. Let's see. Yeah, it's a general purpose blockchain. General purpose layer 1 that has there's three different blockchains on the Avalanche network: the exchange chain, X chain, the contract chain, C chain, and the platform chain, P chain. So the exchange chain is the primary blockchain for asset creation and exchange, including AVAX, the native token. The contract chain, C chain, supports the creation and execution of smart contracts. And then the platform chain, P chain, manages a network of validators. And it's based, so it has its own virtual machine, but it's based on the Ethereum virtual machine. So all that means is it's compatible with Ethereum.
Interesting. And you can fund your Tasty Trade account with stablecoin.
On Avalanche.
On Avalanche. Because I did that today.
Yeah.
So giddy up.
So, yes.
There we go. We spinning?
Found it. It launched in 2020, it seems like. Okay. Let's spin it.
Well done, Dan. Well done. Dot. Polka dot. Layer 0 infrastructure.
Dead.
Layer. Dead? How?
Polka dot?
Polka dot.
Who do you know is used polka
Well, because nobody's using it. It's just in use at all times. It's the layer 0 that's connecting different blockchains so they can communicate together. Damn, Dan.
So, I think that
harsh.
I don't think that is.
All right, we're spinning again.
Hold on.
Okay.
Let me.
All right.
I just want to bring up the chart because I'm convinced.
As far as trading it goes, I mean, I haven't looked at the chart, but what it is that layer 0 infrastructure layer that's providing communication between different blockchains so that
yes, okay.
It's an interoperability layer.
Pooled security. Yeah, so it is a layer 0 open source blockchain, allows multiple blockchains to connect and operate within itself, and share their unique features while pooling their security. The only reason why I have a negative bias on it is because there was a report that was published about the Polkadot treasury, and I think they had something like $500 million or some outrageous amount of money was just going toward like marketing events. And I don't know if it has any real adoption. Like, I don't know any applications on.
Cite your source, Dan. Where was this from?
This was on Twitter, like over months ago. So I've never.
You got influenced and you didn't check the source.
But it's kind of like one of those things. Like, you use apps on Solana. You obviously use applications on Ethereum, Bitcoin. Some of these other layer 2s. Who's using Polkadot?
Well, that's what I mean. Like, it's a layer 0, so it's not like a retail. We're not using it.
But I know, but like,
I look at it as like a ComEd or an energy company that like I'm paying a bill and I'm flipping light switches and I'm using, but I'm not thinking about the brand ever.
Okay.
That's kind of how I look at it.
Just, yeah, there's no value to that token. There's no value accrual to the token. But we got it. If you want it, we got it.
Yeah.
Okay.
All right. USDC, stablecoin, Circle.
Issued by Circle. What is Circle's stock at?
Yeah, let's look.
Did it crash? Oh, it's in $200.
Stretch your chart out a little bit there.
I don't know why it's...
You're all squished. There we go.
All right, it's kind of pulled back a little bit.
Okay.
It's not bad.
Do you own any Circle?
I don't. I do eventually want to own it.
Mm-hmm.
I have a rule against trading IPOs.
Yeah.
So, does anyone know how high the price of tulips reached in the 1630s? That's a good question.
That's tickling a memory of something because my daughter did a report on tulips and this came up, but we're talking like years ago, so random. Let's see, Big Deal Donuts, what drives this? Circle. Is the question, so Circle is the company behind USDC, but I feel like from a front-facing perspective, USDC is more associated with Coinbase, but it's actually Circle that, what's the word? Like
the issuer.
Issuer, thank you.
Circle's the issuer. They're the ones that they provide services to platforms that want to connect to stable USDC specifically. They also mint or create the token on chain and then have the collateral in a bank account wherever. I think it's with Cantor Fitzgerald or something. Maybe that's Tether. But anyway, they're the issuer. They're the stablecoin issuer. It's not a bank. It's not, they don't have a banking
So like
license.
if I give them one of my dollars, they're going to give me a USDC token. They're going to take my dollar, put it somewhere so that it is backed one-to-one. And then if I want my dollar back, whoosh, I get it, and they burn that token. So it's a one-to-one pegged to the US dollar.
Didn't Circle buy from Coinbase? So Catan, I believe that Coinbase owns 40% of Circle, or don't quote me on the percentage. They own.
They share their profits. So I think it's 40 or 50% of Circle's profits go to Coinbase.
Yes. Yeah.
So that's why when this IPO happened, people were like, oh my gosh, it's so overvalued, because if you go to the fundamental analysis on the business, it's like most of their profits are going to Coinbase. Why is this stock going up so much? But people are viewing it as more of like a demand for exposure to crypto.
Right.
And stable coins. And so Circle was just one of the first and only to offer that exposure.
Yeah.
So that's why we're looking at the stock price. But I mean, that's a big business, stable coins.
Huge. Yeah. Do you guys feel that stable coins can literally take over payments for homes, et cetera? Imagine Rocket, Carvana, et cetera, using this. I mean, I do.
Absolutely.
I do.
I am going to Europe. I wish I could use stable coins to just fund my travel.
Yeah, I mean, I don't know if you're gonna like consciously know that you're using them,
right?
But it will drive a lot of the the back end stuff. You guys have talked about it. I forget who it was, if it was Catan or someone else. You guys have talked about it before, using Swift or whatever, LIBOR, or some of these like settlements take days. Cross border takes days. It's very disjointed. So I definitely do feel like it takes over as far as infrastructure goes, with how payments work and how platforms are connected, So yeah, certainly believe that it will take over in some capacity.
Primo's got a great question. 1 million American dollars or 10 Bitcoins. Go. I'm taking the 10 Bitcoin all day.
10 Bitcoins.
10 Bitcoin, please.
Yes.
And you can use Bitcoin as collateral to buy a house now, and get your Bitcoin loans. So yeah, Bitcoin. Spinning. Ooh, what is it? Oh, Litecoin. Boomer coin.
It is a boomer coin. Created by a guy named Charlie Lee in 2017 to maybe it was even earlier. It might have been 2011 to be a cheaper Bitcoin or
lighter, like
faster. Rather,
faster,
it's not cheaper,
yeah.
but faster. Peer-to-peer currency created by Charlie Lee, based on the Bitcoin protocol, but differs in terms of the hashing algorithm and its max supply. Yeah. There will be 84 million Litecoins that can never be minted or mined, which is 4 times more than the Bitcoin's max supply. Yeah.
Interesting that it never really took off. I remember when we were looking at this before when I brought up the little South Park buses, you know, the chain, you can view how the chains are, and Litecoin is just no buses. Nothing's happening. All right.
It's one of these things, like, it's just very early. 2000.
Sui.
Ooh.
We need to agree on how we're saying that.
Sui.
Sui.
Yeah.
Like chop suey.
Yeah.
Sui.
Yeah.
Sui. Okay. How are we saying it? I want to hear from chat. Like sui? Sui? How do you say it in chat? But all right, let's talk about it.
So that is what I consider a Gen 3 general purpose layer 1 blockchain. It has a different, basically the big difference is that it has a different programming language. And that programming language is safer and faster and easier to program in than like Ethereum's or Solana's. And because of that, you can create unique programs and more scalable applications. This project was spun out of Facebook, Meta's blockchain unit. So Facebook had a stablecoin and blockchain unit that they were trying to launch that got shut down in 2019. So they spun this out, and this Move programming language is what they created. Facebook created Move programming, or the unit, and Sui is one of them that uses this. So
Love that.
Yeah.
Well done, Dan. We got Lone Sofa. Sui. Okay. Yep. Sui. Phonics. Aave. How do we feel about Aave, Dan?
That's a good one. That is a DeFi protocol. It is a borrow lend platform. It allows you to deposit ETH tokens, whatever, and borrow against it. It makes a lot of money. This is a real application that people use.
Can you pull up the chart?
Yes, I can. Aave.
Ryan's put on some good Aave trades lately.
Yeah, actually, should we take a look at the follow trade at some point?
Yeah.
Where is that? Here it is.
Pull up Ryan. I actually duplicated his trades when he was messing with Aave, and I was like, hey, thanks. We both made a little bit of money. It was a few weeks ago, though. I think
So
he
Ryan
exited some positions in the last couple of days.
Here's his Aave trade. Bought, what do you do? Buy at 288. Was bought at 264, sold at 292. It's pretty good. But yeah, it's a DeFi protocol. People use it, makes a lot of money. They have their own stablecoin as well. It's called Ghost. GHO is the ticker. If you want to look that up. It's their own native stablecoin. And all I know is that Aave means ghost in Swedish.
Well done.
So
we are out of time. How did that happen? That was so fast. All right. Go ahead.
If anybody wants to email us, ask questions, stablecoin funding is now live. Please check that out. Let us know if you have any issues with it or what you think about it. Give us recommendations. We're making improvements to the platform all the time, and we'd love to hear from you. Shelly's going away, so we want to give Shelly her last chat. You might never see her again. She might just stay over there.
No, I'm coming back. I'll be back. It'll just be 3 weeks, which feels like a very long time, especially in crypto. So thank you all for being here. We appreciate all of you. And Ryan will be back on Monday for the Tasty Crypto Show, but we will be on Friday with Beans. So I'm not gone yet.
Okay.
Come hang out with us. I think we're going to do a lot on ETH since it's next week is ETH's 10th birthday. So the big 10. So we'll see you Friday.
Yep.
Thank you, Lone Sophos. Hope to see you Friday. Otherwise, if I don't see you, I'll be back in a few weeks. Can't wait. But thank you all for being here.
Thank you. See you guys. Peace.
Peace.